EBITDA has declined on account of lower KG D6 volumes. For the telecom business in particular, it was a steady quarter. A 3.4% sequential growth in top line on a year-on-year basis, about a 15.5% revenue growth. And this is the second consecutive quarter of about a 15% revenue growth on a year-on-year basis. The driver of this is still the July tariff hike, and the full pass-through of that is still taking place. Margins are steady at 52.8%. The positive in the numbers are the subscribers. If you remember in the prior quarter, subscribers declined by 10.9 million in Q2 on account of the tariff increase. But this time they've managed to expand their subscriber base by 3.3 million sequentially. And on a year-on-year basis, it's up close to about 11 million. And ARPUs have now crossed the 200 rupee mark for the first time ever, expanding to 203.3. And the company says that perhaps we could see ARPU expansion going ahead. The words are the residual impact of tariff hike to flow through over the next few months, which means ARPUs are likely to inch up further from here. And 5G now accounts for 50% of the company's wireless traffic. So in a nutshell, it's a good quarter from Reliance Industries. The stock did well on Thursday. It was up 1.1% so far this year. It's outperformed the markets by nearly 6% with that 4% rally that we've had since the beginning of the year. But it's still 20% off from its 52-week highs of more than 1,600. So is there more to go? But let's find out about Reliance, because that was the key surprise, a positive surprise this time.
Okay, Rima, thank you so much for that. But let's move on, because Axis Bank also reported its Q3 numbers. This time it was a weak set of numbers that came in from the company. Abhishek is here to give us more details of this one. Good morning, Abhishek.
Good morning, Vinny. So two key numbers which surprised negatively. Business growth lower than what the industry is growing, and slippages way higher than what the industry did estimate. So 15-quarter low business momentum on a YY basis. Deposit growth at mere 9%. Advances growth less than deposit growth at 8.8%. Now the CASA ratio, perhaps for the first time in last 10 years or so, I'm seeing it below the 40% level. A 38-quarter low with respect to CASA ratio over there. Net interest margin is at 10-quarter low. It was expected to come down on a sequential basis, and it has come down. The return ratios are one of the lowest that you are seeing in last 7 quarters. Both the ROA and ROE are the lowest that you are seeing in last 7 quarters. Slippages, they were a tad bit higher than what analysts estimated, 5,432 crore, which is the highest quarterly slippage that you are seeing in last 13 quarters. The annualized slippage ratio is at 2.14%, perhaps the highest that you are seeing in last 11 quarters. Now, operating efficiency is one of the best that you are seeing in last 7 quarters, given the fact that OPEX declined by more than 4% on a sequential basis. So that helped the cost to income ratio at 46.2% versus 47% in the previous quarter. Core operating profit growth was healthy, up about 14.2% YOY and about 5.2% sequentially. With reference to the PNL, the NII was below our poll, and thanks to lower OPEX, the net profit was slightly ahead of our poll. Back to you.
Okay, Abhishek, thank you so much for giving us these details on Axis Bank and what we saw in terms of the numbers. But on that note, we're going to step into a very short break, and after the break, we'll talk to Manisha about what's happening in the world of commodities. So stay tuned for that.
Tata Mukesh Ambani Cultural Centre has unveiled its latest offering, The Arts Cafe, a vision brought to life by Isha Ambani. This space is where art meets culinary excellence, offering a one-of-a-kind experience for both food and culture enthusiasts alike. With its soothing natural shades, browns and beiges and art decor accents, the NMACC.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now let's go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities this morning. Good morning, Manisha, and specifically crude. I think that's what we should talk about as well. What is happening in that space?
Well, yes, there is some profit taking that we've seen in case of crude oil prices. So we are off the 5-month highs that we started this week on. But importantly, we are still headed for a 4th weekly gain when it comes to the crude oil prices. Energy perhaps is the best performing, asset class or sector when you look at this year until now. One thing is that as U.S. President-elect takes over on 20th of January, the expectations are that he could soften the sanctions on Russia, and that is where the markets are getting their support from. And then India and China already are seeking supplies from Saudi Arabia. The markets also are taking support from the fact that the U.S. stockpiles have been declining for 8 straight weeks now, and the winter heating fuel demand is supportive. Is the reason you are looking at U.S. natural gas prices trading at a 2-year highs as well. But, across commodities, we are trading slightly on the positive side. The US dollar index is off its highs, and that has led to gold trading at 2-month highs. Aluminum is trading at a 4-month highs. Steel rebar is rebounded from a 3-month lows. Copper is at a 2-month high. Silver at a 1-month high. So across metals as well, we are looking at strong support system in Asia right now.
Okay, Manisha, thank you so much for giving us the latest update in the world of commodities this morning. But on that note, we are absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.
By Gauri Khan radiates elegance. Situated on NMACC's 3rd floor, the suitable entry points to the cafe are Gate 11 and 12. The stunning Cherry Blossom series by Damien Hirst greets visitors as the Arts Cafe experience gets underway. A grand 16-feet organic bar with a flowing wave-like design and an amazing skylight that lets in the sunshine make it the room's center point, exuding sophistication and calm, which further adds to its attractiveness. The cafe is one of the most alluring rooftop places in BKC with its large al fresco terrace, which offers sweeping views of the Fountain of Joy. For those looking for a more intimate experience, the cafe also features a beautiful 12-seater private dining area with a live kitchen, perfect for small parties and customized menus. The Arts Cafe is more than just a meal. It's a harmonious blend of art, culture and cuisine, making it a must-visit addition to Mumbai's cultural landscape. In Mumbai, Zenia Barya.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC TV18.
You look at the quality companies I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting. Healthcare is a good space. It's not obviously high beta, but basically, I think globally there is a need to reduce healthcare costs because governments are very leveraged. There is aging population, and India has obviously got great strength in terms of generic drugs or medical tourism or whatever.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Nigel D'Souza. We'll have Prashant joining in shortly as well. And yes, thank God, it's Friday. We have woken up to cues which are not too bad, but there is some consolidation in the US markets. We'll see how it goes. But Nigel, this week, the bulls have been fighting back the last 2-3 days.
Well, what a tumultuous start actually to the week. And from there, we have only seen a recovery. So the bulls actually would like to end the week on a strong note. A good fight back, but you always like to go into the weekend on a high. So let's see whether or not they can manage that. Plenty of earnings now action as well. So let's get straight to it, Surabhi.
Because of the earnings, it's not feeling like a Friday. Because there are so many big numbers to go over.
And then you have the big budget event as well that's coming up. And Trump is coming next week as well. So, you know.
Charged up.
Absolutely.
All right, so let's quickly take stock of the cues. So the close on Wall Street was largely negative, particularly on the NASDAQ. And this is despite the fact that we had pretty decent retail sales data coming out of the US. Numbers were in line. I mean, the growth that they've been talking about, 0.4% month-on-month growth in December retail sales. That was all right. But despite that, the market chose to cool down. But the fact that the retail sales data and the inflation data this week has been fairly positive, that continued the cheer on bond yields and on the dollar. The US 10-year yields slipped further overnight, and the dollar continues to move away from that 110 handle as well. So that's the good news for equities. But the equity market also chose to be a little range-bound. There we go. We've got, look at that, dollar index below 109 finally. So good news coming in over there as well. Now, just to talk about some of the cues across Asia this morning, markets are a little mixed because they've picked up this slight weakness on Wall Street. And also, we're looking out for lots and lots of data from China this morning, including the GDP numbers, including fixed asset formation, retail sales, and obviously the industrial production numbers. So it's going to be a very data-heavy, packed morning from China, and the numbers will start trickling in soon enough. Ahead of that, the action is fairly mixed. By the way, speaking of China and the US, yesterday the Nasdaq was down. One of the biggest culprits in the Nasdaq was Apple. Apple shares were down almost 4-5%, and this because of concern that their sales in China are not picking up. They're not as hot as the company would have liked to see, and that concern was playing out on that stock. So just thought I'll put that on the table as well. Anyway, so the short point is that global equity markets are a little cautious today, though the cues from the bond market and the dollar index are very, very supportive. Now let's come back home and look at the setup over here. The Nifty's spent the week in consolidation. So if you're looking at the tally so far, it's more or less flat. The Bank Nifty has done better with a gain of almost 1%. And the mid-cap index, at an index level, it's been range-bound. Obviously, it's been all about individual stocks. Very quickly, fund flows. It's the same situation, same picture that we talk about day in and day out. Again, a net sale of about 4,300 crores from the foreign institutions. Domestic institutions were net buyers, but they bought stock worth about 3,000 crores today. Like Nigel has been pointing out, it's going to be very, very stock-specific and earnings-driven. Which is why let's look at just quick headlines from the majors, the index majors that reported yesterday. Infosys is a curious case because the numbers have looked very good. The constant currency revenue growth is 1.7%, which is ahead of estimates. The margins have increased in line with estimates. The commentary looks pretty solid. The company is saying that the deal pipeline is improving. There is sign of discretionary demand pickup. But despite all of this, and the guidance has been increased, by the way, but despite all of this, the ADR ended down 6%. Why? Well, one guess is that they'll be taking their wage hikes across 2 quarters. Maybe there's some impact over there as well. So that's Infosys. Reliance was a near all-round good show. the retail numbers are scorching. The retail business quarter-on-quarter growth is phenomenal, way ahead of expectations. The EBITDA has surged almost 17%. The top line is up about 18% quarter-on-quarter. The digital business has done really well. The telecom ARPU for Jio is finally above the 200 mark. So good news coming in there. And even oil and gas, the sequential recovery. O2C has done very, very well sequentially as well. So it's an all-round, good performance from Reliance. Axis Bank, I think the street will quibble a little bit here and there. People will tell you that maybe the growth in the business at 9% advances growth is not too hot. And more importantly, there's going to be some chatter on asset quality because their slippages have gone up quite a bit, so especially if you look at it quarter on quarter. So Axis Bank, let's see what the market verdict is. Then you've got, every day you'll have some hits, some misses. The misses probably this morning is Havells. Havells is a bad number all round. Big compression on margins coming in. So it's going to be very, very earnings driven. I'll quickly, hand it over to Nigel with some of the earnings today. There's Jio Finance, there's SBI Life. After HDFC Life, we have to watch what this one does. Is Wipro, Tech Mahindra, ICICI Lombard. Yeah, it doesn't feel like a Friday. It's a very heavy one, Nigel, for sure.
Well, that's right. And the bulls, they'll be feeling good with the kind of pullback that we've seen the last few sessions. They'll want to end the week on a high, and there'll be that temptation to go ahead and buy the dip. Well, let's tell you about the top cues that we've been tracking. Well, 2 out of those 3, well, they are relatively better in comparison to what we saw at the start of the week. So you have the dollar index that's cooled off to less than around 109, so you like that. And you have, the yields as well that were heading towards 4.8%. They've cooled off a little bit, and Brent crude prices more or less stable. So mostly these global cues are in favor of us. Moving to what did the FIs do in yesterday's trading session? No surprise, they went ahead and they added some shorts. Close to around 7,000 contracts is what they added on the short side. Takes their total short position to around 83%. And if you look at it in absolute terms, FIs in index futures, clients in index futures as well, you'll see that they're opposite ends of the spectrum. Clients are net long, FIs are net short. But if you're looking at the stock futures, then both of them are on the same page. And in yesterday's trading session, you had some addition on the long side, on stock futures longs from clients by close to 40,000 contracts, while the FIs, they unwound some long positions on stock futures. Net, long on stock futures, while on the index, they're on opposite ends of the spectrum. Moving to the options data, then we have a couple of strikes that were fairly active, 23,300 call, 23,000 put as well, which helps us get a sense in terms of the numbers. So we should get some of them up for you on the screen, in terms of the numbers that did come out. You have resistance. Well, that comes in at around this 23,350. Very, very important mark. You'll want to close closer to around this level. And that's a bit of a congestion zone. The support, though, 23,000, don't want that mark to get broken on the downside. So in the near term, I think we're in a bit of a range till we get a bigger Q coming in there. And if we can get past this 23,500, then the bulls will be hoping that we can get closer to around that 200 EMA, which is at around the 23,650 or thereabouts. One quick word with regard to the numbers. Infosys, that's the one that ended at the low point of the day. It could be a blessing in disguise. Though overnight you had the rates that come out that indicated the stock will be a little bit softish, but I think that dip can get bought into and expect the stock to end off the low point of the day, because towards the end of trade, there was a lot of shots that got into the system, and that could be a blessing in disguise. So Infosys should recover from the low point of the day. On Reliance Industries, it's been the one that's been out of form. It ended at the high point of the day. But these numbers give reason to maybe, in fact, Reliance Industries now gives up that recent underperformance. And maybe it could be one of the leaders from here on. So Reliance Industries is the other one that we'll be tracking. Infosys comes off the low. Reliance could lead in today's trading session as well. And the Nifty Bank, I've been making this point for the last few days that it was making lower highs and lower lows. Well, now the time has come where you wanted to make a higher high. That's yesterday's high and yesterday's low. So you'll want, both these two to be higher in today's trading session in comparison to yesterday. Temptation will be to buy the dip. Let's see whether or not the bulls can drive home the advantage getting into the weekend.
Well, absolutely, Nigel. And, we've got T-minus how many days? 2 days, right? Today, 2 trading days, today and on Monday. Because Trump inauguration is on Monday night, 10 o'clock.
And Monday is a holiday, US market holiday otherwise. Because of Martin Luther King Day, I think so.
Okay, so then, so
it's a 3-day weekend, gearing up for the big event. As far as the US goes.
T-minus to go, almost making it sound like some Jurassic Park version.
Some rocket launch. Speaking of rocket launch, did you guys see the visuals that came out?
The ISRO docking.
The Starship, Mr. Musk's Starship.
I was talking about the ISRO. So we managed to dock a...
Yes.
So it's been, absolutely. I think great things are happening in space. We'll talk more about this. I just want to quickly, round up just one additional thing apart from what we've already kind of mentioned. So as I said, you're basically, markets are awaiting Trump 2.0. That's the big theme. And everything between now and actually when he does take over on Monday night is going to be a little bit of volatility, a little bit of noise. So don't chase moves. That's essentially been the advice. And I think we've already highlighted, and we'll just quickly flip through the sort of graphics there. Equities were down, yields were down, dollar was off a little bit. So, that kind of a day. December sale, the retail sales, etc. we've spoken about. Oil prices down about 1. So the thing is, you had the Treasury Secretary nominee, Scott Bessent, in a hearing before the Congress. And this was the interesting bit, right? Now, remember, Scott Bessent was seen as this market person and as someone who will be pragmatic. But he actually came across as a tariff hawk in the Senate hearing. And I'll tell you why. He said that a 10% tariff hike means a 4% currency gain. So he was talking about a tariff forex beta being about 0.4% or so. Is that going to be really the case? And I'm not sure whether he was whether he was using the 10% as an example or whether he was saying that actually, we'll tariff at 10%. I'm not very sure, but this was interesting. And he said, well, foreign companies, because the dollar will gain, foreign companies will have to actually drop prices to stay where they are in terms of market shares. And so consumers will not feel the pinch of this 10% tariff hike. So I thought that was interesting. Remember when his sort of appointment was first announced, yields came off sharply because of exactly the reason what I said, which is that he's essentially seen as pragmatic and this market person, etc. But last night, I thought he came across as a very clear kind of tariff guy. We've been, of course, putting out all these levels, etc. So, we on the Nifty, just one level, we hit the 40 hourly exponential moving average, and then we found selling pressure there. So that becomes the level to take out. It is about 23,370, 23,367 is that level as of yesterday. So keep an eye out on that. And Nifty Bank managed to close above the 40 exponential average. And the next resistance zone here is 49,785 to 49,850 or so. So that's the number. On the downside, again, I've not been putting out the downside levels for the last 2 days, but it's the recent lows. Monday's lows, basically, for both the Nifty and the Bank Nifty, which are kind of well advertised. It's almost consensus now that, this is just a bounce and eventually you're going to drift lower. But consensus rarely ever plays out in exactly the same fashion. So be mindful of that. There's a lot in the mix right now. And of course, the big one is going to be Trump taking over on Monday. And it'll depend on what he says. Maybe it's going to be, it could be anything, right? Monday onwards. But we know we have some idea of his inclinations and what he'd like to do. But it's all relative and what's priced in and what's not. So in that sense, expect volatility. Chetan Seth is with us, APAC equity strategist at Nomura. Chetan, good morning. Great to have you with us here. Thank you very much for your time. This, if you want to start with this comment, the hearing, Scott Bessent is an important appointee, right? Treasury Secretary. Top post will weigh in on a variety of things. What did he make of the hearing and anything we can learn from what he said?
Well, not much. As you rightly said, he came across as a relative hawkish guy. But, in the end, it's going to be Trump who's going to decide. And the reality is that we just don't know. We do have views. We have some baseline views, but we just don't know around the timing, extent, and sequencing of some of these flagship Trump policies. And for Asia, I think, including India, I would say the number one, uncertainties around the trade and literally the trade policies and tariff policies. So remains to be seen. I think the next week is going to be quite important. I think there'll be a lot of focus on what Trump has to say. Interestingly, the US markets are down. So I think, Tuesday morning, we might be a bit, lacking direction.
Chetan, so finally, hi, morning, great to have you on the show. So finally, we'll at least get over this event, right? And then we'll see whether he does those, many tariff announcements or the many executive orders immediately in the first 24 to 36 hours or not. So it's going to be an action-packed week. But really, I just want to broaden this out. The markets have been on a roller coaster, right, over the last 2 months, especially markets like India, markets in the Asia region particularly. Because it's been this great to make America great again trade, the go-home trade. Do you think that trade has somewhat peaked now that finally the event is going to be behind us? Or do you think, the uncertain patch is just going to continue over the next couple of perhaps weeks?
So Well, I don't think so. We will get through this uncertainty next week. You see, we've got two scenarios. Either Trump says something about tariffs. Then we also don't know whether he's going to talk about 10%, 15%. I mean, he's spoken about universal 10% tariffs across the board. He's also spoken about 60% on China. So my sense is, at least our sense is, that this uncertainty at least will be the showstopper at least for Q1 and potentially Q2. But I do think that sometime, maybe Q1, Q2, we'll reach the stage of peak pessimism, when the market will have much greater clarity on the direction of tariffs. We'll probably have peak dollar, peak bond yields. And I think that is when we can be a bit more constructive on Asia, including India.
Hi, Chetan. Good morning and good to see you. And Chetan, so, I mean, you don't believe that the dollar index has still peaked out? You think it has more to go? Because that's the big fear, right? Whether it could go out or back, which then all bets are off with regard to emerging markets.
Well, as a house, we think, generally the theme for Q1 and potentially even Q2 is going to be strong dollar. Of course, we can have these, false rallies and false corrections. Yesterday, one interesting thing, which I didn't see your anchors speak about, was we also had some dovish comments from Waller, and he's quite important now. He's generally a dovish guy. Yeah, I mean, we think that, look, if you have a scenario where US puts tariffs, I mean, there's going to be some risk off as well. I mean, that would be another factor for the dollar to go higher. I mean, there could also be concerns around inflation in the US. I know we got a soft CPI print, but generally as a house, Nomura is expecting that in the baseline, the impact of some of these tariffs could lead to an 80 bips move higher in inflation. Of course, the uncertainty there is whether these tariffs will be staggered or there'll be one-time impact. I think that remains to be seen. But yeah, the short answer is we are expecting, dollar strength to continue. Bond yields will probably stay elevated, and that means there's going to be some pressure on Asia FX, and that will have its own negative impact on emerging markets, including Asia and including India.
No, but Chetan, Nomura's point you're saying is that there could be an 80 basis points move higher in US inflation on these tariffs. What I was trying to understand is that if the tariffs are what he's been saying all along, right? So that the market's primed for 10% to 60%. If the tariffs are indeed what he's been saying, do you still see a further rise in the US dollar?
We do see, and we do expect. And let me give you just one simple data point. If you look at 2018-2019 trade war, and we've actually looked at for equities, not necessarily for dollar. I don't look at like DXY the way my FX strategists will look at. There were at least 5 or 6 times Trump back then either threatened tariffs on China or there was an actual announcement. And interestingly, all this time, despite the market saying that tariffs are well expected, there was always this knee-jerk negative reaction. So if Trump sticks to his word and we do get these tariffs or even threat of tariffs, I suspect you will still see a reaction in the market. So I think it's still feels a bit too early to conclude that dollar has peaked and bond yields have peaked. So I think there's probably another quarter where I think there'll be just a lot of volatility. And I don't expect investors specifically to go gung-ho over equities, at least Asia or emerging markets.
Chetan, sorry, just one thing. As last night we heard that sensitivity being put out, Scott Besson saying that 10% tariffs will lead to 4% appreciation. So that's the sensitivity, right? 0.4. What does that mean for the CNY, which is a big trading partner for the US? I mean, that should mean big depreciation. It's important here because the rupee is joined at the hip with the CNY.
Well, so one thing in general, well, I don't have the sensitivity nor we've calculated it, but let me just say a couple of things that, look, if the aim is towards China as far as these tariffs is concerned, you'd expect renminbi to be weaker, right? And in fact, as a house, we expect normally, or generally speaking, the pressure would be on renminbi, right? And as that happens, some of the other Asia FX pairs will also get impacted. I think India would probably to a lesser extent, but there could be some other currencies which could be impacted, right? As I said earlier, if you have a scenario where global investors are worried about or concerned about weaker domestic Asia FX, whether it's renminbi or rupee, then that's another incremental negative factor for Asia equities. I mean, we didn't speak about it, but I just say that, look, I think near term we have to be cautious. I mean, we are generally cautious. Our view is maybe Q2, middle of 2025, maybe that's when things stabilize once we reach this peak pessimism. And I think we are not there. I mean, I don't think so. We are clear at the stage of peak pessimism. We still haven't seen what sort of policies Trump will embark on.
Very quickly, Chetan, before we let you go, but you expect India to outperform from the emerging market basket? Plenty of uncertainties, but will India outperform?
Yeah. Well, so absolute, if you look at the absolute level, I mean, our India team has just put out a big outlook report a couple of days ago. They're not expecting much upside. From my vantage point, I look at 10 different Asia markets. We have an overweight, and I still feel that India's relative case is still quite strong. And you literally go country by country in Asia. It's not easy to paint a very positive outlook for the other countries. You look at Korea, politics, fundamentals. You look at China, still very questionable despite valuations. Taiwan is great. AI is fantastic team, but this market has done incredibly well. So it's not clear also whether those gains will sustain. And Southeast Asia has a problem from currencies and global macro cross currents. So, in that kind of context, I think India still looks okay. But yes, I think near term we have a problem. And I think India equities, just like EMs and Asia, will probably struggle so long as we have this rhetoric of tariffs or trade uncertainty from the US.
Okay, all right, Chetan. Appreciate you joining in and giving us those views. We'd like to re-invite you in the next couple of weeks when we get some clarity coming in from Trump and his policies, and then we could have a more elaborate chat. But thanks for joining in. Wishing you a good day ahead and looking forward to chatting up with you soon. Well, time to slip into a short break. On the other side, we'll go stock specific. We'll focus on all the top stocks that we're tracking. For the time being, I'll run you through the list. Reliance Industries, LTI Mindtree, Metro Brands, Aditya Birla Fashion, TVS Motor, AIA Engineering. All of them will be reacting to positive news flow, while Axis, Infosys, Hudson Agro and Havells India will be reacting to negative news flow. Slip into the break, get into more details on all of these names.
I mean, bulls are very tired on insurance because last 3-4 years, we've kept getting hit by some regulation or the other. I do feel that mutual funds are more efficient as a savings vehicle than insurance. But having said that, there is obviously need for long-term savings, which insurance is an avenue for. So we have a bit both the general insurers, life insurers, and the tech platforms around it. But yes, it's been it has needed a lot of patience.
Or 16.2 that we've got, and I do see quarter 4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee base. Medium term, we are reiterating our aspiration to get to $2 billion and 17 to 18% EBIT levels. Our pipeline is better than what it was the same time last year as well as last quarter. If you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year.
Welcome back. So the cues are cautiously optimistic across Asia. We can say that because Wall Street decided to have a bit of a tepid, close. The implied open is saying that we'll probably start slightly lower, 55 points. Lower, lots and lots of stocks to go over and plenty of earnings to track. So let's straight away get to our team, which is standing by with the CNBC-TV18 list of top stocks to watch. Guys, Well, so many numbers to go with. Let's start with the biggest one of them all, Rima, Reliance Industries. So how do all the parts add up?
Well, it's a beat compared to street expectations, and the beat was led by the retail business and the oil to chemicals business. So first, in case you missed the numbers because they came out late yesterday, here are the numbers. The company's reported a revenue growth of 6.6% on a year-on-year basis. Margins inched up 20 basis points to 18.3%, and the profit jumped by 7.4%. These are the year-on-year numbers. If you look at it on a quarter-on-quarter basis, which is what a lot of analysts track, the EBITDA growth, the absolute EBITDA growth was about 12%. And this is higher than the 8% that the street was anticipating. Here lies the beat. And as we said, the beat came in from two key segments. One, the oil to chemicals business on the back of a pickup in the refining margins. So oil to chemicals estimate was for a 10% jump in EBITDA. The actual number was a 16% growth. Even retail, where Mangalam was anticipating a 7 to 8% increase in the EBITDA, the actual number came in at 16.7%. For Reliance Jio, it turned out to be a stable quarter, and even for the oil and gas, basically the upstream business. Brokerages are bullish. CLSA has an outperform call. Morgan Stanley says Q3 results had elements for the stock to re-rate as results downgrades unwinds. Jefferies says further traction in retail, a tariff hike and a possible listing of Jio could be triggers in FY26. Reliance Industries spiked in the last 30 minutes of trade. It ended with a gain of more than 1%. So far this year, it's outperformed the benchmark by 6% in this calendar year so far, but it's still down 21% from its 52-week high. Back to you.
Okay, all right, Rima. Thanks a lot for that. So we'll keep an eye on that one. Axis Bank, the numbers looked a little bit soft, but Abhishek joins us to help us out with a quick take on that one. Abhishek?
While Axis Bank reported one of the weakest business momentum that you are seeing in last 15 quarters on a YOY basis. So take a look at the deposits. Deposits have grown by 9% YOY. Advances growth much below the deposit growth at 8.8% on a YOY basis. So the CD ratio remains elevated, which means that they need to outpace the deposit growth versus the advances growth in the coming quarters to lower the CD ratio. The CASA ratio is at 38 quarter or more low. First time I'm seeing in last 10 years that the CASA ratio has fallen below the 40% level. The net interest margin as a resultant of higher incremental deposit cost as well as higher slippages has come in at 10 quarter low of 3.93% versus 3.99% in the previous quarter. The slippages, they are higher than analyst estimate on account of unsecured portfolio like MFI and credit card and personal loans, etc. It has come in at 5,432 crores, which is one of the highest that you are seeing in last 13 quarters. Operating efficiency is one of the best in last 7 quarters. Cost to income ratio is at 46.2% versus 47% in the previous quarter, and that's thanks to OPEX, which has declined by 4.7% on a sequential basis. With reference to the PNL versus RPOL, the NII is below RPOL, but lower OPEX has meant that the profit is slightly ahead of RPOL. Back to you.
All right, Abhishek, thank you very much for that. So big day for earnings. Next one, Infosys in focus. Rima is here. Rima, take it away.
Well, Infy's Q3 numbers were actually pretty okay. They were in line with street expectations, but the ADR was down 5.8%. So first on the numbers, revenues were ahead of street expectations. The company reported a constant currency revenue growth of 1.7%. The estimates were for a 1% increase. Q3 margins expanded by 20 basis points. The company, on expected lines, revised the revenue forecast for the year. They're now expecting a 4.5% to 5% growth. Again, in line with what the market was anticipating. Margin guidance unchanged at 20 to 22%. One of the key takeaways from the management commentary was, in Q2, the pickup in discretionary demand was limited to US BFS, banking and financial services. In Q3, in the last 3 quarters, they saw a pickup in discretionary spends, not just in US BFS, which continued, but also in Europe in the financial sector. And the other one is US consumer and retail sector. So these were the other 2 pockets where there was an improvement in demand. Now, now about the ADR, which has slipped close to about 5.5–6% overnight. Numbers were fine. There were no, most brokerages are upbeat. They call it their top pick in the IT pack. The stock has outperformed. So positioning versus the rest of the pack, in the last 1 year in fees, up close to about 18%. And also maybe there could be some disappointment because the company, the guidance which is there at 4.5% to 5% implies in Q4 the company's revenues will fall by either 0.5% going up to 2%. So Q4 is going to be a soft quarter for the company going by the implied Q4 numbers. But all in all, perhaps it's just positioning some profit booking after the outperformance versus peers.
Okay, all right, got it. So that's LTI Mindtree. We're going to keep that on the radar, of course, as well. That was, we have to, Infosys, and after that, we have to look at, of course, LTI Mindtree as well. So run us through this one, Rima. How is it stacking up?
Well, it's a modest beat compared to expectations, but again, not a big beat. Revenue growth at 1.8%, EBIT margins at 13.8%. The deal wins have come in at record high levels, up 29% quarter on quarter and 12% on a year-on-year basis. The key positive is the banking and financial services, which is 36% of the company's revenues, is showing sure and certain signs of a recovery. Quarter on quarter revenue growth was 3.4% in BFS, and even on a year-on-year basis, revenue growth in the banking and financial services vertical, where the company is heavily indexed, is up nearly 7.5%. Now, this one's an underperformer versus peers. And these numbers, there are no negative surprises. It's a decent set.
Rima, thank you very much for that. So it's a busy morning for Rima all across. Metro Brands, Hudson Agro are the other stocks that we are going to focus on next. Mangalam is here to tell us why. Mangalam, morning.
Good morning. So we're looking at Metro Brands results that have come by. The third quarter seasonally is strong, so the company has reported double-digit revenue growth out there. But it's a sputtering recovery in growth because, while it has grown at around 10.6%, remember in the prior quarters, earlier it has been growing in mid-teens and a little above that as well, 30s and 25%, etc. So to that extent, it is, a lot softer than what was earlier done. But the good part is there is recovery. 10% revenue growth, 13% EBITDA growth. The net profit is impacted by a one-time tax charge of 25 crore rather. E-commerce showed a 37% growth, and liquidation for Fila inventory has been completed in the third quarter. So from here on, we can expect some recovery. See mild green on Metro Brands. And on Hudson Agro, the second quarter that the company has actually reported softer growth, 6.5% revenue growth. Gross margins have compressed to a multi-quarter low, and as a result of which the EBITDA margins also came off by about 60 basis points. The net profit on account of higher depreciation declined from the same time a year ago. See red on Hudson and green on Metro Brands.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Upasana. She's here to tell us about Havells India's numbers. Morning, Upasana.
Good morning. Well, the weakness continues in Q3 as well as seen in Q2. Now, numbers were below our poll estimates on all three parameters, be it revenue, be it EBITDA margins or PAT. Now, company has registered a lower revenue growth of nearly about 11%, which was mainly dragged by the key segment, that is company's cable and wire segment, which forms nearly 33% of the mix. Now, cable and wire growth remained muted at 7% on a one-year basis. This was mainly due to wire destocking led by copper prices softening, but margins in this expanded by nearly about 70 basis points. Now coming to EBITDA stood at 426 crores with a downtick of 1.4% on a one-year basis, and margins were also under pressure, down nearly about 110 basis points, stood at 8.7%, while we were working with a poll of nearly about 9.9%, which was much lower. Now share of high margin wires and cable segment declined sequentially, while ECD and Lloyd share in the revenue mix increased, thus putting up pressure on the margins as well. Now, PAT stood at 278 crores with a downtick of nearly about 3%, which was below our poll estimates. Now, when it comes to Lloyd, it has reported a steady performance. The revenue growth stood at double digits, and even the PBIT losses have contracted. So, all in all, we are seeing a weak set of numbers from Havells.
Oh, yes, weak, absolutely. Oh, Upasana, thanks for rounding that up. In fact, we'll be chatting with the management, with Mr. Anil Rai Gupta, to figure out if this is just transitory, if it's getting better in Q4, and what's the outlook. That is Havells coming up closer to 10:15. Now let's get back to AB Fashion, which is also in our list this morning. Vinny, morning, why? Why are you watching out for it?
Good morning, Surbi. Aditya Birla Fashions is in focus today. Just do not forget that just this week that they had said that they are going to have a preferential issue plus a QIP, and they will be raising around 5,000 crores in total. Now, obviously, the QIP has been launched today. What we are seeing is that the base issue size is going to be around 1,500 crores, while the option to size it up is going to be further to 1,950 crores. Now, this is according to sources, is what we're picking up. The indicative issue price is at around 271.30 rupees per share, which is a discount when you look at it to yesterday's closing price of around a 2% discount to yesterday's closing price, so not much of a discount there. But do not forget, they've said that they will be using these proceeds to repay the debt that is there on their books, strengthen their balance sheet, as well as in terms of grow the business further. So general corporate purpose is also what the use of the proceeds are going to be. But a positive is what I'm expecting for Aditya Birla Fashions, given that, you know, they're actually walking the talk in terms of using the proceeds in the right direction, as well as raising the money at the right time.
All right, thank you very much for that. Well, TVS Motor and AI engineering in focus. Vamakshi is here with that one. Vamakshi, morning.
Good morning, Prashant. Let me first start off with TVS Motors going with the green for this counter because the company has announced its entry in Morocco in collaboration with its distribution partner Hindi Motors. The company is launching a wide variety of two-wheelers which includes TVS N-Torque 125, Raider 125, Apache 160 and 200 in Morocco. So therefore bodes well for the company. The next counter that I'm watching out for is AIA Engineering. Its arm Vega Industries in the Middle East, which is a wholly owned subsidiary, has decided to establish facilities in China and Ghana. They will be manufacturing high chrome grinding media using distinct technology, and this in turn will help the company mitigate logistics and supply chain constraints, which will lead to better market access for the company, better product availability, as well as reduced costs for some of its customers. They're also evaluating Indonesia and other geographic locations for setting up of similar manufacturing facilities. There's also another news flow, and that is that the company has completed setting up of a rubber and composite liners plant in Ahmedabad, and the commercial production has started from this. So again, going with the green for AIA Engineering.
Okay, all right. Thanks a lot for that, Vamakshi. Let's do a quick recap of all the top stocks we just stated out for you. The ones with positive news flow: Reliance Industries, LTI Mindtree, Metro Brands, Aditya Birla Fashion, TVS Motor, and AIA Engineering. So a larger number of stocks to start off in the green, while we'll have a few stocks that could see some pressure: Axis Bank, Infosys, Hudson Agro, as well as Havells India. That's about the equity market, but Manisha Gupta joins us, as always, to tell us about the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, which is trading off its 5-month highs, but even with that, it's headed for a fourth weekly gain. Well, the U.S. president-elect could soften the sanctions on Russia is the theme that the markets are working with right now. In any case, the declining U.S. stockpiles, winter heating, fuel demand, all of that has been supportive for the crude prices in the recent days. We have seen 12% of gains for crude in this year until now. But I want to quickly talk about metals also, because it seems like a stronger week for this asset class as well. If you look at the gold prices, they're trading at a 2-month highs. Aluminum is trading at a 4-month highs. Copper at a 2-month high, silver at 1-month highs. Even the steel rebar prices have rebounded from a 3-month lows. So a second straight week in this year where we are looking at the metal prices trading in positive as well.
Okay, all right. Got that, Manisha. Thank you very much for a roundup of all the commodity market action. We will take a very quick break on that note. Come back on the other side. We will connect with Prabal Sen of ICICI Securities and Gaurav Malhotra of Axis Capital to decode the Q3 fine print on Reliance Industries.
I think it's going to be, I believe, not a very high return market, to be honest, next few quarters. The thing is, rather than forecasting anything, the biggest thing is last 3-5 years have been solid in terms of returns. Obviously, valuations are high. And two is, as you pointed out, we're entering a phase where the world's largest economy is going to see a fairly radical regime change. We don't know what exactly will happen in terms of dollar strength, yuan weakness, trade tariffs, etc. So there is a lot of uncertainty, and the valuations are probably on an aggregate not reflective of that uncertainty. But having said that, I think there is value at polar opposites of the market. I think a lot of tier 2, tier 3 financials are almost at distress valuation. And I believe that in India, secured lending will still be okay because in general, we are a reasonably high inflation economy. So the asset values keep inflating. And a lot of the tier 2 private banks, PSU banks are at book or below. So I think there is a risk reward opportunity there. I think there is a risk reward in metals at this point of time. And on the other side, when you look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting.
Okay, welcome back. With just sort of ticking down and, markets, of course, in a holding pattern more than anything else, because a little bit here, a little bit there in terms of macro markets up and down, but clear indication only post next Monday, Tuesday morning, because as Reuters and other global wires have reported, we'll see at least 20 executive orders on day one. So Tuesday should be consequential in that day. I'm talking about, of course, incoming President Trump and what he does. GIFT Nifty indicating about a 60-odd point lower start, but it's big and heavy on earnings this morning. Reliance, of course, is the big one. We have Prabal Sen, energy analyst at ICICI Securities, Gaurav Malhotra, executive director at Axis Capital. We also have Siddharth Khemka of Motilal Oswal Financial Services joining us. Gentlemen, great to have all of you here. Thank you very much for your time. Prabal, first take, what did you make of the numbers?
Operationally, I think pretty good set of numbers. Very clearly, it was a beat on the street comfortably across segments. I think OTC probably surprised, I would reckon, because of slightly better refining performance, even though petrochemicals remains steady to subdued at this point of time. Retail was the big surprise, at least as far as we were concerned. I think probably the best quarter in this financial year and probably the best quarter in the last four quarters from both a YOY and QOQ perspective. How much of an impact the holiday season and the festivals would have had, we will probably get to know in the fourth quarter. But for now, I think pretty encouraging set of numbers. EBITDA at around 438 billion was well ahead of our estimates of 420 billion. So pretty decent set of prints.
Gaurav, got it. Gaurav, what about you? First take?
Yeah, see, overall the numbers were good. Right, there was beat across Geo, across retail, across O2C. Specifically on Geo, I think so. The whole transmission of tariff hike into ARPU, revenue, EBITDA is coming along nicely. It's slightly lesser for Geo than Bharti, but nonetheless, with an 18% EBITDA growth for Geo, I don't think so there's anything to complain, right? The additional sort of positive has been the standalone Geo platform, which is the services business of Geo, which is, think of it as the enterprise business. That has been growing really strongly. That has been growing roughly 40, 50, this time it was 60% year on year, right? Versus say 10, 15% for peer set. So that is a business which is going very well. With Geo, generally one tends to focus on the connectivity, but this is another part of the business which has now become almost 11-12% of the total pie of Geo platforms.
Okay, got that. Gaurav, hi. Prabal, morning to you as well, and hi to you, Sid. Prabal, just to complete the picture on O2C and upstream. Obviously, sequentially, there's been a recovery, and from what we've sort of been hearing as well, that perhaps refining margins will sustain. What are you expecting on these two sides of the businesses, given that O2C has performed really well? So can this be extrapolated into the next 1 or 2 quarters?
I think the interesting thing is that the environment has changed quite drastically, as you would have seen. There has been a couple of events that have happened. One, the strength in the crude prices, generally tends to reflect in product prices with a lag, which is what we are seeing in January. The first couple of weeks, Singapore margins are already down below $4, and the last couple of days, they in fact slipped below $2 as well, compared to the $4.8 average that we saw in Q3. Secondly, the Russian, crude sanctions. Now, we don't really have player-wise data in terms of who imports how much and at what discount. But the fact is that every Indian refiner was benefiting from a decent amount of Russian crude coming through at some discount to Brent. That probably will come under pressure. So I would say that in terms of OTC, and the management, I think, was very clear in terms of their outlook. They did give a very clear and long-term outlook in terms of how they see the environment going. But in the near term, I would say over the next couple of quarters, there probably would be a little bit more pressure on OTC. Petrochemicals, there is strong volume demand, specifically domestically, but the margin environment continues to remain tepid. So if I balance it out, I would say that this quarter is likely to probably be a standout quarter. I think Q4 would probably again moderate down somewhere between Q2 and Q3 run rates. And, first quarter of next year probably would be similar levels. And then we'll have to see how the demand supply situation is shaping up and how the Russia crude supply situation is shaping up.
All right, Prabal, give and take everything, maybe a softish quarter four. But looking at the valuations and the last 1 year's underperformance, do you think Reliance Industries is set for better times from here on? Could it lead from here on? What's the official rating you'll have on the stock?
We have an ad rating with a target price of around 14.55. So we do believe that around 14.5% upside exists from here. Definitely, I think there has been a bit of an overcorrection in terms of the stock reacting to maybe slightly tepid earnings over Q1 and Q2. So that momentum coming back is definitely good news. We would probably look very closely at the retail numbers. This quarter was obviously good, but if you look at 9-month trajectory, it is definitely lower than the fantastic set of growth that one saw over FY22 to 24. So I think that remains a key monitorable along with new energy timelines. When does that new energy really start to contribute positively to energy costs? Because that could actually move the trigger quite materially, even for the OTC business. Because then Reliance gains an edge as far as input costs is concerned, irrespective of what is happening to margins or prices at the Asian level. So those two things, I think, can drive it. As of now, we have an ad rating with a target price of 14.55.
14.55, got that. Gaurav, on telecom, so now they've reached this milestone of 200 on ARPU, and the release pointed out how I think the benefits of the tariff hikes will really finally flow through and show up more meaningfully in the coming quarters. Where do you see the ARPU going over the next 1-2 quarters, and are you penciling in another round of tariff hikes perhaps at some point this year? And also throw in your word, I mean, that's a best guesstimate, right? The whole street's waiting for some indication of when the listing will happen for the telecom business. Are you betting on this year?
Okay, so see, in terms of ARPU, I think so, we have seen almost a 75% transmission of the tariff hike into the ARPU already, which is quite strong. There will be further sort of transmission in the coming quarter. So probably the overall transmission will be around 80%. So maybe we'll see another 2 to 3% increase in ARPU in the coming quarter. But having said that, even beyond that, these operators have started to get benefit of subscriber premiumization in their ARPU uptake. So tariff is one part of the puzzle, but the premiumization is also the second part. So overall, the ARPU will start to keep moving up. I think so. The medium term target for these operators is around 300 rupees. So I think so that's the path which we have to sort of see moving it towards. In terms of the timing of the hike, so what we have seen is that there was a 3-year gap between the first 2 hikes, a 2.5-year gap between the second and third hike. But what's happening is that the quantum of hike has been coming down, but the transmission has been improving. So the way we think about is that maybe next hike may not have to be a 12, 13, 14% hike, but maybe it could be high single digit or say 10% hike, because the transmission is almost 80-85%. Which means that the hikes could be more frequent going forward. So possibly say in 1.5 years from the last hike, 1.5 to 2. So probably say end of this calendar year or sometime next calendar year, early next, right? That's the kind of timelines of the hikes. on the listing, right? We do believe that it should happen or likely to happen sometime this year, probably in the second half.
Second half of this year. Got it. All right. Gentlemen, thanks very much for your thoughts and your views on what we've seen, all-round good performance. So let me come to Siddharth as we're closing this piece on Reliance, and then we'll move on to other stocks as well. Siddharth, your take. And also, I mean, the retail business has been absolutely scorching, right? Absolutely insane growth coming in, especially if you're looking at it sequentially. What's your target price on Reliance and your view?
Yeah. Thank you, Shurbi. Good morning to everyone. So I think we are constructive and positive on Reliance. We have a target price of 1,600, so 26% upside. The challenge with Reliance is with multiple businesses. You have a Jio, which we used to do well. Now this quarter they have kind of reported a subdued numbers, but what delivered was the retail business, which was not doing that well earlier. But nonetheless, we are expecting Jio also to start delivering. So we are also expecting a tariff hike by December of this calendar year. What Gaurav said, so there could be a 10 to 15% hike, and that could again drive the EBITDA growth for Jio. Retail business, very strong growth. I think that is something that is encouraging for now. And that should continue in that's a good trend that should continue in FY26 as well. And most importantly, the core business, oil to chemicals, we see at least next Q4 being in similar lines. That is what the management has guided, and that gives a good view that the Reliance should bottom out from here, and with improving trends, I think the stock should do well going forward.
Okay, all right. Request you to stay with us, Sid. For the time being, we slip in a short break. We come back. We'll continue the chat with Sid. We'll also get you some trading ideas. Stay with us. Welcome back. Well, we're in conversation with Sid Khemka. Sid, I wanted to ask you about the other big name, Infosys. You know, the guidance has been upped a little bit, but that indicates that quarter 4 could be a little bit softish. Doesn't take away from the fact that on a year-on-year basis, still there'll be a growth, I think, of around 6 to around 8%. But what's your view on the stock? You know, IT has been the flavor. Infosys, though, has seen a relative outperformance in the recent past. And yesterday, you know, because of positioning, the stock ended at the low point of the day. If it starts off in the red, would you be a buyer?
Yeah, hi Nigel. So I think the commentary remains cautious. While the guidance has been lifted, the exit run rate for Q4 could see a decline. What we are seeing is average decline of about 1% on a Q-on-Q basis for Q4. The other challenge is that there were the revenue growth for this quarter was entirely driven by pass-through revenues, casting a shadow on the sustainability of this growth. And while the commentary has been less upbeat compared to some of the peers, the likes of TCS, hence we would believe that Q4 would be a quarter where we would have to wait and then maybe turn more constructive, because even the wage hike impact on margins could be seen in the quarter four. So on a long-term theme, we definitely like Infosys. It has consistently delivered, and the company has maintained its margin guidance of 20 to 22%, which we believe is encouraging. And we also expect Infosys to be a key beneficiary of the increasing IT spendings in the medium term. But in terms of pecking order, we would like to prefer something like a LTI Mindtree over Infosys, and a TCS followed by an HCL Tech.
Okay, all right, got it. That's a call on IT. Siddharth, hi. You know, the one stock which obviously the numbers have been really bad, everybody is in agreement, is Havells, because it's been a serious pressure. Top line, EBITDA, if you're looking at margins are down, I think, 110 basis points, if I remember correctly. If there's weakness today, would you use the dip to buy in, or would you stay away?
So clearly, Surabhi, if you look at Havells, we'll stay away. We have a neutral rating. Even Q2 numbers were pretty weak, and Q3 numbers even again suggest weakness going forward. So the lower than expected revenue in the cables and wires lighting segment, that continues. There was some improvement in the switchgears and the ECD segments. But EBITDA margins, as you highlighted, is a key concern. And until we see any improvement there, I think we would stay away. Stock trades at a premium valuation of almost 54 times FY26. So we don't see much of upside even if the stock corrects today.
Sid, we'll come back to you. 6 minutes to go for the pre-open session at this point in time. Remember, we reported this last evening. Just want to reiterate this because the budget is also around the corner, a couple of weeks out. The government is considering reintroducing the concessional corporate tax rate corporate tax scheme for new manufacturing units. This was introduced a few years earlier at 15%. The government will continue this, but at a new rate of 18%. This is what my colleague Timsy is picking up in this CNBC-TV18 exclusive. Timsy, take it away.
Well, that's right. What sources are indicating to CNBC-TV18 that the government is considering a reintroduction of the concessional corporate tax rate. Government currently is mulling reintroduction of the concessional scheme for new manufacturing units, but in a slightly different avatar when it comes to rates at 18%. As against 15% earlier. Government is considering to bring back this concessional corporate tax scheme to promote Make in India, to create employment, and yes, to enhance manufacturing capacity within the country. The view at the North Block, what sources indicated, is that India Inc. has been asking for a reintroduction of this particular scheme to promote Make in India for quite some time. And when we talk about the current status of this proposal, well, the proposal is currently under active discussions between North Block and the PMO, and no decision has been taken as yet, because sources indicated that any decision pertaining to the taxation policy is taken only closer to the budget, that is just 3 to 4 days before the budget. Just to remind our viewers what this concessional corporate tax regime was, well, the concessional corporate tax rates were notified in September 2019 with a sunset to end in March 2023, but the scheme was extended by 1 year till March 2024 of 15% plus cess and surcharges for new manufacturing units because of the delays that were induced due to the pandemic. And post that, since March 2024, the scheme, which has had a sunset, India Inc. has been sending requests to the government to reintroduce this particular scheme again for the new manufacturing units. Meanwhile, email queries sent to the Finance Ministry remained unanswered on this particular proposal. So we'll have to wait and watch and see what finally Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
All right, Timsy, thank you very much for that. That's been a big demand from India Inc. And that's the expectation in tax circles as well, that the scheme should come back, albeit now we know it could be at a higher rate, 18% instead of 15%. Let's take a break. On that note, come back on the other side. We'll have, of course, our technical experts joining in, Mitesh Thakkar and Shrikant Chauhan, with some trading ideas for today. Welcome back. As promised, let's get to the technical perspective now. We have Mitesh Thakkar as well as Shrikant Chauhan joining in. Gentlemen, good morning to both of you and happy Friday. So the market spent a fair amount of time consolidating. The bulls are trying to fight back. Mitesh, so what do you think? Do they have a chance today? On the index, what's your trade?
Good morning, Suki. So, there has been some kind of an effort to get the market back on the upside, but on the last 2 days, we have seen that the market has failed to sustain or register an hourly close about 23,350 on this spot. So I think till that is captured, I don't think we are looking at a strong reversal. It's just a market which has stopped falling and is now chopping around. So the broad range for me is 23,350 to about 23,100. And we might make 1 or 2 more attempts to get past 23,350. But in case we keep failing, then I think we are opening up possibilities of testing a new low. For the timing, is just choppy and sideways. And on the upside, sustaining about 23,350 is what is very important for the Nifty to do in the short term.
23,350. Got that, Mitesh. Morning, Shrikant, as well as Mitesh. Shrikant, what about you? What's your view on the index?
Yeah, good morning, Nigel. Good morning, everyone. I think, yes, Nifty is in the range. It is like failing to cross the level of 23,400. On the downside, it has support at 23,100, and below that, we could see further more weakness in the market. That's the overall view. And I am of the view that the market is going to consolidate for at least next 2-3 days till this particular event goes past. Broadly, if we are going to see range-bound sort of activity, then we need to be more and more stock specific in this market. But in case, because of any reason, if we see the market is crossing the level of 23,400, then we could see some short covering in this market. But otherwise, I think we need to be stock specific.
Okay, all right. Need to be stock specific, and that's a point well taken. Gentlemen, good morning. Great to have both of you here. Mitesh, what would you recommend?
Morning, Prashant. I have 3 pharma names today, 1 on the buy side, 2 on the sell side. So Biocon is a buy. Disclaimer that it's been recommended to our clients, so there's vested interest. But technically, if somebody wants to take a fresh position, buy about 396, keep a stop at 386. 418, 422 should be the target range. Sun Pharma is a sell if it breaks 1745, 1744. Sell then with a stop at 1770 for targets of 1680. Dr. Reddy's is a sell with a stop at 1325 for targets of 1255. And Reliance is on the buy list. It was a BTST yesterday as well. Buy here with a stop at 1254 for targets of 1315.
Okay, all right. Got that, Mitesh. Shrikant, what about you?
Yeah, I think, see, we need to keep a mixed strategy in this market because the markets are volatile, and at the same time, it is giving opportunities to both bears as well as bulls. So in this market, if we have to create any long position, then Apollo Hospital looks good, which is around 6,800 levels. And if we see the overall trading pattern of the stock, then it is in the range of 6,500, 6,400, 400 on the downside, and 75, 7,600 on the high side. So in case if we see any rebound in today's date, then we could see the levels of 7,200 on the high side, and we can keep stop loss around 6,700 for the same. So Apollo Hospital looks good to buy at current levels. On the other side, Voltas is failing to sustain at higher levels and finding resistance around 1650, 1660 levels. From here, the stock can fall to the levels of maybe 1500 or 1450 in the near term. So on Voltas, we should look for creating some short positions with a stop loss at 1610.
Got it. All right, gentlemen. Thanks a lot for that. Well, let's get back to Sid Kempka, who's waiting by. Sid, I wanted to ask you about Axis Bank. That as well as another stock that's opened up with a cut-off closer on 2%, as Abhishek told us earlier, that these numbers look quite subdued. Your view on the name?
Yeah, I think the earnings have been in line with subdued expectations. But if you look at overall, the near-term weakness could continue. And there were fresh slippages, which increased to about 54 billion rupees. GNPA's ratios, NNPA ratios also inched up. So our expectation is we are cutting our estimates by about 4 to 5%. And ROAs of about 1.6 and 1.6% for FY26 and 14.6% ROEs. So the near-term growth challenges, asset quality challenges that continues to remain stressed, also reflecting the stress in the macro environment, and things look pretty subdued. But what we also believe is that we see a limited downside risk from current levels as things are likely to stabilize. So maybe 1 or 2 more quarters of neutral rating that we currently have, and then we could turn positive on Axis.
All right, Sid, we'll keep coming back to you for more, but thank you for joining us at this point. Mastek is the company that we are focused on. It posted a weak performance in the third quarter, a decline in revenues and margins. Let's now speak with the newly appointed CEO of the company, Umang Nahata, who's with us to take some questions. Umang, good morning. Great to have you with us here. Thank you for joining us this morning. Prashant this side. And congratulations on the appointment, and all the best right at the outset. Now, of course, we had to talk quarter to quarter, Umang, you hope you understand. So let me just start there before we talk about the slightly longer timeline here. The quarter has been slightly slower for you. Other than furloughs and seasonality, did you face any other headwinds?
No, I think that furlough is the most important challenge of the quarter. It is usually a weak quarter for us, given the nature of our business. I think we had a little more than expected furlough, more than anticipated. And we're pretty close to staying flattish. In fact, we are almost flattish in constant currency terms. So it is furlough and some currency that has put us down in terms of slightly down both on top line and bottom line. But yeah, those I would call out as the key, but expected kind of challenges, nothing unpredictable here.
Okay. Now, for the 9-month, Umang, dollar revenue growth is about 10.6% or so. What can we expect for the full year? And if you can tell us, will FY26 be meaningfully better? Some sense.
Yeah, I think we are expecting Q4 to have better growth than this thing we had. Like I said, Q3 was a furlough quarter, and staying flat in a furlough quarter is gives us a good outlook going forward. Having said that, we are still not fully, our US business is a little, up and down. It has a lot more project business still. And we will take, I would say, at least 2 or 3 more quarters as we grow our, business into more, T&M or managed services profile. So we think Q4 is going to be positive from here, but in the midterm, there's a degree of unpredictability as we stabilize our US business. As far as FY26 is concerned, we feel we will definitely do better in terms of overall growth profile from here. Our expectations are higher, but not like extremely high, but moderately better than what we have been doing this year. Our focus also is pretty significantly to improve our operating margins in the next year. So we will be pretty focused on stabilizing the business and improving the operating margins. Starting H2 is when we really go back and push out for growth in the North America.
All right. Hi, Umang. Good morning and good to see you in. Nigel on this side. Umang, so you're telling us that FY26, you're optimistic it'll be better than FY25. Is that correct?
That is correct. That is correct.
Okay. Let's focus on margins. For this quarter, there was some impact, I think, of wage hike. If you could tell us, if you could quantify that, because it's still sub that 16.5%. And a couple of brokerage notes are suggesting that the exit margins for quarter 4 could be in the vicinity of around 17% and build on from there on. Give us the targeted number, impact of wage hikes in the past quarter, and what's the outlook from here on?
So wage hikes around 160 basis points, approximately, give or take, would be the impact of wage hike in this quarter. Going forward, while operating margins should improve, but our UK business actually seeing a lot of growth, and the growth does come at some degree of cost. So we're trying to balance the cost that we have to put on growth versus the growth outlook that the business overall has. So yeah, I mean, we should definitely do better from here, but I mean, the estimates that you have is close to where we are expecting us to be.
So ending this year close to around 17%, and in the next couple of years you head to around at least 100 basis points improvement. Would that be something that you aspire for?
Absolutely. I mean, our aspirations is in the next 2 years take us at least 200 basis point higher than where we are. That 19% would be a good number to run our business at.
Okay. All right. Also, you're sitting on cash of close to around 500 crores.
Yes.
Is there some inorganic growth on your mind?
I think we have done quite a few inorganics in the last 6 to 8 quarters. Our current goal is to really go out and stabilize the inorganics that we have acquired for. So we are pretty looking at integrating the assets well, trying to really grow our data and our Salesforce business that we have acquired. Having said that, we are looking at investing in our UK Europe geography, but there will be more tuck-in kind of acquisitions rather than a strategic change. We would go out and again look at more strategic acquisitions maybe after 12 or 1.5 years maybe.
Okay, very quickly before we let you go, your press release says that the US business delivered good growth with improvement in profitability as well. Have margins hit double digits out there?
Yeah, so that's actually a good sign. So that's one of the areas that we really wanted US to continue to deliver growth, but at double digit or mid-teen kind of margin. So we're there yet. I'm sure there are still a couple of 100 basis points that we can improve, but yeah, the US, this is the stable rate. We want US to deliver, steady growth, but at a steady margin of, mid-teens.
Okay, a hint of optimism out there. Umang, thanks a lot for joining in. Looking forward to chatting up with you, and we'll hold you to all these numbers that you've given us as well. Well, we're done with the pre-open, so let's get in some brokerage reports. Nimesh joins us to help us out with the standout brokerage report. Morning, Nimesh.
Morning, Nigel. So today there are a couple of stocks which stood out for me in terms of standout, and both coincided from UBS. The first name is SBI Cards. UBS has to upgrade the stock to neutral from sell, and they've raised the target price to 800 from 600 earlier. So, another broker who's turned positive on SBI Cards in the last few weeks. The key thesis is a credit cost near peak, and that's likely to decline in FY26. And also they believe that the margin is going to expand with the better mix and potential rate cuts going forward. So that's the key thesis on that upgrade. The second stock is APL Apollo Tubes. It's part of FNO now. UBS has to upgrade the stock to buy from neutral, and there they've raised the target price to 1900 versus 1600 earlier. On APL Apollo, the channel check suggests that the volume growth is picking up, and basically because the customers are shifting to the HRC structural steel tubes. Now that HRC prices are inversely correlated to the volume growth, and that prices have fallen. So they expect the volumes to pick up further from here. And also their channel check suggests that APL Apollo is now gaining market share. So that's the key thesis for this upgrade. So two stocks where UBS has turned positive today. One is SBI Cards to neutral, and APL Apollo to buy from neutral earlier.
Okay, all right, got it. We'll watch out for both of them, Nimesh. Thank you very much for the updates over there. Let's go across to Sudarshan. He's watching out for a bunch of stocks as well, which we will keep on our radar. Which ones are these, Sudarshan?
So we'll start with CEAT. Yesterday, you would have seen that stock had recovered sharply from lows. It had recovered almost 8% from intraday lows. And at 4 p.m. yesterday, company held earnings call, and highlights of those that earnings call are largely positive. On growth front, it says Q4 growth would be higher than the current run rate of 11 to 11.6%. On raw material prices, it says Q4, raw material prices would be largely in line with what company has seen in Q3, and any price hike that company will take would be margin positive. For the market share, for EV segment, it says that currently market share for EV segment stands at 25%. Company is looking to maintain and gradually increase. And also it's planning to up market share in the passenger vehicle segment, especially in SUV. On Camso impact, it says acquisition of Camso would be margin accretive, and the acquisition is likely to be completed by May of this year. Next is CLS on Indus Tower stock. It has upgraded the stock to high conviction outperformance target is rupees 575 per share. It says company has recently received further 1900 crore payment from Vodafone Idea for past dues, and overdues from Vodafone Idea is now down over 70% from peak, and led by 25% Tennessee expansion, it offers 10% EBITDA CAGR by FY27. Last is Kotak Institutional Equities on Eicher Motors. It has a sell call and target is 3600 per share. It says Royal Enfield's volume growth trend to continue, but it would be at a slower pace, and it expects margin to fall below street expectations on two reasons. First, an inferior product mix, and second is higher promotional expenditure. Also, it believes that muted demand in industry may weigh on the CV demand. And lastly, it finds valuations at current levels as expensive.
All right. By the way, Sud, on Indus, stock's been recovering last couple of days. This is the second odd brokerage upgrade, or?
This is the third brokerage upgrade that we have seen in the last 1 week.
Third in the last 1 week. Okay. All right. So thank you very much for that. So that's CEAT, Indus Tower, Eicher, all in focus on the back of the reports, brokerage reports, etc., which are coming through. I think we're just about 2 minutes away, a little less than 2 minutes away with the market open, and the rates will come up. Maybe just quickly run through some of the individual stocks, right, with earnings related to the three big ones. RIL should come up, Infi should come up, and then Axis Bank will be up on your screen as well.
Infosys is following.
Look at the Reliance.
Reliance is beautiful, and look at Infosys on the other side. It's following what the ADR was doing. So it seems this overhang on, the wage hike being split across 2 quarters and some near-term issues over there.
Yeah, maybe I think Infi was the one before the earnings season started. We were talking about this in closing as well, where it was generally widely expected that the numbers will be strong, right? So very well advertised in terms of expectations in that sense. So, and the stocks kind of come up despite the last hour sort of sell-off yesterday. So that is that. And of course, IT is going to be hugely dependent on the biggest market, biggest geography, that is the US, right? And US things are changing, maybe for the better, maybe for the worse. We don't know. So this is going to be one sector which will be moving based on what we get starting Monday. So that element is certainly there. So one way or the other, you can't chase these earnings up or down going into next week. That's the broader point. RIL is up 4, and I think Axis, of course, also reacting to those numbers. What do we have? First, for rates which are coming through, 23,277, we're down about 0.15%. Bank Nifty is down about 0.5%, 48,950. So coming off quickly now, the Nifty Bank. The mid-cap index is down about 0.25%. Advanced decline 2:1, but too early. More stocks are opening. So maybe we'll have to give it some time. But 23,216 straight off. The Sensex at about... Sensex also down sharply, 76,700 or so. And it's more down than up this morning, although it's not definitive. We'll see. But that's the Nifty heat map as it starts to appear on your screen. The earnings reaction Axis is down about 3% this morning. Surbi.
Okay, let's take a look at the reactions coming through. Infosys indeed is starting negative, down 4.5%, and this is despite very positive brokerage commentary. We'll run you through the brokerage views. Almost every single foreign brokerage is actually very bullish on the stock and calls it a good quarter. Market has its own mind, down about 4.5%. However, on the other end of the spectrum is Reliance Industries, 3% up. Solid show, and the market saluting what Reliance has done across its businesses. Let's quickly move to Axis Bank. Axis Bank is down 3.5%, and we know the reasons. Because the growth is not the best at 9%, and more importantly, this rise in slippages, this is definitely making the market nervous. It's 3% down on Axis Bank. Now that we have the earnings reactions out of the way, let's look at the rest of the market. Nifty down 130 points. Let's see what else is driving it lower beyond Axis Bank and Infosys. Actually, TCS, HCL Tech, Tech Mahindra, the entire complex IT complexes now moved to the south side, and so are banks. So your banks and IT, the two huge pillars, they are together exerting downside pressure. Kotak Mahindra Bank, IndusInd Bank, lots of other names on the financial side on the way down. Even the non-banks, Shriram Finance, Bajaj Finserv, none of them are having a good morning. Down about 1%, thereabouts. Beyond this, Trent is losing some more ground, 8% lower over there. There's Eicher Motors, which is weak. Britannia, Bajaj Auto, these are the other names. HDFC Bank is actually the best of the lot in banking. It's down only 0.25%. Other banks are down a lot more. But you'd have to say that, Reliance is the lone ranger trying to provide some support. Otherwise, it's a weak market. There's also ITC and HUL for what it's worth. L&T, HUL, ITC and Reliance. If you pull up the contribution chart, these are the big four warriors. Otherwise, it's a weak opening for the large caps with a 140-point cut on the Nifty.
Well, that's right. From the broader markets, we have a couple of stocks that are doing well. HFCL, well, that's one stock that's opened up with a gain of close to around 3.5%. So a decent up move is what we're seeing on that one. Since Reliance Industries is doing well, I'll keep an eye on Jio Financial Services as well. Remember, that's corrected big time from around, I think, the 350, 360 odd. Market has taken Reliance Industries, so that could be the other one to watch out for. And we saw that when Reliance Industries corrected, Jio Financial Services as well did correct in tandem. So keep an eye out on that one. Tata Chemicals, I think the first tick was in the green, so keep an eye out on that name as well. That comes up for you on the screen. Kalyan Jewellers, for starters, there is some green on the screen, so let's see how that one moves from here on. GMDC, it moved up in yesterday's trade. I think it was up close to around 10%. The stock has corrected close to 35% from the recent peak. For starters, it starts off with a cut of close to around 2%. Bajaj Healthcare as well, in initial trade was high. I think there was some positive news flow that came in on that one. So that one comes up for you on the screen. So for starters, we are down. Infosys is the big drag, and that's going to be the key stock to track from here on because Infosys is down 4.5%. Let's see whether or not that dip gets bought into. If it does get bought into, then the Nifty as well stands a good chance to recover. For the time being, Reliance Industries is the one that's doing all the heavy lifting.
Absolutely, and there will be a lot which we'll have to address as the day goes by, and we'll continue to do that. Yeah, absolutely.
I just want to mention Havells. Very interesting reaction coming through on Havells. The numbers were quite weak. We know that. The stock actually opened 3% higher. It's still retaining a gain of about 2.5%. And if you look at some of the brokerage commentary, there was an investor call that happened obviously after the numbers. And some, like CLSA, are reading the glasses half full rather than empty. They're saying management is indicating improving consumer demand, helped by festive season. Industrial and infrastructure segments have remained strong. So it seems the commentary for Havells is better than the numbers, obviously, and that's what the market is looking at for now.
Absolutely, and look at some of the others as well in that space. Havells, this Polycab, and maybe RR Kabil, and a few others as well. Of course, all of them now, most of them have the electronic goods business as well, apart from just wires and cables. Polycab is down, RR is up about 0.5% or so. This one, KEI is another one. So we'll keep track of this as we go along. Well, Manishi Chaudhary is with us, Chief Executive Officer at Emma Capital Partners. He's joining us now. Manishi, good to have you with us here. Good morning. Thank you for joining us. So it's going to be an interesting news week. I'm reminded of something I read from Elon Musk. I think yesterday he posted. He said, success is not guaranteed, but entertainment is guaranteed. So, is that the way?
Right.
So should we be ready for some entertainment starting next week? And but the jokes aside, what's the view?
Right. No, you're right. On 20th, we will have the new administration formally taking shape in the United States. Everyone has been waiting with bated breath for President Trump to come in and actually implement what he has been talking about. Now, as we've seen historically, that there's a difference between what is talked about in the electoral promises phase and what is actually implemented, when a new administration comes in. But this time around, I'm afraid, I think the market will have to navigate some of the, so-called treacherous and vicious outcomes that might result as a consequence of this new administration coming in. It's been clearly articulated that there will be new tariffs, higher tariffs on most trading partners, particularly China. And there could be some difference regarding the modalities of how these tariffs are imposed. So over the last few days, we have been hearing about they being imposed in a phased manner, maybe 2 to 5% increment every month, which might indicate that the administration is conscious about the impact on domestic inflation as a consequence of these tariffs. Now, that is good news, but we will actually have to wait for how each of these policy articulations take shape. How exactly would the illegal immigrant deportation take place, and in what quantum? What impact would it have on services inflation in the United States? These are the issues that the market globally, not just in India, not just in Asia, would be grappling with, at least in the first quarter of this year. And so, prepare, brace for volatility is my single sentence message. Equity markets or broader financial markets will have to brace for significant degree of volatility, as we have seen in the past couple of months. And I think that would continue at least in the first quarter of this year.
Manishi, hi, great to have you on the show this morning. So let's talk about the Indian market and how you can approach it now. We've got a fair amount of correction at the index level and, a lot more at the stock level. So how are you looking at the portfolio? Just give us the top-down view, what the top overweights would be, and whether, a portfolio that you recommend right now, whether it'll be more capex and manufacturing oriented, or whether it'll have more of a consumer tilt, expecting a staples and rural recovery.
All right. Okay, let me first come to the top-down picture, and then I will drill down to each of the sectors and, what we recommend about each of the sectors or some of the important stocks over there. First of all, if one looks at this recent narrative about India, about growth slowdown, the most recent quarterly growth was about 5.4%, and growth estimates are being slashed by, independent economic watchers and the banks alike. It looks like this year, that is the first, the fiscal 25, we would possibly settle at somewhere between 6 to 6.5%. There is also the narrative that this is being engendered, this is being generated because of a degree of government capex slowdown around the time of the general elections and a bit further, which would eventually recover as we enter into fiscal 2026. There is a degree of consumption recovery that's also happened during the festive season, which would have its impact on earnings. So that's really the narrative going forward. What really worries me about India are two things. Number one, from late September, earnings estimates have been declining. They have declined about 6 to 7% if you look at consensus EPS estimates. And this has happened across all sectors. I don't think any sector has been immune to this, be it domestic or international revenue dependent. Number two, the valuations are still relatively high, despite this correction that we have seen. Even though the market has declined about 10 to 12% from the September peak, earnings estimates have also declined. Therefore, the valuations haven't declined to that extent. Forward price earnings multiple for any of the large indices are still about 22 to 22.5, compared to the last 10 years average of about 19 to 19.5. If you look at India's price earnings or price to book premium compared to Asia ex Japan, price earnings premium is still about 60%. And that compares to the 40% average of over the last 10 to 15 years. So I would think that relative valuations in India still have more room to correct. If earnings estimates had been increasing, I wouldn't have been so concerned. But they're not. Earnings estimates are declining, which makes cheap valuations look expensive tomorrow. So that is my near-term concern about India. The market has proved resilient because of strong domestic inflows. There are about $2.8 to $3 billion of monthly SIPs that we are seeing nowadays. But one would have to see how long that that is able to keep the markets afloat. I would, in the near term, therefore, be slightly cautious about the market. We have kind of a neutralish stance on India. If I were to drill down to the sectors, number one would be the private sector banks. They are the unloved sectors in India, and particularly if you look at some of the top, private banks, which not only are gaining market share, but also have relatively clean balance sheets. Number two, I would focus on the sectors that are catering to manufacturing and infrastructure capex. There was a degree of slowdown in government capex, and there's a delay in private sector capex, no doubt. But if you look at the longer term, over the next 5 to 10 years, that's almost certainly going to be the biggest theme in India. Third, I would look at some of the sectors which are catering to US revenues or demands, global demands, particularly arising from the Western Hemisphere. IT services come to my mind. Even though this sector has been weak of late, I would think that the relative resilience of the United States, and particularly the US financial sector, would eventually stand in good stead. Many of these companies have declined quite a bit. They're possibly offering, a near-term entry opportunity at these prices.
Okay, all right. Hi, Manishi. Good morning and good to see you. And just to clear that point on tech, Infosys started off gap down. I think it made it low, and from there it's seeing some kind of buying interest. So what's the call on tech? Sorry, I missed that.
So, as I said, that currently there is a clear degree of difference between how the emerging market economies and the developed market economies, particularly the United States, are performing. There's a clear narrative, and I think it's correct, of US exceptionalism. That earlier expectation of a US recession or slowdown, that's been belied. We are seeing strong numbers coming out from the job market. The most recent CPI numbers have also been encouraging. It seems that the US economy, while clearly not as strong as in 2021 or 22, would still chug along. And there are some sectors within the US economy, particularly the US banks. Their numbers indicate a significant degree of growth and relatively resilient performance, which obviously means that the beneficiaries could be the emerging market companies or sectors which cater to the demand from those companies in the United States. So the Indian IT service companies, they clearly fall in that bracket, as do many of the tech hardware companies, let's say in Taiwan and Korea. In fact, if you notice TSMC's results, just day before yesterday, not only did they surprise the markets with the numbers, but they also gave a very strong guidance about the next quarter and the next year. I think in a sense that is, a case of morning showing the day. So that is, in a nutshell, my opinion about the Indian IT companies. Possibly not as strong a case as the IT hardware companies or the semiconductor companies in East Asia, but still, a relatively stable story nonetheless.
What about quick commerce as well as renewable energy? We had spoken about it in the past as well.
Yes.
And they were the so-called fancied sectors. Some of the stocks have come off the top. In quick commerce, you have very limited opportunity out here. Would you be a buyer?
You see, again, I said there's a difference between how we treat these companies in the near term and the long term. In the near term, the valuations appear daunting. But in the long term, as I said earlier in my previous discussion with your channel, India, in a sense, is about 15 to 20%, 20 years rather, behind China. And if one looks at how these companies in China, the Alibaba, Meituan, or any of the other, the quick commerce and food delivery companies, how they panned out over there, I wouldn't be surprised if such a similar story pans out here in India also, in particular because the penetration level of e-commerce, food delivery, and quick commerce is still really low. Even after the strong growth that they have had in the past few years. I think investors, if one chooses to buy these stocks today, will have to be patient. They will have to wait for the growth to pan out over the long term to make significant returns from the stock prices.
All right, Manish, got that. Thank you very much for joining in and sharing some perspective in the Indian market with us today. Well, I look forward to, of course, chatting with you again soon. Right now, we're looking at a market which is down 75 odd points. It's not too bad. It's holding and it's actually above the immediate opening lows. Look at L&T. Let's pull up the intraday chart of L&T. There's a big move on that stock, which is helping the bulls' cause. There's Reliance, there's L&T, and Lever and ITC. Like I said, these are the four big pillars which are trying to fight from the other end. And L&T is having a good morning so far. Reliance, obviously, is fairly steady. But for the time being, let's move on and put the spotlight on vehicle financiers. Is there a slowdown in the making? And is there a risk to AUM growth as competition heats up in the space? Well, let's talk about this with the two experts. We have with us Krishnan Sitharaman, Senior Director and Chief Ratings Officer at Crystal Ratings, and also A.M. Karthik, Senior Vice President and Co-Group Head Financial Sector Ratings at ICRA. Gentlemen, thank you very much for joining in. Krishnan, I want to open with you because we were going through that note that your team put out suggesting that there is intense competition and banks are really out to, get a bigger share of the pie. And therefore, maybe NBFCs, which are in vehicle financing, maybe they could see a pressure on growth. Just expand on this. How serious do you think this competitive intensity could be? And what are the growth numbers that you're working with for this year and maybe next year if you have FY26 numbers as well?
Sure. So thank you so much for having me on the call. Good morning to everyone. So yes, we are looking at a slight slowdown in the AUM growth, the assets under management growth for the vehicle finance NBFCs. We must keep in mind in this context, the last 2 years, the industry was coming out of the pandemic and there was I would say, a pent-up demand, which was kind of helping the growth, including the vehicle sales were also looking up. So last fiscal, the vehicle finance NBFCs had an AUM growth of around 21 odd percent. We expect that to come down to 15 to 16% in this year and next. And largely on account of the fact that the economic growth is expected to be lower. Last year, we had a GDP growth of 8.2%. This year, we are expecting 6.4%. Next year, 6.7%. The industry itself is on a cyclical pattern. And so the sales growth will be muted. At the same time, what will support the growth is the fact that the NBFCs are focusing more on the used vehicle segment, which is looking up, and as well as the fact that the ticket sizes are going up, which points towards premiumization across the various segments. Within the segments, we expect the CV financing to grow at around 11 to 12%, but the car and the UV segment, which is around the 1/4 of the total mix, that is expected to grow at around 22 to 23% because we are seeing increasing proportion of UVs, utility vehicles in the mix. In the increasing sales, 65% are utility vehicles, which is around double the number that we had seen around 4 to 5 years back. So while the economic growth trajectory and the unit sales would actually put pressure on the growth, that said, a focus on used vehicles as well as increasing premiumization would help to support the growth trajectory. All in all, we expect a 15 to 16% AUM growth this fiscal and next in the vehicle financing NBFC space.
Okay, which is maybe not bad, but obviously compared to 21, 22%, it is a slowdown, which we have to take note of. Let me ask Karthik as well. Karthik, morning, good to have you in this discussion. Do you broadly concur? And apart from the base, what are the other reasons that could be responsible for the slowdown?
Yeah, good morning. Base is a key factor. Of course, our numbers are very close to what Krishnan said. So we are looking at about 16, 17% kind of growth this year and maybe around 14, 15% growth for the next financial year. So base is playing a key role. This apart, of course, the vehicle sales and the general economic activity. These are the key drivers that go into the vehicle financial AUM growth. Funding is something that we are closely looking at. Banks are the key funders to the NBFC space. Bank credit growth slowing could also pull into the slowing growth for the NBFCs. most of the NBFCs in the vehicle finance and space are the traditional, the conventional old NBFCs, and most of them are large players in the space. So funding constraint could be relatively less impacted for them. The smaller ones are the ones who will get more impacted. We are seeing some headwinds on the asset quality part. Of course, this again comes from a very, very pristine year that we went by. March 24 was possibly one of the lowest in terms of reported asset quality numbers. We are seeing some uptick. We have seen a 20 basis point increase between March and September. We expect this number to go up to 30 to 50 basis point in the next 2 to 3 quarters. So there are some headwinds on asset quality, but these numbers again are much lower than the long-term averages that the sector is seeing. But largely the growth will be slower than last year on account of higher base, lesser sales volume, and general economic activity being slower than what it was previous year.
Okay. Krishnan, so let's talk about some of the the segments that you briefly alluded to earlier. So it seems that SUVs and the premiumization, that's keeping the growth trajectory intact, right? On the CV side particularly, and CV is maybe not so much of, old vehicle financing, but in general, there's been hardly any CV pickup, maybe some green shoots, we're still holding on to hope. How does that feed into the overall analysis and the numbers? Are you expecting any improvement there?
So, as I said, we expect on the CV financing side growth to be in the trajectory of around 11 to 12%. And that would be lower than what we saw last fiscal, again, on account of the fact that the CV sales are more closely linked to the economic growth trajectory. And that coming down would mean that there would be some challenge there. If I look at CV sales growth, unit sales growth, we are expecting to be relatively flat this fiscal vis-a-vis last fiscal. We had a decent growth there. And when I look at that, if I look at it in that context, the CV financing AUM would actually outperform the sales growth, because here also the context of premiumization will play a role, and higher ticket size vehicles are getting sold today, larger tonnage vehicles, and used vehicle demand is also higher. So when we look at the growth in new vehicle AUM and used vehicle AUM, the used vehicle AUM over the last 5 years has been double that of the new vehicle AUM growth. And in our analysis, the proportion of used vehicle AUM in that NBFC AUM mix has gone up from around 41% to 49%. So it is almost half the AUM now in the last 5 years. That's the growth trajectory. Almost half the AUM now is contributed by the used vehicle space. So used vehicle, we are seeing trajectory. And a part of that story is linked to the fact that the rural India recovery is happening. More of the used vehicle sales happen in the non-urban areas. And given the fact that the monsoons have been better and the Kharif crop has been decent this time around, so we are seeing increasing the cash flow trajectory of rural buyers as compared to the last 2 fiscals where there were some challenges there. Urban's slightly more muted this time, but the rural growth trajectory, recovery trajectory is helping the used vehicle side. So we do expect the used vehicle to support the CV financing growth.
Got it. Gentlemen, very quickly, want to move to expectations on profitability and margins as well. Now, assuming that we'll be in some sort of a rate cut cycle for the rest of this year, and the point on the competitive intensity, because banks want to get into this business as well, just give us an outlook on what you're expecting on margins, cost of funds, and broadly how spreads are going to move, whether it's banks in this area of vehicle financing or, of course, the NBFCs as well. Karthik, what are your estimates?
NBFCs have a flexibility to change their business mix. They can get into the used vehicle a bit more to maintain the margins. So that flexibility the NBFCs do have, and they have a larger play. And as Krishnan said, the used vehicle business is growing slightly faster than the new vehicle business, because the used vehicle business or the market itself is quite substantial in relation to the new vehicle sales. So if one were to look at the CV business, you have about 2 to 3x of volumes, which is happening at the used vehicle side. Some of it, on the formal part, the other being informal part. Even the formal part is good enough to support the used vehicle growth. Similarly, on the cars, the used car market is about 1.5x plus of what we see in the new. So NBFC
Karthik, margin, a little short on time. Sorry, I'm pressing you, but margin expectations for vehicle financiers this year.
We could see margin to be largely stable because of the product mix change moving towards the high yield used vehicle segment. This would result in some contribution of credit cost going up, but on a net basis, I think it will be a margin neutral kind of a proposition for them.
Krishnan, margins this year?
Yeah. 10 to 20 bips for fall in the margins. FY24 return on managed assets was 2.3% for the vehicle financiers. It should land up at 2.1 to 2.2%, largely due to the credit cost increase, but that will still be higher than the 1.5 to 1.7% that we saw from FY20 to 22. Last 2 years, we saw pickup because of the growth in the AUM.
Okay, all right. We'll watch this space. Thank you very much for giving us some key trends. That'll probably define how NBFCs fight for their share in the vehicle financing market. Thank you very much for joining in. Back to the markets.
Just one point. The problem for the markets today is Infosys. Ex of Infosys, actually things are looking quite good. And I say that because as we were having that discussion as well on vehicle financiers, just take a look at the mid-cap index. That's moved into the green. So that's pretty encouraging. You have the Nifty Bank that's giving back a lot of what it put on yesterday. So that we'll have to see a bit of a trend from here on with regard to the Nifty Bank because that managed to pull back. Nifty Bank needs to recover. Infosys needs to recover. That's what's going to help the Nifty pull back as well. But for the time being, a couple of positives are that the mid-cap index has moved well into the green. I'll tell you what, we'll slip into a short break. But on the other side, we'll be chatting with Mahesh Kumar Gupta, the former member engineering of Railway Board, as well as Harshit Kapadia of Elara Capital to discuss the wish list for the railway sector. Stay with us. Welcome back. Let's focus on a couple of drags on the Nifty. Axis Bank is the one that's reacting to its weak set of numbers. Abhishek told us Pat yesterday as the numbers came out and he refreshed our memory this morning as well. But he's back with us to analyze these numbers. Abhishek, take it away.
Well, to begin with, it's one of the weakest numbers with respect to business momentum that you are seeing in last 15 quarters. Deposit growth of about 9% YOY and advances growth of 8.8% YOY. Both these numbers on year-on-year basis are one of the weakest that you are seeing in last 15 quarters. And they continue to lose market share because industry is going ahead of these growth rates. CASA ratio is at 38 quarter low or, perhaps at an all-time low. First time I'm seeing it in last 10 years to be below 40% level. It's at 39.5% versus about 40.6% in the previous quarter. The net interest margin as a resultant of weak business momentum as well as higher slippages has come in at 10 quarter low of 3.93% versus 3.99% in the previous quarter. Now, slowdown in business as well as, elevated provisions have meant that the return ratios, both the ROA and the ROE are at 7 quarter low. Slippages have come in higher than analysts estimate 5,432 crore, which is at 13 quarter high, largely led by unsecured portfolio like credit cards, personal loans and MFI loans. Annualized slippage ratio of 2.14% is the highest in last 11 quarters. Operating efficiencies, thanks to, OPEX being down by 4.7% quarter on quarter, is one of the best that you are seeing in last 7 quarters. So cost to income ratio is at 46.2% versus 47% in the previous quarter. The core operating profit, that's the only silver lining in the result, that has grown by 14.15% year on year and about 5.2% sequentially. With reference to the PNL versus ARPOL, the NII is below ARPOL. However, the PAT on account of lower OPEX is higher than ARPOL. Back to you.
All right, Abhishek, thank you very much for that. So that is the view on Axis, which is forming Well, markets are down 100 points. I just want to highlight that Kalyan is down another 3% this morning. So, closer to 500 rupees now. And no real sort of, stability still on Kalyan. So it's been coming off very, very sharply. As we've been highlighting, the high was almost 800 rupees. So from 800 to about 500 in just, 8-10 not trading sessions or so. So that is another one to highlight. But, look at something like a Sterling Wilson Solar. Again, yesterday was up, I think, 10% or so. It's down 6.5%. It's a completely bombed out name. I think reported numbers yesterday. So big pop after that, but going nowhere today. Max Health is down about 2.5%. CAMS is down 2%. Policy Bazaar is down 3.5%. You heard from the management of Mastec earlier, 3% lower. PG Electroplast, Sion, Shakti. I could go on, but, it's a big... it's a big list of losers with volumes as well. Overall market breadth is also turned slightly negative. Well, what to expect from for the railway sector, right? Few years, actually many years ago now, this should be the railway budget. Now, of course, you hear in the union budget allocations for railways and things like that. Yesterday, rail stocks were all kind of looking very excited. I'm not sure if that was to do with expectations ahead of the budget. So let's actually put it to some experts. Harshit Kapadia, analyst and vice president at Elara Capital, is with us, and so is Mahesh Kumar Gupta, former member engineering of the Railway Board. Gentlemen, good morning. Great to have both of you here. Thank you for your time. Harshit, let me start with you. Expectations high, low, nothing. What's the expectation set really for railways this time?
Morning. Expectations are always high, and especially if the government is working on a lot of new age rolling stock and a lot of network infrastructure, including the lot of things happening on the signaling side, including Kavach. We expect the budget to see a good increase in the FY26.
Missed that number, Harshit. What is the expected spend you're expecting to increase by in the coming year? What was it for the past year? And what is the growth you're expecting on that base?
Sure. So for the previous, that is FY25, the growth was close to around 4%. We expect it to be somewhere between 5 to 10% at least, with the way the spending are going to see an increase.
Okay, all right. And the absolute number, you're expecting around 5% or thereabouts in terms of an increase. What would the absolute number look like? So we have a reference point.
Yeah, so 2.65 lakh crore, we look somewhere close to around 2.72 lakh crore.
Okay. All right, so we've got that number out of the way. Thanks, Harshit, for that. We'll come back to you. Mr. Gupta as well joins us. Hi, Mr. Gupta. Good morning, and thanks a lot for joining us here on CNBC-TV18.
Good morning.
Well, tell us, what are your key expectations? Because, from a stock market perspective, the market watchers believe there's a big runway for railways. There's a lot of focus out there. What would be the top 2-3 points that you'll be looking forward to in this budget?
When you say expectation, railway has got three kind of customer. Normal user who looks for seat availability. Another is the high-end customer who looks for the comfort and easy travel, and who has got an option in case he doesn't get the railway seat. He can very well travel by the air if there is a connectivity. And third is the railway main bread and butter, I would say, that is a freight. People want delivery of their goods in time without damage. So there are three kind of customer. And to balance all three is a slightly difficult task. But for all the three customers, the common feature is safety, security, and punctuality in that order. This is what I would say. You want your goods to be transported safely and securely, and the passengers also. First, he wants to go safely, and then securely, and then, of course, punctuality. These three are the common parameters since many years.
Mr. Gupta, from a...
And then yeah.
Sorry. What will be the focus out of these three areas, and where will more? We're basically talking about increase in spending in the budget, and on which area you think will the focus be?
Yeah. Now, if you see the last year capex also, about 40% was on the Kavach, right? When we say Kavach, all safety related, whether you put the replacement of old track, replacement of rolling stock, that is going to remain. And I think in the every budget for next 5 to 10 years, about 40 to 50% allocation is going to be on that. And there, as far as the Kavach, there are some issues of the capacity constraint. But on the other side, like wagon supply and other things, as of now, I don't see any capacity constraint from the trade side. So these are going to remain for next 4 to 5 years. That is my assessment. 40 to 50% budget on the safety-related item.
Okay, all right. Harshit, coming back to you, we the last couple of days, as we normally see ahead of the budget, these railway stocks get very, very excited. Which is your top buy from this particular sector, and if you could give us some rationale.
Sure. So what I like is a company called as Rights Limited. They are basically a consultancy company into infrastructure, and they also have a business on exports of rolling stock. So we see this too as a major growth driver for rides going forward. And with network expansion being planned, as Sir also rightly mentioned, companies like Rides who do the EPC related work, turnkey construction, that should also see an increase. So overall, we are very positive on rides. Another thing which I can mention is BEML. The rail and metro portfolio of BEML is going to see a multifold growth. They already bagged 2 metro orders, and on the railway side, they are pitching for more rolling stock related items. They also got an order to make a first prototype for a bullet train for a Mumbai-Ahmedabad project. So that is also under the anvil. They are also working on the first prototype launch for a Vande Bharat sleeper. So that should be done somewhere in the mid of this calendar year. So much more things are going to come from BML. Another on the private side, what we like is Siemens, because Siemens Mobility is going to diversify itself from being a loco to a metro player. So that could be another name that one can look at. And a pure rail play could be Titagarh Rail as well.
Right. By the way, Harshit, you heard Mr. Gupta talking about the focus on safety, right? Kavach is a big focus area. Do you have stocks under coverage there? And generally, what is the context for these companies?
So presently, there are only 3 companies who have got approval to manufacture equipment for Kavach, but additional names are also looking to be approved. The 3 approved names are Connex Microsystems, HBL Power, and Medha Servo Drives. So there are 3 approved ones. The additional names which looking for approval is Gigitronics. It is acquired by CG Power, so that is one way. Siemens is also looking at it, and there is another company called as Kyosan. It's a Japanese company unlisted. And a smaller names who can play a role in Kavach are one IPO which is coming up, which is Quadrant Future Tech. There is a small SME company called as Concord Control System. So these are some names that one can look at related to Kavach. On EPC side, you would have Railtel and Case International who would be doing EPC for this Kavach system. That's how one can play.
Is it a big? What's the size of the? What could be the size of the opportunity? I mean, and broken down into on an annual basis.
Sure. So the overall size of the opportunity is something close from 45,000 to 50,000 crores. Next year, that is in FY26, we are sensing close to around 10,000 loco orders and close to around 15,000 route kilometers of the orders are going to be placed in FY26. So quite a bulk of the opportunity would be coming out very soon. And then subsequently, as Sir said, coverage is a continuing process. So more track lines, stations would be covered as we go forward into the future years.
So just very quickly, 20 seconds, and we'll take a final word with Mr. Gupta. Harshit, so apart from coverage and safety systems, I mean, if I were to ask you, the spends this year, which you said will go up by 5%, are you expecting the bulk of that to go in, safety systems, which would be coverage? Would it be more on rolling stock? Where do you expect the bulk of the spends to be this year?
Station upgradation, what we are calling station redevelopment or upgrading the passenger facilities at the station. That should be that is one of the focus area of the railways. And some of the important thing which may come up even the next year, the New Delhi railway station, that is one landmark project which is being done by RLD authority under Ministry of Railway. That we should see something on the ground. It will take time because it's a brownfield project. Total execution may take 3 to 4 years. But something should start at New Delhi. I'm quite optimistic about that.
Okay. Harshad, same question to you very, very quickly. You mentioned REITs as one of your key picks. Where else are you expecting the orders to come in, the spends to take place, and anything else beyond REITs that you'll back this year for railways?
So BML is another name. Area which I'll be focused on is rolling stock and Kavach. Those are the two segments that we are extremely positive about. As new age trains are going to be launched, and more tenders are likely to come following whether it is Vande Bharat, Vande Metro, whether it is Amrit Bharat. So all things are going to be there in FY26.
Okay, all right, gentlemen, thank you very much. Gives us an interesting perspective on what to expect for railway companies this year as the budget comes through. Thank you very much for joining in. Well, it's time to move on now and put the spotlight on our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each of the sectors. Today, we have Abhishek joining in to tell us how the third quarter could be for the NBFC sector. Over to Abhishek.
Well, for NBFCs in Q3 FY25, the outlook reflects a cautious and mixed scenario. Now, here's a breakdown of the key points to watch out for. There will be moderation in loan growth. The moderation in business momentum had been observed in H1 FY25, which is expected to continue into Q3 as well, with loan growth likely moderating further. Now, this suggests that NBFCs may face a slower pace of loan origination during the period as well, that is disbursals. Sectoral impact, if you take a look, housing finance companies may see some challenges in loan disbursements in regions like Bengaluru and Hyderabad. Now, possibly this is due to regional economic or market conditions over there. This could impact the overall loan growth as well. So, gold financiers over there, the gold lenders are expected to experience a strong growth in Q3 FY25, which is from the fact that they are benefiting from the continued high demand for gold-backed loans, especially amidst the potential macroeconomic impact that you are seeing. A mixed asset quality outlook. The commentary on asset quality will remain mixed from most of the lenders. While many NBFCs are likely to report flat trends in asset quality, any signs of stabilization in slippages or asset quality for sectors like microfinance institutions and personal loans could be seen as a positive read-through, although it might be premature to declare that stress has peaked for these segments. Now, net interest margin is expected to remain stable for most of the NBFCs, although there could be a cautious outlook due to yield pressure going ahead. Now, some NBFCs may see downgrades in net interest margin expectation from analysts if there is sustained pressure on their yields. Asset quality, half empty, half full. So, asset quality situation is expected to be a balancing act with some optimism regarding potential stabilization, but also cautious around the persistence of stress in certain loan segments. Watch out for the stress in unsecured segment, especially the microfinance sector. Some key estimates that we have from Kotak Securities, Bajaj Finance on a year-on-year, they expect NII to be up about 22% YOY and PAT to be up about 18% YOY. For Bajaj Housing Finance on a year-on-year basis, NII is expected to be up 24% YOY, while PAT is expected to be up 31% YOY. For Chola Mandalam, NII is expected to grow by 33% YOY, while PAT is expected to grow at 22% YOY. For Muthoot Finance, the NII is expected to be up 36% YOY, while PAT is expected to be up 26% YOY. Spandana Spurti, one of the MFI player, Motilal Oswal estimates NII to decline by 9.2% YOY, while they can report a loss of 456.7 crore versus PAT of 127.4 crore in the same quarter last year. Back to you.
All right, thank you very much for that, Abhishek. Let's discuss this a little bit more and what to expect for the NBFC space. Digant Haria is founder of Green Edge Wealth Services. He's joining us now to help us do that. Digant, great to have you with us here on the program. Thank you for your time. You heard Abhishek brilliantly summarizing what to expect. But what is top of mind for you when you analyze numbers as they start to come in for NBFCs?
Yeah, morning everyone. Good to be here. See, I think the BFSI sector, in general slowed down. We saw that deposit growth, loan growth, everything coming in single digits, something like 9.8% or, sub 10%. So I think that itself will be reflected for most of the NBFCs and banks that, growth in general slows down for everyone. Margins in general remain in pressure for everyone. It is just the asset quality which is going to probably differentiate a little bit, And then Abhishek summarized a lot of it. But I'll just give you the pecking order that microfinance companies and banks which are heavy on microfinance, that will be the worst impacted pocket, not just on asset quality but on growth, the income line item, everything. So I think that is where we'll see the biggest pain. Second, we could actually see the commercial vehicle finance companies, the likes of Shriram, Chola, Mahindra Finance, Sundaram. They were growing well, no asset quality issues. I think the momentum there will take a blip because, the good CV cycle is probably at its peak and, now on the downward trajectory. And as far as the consumer-facing NBFCs are concerned, I think, the growth is slow. There is no respite on asset quality pain. That slowdown is everywhere. So I think it's going to be a soft quarter everywhere. The only bright spot that we see, one is the gold loan segment. There Muthoot Finance can do very well. Manappuram, it will do well on gold, but it has a lot of cleanup to be done on the microfinance space. IIFL could probably do well because it just got the RBI approval, but then they have a lot to catch up. And so on. And, there's this agri-finance. I think two-wheeler/agri-finance is also one bright spot. We had a great festive season. So somebody like L&T Finance, maybe they can offset their microfinance losses in terms of, good performance from the other businesses. So yeah, these are, maybe Muthoot, L&T Finance, one or two stocks, probably could give a positive surprise. But otherwise, the outlook does not, not a very encouraging or not a lot of surprises this quarter. This quarter we have to bear, the brunt of macros.
Ah, okay, got it. So that's putting it very, very clearly. So barring from the gold financiers, or maybe companies that have a, more of their portfolio geared towards agri-financing, rural financing, it might not be that great. They're going to come back to this point on, unsecured lenders and consumer financing. You mentioned that we may even see some more asset quality pain. I mean, so my question is, so the RBI slammed the brakes, right? So we know that growth has come off, but you're saying that despite the guardrails, there could be more deterioration in asset quality. If you could expand on that, which companies, which segments?
Yeah, so see, the microfinance comes now, right on the top. See, the party lasted for 2 years. We cannot expect the hangover to just go away in 2 quarters, right? It will take a good 1 year for this entire cleanup. See, when we say, the sector has to clean up, first is they have to stop growing. It's just 1 quarter that they have not grown. Second is they have to improve their business practices in terms of, not giving borrowers more loans than they need. That is something which is still work in progress. And third is obviously you have to clean up whatever loans have gone bad. So I think they have acknowledged the problem. They have started the steps, but we have to go through this 2 quarters of pain. And we only talk about asset quality. But see, when you have to write off loans, you need income to write off those bad loans, right? Now the income line item itself will be under pressure. So I think that the microfinance pain will continue for longer than what we have seen in the past cycles because the income line item itself is hit.
Sure.
Unsecured, yeah. Sorry.
Yeah, no, Digant, that's the point on MFI. That's well taken. And I think now the market's kind of wrapped its head around it as well, that this is not ending in the 4th quarter or the 1st quarter. This is going to continue. My question was more for the urban consumer finance companies. I mean, something like a Bajaj Finance. Bajaj's quarterly update still showed good growth. I mean, I still remember 29% AUM growth. But what about the others? Growth, and the bigger question is on asset quality. Which are the lenders or NBFCs where asset quality pain will show up? Consumer lenders.
Yeah, so I think, someone like, say, a Poonawalla Finance or an Aditya Birla Capital, who relied a lot on their fintech partners to get them personal loans. Okay, so they do these co-lending, co-origination or BC partnerships. So I think that is where you can see some leg of pain because, see, in personal loans also, I would bifurcate, CIBIL score more than 700, which are the good customers, and CIBIL score less than 700. So this less than 700 is where there is quite a bit of pain. Those pain will not show up for, say an ICICI Bank or an HDFC, but a little bit of it will definitely show up for Bajaj Finance. And a lot of it can show up for, say, an IDFC Bank or, Poonawalla or an Aditya Birla Finance, all the new companies who ventured big into personal loans. So that is where I would be a little more watchful on the unsecured part.
If there's one NBFC stock that you are to buy in this gloom, because they say you have to buy good businesses when the narratives are wrong and when the numbers are wrong, right? Which one would that stock be, if any?
So Surbi, I'll give two. One would be Muthoot Finance, that is performing well and probably will perform well. One could be L&T Finance, where I think we could be very close to hitting the bottom this quarter. Yeah, so apart from this two, in that long list, there's only maybe an REC or a PFC, but those are infra finance, those are not really retail finance. These are pockets where I think asset quality may not be a big issue, and we could be very close to the bottom. So yeah, that's about it.
Got it. All right, interesting call. So L&T Finance and Muthoot would be your picks. Got it, Digant. Thank you very much. Great conversation as always. We look forward to more in the coming weeks. Time for a break. Come back on the other side. We'll put the spotlight on the commodity space with Manisha Gupta. Welcome back. So the equity market is trying to settle. It's a little mixed this morning. Let's find out what's the headline from the commodities universe. We have Manisha joining in with the latest. Manisha, good morning.
Morning, and thank you for that, Surbi. Well, I'm looking at metals as a sector because the big positive really comes in from the US dollar index decline. This is the first weekly decline for dollar index in last 7 weeks, and that clearly has been supportive for all of these dollar-denominated commodities. Also, with the US retail sale data not coming in so positive, the markets do believe that you could be looking at more rate cuts than 1 or 2 even for this year, and that has been supportive as well. But the even better news comes in from China, where you are looking at economic stimulus pledges being reiterated. Also, when you look at the China offshore yuan, that has seen a bit of an appreciation in the last couple of days as well. That has been supportive. And then it also is about the industrial output for the month of December, which is the highest in last 8 months. And all the data that came in from China today has been on the positive side. So whether it was about industrial output number, the Chinese GDP number at 5.4% is higher than 4.6 in the last year, and more than 5%, which was what the markets were anticipating. So we are looking at a good number there, and this is on a back-on-back, a second quarter that you have seen China beat estimates. The new home sales data wasn't so great, but then again, it slowed at a lower pace than what the street was anticipating. So property sector in China still continue, but even that seems to be now getting plateaued. I want to talk about copper, which we are looking at a 2-month highs onto this one. When you look at the Chinese data, the copper unwrought and product imports increased by 18% for the month of December. So China demand coming in strong has been positive. The The other point to watch out is that China premium now stands at above $70 for a third straight week. That tells you that the buying has been consistent. Apart from that, Chile, which is the largest producer for copper, also has lowered its production guidance, which says there's lack of new deposits and investments and inventories, and that perhaps is supportive as well. Apart from copper, it's aluminum, which is trading at a 4-month highs right now. Aluminum prices gained up by 6% in previous year, and we've seen stronger gains continue into this year as well. The LME inventories, LME stocks have continued to decline. There is scarcity of alumina and bauxite, which is supportive. And then there are all these Russian aluminum sanction reports coming in, which also have added premium to the prices. Markets also are looking at Chinese production, which is at an all-time high in previous year and perhaps could decline when you look at 2025. Apart from that, it is the new yuan loans in China, which have seen a rise in December. So all those factors that we were waiting for China in previous year really seem to be turning around as we see the reports for the month of December. Will January follow is something that you will need to keep an eye on. But this is the report card so far in 2025 when it comes to metals. On a week-on-week basis, as you've seen, we're looking at stronger gains here, especially for metals like copper and nickel, where we've gained 3 to 3.5%. But more importantly, for this year, until now, the best gains come in for copper. So if Dr. Copper is performing, then the rest of the market usually tends to follow. And that's exactly what you would want to watch out for as well. And not just the base metal prices, precious metals have continued to do well as well. And here as well, the base metal thing seems to be rubbing off on silver as well. So nearly 7% of gains is what we are standing on for this year right now for many of these metal prices.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. On the other side, we connect with Anil Rai Gupta, Chairman and Managing Director at Havells India, to talk about their third quarter earnings. That conversation coming up in just a bit.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very.
Okay, welcome back. The market, of course, is biding time. Nothing really happening at this point. 100 points lower on the Nifty is where we're at. Let's talk about Havells now. Third quarter was weak for the quarter. The cables and wires business dragging overall revenue growth. Margins were also under pressure. We have the management now joining us, Mr. Anil Rai Gupta, Chairman and Managing Director at Havells, taking us through what to expect. Mr. Gupta, it's good to see you back on CNBC-TV18. It's a while we spoke, Prashant this side. So in the first quarter, sir, you had guided that the next 3 quarters will be stronger. But in the quarter that you reported numbers for, the cable and wire segment has been a bit of a drag on growth. Could you tell us what has happened and how is this quarter now looking? What are your expectations?
I think if you look at the cables and wires quarter, because almost 60% of our sales comes from domestic wires, where there we saw high fluctuations in the raw material prices, hence leading to some restocking in the channel. But if we see the other segment, which is the underground cables, where we saw significant growth of over 25%. So that I think augurs well that the industry, it's a temporary phenomena because the channel has destocked. If you take overall Havells performance without the wires business, then it is almost 14-15% sales growth, which is a very positive outlook for the future.
So, Mr. Gupta, let's, since you seem optimistic, let's talk about the full year projections. X of Lloyd, how do you see all the other segments performing and how are you likely to end the year X of Lloyd?
I think X of Lloyd is still growing at mid double digits if you look at the 9 months, and I hope that this trend will continue. And this, again, as I said, it's a positive trend. We've seen some consumer sentiment coming back in the third quarter, so it augurs well for the fourth quarter. So it should do well. We've had a couple of quarters where there were some margin pressures in terms of cables and wires or ECD, but otherwise, things should come back to normalized levels very soon.
Hi, Mr. Gupta. Good morning and good to see you and Nigel on this side. I recall, last couple of interviews that we have done, you were indicating second half of the year, you're expecting a bounce back in terms of demand. Are you seeing any signs of slowdown or is demand up to your expectations?
As I said, if you look at the X-Wire business where we saw some channel restocking, but otherwise from a customer point of view, things have started looking positive. There is a mid-teen double-digit growth that we are seeing both in Havells and Lloyd. And I think that is something, if it continues, should be a very positive trend for the company and the economy.
Okay, all right. What about Lloyd? How do you see Lloyd, shape up going ahead and that path to profitability sometime in FY26?
Yeah, I think if you look at overall, 9 months for Lloyd, because it's a highly seasonal product and second and third quarter generally are low quarters for Lloyd. If you look at the entire 9 months, it's a very positive turnaround for the company, both in terms of sales numbers, but also in terms of profitability. And I think this trend should continue in FY26. As you said, it looks very healthy, both from a growth point of view and profitability.
So Lloyd turns profitable, right, on the EBIT front in FY26. That's the aspiration?
That's the aspiration, yes.
Right. Is there signs of revival in the switchgear segment on the industrial side? And could you sort of talk to us a little bit about the margin trajectory here?
Yeah, I think if you look at switchgear, generally for industrial segment is positive. This quarter we saw some recent growth in the residential switchgear also. Margins were under pressure. One of the reasons was also a one-time relocation of a factory. But I think generally speaking, switchgear has remained 38 to 40% normal margin levels, which should come back in this quarter or the next quarter.
To what, sir? We missed that number.
38 to 40% contribution margins are there for switchgear. In this particular quarter, it was lower because of also one-time relocation expense. But otherwise, generally speaking, it remains range bound between 38 to 40%, which should come back.
So that's the switchgear segment, and probably that would be one of the reasons why the overall blended margins at the company level were also under pressure. There was a a fall of about 110 basis points year on year on Q3 margins. So, Mr. Gupta, again, now I'm talking, all segments put together, blended margins, EBITDA margins. Are you hopeful of a recovery? How are raw material costs moving? And what would the exit margins be? Some rough estimates for FY25.
Again, it depends very, very differently on business to business. But as I said, by the exit quarter or fourth quarter, we should be at each business should be at normal levels of margins. Overall, Havells hovers between 12 to 13% ex-Lloyd, which should come back in the fourth quarter itself. So we are quite positive that the fourth quarter in the next year we should be quite good.
So 12 to 13% margin ex of Lloyd, and in FY26, Lloyd becomes profitable, right?
Yeah, that's the aspiration, yes.
Okay.
Okay, all right. What about inorganic growth, Mr. Gupta? In the past, you've hinted about it. You've said whenever there is something, you'll be telling us. Is there something we should be looking forward to in the near future? Because, speculation is that you keep scouting for it and maybe in talks with a couple of players.
Well, I think, that's the job of a growing organization to be always, on the lookout. But as I said, we are very opportunistic about acquisitions. We are also very prudent about acquisitions. And there is enough juice for growth in our existing segments also. So I think, as long as there is opportunity in any acquisition, then only we will be doing it.
Okay, all right. And if you happen to look at inorganic growth, what could the rough ticket size be? If you could help us out with the capex number as well. I think for FY25, you're hinting at a capex of roughly around 1,000 crores. Could you refresh our memory with regard to the capex you've laid out for FY25-26? And in case of inorganic growth, what could the ticket size be?
Well, I think this year again 800 to 1,000 crores. Next year again 800 to 1,000 crores is the capex projection. We've already laid out, our capex plans, both in terms of cable expansion, new facility for refrigerators coming up at the Leela facility. So there is a good amount of capex, and generally speaking, again, there is no particular size that we have in mind for acquisitions. It depends upon the kind of acquisition. If it's just a small product or technology acquisition, it could be small. It could be a brand or a distribution, acquisition, then it could be a large ticket size. The company is capable of not only through acquiring large numbers to internal networks, but also has raising fundraising capacity as well.
Okay, all right, Mr. Gupta, we'll leave it on that note for today. Thanks for joining in, and I guess it is that promise of things normalizing by the end of the year. On switch gears, margins are going to come back, and overall company margins will revert back to 12 to 13% ex of Lloyd, and the hope on Lloyd itself becoming profitable next year. I think that's what's helping the stock recover some ground. The third quarter obviously was a challenging one. That's Havells. But let's move on and look at some more names. Sterling and Wilson has been slipping in trade. It's reacting to its Q3 numbers as well. Let's ask Vivek how the numbers were. Vivek.
Well, that's right. First thing what we need to remember is that Sterling and Wilson Renewable actually declared their numbers during market hours yesterday. Overall, a steady quarter from the company, and another quarter the company actually managed to go ahead and post profitable growth. So revenues are coming in at close to 1,837 crore, versus just around 583 crore. More importantly, margins coming in, in the positive this time around at 3.8%, and profitably at close to 14.8 crore versus a loss seen last time around. There's also been a few management changes that the management has alluded to. However, yesterday post-market, the company actually went ahead and gave an investor presentation to the exchanges where, they've spoken about order inflow, and they've given us some important updates as well. So order inflow, as far as 9 months of FY25 is concerned, stood at 5,679 crore. Net debt has actually declined sequentially by close to 150 crore. What the company said, in terms of commentary, new order inflows are lumpy, both impacted by cyclicality as well as seasonality. But they've said that the active EPC pipeline remains quite strong at 27 gigawatt. Order book moderating sequentially, close to 10,167 crore at the end of the December quarter. Now, the most important thing to watch out for as far as Sterling and Wilson is concerned is the update as far as the Nigeria order is concerned. Remember, it's a very large order for the company. So the company has said final terms for this particular order has been negotiated.
procedural steps are in process. The company is just awaiting final contract signing, and this will be a very important trigger for Sterling and Wilson. Yesterday, the stock moved up quite significantly. Today, it's seen a bit of a cool-off on back of the order book moderation, as well as further details awaited as far as Nigeria is concerned.
Okay, all right. Thanks a lot for that, Vivek. By the way, the markets have cut its losses, and I think we should get the advanced decline ratio as well up for you. It appears the bulls are in a better mood this morning, and some of those dips are getting bought into because now you have more number of stocks that are advancing than declining. We started off with more number of stocks that were declining, but that's quickly turned around, so that's good news. And from the lows, you've seen a recovery, and one stock that's actually underperformed post that corporate action has been ITC. I think, it made a low of around 435, then it bounced back, and then it came in for a renewed selling. It went down, I think, to around 432 or thereabouts. In today's trading session, that's pulling back. So that's one stock. Bharti Airtel as well is seeing a bit of an uptick in the last few minutes. And Infosys, that holds the key for today. If it can do a U-turn from the lows of the day, well, the bulls will be feeling quite good. For the time being, we'll wrap up on this edition of Bazaar. Chartbusters comes up next.
And very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. Wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, I was feeling bad, where if I have to think I lost an opportunity, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back.
Reliance climbs 2.5% as the top Nifty gainer on the back of a good third quarter driven by oil to chemical and retail businesses. Brokerages HSBC, Jefferies, CLSA also issue bullish calls on the stock.
On the other hand, Infosys is the top Nifty loser. It slips close to 5% despite an inline set of numbers, as the management expects impending wage hikes to impact margins in the coming quarter, along with lower pass-through revenues.
Axis Bank slips 5.5% after reporting weak third quarter numbers. The bank's business momentum is at a 15-quarter low. Net interest margin too comes in at a 10-quarter low of 3.93%.
LTIMindtree is under pressure along with the rest of the IT pack after reporting third quarter numbers. The company posted a mild beat on expectations in the third quarter.
Hatsun Agro's gross margins decline once again. Revenue growth fails to meet estimates in the third quarter. The stock is lower by almost 6.5%.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and the key index you need to track today actually is not the Nifty but the mid-cap index. On the top of Mangalam, as you can see, well, that one's trading in the green, and that's the reason why your portfolio will be feeling quite good. Added to that, the index that's on top of me, well, that one in fact is down close to around 50 points, but I'll tell you what, it was down nearly around 150 points around 45 minutes ago. So I'll tell you what, Mangalam, things are looking quite good, but I think the one out here, the Nifty Bank, that needs to give up the underperformance for the bulls to feel better going into that weekend.
I take that point completely, Nigel, but my sense is that, it's a very good session. If you give or take the kind of moves that we're seeing on the market right now, and on a day, if someone told you that Infosys is down by, the amount that it is, Axis Bank is down by about 5% as well, and yet the Nifty is down just 53 points, one would take it with both hands. They would say, oh yes, this is a decent trading session so far. And this, after 2 or 3 days of positive up moves that we've got on the Nifty itself, Reliance is doing its bit and supporting the Nifty, and as a result of which, we're seeing an up move.
Well, Mangalam, for this week, I'm viewing it like a test match, know, because on day one, you had, the batsmen that got knocked off, and everyone said it's going to be very, very difficult. But getting into day 5, the bulls will be feeling quite good because they are saying we have gone through all those challenging phases, a green top, but we hung in there, kept our eye in, and in fact, we're still survived, or even on the day 5. So I think the test match so far has gone pretty okay. When on day 1, you thought that the bulls are going to be battered out of shape.
Take that point, and now that the sun is out, look at some of the other stocks as well, which are also batting for the bulls right now. ITC, for instance, has done extremely well this week. Went X the hotel business. Now the street is viewing this as a pure either tobacco or FMCG play along with all the other businesses that they have. So before the hotel business lists, this is something that the street is looking at in terms of valuation, and the stock has moved higher as well. So we'll keep an eye out on all of this as we go along. Let's get in Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, the last 2 or 3 days, something has flipped. We've managed to hold on to the lows, managed to close in the green. And today, we had a gap down. From there itself, we've recovered a fair bit despite Axis Bank and Infosys losing.
Yeah, good morning, Mangalam and Nigel. Thanks for having me. So the good part is that supports are intact, but the concern is follow-up is missing. The good part is that Reliance is holding, but the concern is Axis and Infosys are slightly going down. But somehow I believe that selective stock-specific action will be there. As of now, the index has to cross and hold beyond 23,333, 23,350. Then only the short-term pain will be out to get a decent short covering trigger in the market. Otherwise, bounce could be sold in the absence of follow buying activities. On last trading session, the index headed towards 23,400, but was struggling to hold about 23,350 and then close near to lower levels. Even today also, it tried to attempt for 23,300, failed to surpass, hovering near 23,250. So for me, 23,333, 23,350 is going to be a key level. Above that, only the bulls will be at comfortable zone. Otherwise, you need to be in a broader range with multiple support at 23,000 and 22,800 level. Looking at the entire price movement, I believe it's going to be again stock specific. We have to be good at finding out the right ideas with strength. So first that is buy on SRF. The stock really rallied well in the last week, and in last 3-4 days, it witnessed a corrective move and again fresh up move. So technically, we can call it as a bullish pole and flag pattern on the lower time frame, which has bullish implication. So we are recommending to buy on SRF with support of 2560, and this stock can head towards 2720 kind of level. Second trading idea, I'll pick from Nifty IT pick, that is buy on LTTS. The stock has really done well in last 3 trading sessions, rallying from 4680 to 5400 zone. On weekly chart, the stock is at words of multiple weeks or multiple days breakout with surge in the open interest and the volume activity. So with support of 5300, LTTS can head towards 5600 levels. And I believe the market is going to give more weightage on the selective sector and stock rather than looking at the broader picture on the Nifty and the Bank Nifty. And Bank Nifty is slightly negative until it doesn't surpass 49,000 zone.
All right, we take that point, Chandan. Just hang in there with us. It looks like, pre-budget moves have started already. We're seeing some booster, expected for, I guess, the real estate sector. Because if you look at it, macro tech developers up around 6%, Suntech Realty up around 5%. We're seeing a big surge on Kolte Patil as well. So a lot of these keynote or the Keystone Realtors, all of them are doing extremely well. That's ICICI Lombard. We're talking about Suntech Realty and macrotech developers along with Kolte Patil. All of them spiking. But one stock which is actually under a lot of pressure has been, Kalyan Jewellers. If you look at it, down 17% this week. We were talking about how yesterday, if you look at the shareholding pattern as well, there are large stakeholders there, including the promoters, a couple of funds, etc. as well. From a chart check standpoint, the stock in F&O ban, Chandan, do you have a view here? Because it's seen rapid correction, almost 33% from its highs, 35% now as we speak.
Yeah, so the entire structure of the Kalyan Jewellers has turned lower, especially in last 2 weeks. It has been making lower top, lower bottom as it fell to surpass 800 zone. And if I look at the price behavior, at least it took 75 days to surpass that level, and 5 times there was attempt to move beyond 780, 795 zone. And this time the failure breakout turned to the lower zone and stock is making lower top, lower bottom. So I believe some more profit booking could be there in the counter till it holds below 530 zone. It can drift down to 490, 495 levels on the lower side.
I'll tell you what, today's decline is all the more important on Kalyan Jewellers because after today's decline, the stock has fallen below the price at which the promoter bought from Warburg Pincus as well. The promoters bought from Warburg Pincus at around 535 odd rupees. Today, the stock is down 23 rupees, telling you that at 515, it is below the price at which the promoters bought as well. So we'll most definitely keep an eye out on Kalyan Jewellers from here on as well.
Well, the promoters' hands are tied as well till the results. So we'll have to wait by to see what happens after that. But as Mangalam says, it appears, the bears have really hugged this one and the stock has lost 30% in the last few trading sessions. Thanks a lot, Chandan, for joining in. Let's shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Khushbu joins us to help us out with the stock she's tracking. Khushbu, take it away.
In today's idea for profit, we have Cholamandalam Investment and Finance Company. The company has a diversified business model with a strong focus on rural-centric retail customers. The company also has a stable asset quality. The company's growth was ahead of guidance in a challenging quarter where mortgage loans outpaced the core vehicle finance segment. Moreover, the strong growth trajectory continued in the new businesses. While the affordable housing finance push will drive growth, the festive demand and higher rural cash flows will aid vehicle loan growth in the near term. Hence, we believe that the asset growth will continue to surpass guidance in the 25 to 30% range in FY25. Moreover, the business is shifting towards the high-yield product mix, which will help the company to sustain healthy profitability, while the low credit cost of the mortgage portfolio and improved collection in the vehicle finance will support the overall asset quality. Though higher than the industry average, we believe that the premium stock valuation of Chola is justified given the higher quality of the earnings.
All right, with that, let's move on. We'll slip into a short break. And as we do that, let's hear out Grow Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights, strategies to navigate the market and make informed trading decisions. Today, we'll look at the rising trend of investing in SME IPOs and address some of the problems that traders face when they invest in a company without understanding the financials. Listen to that, take a short break, come back, focus on the markets.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
Right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
PD, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support, or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration.
Market's given up some of the gains, and that's largely on account of other banking stocks falling along with Axis Bank as well. So pull up the intraday chart of, say, something like a Kotak Mahindra Bank, ICICI Bank or HDFC Bank. You will see some pressure out there clearly, down 800 points for the Nifty Bank, and as a result of which the Nifty now down 100 points as against 50 points when we started the show. The mid-cap index too is mildly off the highs. One stock that is on our radar is Varun Beverages, down almost 3.5%. It's actually corrected a good 18-20% from its highs. The street was hoping for, some sort of consolidation coming in this space, but no, there is still aggressive competition. And yesterday, the takeaway from Reliance's results told you that Campa actually has a 10% market share in the sparkling water category or the sparkling drinks category in a couple of key states. And they have also said that, two of their FMCG brands, Campa and Independence, will cross the 1,000 crore mark when it comes to turnover in this category itself. So maybe incremental growth could be challenging because of competitive pressures, and that's what we're seeing on Varun Beverages as well. But let's move on. Let's talk about the Tata Sons IPO, or the potential Tata Sons IPO. Some updates coming in on the Tata Group. Tata Sons is still registered with the RBI as an upper layer NBFC, and this could mean that it may have to mandatorily list by September this year. Ritu joins in with more. Ritu.
Well, no respite for Tata Sons just yet because its application for deregistration as an upper layer NBFC to avoid an IPO is still under examination by the Reserve Bank of India. For the third financial year in a row, Tata Sons' names continues to appear on the list of upper layer NBFCs recognized by the RBI, and that means there is a possibility that the company may have to go public if its application is rejected by September of this year. Now, the scale-based regulations for NBFCs that were introduced in 2021 identified Tata Sons as an upper layer NBFC in September of 2022, giving it a 3-year window until September this year to go public. So the decision on that application to deregister is still being examined by RBI. Keep in mind, last year, in a bid to stay private, Tata Sons had repaid debt of more than 20,000 crores and submitted this application to deregister to the RBI. No decision, however, has been made on the matter just yet. Now, this is also going to be a test case because it's the first time we're seeing a company trying to get out of this list of upper layer NBFCs. There are no regulations or set procedures that have been laid out by the Reserve Bank of India for this. But of course, RBI does look at the size of the entity, the interconnectedness, the complexity of the liabilities, group structure, all of it to decide the list of names. Now, keep in mind, while Tata Sons' application is still being examined, there's another Tata Group company, Tata Capital, that continues to be identified as an upper layer NBFC, and that means the company may still have to IPO later this year to comply with RBI regulations.
Thanks a lot for that, Ritu. We'll keep an eye out on this evolving story. The other big stock that's under pressure is Axis Bank. It's down 5% after reporting its third quarter numbers. The bank's business momentum is at a 15-quarter low. The net interest margins too have come in at 10-quarter lows of around 3.93%, while the slippages also moved up. In fact, let's listen into the management of the bank that spoke post the release of their numbers.
We observe an increase in risk in certain segments and specific programs for personal loans and cards in the past. Our proactive interventions, including regular portfolio monitoring and early warning triggers, have allowed us to recalibrate policies to ensure delinquencies remain within acceptable thresholds. We have priced for this risk that we are seeing manifest today. Given the heightened delinquency levels in the industry, we continue to remain cautious in our outlook towards unsecured. We have continued to strengthen the collections infrastructure, including use of tech enablement at front end to improve collections capabilities.
All right, with that, what we'll do is slip into a short break. But before we do that, let's go across, look at the big good news coming in for you viewers. India's business news leader, just a click away. Right now, you will have it. It's popped up. It's the latest app that you have, the CNBC-TV18 all-new app. What you get from this is all the updates coming in from the financial world at your fingertips. Download it right now from either the Apple Store or the Google Play Store. Or scan the QR code which is there on your screen right now to Nigel's right. Just take out your phones, put on the camera app, scan this code. That will take you to the link to download this app. Once you download it, all the updates from the business world right at your fingertips. Do that, take a short break, come back.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leaks that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform?
Welcome back. Well, the markets have moved to the low point of the day, and Kotak Mahindra Bank is one bank that's quite nervous ahead of its numbers that are going to be declared tomorrow. So that one should come up for you on the screen. It just moved to the low point of the day. Let's move on though. Sources tell CNBC TV18 that the government may set concessional rate at 18% instead of 15%. Timsi Jaipuria, she's picking up that scoop. She joins us to fill us in with more details. Timsi?
Well, that's right. What sources are indicating to CNBC TV18 that the government is considering a reintroduction of the concessional corporate tax rate. Government currently is mulling reintroduction of the concessional scheme for new manufacturing units, but in a slightly different avatar when it comes to rates at 18% as against 15% earlier. Government is considering to bring back this concessional corporate tax scheme to promote Make in India, to create employment and yes, to enhance manufacturing capacity within the country. The view at the North Block, what sources indicated is that India Inc. has been asking for a reintroduction of this particular scheme to promote Make in India for quite some time. And when we talk about the current status of this proposal, well, the proposal is currently under active discussions between North Block and the PMO, and no decision has been taken as yet because sources indicated that any decision pertaining to the taxation policy is taken only closer to the budget, that is just 3 to 4 days before the budget. Just to remind our viewers what this concessional corporate tax regime was, well, the concessional corporate tax rates were notified in September 2019 with a sunset to end in March 2023, but the scheme was extended by 1 year till March 2024 of 15% plus cess and surcharges for new manufacturing units because of the delays that were induced due to the pandemic. And post that, since March 2024, the scheme which has had a sunset, India Inc. has been sending requests to the government to reintroduce this particular scheme again for the new manufacturing units. Meanwhile, email queries sent to the Finance Ministry remained unanswered on this particular proposal. So we'll have to wait and watch and see what finally Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
Absolutely. We'll most definitely keep an eye out on what the announcements are. Let's get another exclusive, Timsi. We learned that the government may actively be mulling income tax relief in the budget as well to boost consumption. Do you have more on that? Because that would come as music to the ears of everyone.
Well, that's right. What we are given to understand from sources is that the government currently is actively considering personal income tax breaks to spur consumption demand and to boost the economy. Government currently is studying 2 options on tax breaks, and any decision will look to make only the new tax regime more attractive, is what sources say. Now, some of the options that are there on the cards for a tax relief. Firstly, option 1, to increase the standard deduction limit from 75,000 rupees per annum, which is the current limit, anything up till 1 lakh rupees, and it could be in any proportion, either 75 to be made 80, 85, 90, 95, or even 1 lakh rupees per annum. That is something that is yet to be decided. Secondly, this particular option is to move the slabs in the new tax regime. Now, here government is considering 2 options. Firstly, to expand the 20% tax slab to cover income between 12 lakh and 18 lakh rupees, or even going beyond 18 lakh rupees till 20 lakh rupees. Remember, currently this slab is 12 lakh to 15 lakh rupees, where the tax rate is 20%. And then, as a follow-up to this, since the 20% slab will move, follow-up will be the movement on the 30% slab as well, which is also an option, where it feels that then, as a follow-up, 18 lakh rupees or 20 lakh rupees and above could be the income bracket for the higher tax rate, that is of 30%, which currently is at 15 lakh plus. So let's see what happens finally, because sources indicated that government believes tax breaks will mean more disposable income. It will boost the spending power. Plus, this increased spending power by the common man will help recovery in both direct taxes and GST collections. But just to remind our viewers that a final call on the tax break proposals will be taken up by both Finance Ministry and PMO only closer to the budget. It is taken only 1 or 2 days before the budget, and email queries sent to the North Block on this particular story have remained unanswered. So let's see what Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
All right, we take that point. Thank you so much for that. When we started the show, the mid-cap index was in the green and the Nifty was mildly in the red. Now the Nifty is deeply in the red and the mid-cap index also in the red as well. So there has been a swift decline. What we'll do is leave it to the team of Trading Hour to take the market action forward. There has been a swift decline led by the Nifty Bank and a couple of heavyweights which are now giving way.
It's a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
What we saw was, the last quarter we had seen discretionary becoming good in financial services in the US. Now this quarter we have seen financial services in Europe, also the discretionary showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now the second I think was about, if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared, our Q1, Q2 in a typical financial year are strong are Q3, Q4 typically weak. So that's the sort of seasonality that we see.
Good morning. Welcome to Friday's Trading Hour. I'm Reema Tendulkar. With me is Vivek Iyer. And now things are looking ugly on the screen. It's a deep shade of red. 200 points gone on the Nifty. At the index level, benchmark index level, we're down close to about 0.8, 0.9%. You know, we've had a gap down opening. We've been trading with cuts all through the morning. It's just that in the last 30, 45 minutes, the selling pressure has accelerated to a great extent. You know, about 45 minutes back, the Nifty was at 23,268, which means that fall that you can see has been to the tune of 150 points, all in a span of close to about, 30, 45 minutes. There you have it. From the top, we're down nearly about 180 points. And the biggest crack has come through just in the last few minutes. IT is the biggest culprit. The Nifty IT index is down 2.5%, and it doesn't help when the largest index weight, that's the banking index, is also down close to about 1,000 points. So it's a combination of IT and banks, and when these two decide to fall, there is very little which can hold up the markets at the other end.
That's right, Reema. IT is one of the largest drags, but giving it very tough competition in terms of laggards today is the banking pack. Axis Bank results significantly weaker than what the street was anticipating. Commentary was muted, and it's taking along the entire banking pack with it. Names like ICICI Bank, HDFC Bank, all of them trading with deep cuts. Now, when you're talking about some of the other stocks that we're looking at, look at the realty pack. That's one particular pocket that's actually managed to stand out in today's trading session. Macrotech developers, or LODA, is one particular stock that's actually managed to do quite well. Kotak Institutional Equities has upgraded that particular name. The other stock, one that we've been discussing, Reema, over this entire week is actually Kalyan Jewellers. Now, Kalyan Jewellers today is down another 5%. Yesterday, it entered the F&O ban, but despite that, another 5%. So, in the last 11 trading sessions, Kalyan Jewellers has seen a cut of 35%. So almost one-third of the market cap, a little more than one-third of the market cap, in fact, getting eroded in just the last 11 trading sessions. So it's a deep cut for Kalyan Jewellers, and overall, red throughout the screen is what we're looking at.
Indeed, that's been a problem stock for the markets. But what's holding up on one end of the market has truly been Reliance Industries. So let's quickly run you through what's aiding Reliance Industries. One, it was a beat compared to street expectation. The company delivered a consolidated EBITDA growth of 12% ahead of a consensus or CNBC-TV18 poll of an 8% increase. The reasons for the beat were two key sectors. One, the oil to chemicals business led by higher refining margins. The EBITDA growth was at 16%, and the second one was retail, much, much ahead of street expectations. Retail, in fact, was the key positive surprise because we knew that oil to chemicals is going to have a good quarter, given the way the Singapore GRMs had declined. Therefore, the expectation was refining will recover. So O2C was expected to be a good quarter. But considering the pain that retail went through, no one anticipated this kind of a growth. So yes, oil to chemicals did well. And retail did well, but the positive surprise has actually come in on retail. And look at the numbers. On a quarter-on-quarter basis, revenue growth is at 18% and the EBITDA jump is at 16%. So what's driving the momentum in the stock? One is reversal of underperformance and the momentum in retail. So here, quoting what Jeffries had to say, Reliance stock price has corrected 20% since its July peak on slower earnings growth and concerns about retail growth over the medium term. But now the recovery that we've seen in Reliance Retail's numbers, and on a year-on-year basis, the numbers are actually a high single digit. that is giving the confidence to Jefferies that maybe the retail growth can inch up to 15% in FY26, aided by the low base. And this strengthens the case. So they're penciling in that the consolidation phase of retail is over, and from here on, things should accelerate, and the 15% growth is what they're penciling in. But we'll have to wait by to see if the momentum sustains. The second reason is, as we said, the valuations are now at almost COVID levels. Since the COVID correction, this is the cheapest that we've seen in terms of valuation, given the recent underperformance. Also, there are quite a few potential catalysts that lie ahead. One, of course, is the recovery in retail, so that's a positive. The street is watching that. Secondly, the flow-through of recent tariff hikes in Jio. Jio Air Fiber also led a positive momentum in broadband subscribers, the start of new energy projects, and the IPO of Reliance Jio. So these are some positive catalysts that the street is watching, which could drive upside from here on. The brokerage view is largely positive. BofA says the risk reward is favorable. CLSA has an outperform with a target price of 1650.
Absolutely right, Rima. And Reliance, while it's gone ahead and given a beat as far as what the expectations were concerned, on the other hand, one particular stock that's seeing quite a bit of weakness, in fact, now once again near the day's lowest point, is actually Infosys. There's an upgrade as far as the guidance is concerned, but despite that, the street isn't taking it too well. In fact, yesterday the ADR2 was down, right?
Indeed. So you know what happened? Q3 revenues were a beat, yes. But what analysts are pointing out, that the revenue beat was driven by a higher pass-through. So in a nutshell, what does it mean? Now, suppose you're a client and I'm Infosys and you've asked for a deal. Along with the services, you've also asked for certain hardware to come. It's like a package deal, services plus hardware. But on hardware, it's not that Infosys makes anything. They will buy it and directly sell it to you. But because they've sold it to you, the revenue gets bloated. So that's called the pass-through revenue. Right. But there's no value add that Infosys does in it. So they're saying that Q3 revenue growth, the beat was driven by higher pass-through costs of nearly 150 basis points. So that's not really a services kind of beat that revenue is done through. And now they're saying that in Q4, the company is saying that there will be a lower pass-through. This quarter, there was a 150 basis points jump in revenue because of pass-through. In Q4, that won't be there. And therefore, if you look at their guidance, we have the full year guidance. We know the performance in the first 9 months. So you just need to subtract the two and you get a Q4 implied revenue guidance. And that is -2 to -0.5%, which basically means in Q4, it's going to be a negative growth quarter for the company. Also, deal wins are steady. Quarter on quarter, they're up 4%, but there is no acceleration in deal wins. In fact, on a year-on-year basis, deal wins perhaps are down 22%. That said, brokerages are very, very bullish on Infosys. In the large cap space, it pretty much features as the top pick. Bernstein has an outperform rating. Morgan Stanley is overweight. Jefferies got a buy call. And HSBC too is bullish on Infosys at these levels.
Thank you so much, Rima, for explaining what's dragging Infosys lower today. But on the other hand, within the OMC space, BPCL is one of the top Nifty gainers today. Sudarshan now joins us to explain what's aiding the up move in the stock price.
So BPCL yesterday announced the financial loan closure for Bina Refinery, and loan amount is around 32,000 crore, of which total project cost for Bina Refinery expansion would be around 49,000 crore. Now, what will this do? It will expand the refinery's total expansion will increase to capacity will increase to 11 million ton per annum from the current capacity of 7.8 MTPA. Now, what is the read through of this? First, financial closure will help that the expansion is on schedule and plan should be up and running in 3 to 4 years. But apart from this, there is one more news. US EIA had come out with a short-term outlook on oil. Now in 2025, it expects Brent crude price to fall to levels around $74 per barrel, and in 2026, Brent should fall further to levels around $66 per barrel. And these are the two news. That's the reason you can see an upside in BPCL, currently up more than 1%.
Well, thank you so much, Sudarshan, for talking us and taking us through what exactly has transpired as far as BPCL is concerned. Well, let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, let's now shift the focus to the commodity space. Manisha joins in, and today, Manisha is focusing on the energy space.
I am Vivek, and that is because energy as a sector continues to be the best performer until now in 2025, the last fortnight that we have seen for the new year. So when you look at the crude oil prices, well, yes, they have cooled off a bit, but we are still holding very close to those 5-month highs. And this is a fourth straight week that the crude oil prices are headed for a positive gain there. But the US president-elect could soften the sanctions on Russia is what the market is taking in as a sentiment. And apart from that, the India-China is seeking more crude now from Saudi Arabia, which already has increased prices for the month of Feb for most of its Asian consumers. So markets are working with higher prices, at least in the first quarter of this year. Also, it has been about declining US stockpiles. It has to do with the colder weather forecast as well. And the markets also have seen lower production come in from many of the OPEC countries. That clearly has been supportive for the crude oil prices, but not just crude. When you look at the natural gas and the heating oil prices, these have been running up as well. The US natural gas prices right now are at a 2-year highs. Pardon me. We also are looking at cold weather supporting demand here as well. And then the withdrawals that we have seen in the US have been at the highest. The record gas flows for LNG export, those numbers have been on the stronger side as well. So whichever way that you look right now, adding to that the decline in dollar index, it all is quite positive for the crude oil prices there. As I said, it's going to be a fourth straight week of gains continuing for the crude oil prices. I also want to show you on what we've done in sense of prices on a week-on-week and YTD basis. So when you look at the prices right now, for this week, we've seen a gain of around 7 to 8% for many of these crude varieties there. For this year, until now, while the Brent prices are up by 11%, you have heating oil, which is 17% on the higher side. Natural gas prices have gained up by 14% as well. And while, of course, the next week, Monday starts with a bang, as you will see the new president in US take over. And the street is anticipating that the dollar will continue to hold where it is. And many of these commodities perhaps could gain further.
Thank you very much for that, and we'll get into a break. But before that, here is some good news for all our viewers, because India's business news leader is now just a click away. We're introducing the all-new app where you can get access to the in-depth articles, all the financial world updates at your fingertips. All you need to do is download the app from the Apple or the Google Play Store, or you can just scan the QR code on your screen.
The Nita Mukesh Ambani Cultural Centre has unveiled its latest offering, The Arts Cafe, a vision brought to life by Isha Ambani. This space is where art meets culinary excellence, offering a one-of-a-kind experience for both food and culture enthusiasts alike. With its soothing natural shades, browns and beiges and art decor accents, The NMACC Arts Cafe, designed by Gauri Khan, radiates elegance. Situated on NMACC's third floor, the suitable entry points to the cafe are Gate 11 and 12. The stunning Cherry Blossom series by Damien Hirst greets visitors as the Arts Cafe experience gets underway. A grand 16-feet organic bar with a flowing wave-like design and an amazing skylight that lets in the sunshine.
Welcome back. Let's talk about Indus Stars. In fact, Indus Stars has been seeing a lot of upgrades. The latest one is coming from CLSA. Sudarshan is here for more. Sudarshan.
So in the last 1 week, this is the third positive rating for Indus Towers. Now today, CLSA has come out with a note upgrading to high conviction outperformance target is rupees 575 per share, implying an upside of nearly 60% from current levels. So it says recently company received further 1900 crore payment from Vodafone Idea for past dues, and now the dues are down more than 70% from the peak levels. It says led by 25% tenancy expansion, company offers 10% EBITDA CAGR by FY27, and that's on continued positive note. Today also in a weak market, Indus Towers is up more than 2%.
Thank you so much, Sudarshan, for talking to us about why exactly that particular stock is doing well in this session. But another stock that's doing quite well is Macrotech Developers, also known as LODA. The stock has gained in trade, this on the back of a Kotak institutional equity upgrade on the stock. Winnie joins in with more details.
Yes, so we are seeing an upgrade that's coming for Macrotech Developers, and this one is from Kotak, where they've upgraded the stock to a buy, target price of 1,340 rupees per share. What Kotak is highlighting, that they believe that the company has been doing quite well. They've consistently been delivering in terms of healthy growth across the matrices and across sectors for them. Now, overall, the company has managed to see a 34% growth from FY21 to FY24, and they expect a 21% CAGR growth over the next 3 years as well. What the Kotak note is also highlighting, that business development will continue to be grow and continue to be steady. Largely, mainly what is driving it is the joint development agreement. The management also said that they gradually want to enter newer cities, and if that works out well for the company, the way it worked out in Pune as well as Bangalore, then we could see a good upside coming in for the stock.
Thank you very much for that. That's Macrotech Developers. Let's get back to the market. Still down 170 points on the Nifty Sensex, lower 650 points. It's a big down day. Mitesh is now with us for a quick technical check on the markets. Mitesh, what have you made of the slide that we've seen? And that said, the advanced decline ratio is not too bad. We've got about 2 stocks advancing for 3 in the red. So the broader markets is relatively holding out.
So actually, the index have taken big hit because of Axis Bank and Infosys. My sense is that I think the broader market, as you were rightly pointing out, still doing okay. So I've got a mix of buy and sell ideas. On the index, what is important is that if we start breaking below 23,050 or 47, which is the low which the markets made on Monday, then I think we should look at 22,800, 22,650 as the possible target zone. In case you can hold and recover from these levels, then I think we might see a pullback to about levels of 23,250 odd levels. So we'll wait and watch on the index. My bigger worry is on the Bank Nifty, which could retest 48,000 and possibly is now showing signs of further decline on the weekly chart. So we'll keep watching both the index, but we have a negative bias in the short term. On the stock side, a buy on Coal India. Keep a stop at about 379. Look for a target of around 399 to 400 in possibly a couple of days. And the other one is a sell on Dalmia Bharat with a stop at about 1725 for targets of 1650.
Thank you so much, Mitesh, for joining us, giving us your views on the index as well. Just stock-specific recommendations. Moving on, Umang Nahata, newly appointed CEO of Mastek, spoke to CNBC-TV18 after the company posted a muted performance in Q3 with declining revenue and margins under pressure. Let's listen in to a slice of that conversation.
I think we are expecting Q4 to have better growth than I think we had. Like I said, Q3 was a furlough quarter, and staying flat in a furlough quarter is gives us a good outlook going forward. So we think Q4 is going to be positive from here, but in the midterm, there's still a degree of unpredictability as we stabilize our US business. As far as FY26 is concerned, we feel we will definitely do better in terms of overall growth profile from here. Our expectations are higher, but not like extremely high, but moderately better than what we have been doing this year. We're trying to balance the cost that we have to, put on growth versus the growth outlook that the business overall has. So yeah, I mean, we should definitely do better from here, but I mean, the estimates that you have is close to where we are expecting us to be. Our aspirations is in the next 2 years take us at least 200 basis points higher than where we are. That 19% would be a good number to run our business at.
Well, that was the management of Mastech. Let's now take a short break. Up next, we'll discuss market fundamentals with Madana Gopal and Ramu from Sundaram Alternate Assets.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
The room's center point, exuding sophistication and calm, which further adds to its attractiveness. The cafe is one of the most alluring rooftop places in BKC with its large al fresco terrace, which offers sweeping views of the Fountain of Joy. For those looking for a more intimate experience, the cafe also features a beautiful 12-seater private dining area with a live kitchen, perfect for small parties and customized menus. The Arts Cafe is more than just a meal. It's a harmonious blend of art, culture and cuisine, making it a must-visit addition to Mumbai's cultural landscape. In Mumbai, Xenia Barya.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
You look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting. Healthcare is a good space. It's not obviously high beta, but basically I think globally there is a need to reduce healthcare costs because governments are very leveraged. There is aging population, and India has obviously got great strength in terms of generic drugs or
Welcome back to Trading Hour. Well, the Nifty Bank now seeing majority of selling pressure down almost 1.7%. But like promised, Madana Gopal and Ramu from Sundaram Alternate Assets joins us now to discuss market fundamentals and its top sectoral picks. Thank you so much, Mr. Ramu, for joining us. First up, Q3 earnings season, what's your take on it so far? Quite a lot of misses that have come about, especially as far as Infosys Axis Bank is concerned.
Yeah, continuing with the same issues, we think Q4 could be much better. Q3 still had certain extended monsoon in pockets of the country. Therefore, demand recovery was much slower. But we are hearing that on ground, December was much better. And in January also, things are sticking up well. See, we need to be, there are certain policy measures that will be helpful to bring back growth. Growth has slowed down, but there were certain one-offs in the first half, which we also need to be very considerate. So we expect Q4 to set a recovery in the corporate earnings. But it will be much lower than what's the expectation of the street, particularly when I look at FY26, the street's expectation for corporate earnings is still 15-16% growth. I think that those are very high expectations. We need to tone down the Nifty earnings growth expectation to around 10 to 12%. I think that's pretty achievable. But Q3, we don't have very high expectation for earnings as such. There are very specific pockets where growth is still pretty encouraging in the country, and those are the areas that we like to stick to in the form of investments.
Mr. Ramu, the other thing that you mentioned is within those pockets of growth that you've identified, one key pocket has been e-commerce. Now, within e-commerce, there are quite a few plays. So, which sector or which segment within that particular space would you, focus your attention towards?
Again, it's very stock specific that we have identified certain areas. We have been invested in food delivery for a long period. We made good money there. The reason why it made good money is the ability of these companies to charge the customers, as well as ability to continuously cut on the cost, which enable them to reach optimal margin levers much faster than what the street expected. We believe this journey should further get hastened because the benefits of investing into AI and the benefits of the levers of scaling up, these things will start playing out in the next 2-3 year time period. Growth will still continue. Penetration levels in most of these segments are still lower. Therefore, growth should continue above 20-25% in most of these segments. So operating leverage benefits will flow through. The benefits of investing in the IT infrastructure will flow through. All this put together, we feel that margin surprises can continue in the space. There are certain segments, new segments that Q-commerce is showing a lot of promise. Currently, we feel that the top line growth of these new segments will be pretty encouraging. While competition might pull back the margin benefits that we expected for very temporary phase, but in the long term, we feel that once the quick commerce sort of reaches 5-6% of the total grocery spending in this country, the cost leverage will be much higher. And we were very impressed with the recently when we looked at the documents of Blinkit's the margins, we were very surprised that even with the massive expansion the company has done, the margins were pretty good at the contribution level, which shows that the company is able to charge the customers. If they continue with it, I think then the margin levers can be much more than what street is expecting from a medium-term perspective. So. And also we are pretty positive on the fintech space. We feel that there were certain regulatory issues that were surrounding the fintech space last year. All this should be behind us. The benefits of technology in this space should also be visible, and the players in this should consolidate their market share is what we feel. So across e-commerce, we expect the players to consolidate their market share at the cost of offline players, and the benefits of leverage as well as technology should play through on their margins from a medium-term perspective.
Got that. So, we now have your views as far as the e-commerce space is concerned, and also new age businesses, if you could call it so. One interesting observation from your note is that you've said that private capex still hasn't returned, but one theme that you like is the emerging manufacturing sectors, especially some of the themes that you mentioned include names as far as the solar manufacturing or the solar value chain is concerned. EV, solar value chain, what is your take on that? Do you still like some of these companies? Quite a few of them are trading at pretty elevated valuations.
Definitely. I think what is happening is, I've explained this in the previous episodes as well. Energy transition is definitely happening, not just in India, even globally. In India, if you let the competition from China come in, many of these sectors, the players within the sectors will not make the kind of ROCE that they are making today. Assuming that the policy will be consistent and domestic protection will continue, the demand for power, which is pretty strong, not just in India, even globally, will continue to push many of these companies to grow and grow at a reasonable profitability. And given this scenario, this is best placed compared to many other sectors within the infra space, not looking very attractive from an ROC perspective as well as from a margin perspective. So within the infra space, power will continue to do well, and within power we feel that power T&D space, renewable space, as well as those areas where there is domestic protection, and we clearly see there is a consistency in the current government policy as far as encouraging the domestic manufacturers to supply for the domestic infrastructure, and that is enabling a margin expansion as well as a very stable growth for most of these companies. So that space looks interesting, and given that the earnings growth is narrowing down for the overall market, these are certain segments that you cannot avoid. Even though the valuation looks a little higher, I still feel that the lack of growth among the consensus will lead to money chasing the pockets where growth is there, and therefore the growth is much higher in these spaces right now, along with the margin expansion benefit. So we cannot ignore these areas, is what I feel. On the electric vehicle side, we are still a year away. We still feel penetration levels of electric vehicle will surprise the market. We have seen certain very interesting launches from large OEMs in India. As the demand plays out, and in two-wheelers also, we have seen that the price at which the new launches have happened are pretty impressive compared to the ICE vehicles. So the electric vehicle penetration in India is very low, and I think it should only move northwards. We can, as a country, hope for a 25% sort of a penetration in next 5-year time period. If that is there, and then domestic protection is also there. Some of these battery vehicle manufacturing companies as well as the chemical manufacturing companies, which are going to be supplies to these electric vehicle manufacturers, should be areas we should be interested about, because the valuation there is pretty low at this point of time. There are no big expectations there. So that keeps us interested in this space. Probably it might take a year before the real profitability and growth plays out, but we are ready to wait and watch in this space.
Thank you so much, Mr. Ramu, for joining us, giving us your views on the market and various sector-specific ideas as well. Well, time now for a short break. On the other side, we bring you excerpts of our conversation with the management of LTIMindtree over their Q3 performance and the way forward.
I mean, bulls are very tired on insurance because last 3-4 years, we've kept getting hit by some regulation or the other. I do feel that mutual funds are more efficient as a savings vehicle than insurance. But having said that, there is obviously need for long-term savings, which insurance is an avenue for. Yeah, so we have a bit both the general insurers, life insurers, and the tech platforms around it. But yes, it's been it has needed a lot of patience.
Or 16.2 that we've got, And I do see Q4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee bids. Medium term, we are reiterating our aspiration to get to $2 billion and 17 to 18% EBIT levels. Our pipeline is better than what it was the same time last year as well as last quarter. If you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year.
I think it's going to be, I believe, not a very high return market, to be honest, the next few quarters. The thing is, rather than forecasting anything, the biggest thing is last 3-5 years have been solid in terms of returns. Obviously, valuations are high. And two is, as you pointed out, we're entering a phase where the world's largest economy is going to see a fairly radical regime change. We don't know what exactly will happen in terms of dollar strength, yuan weakness, trade tariffs, etc. So there is a lot of uncertainty, and the valuations are probably on an aggregate not reflective of that uncertainty. But having said that, I think there is value at polar opposites of the market. I think a lot of tier 2, tier 3 financials are almost at distress valuation. And I believe that in India...
Welcome back to Trading Hour. Well, one particular stock in focus, like you can see on the bottom of your screen, Havells is doing its analyst con call, and there's been a bit of a spike in the stock, especially in the last 10 minutes, especially since the con call has begun. Some positive commentary coming in from the management in terms of Q4. They expect margins to be slightly better. But Rima, you've been looking at LTIMindtree as well, right?
Indeed. So LTIMindtree came out with numbers which were in line with street expectations, in fact, modestly higher on the revenues and on the margins. The problem is that this was a company which was seeing very high growth. Then they slowed down over the last 1.5-2 years. And the question is, when do they bounce back? And the second problem is, and as of now, there is no clarity about the company getting back into the leaders quadrant. They're not coming out and categorically saying that, this is next year onwards, we are back to our phenomenal growth track. And secondly, margins for the company have dipped very sharply. Their aspiration is 17 to 18%. This quarter, they've done 13.8%. So there is a big mismatch. Margins are much lower compared to where they want to be and even compared to peers. But for them, the good part is BFSI. They're heavily indexed to BFSI and discretionary spends, which is why they got hit the hardest. But now if BFSI is recovering, and there is evidence of that from what we've seen so far, then LTIMindtree has, scope to start doing well from here. But in fact, we had a chat with the management on all these questions. Debashish Chatterjee, Managing Director and CEO at LTIMindtree. Listen in to our conversation with the management.
As far as the overall quarter is concerned, the quarter is quite positive. We had a record order inflow. We had a decent growth, and coming specifically to margin, as you rightly called out, we had a wage hike across the board, and we had called out around 200, around about 200 basis point impact. We had a 220 basis point impact, out of which we clawed back 50 basis points to our operational efficiency. That's what you see in terms of the EBIT. And there is a bit of forex as well as treasury income, which did not come in line. That's what is impacted in the PAT. But as far as the overall plan is concerned, we have a very robust plan and program in terms of improving the margin as we go along, and that continues. So I can only say that there is absolute focus in terms of improving the margin as we go along the next few quarters.
But just over the next 3 to 4 quarters, can you give a sense of how much you will be able to improve margins?
Well, it also depends in terms of how the growth comes back, because margin is also a reflection of the growth. I can only say that there is a plan, but if the growth comes back, say, for example, double digit in the next year, then the margin improvement also will be happening in line with that.
So when do you expect growth to accelerate to double digit? Do you think FY26 is likely, or given the visibility that you have, the demand environment, that could be pushed further out to FY27?
Well, I think let me tell you what I know. At this point of time, if you look at our overall performance, last 2 quarters we had the growth momentum which came back, which continued into this quarter, and we are confident that the growth momentum will continue into Q4 as well. If you look at the order intake that we have, it is quite robust, 29% improvement in terms of our order intake this quarter on a quarter-on-quarter basis. Year-on-year basis, we had a 10% plus improvement. So given all those things and the fact that all this will fructify into revenues, the next quarter may be a little effort in terms of transition. But overall, we feel very confident that FY26 will be better than FY25. Now, in terms of telling you anything further, I need to wait for the client budgets to be formalized, which they're still working on. And once we get better clarity, then we will know exactly how it is playing out. But at this point of time, I can certainly see that FY26 will be better than FY25.
And you're saying Q4, the growth momentum is continuing into Q4. So Q4 growth rate should be similar to Q3 or better?
Well, I think, if you have listened to our commentary, we called out a few things like we had the impact on furloughs, we had the impact on Forex, we had a lesser number of working days. And also we have been talking about passing back some productivity gains to our one of our top client. So that will continue into Q4 as well, some of that. And but having said that, there is growth that we are expecting in other parts of the business. That's what gives me the confidence to say that we will at least continue with the growth momentum. But calling out specifics at this point of time is very difficult. But we are very confident that growth will continue into Q4.
What was the extent of the productivity gains which you passed on in Q3? And do you see this extending from beyond the top client to other clients?
Well, I think the productivity gain is something that we always knew it would happen, given the focus on AI and given the focus on, in fact, there are quite a few deals that we have won. In fact, last quarter, we announced a 200 million plus deal. And this quarter, again, we won a 50 million plus deal. And all these deals are vendor consolidations where our AI strategy is playing a very big role in terms of the productivity that we can offer to the client over a longer period of time. Now, having said that, we have also got a strategy which says AI in everything. So everything that we do for our clients, we want to offer the productivity gains and give something back to them. And the top client being a very large client, so obviously the number is slightly higher. So that's why we called it out. And we expect that this will continue. The full quarter impact of this will be there in the Q4. But having said that, it is not a reflection of any softness in business per se, because it is a reflection of the way we do our business. We expect that as we give the productivity back to the client, they will be also giving us more work based on how we are doing things in other parts of their business. So we feel that it will be coming in other places also, but at this point of time, the major impact is with the top client.
But could you quantify that? What was the amount that you passed on to your top client?
Well, I don't think I want to quantify that, but I can only tell you that it is certainly, a little, if you just do the maths, you will realize that it's an impact that we have in terms of our revenues, which is because of Forex, there is a significant impact, and there is a significant impact of the productivity benefits. We don't want to call it out, but as I said, that it will continue into the next quarter. That's all I can share at this point of time. And but in spite of that, we are very confident that we will have growth in Q4.
Okay. And you see this being passed on to your other big clients also, not in Q4, but say in FY26 onwards, the productivity benefits, the Gen AI related savings that you enjoy will be passed on to your big clients. That's going to be the strategy of the company.
Depends on the specific deals, depends on the specific opportunity, depends on what stage we are in. I mean, if you are doing a renewal for a particular client, definitely we will be looking at that aspect. But, one thing I want to just explain that passing on productivity gain doesn't mean that we don't get revenues. We may probably get even more revenues because of our overall AI strategy that we have adopted. When we say AI in everything and everything for AI, there's a lot of opportunity that we are creating working with our clients. And this is only one aspect that we have to accept as we ramp up our overall AI strategy across all the clients. I mean, the example that I gave you, which is a $200 million deal, which we closed last quarter, it's a vendor consolidation. And we have come out winners in that. And we have applied our AI strategy very significantly in that deal.
So do you think you can sustain deal wins at this current mark of, $1.6, $1.7 billion going ahead too?
Well, every quarter is a little different. There are quarters where you have more renewals, so those quarters will be, and the way we look at our deal wins is not just quarter on quarter, but for the full year, is the order book better than order intake better than what it was in the last year? So from that perspective, we are definitely on track. And at this point of time, I can only say that it's not only the order intake for this particular quarter, but even the pipeline is also extremely robust as we move into the next quarters.
The pipeline is better than what it was a quarter ago and a year ago?
I can only say the pipeline is extremely robust.
Okay.
And you will hear some of those things in this quarter as we go along.
Got that. So the reason for your high-tech declining was on account of the productivity gains passed on to your top clients. What about the other two verticals, retail and healthcare? What led to the weakness or the revenue decline there other than furloughs? And on BFSI, do you think now you can hit double-digit revenue growth on a year-on-year basis?
Well, I don't want to get into the double-digit part, but what I can say is that if you look at all my verticals, even if you look at tech vertical, all the verticals have actually grown on a year-on-year basis, so which is very promising. So that means the growth has been fairly broad-based. None of the verticals have declined on a year-on-year basis, and that's something which is important to us. There could be cyclical things in terms of one quarter to another quarter, but at an overall level, we are growing, and I think BFSI, we have called out that it has been a great bounce back in terms of growth, and that will continue as we go along. It has been a tremendous growth story in BFSI in the last 2 quarters, and that momentum will continue.
But you're not confident about BFSI hitting double-digit revenue growth. You're already at 7.5%.
No, I don't want to get ahead of myself. That's not the right way to look at it. I mean, if I can do double digit, why not? But why do we want to call it out when we know that the growth momentum is continuing and we should just focus on the growth momentum?
Yeah. You've historically always been in the leaders quadrant, except for the last couple of quarters as things slowed down. You're calling out that FY26 is going to be better than FY25. Do you think you will be able to get back into the leaders quadrant next year?
Well, that's our aspiration. We have always aspired to, to have a profitable growth story and be in the leader quadrant. And as of now, the robust pipeline, the deal wins that we have had in this quarter, as well as what we are seeing in Q4, definitely gives us the confidence that FY26 will be better than FY25, what we have seen. And even if I look at, especially in BFSI, there is a little bit of discretionary spend also, which is coming back. I won't say that it has come back broad-based across all sectors, and it's also a reflection of the portfolio of clients that I have. But some portion of discretionary has come back in BFSI, which also gives me the confidence to say that maybe at last, after 2 years, there will be some discretionary which will be helping us in terms of growth.
Well, that was a very interesting conversation that the management of LTIMindtree had with Reema just earlier. Well, time now for a short break. On the other side, we tell you why Tech Mahindra and Wipro are buzzing ahead of their Q3 numbers. Lending will still be okay because in general, we are a reasonably high inflation economy, so the asset values keep inflating. And a lot of the tier 2 private banks, PSU banks are at book or below. So I think there is a risk reward opportunity there. I think there is a risk reward in metals at this point of time. And on the other side, when you look at the quality companies, I think the internet platforms and
anyone who has the potential to use stuff like AI well, those companies I think still are very interesting.
Welcome back. Prime Minister Modi is now speaking at the Bharat Mobility Global Expo 2025. Let's cut across.
और ग्रेटर नोएडा के इंडिया एक्सपो सेंटर में भी ये एक्सपो चल रहा है। आने वाले 5-6 दिनों में बहुत बड़ी संख्या में लोग यहां आएंगे। अनेक नई गाड़ियां भी यहां लॉन्च होने वाली है। ये दिखाता है कि भारत में मोबिलिटी के फ्यूचर को लेकर कितनी पॉजिटिविटी है। यहां कुछ एग्जीबिशंस में विजिट करने, उन्हें देखने का अवसर अभी मुझे मिला। भारत की ऑटोमोटिव इंडस्ट्री फैंटास्टिक भी है और फ्यूचर रेडी भी है। मैं आप सभी को अपनी बहुत बहुत शुभकामनाएं देता हूं। साथियों, भारत के ऑटो सेक्टर के इतने बड़े आयोजन में मैं आज रतन टाटा जी और ओसामू सुजुकी जी को भी याद करूंगा। भारत के ऑटो सेक्टर की ग्रोथ में मिडिल क्लास के सपने को पूरा करने में इन दोनों महानुभावों का बहुत बड़ा योगदान रहा है। मुझे भरोसा है कि रतन टाटा जी और ओसामा सुजुकी जी की लेगेसी भारत के पूरे मोबिलिटी सेक्टर को इंस्पायर करती रहेगी। साथियों, आज का भारत एस्पिरेशन से भरा हुआ है, युवा ऊर्जा से भरा हुआ है। यही एस्पिरेशंस हमें भारत की ऑटोमोटिव इंडस्ट्री में दिखाई देती हैं। बीते साल में भारत की ऑटो इंडस्ट्री करीब 12% की ग्रोथ से आगे बढ़ी है। मेक इन इंडिया, मेक फॉर द वर्ल्ड के मंत्र पर चलते हुए अब एक्सपोर्ट भी बढ़ रहा है। इतनी तो दुनिया के कई देशों की पॉपुलेशन नहीं है जितनी हर साल भारत में गाड़ियां बिक रही हैं। एक साल में करीब 2.5 करोड़ गाड़ियां बिकना ये दिखाता है कि भारत में डिमांड लगातार कैसे बढ़ रही है। ये दिखाता है कि जब मोबिलिटी के फ्यूचर की बात आती है तो भारत को क्यों इतनी उम्मीदों के साथ देखा जा रहा है। साथियों, भारत आज दुनिया की 5वीं बड़ी इकोनॉमी है और पैसेंजर व्हीकल मार्केट के रूप में देखें तो हम दुनिया में नंबर 3 पर है। आप कल्पना कीजिए कि जब भारत दुनिया की टॉप 3 इकोनॉमी में शामिल होगा तब हमारा ऑटो मार्केट कहां होगा। विकसित भारत की यात्रा मोबिलिटी सेक्टर के भी अभूतपूर्व ट्रांसफॉर्मेशन की कई गुना विस्तार की यात्रा होने वाली है। भारत में मोबिलिटी के फ्यूचर को ड्राइव करने वाले कई फैक्टर्स हैं, जैसे भारत की सबसे बड़ी युवा आबादी, मिडिल क्लास का लगातार बढ़ता दायरा, तेजी से होता अर्बनाइजेशन, भारत में बन रहा आधुनिक इंफ्रास्ट्रक्चर, मेक इन इंडिया से अफोर्डेबल व्हीकल, ये सारे फैक्टर्स भारत में ऑटो सेक्टर की ग्रोथ को पुश करने वाले हैं, नई ताकत देने वाले हैं। साथियों, ऑटो इंडस्ट्री के विकास के लिए नीड और एस्पिरेशंस ये दोनों बहुत जरूरी होते हैं और सद्भाग्य से भारत में आज ये दोनों वाइब्रेंट है। आने वाले कई दशकों तक भारत दुनिया का सबसे युवा देश रहने वाला है। यही युवा आपका सबसे बड़ा कस्टमर है। इतना बड़ा युवा वर्ग कितनी बड़ी डिमांड क्रिएट करेगा, इसका अनुमान आप भली भांति लगा सकते हैं। आपका एक और बड़ा कस्टमर भारत का मिडिल क्लास है। बीते 10 वर्षों में 25 करोड़ भारतीय गरीबी से बाहर निकले हैं। ये न्यू मिडिल क्लास अपना पहला व्हीकल ले रहा है। जैसे जैसे तरक्की होगी, ये अपने व्हीकल को भी अपग्रेड करेंगे और इसका बेनिफिट ऑटो सेक्टर को मिलना पक्का है। साथियों, कभी भारत में गाड़ियां न खरीदने का एक कारण अच्छी सड़कों, चौड़ी सड़कों का अभाव भी था। अब ये स्थिति भी बदल रही है। ईज ऑफ ट्रेवल आज भारत की बड़ी प्राथमिकता है। पिछले वर्ष के बजट में इंफ्रास्ट्रक्चर के निर्माण के लिए 11 लाख करोड़ रुपए से अधिक रखे गए थे। आज भारत में मल्टी लेन हाईवे का, एक्सप्रेसवे का जाल बिछ रहा है। पीएम गति शक्ति नेशनल मास्टर प्लान से मल्टी मॉडल कनेक्टिविटी को गति मिल रही है। इससे लॉजिस्टिक कॉस्ट कम हो रही है। नेशनल लॉजिस्टिक पॉलिसी की वजह से भारत दुनिया में सबसे कॉम्पिटिटिव लॉजिस्टिक कॉस्ट वाला देश होने वाला है।
Heavyweights see a pullback, dragging indices lower even as mid-caps continue to notch gains. Energy, metals and utilities are the big gainers even as IT and banks drag.
Reliance Industries bounces back with strong growth in retail, a resilient show in the O2C segment and an improving performance at Jio with its ARPU topping 200 rupees and services seeing a good pickup. The stock gains.
Infosys beats third quarter estimates and ups its revenue guidance, but concerns over the impact of wage hikes coming in the next two quarters and tapering of pass-through business hurts the stock.
Axis Bank sees an all-round deterioration across parameters with slowing business momentum, dipping low-cost deposits, rising slippages and crimping margins. The stock is among the top Nifty losers. Halfway through the final trading day of the week and the screen is looking for some recovery. Good afternoon. You're watching Halftime Report here on CNBC-TV18. I'm Hormuz Fatakia. With me as always is Mangalam Malu. Well, Mangalam, it seems as though the benchmarks want to end the week on a high. Some recovery from the lows of the day, but there are two very important drags on the indices this afternoon.
Well, the screen is looking for recovery just as you are for your voice, Hormuz. But what I'll tell you is that, the mid-cap index is trying to, not fall as much as the frontline indices. It is trying to outperform. It's marginally in the green right now. But the advanced decline tells you that the market's still not made up its mind, because for most part of today's trading session, we had the green line above the red line. Thereafter, there was that intermingling that took place, and now we have the red line above the green line, even as they are coming closer to each other itself. Reliance is the one stock which has saved the Nifty from the blushes, still holding just below the 23,200 mark, even as the Nifty Bank is the big dragger. At one point was down 900 points, currently seeing some bit of recovery from lows, but still down about 800 odd points itself. One mid-cap stock that really, not particularly mid-cap, but largish mid-cap that comes onto my radar today is Varun Beverages. As a big decliner, down nearly 5%, and that after the details came in from Reliance Retail's beverage business, which is Campa. They said that Campa now has crossed the 10% market share mark in the sparkling beverage category in select states. So that means that incremental growth for this category may, come to Campa and other players, not particularly PepsiCo and Coke. And the second one that I'm looking at is that Campa itself will be 1,000 crore business by the end of this year. Campa and Independence, both the FMCG verticals of Reliance, the in-house brands, will end FY25 with a turnover of 1,000 crores. For a company to start in 1 year and cross that 1,000 crore mark, which is roughly about 7-8% of Varun Beverages' overall revenue, that means the incremental growth could be a little more difficult for Varun Beverages than the others, and as a result of which the stock is lower. But you're looking at BPCL as well. We have to go across to Sudarshan for that.
Sudarshan, among the top gainers today on the index and at the highest point of the day now, in fact, almost 3% higher. Sudarshan is joining in to explain what's causing this movement on the stock today. Sudarshan.
So BPCL has achieved financial closure for the expansion of Bina refinery unit. Company has signed loan agreement with consortium of lenders led by SBI for amount of rupees nearly 32,000 crore. The project, which cost nearly 49,000 crore, will help increase the capacity of Bina refinery, and post the increased total capacity would be 11 million tons per annum from current capacity of 7.8 million tons per annum. So what is the read through? So financial closure indicates that expansion is on schedule and the plant would be up and running in nearly 3 to 4 years. In another news, US EIO on January 14 had released short-term outlook on oil. Now in 2025, US EIA expects Brent crude oil price to fall to levels around $74 per barrel and should fall further in 2026 to levels around $66 per barrel. So on the back of these two news, you can see an uptick in BPCL and currently up nearly 3%. It's the top Nifty gainer.
The overnight drop in crude oil prices also coming to the rescue there. Sudarshan, thanks a lot for that. By the way, just before we take that break, I wanted to highlight some losers on the screen. Sterling and Wilson now has fallen to the lowest point of the day, 8% lower now after that spike that it had seen in yesterday's session after its results. And now that has slipped to the lowest point of the day, has Sterling and Wilson Renewables now 8% lower. But before we take that break, it's time for Growth Code, a special initiative by Grow and CNBC-TV18 that's designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we'll take a look at the rising trends of investing in SME IPOs and address that problem that traders face when they invest in a company without understanding the fundamentals.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and
Welcome back. 100 points down on the index, 100 points off the lows of the day, and contributing a substantial chunk to that recovery is Reliance Industries, the Nifty 50 big boy, and that is the one that's holding on to the gains now, 3% higher after a good third quarter that it reported last evening. Rima is joining in with the key highlights of that. Rima.
Well, it's a good showing this time by Reliance Industries. The company's revenue growth, EBITDA, profits all coming in ahead of street expectations. The consolidated EBITDA was up 12%, ahead of the CNBC-TV18 poll of 8%. So big beat there. And the reasons for the beat were, one, the oil to chemical business and retail. Retail was a drag on the company's financials for the last couple of quarters, and that has shown a solid 18% increase in revenues. And even at the EBITDA level, the growth was about 16-17%, much ahead of street expectations. So oil to chemicals did well, but it was expected given the decline in Singapore GRMs. Refining was expected to do well. But the positive surprise came in retail. So what's driving the momentum? For one, the stock has been a laggard. Now, Jeffrey points out the Reliance stock has corrected 20% from its July peak on slower earnings growth and concerns about the retail growth over the medium term. But now the recovery that we've seen in retail gives them confidence about a 15% growth for the retail business in FY26. But again, we'll have to wait by to see if the momentum is sustainable. Secondly, valuations for the company, according to Jeffries, is the cheapest that we've seen since the COVID correction. So it's a 9.8 times forward EBITDA. And finally, there are potential catalysts going ahead. The big one, of course, is going to be Jio IPO. But even the Jio business is likely to be stable given the tariff hikes that we've seen. Jio Air Fiber is likely to do well. The start of new energy projects, and retail is going to be the big one, the recovery and the growth there. Bank of America maintains a buy. They say the risk reward is favorable. CLSA too has an outperform rating on the stock.
Take that point, Rima. Thanks a lot for that. The stock has moved to the high point of trade, and as a result of which, the problems that the Nifty Bank is creating for the Nifty have been somewhat negated by what Reliance is doing as well. So Nifty currently with a cut of 97 points. So trying to make an attempt above that, 23,200 mark. Once again, Reliance has moved higher. But the other stock which is doing well is Hindalco. Nuvama has upgraded the stock from hold to buy. Nigel, what is their rationale here?
Well, that's right. Nuvama's gone ahead and they've upgraded Hindalco from a hold to buy. They've gone and upped their target price as well to around 776. They've skimmed down on the EBITDA estimates for the current fiscal because of the softness in Novelis's earnings. However, for the next year, that's for FY26, their EBITDA estimates have gone up by close to around 4%. Though they are factoring in lower aluminium prices, they're highlighting the fact that actually the Indian rupee as well has got a little bit weaker. So now they revised that from around 83 rupees. Now they're resuming close to around 86 rupees odd. The few big pointers that they're making, let's break it up into three pieces. One is on Novelis, then on India, and on their debt position. On Novelis, they are saying that there is a tightness with regard to scrap, and because of that, the input costs have gone up. But they believe this can be mitigated because volume growth will come about, and also the product pricing will improve. So because of that, they are expecting that Novelis's profitability will revert back to around $500 per ton in Q4 from around $400 per ton that they're likely to report in Q3. Next up on the India business, they are saying the focus has been on increasing VAP as well as on reducing cost of production. And they are highlighted that the current volumes, as a percentage of the current India volumes, 31% of their volumes are VAP. But they're going ahead and they're commissioning a facility at Hirakud. And that's what can improve the overall profitability by around $35 per ton in FY27. Add to this, they are saying that they'll start benefiting from the cost initiatives, namely the captive coal that they are likely to get, and also the value-added products that they are talking about, plus the 1 million ton alumina facility that will come on stream. Put all this together, the cost of production could go down by close to around 40%. And the EBITDA per ton of the domestic business can move up to nearly around $1,500 per ton in the years to come. So they're saying the India business as well have tailwinds because of cost cuts as well as on value-added products. And finally, they are saying that yes, there's a huge capex of more than $8 billion in the next few years, but it's likely to be largely funded via internal accruals. So that's why they're saying that there won't be any big movement in the debt number. Currently, it's around 33,000 crores odd, and going ahead as well, they believe it'll be around this 33,000 crores odd. But all this together, the street likes it. The stock has seen a sharp correction from the top, but Nuvama is now going ahead and turning quite positive on the stock. Back to you.
The street likes it indeed. Nigel, thanks a lot for that. 2% higher on Hindalco, still holding on to gains after correcting slightly from the highs of the day. Take a short break. Up next, we get in touch with the management of Delivery. Ajit Pai, who's the Chief Operating Officer, joins in to discuss their new rapid commerce service. Stay tuned.
whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but you know, maintaining that level is a different thing altogether, and it takes even more you know, time and hard work, and you know, it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course it was very, very hard, but I had mixed feelings, mixed emotions, where, you know, I was feeling bad, where if I have to think, I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because...
Welcome back. One of the stocks which has been buzzing in today's trading session, bucking the overall selling trend, is Delivery. Remember, the stock has seen a decent recovery from its 52-week low after the stock had seen a lot of underperformance. A lot of brokerages turning positive on the stock as well. They've introduced their new service called Rapid Commerce, designed to offer sub-2-hour deliveries. It's debuted in Bengaluru and already handling more than 300 orders daily. So to discuss the potential of this business for the company and what it can do for overall volumes, we have Ajit Pai, who's the Chief Operating Officer of the company, joining in. Thanks a lot, Ajit, for joining in. You know, 2 hours is also a lot in the world of quick commerce, but be that as it may, everyone wants everything quicker. So the first obvious question then is, what is the total addressable market of this service? How can you, I mean, how big can it be in terms of revenue for you? And secondly, will this be cannibalizing your e-commerce deliveries already? Is this an addition to your e-commerce business, or is it a replacement?
So thanks for having me on the show.
So I think the way we look at it is that it is an additional product to the array of e-commerce services that we already provide. There is already a large TAM so far as e-commerce is concerned, and within that specifically, brand and D2C commerce has been growing the fastest. We believe that this service will enhance the value that D2C and brands can provide to their customers. And hence, overall, it will be a part of that market. We do also think that faster delivery will sort of will help brands and and retailers grow e-commerce faster than it has been, and hence it is an addition. It is overall over the longer term it should add to the growth rate of e-commerce.
Ajit, good afternoon. Thank you for joining in. How much is the expected scalability of this service? To what potential do you wish to take it to, and the revenue, the maximum revenue that you can generate from this?
Yeah, I will not comment on revenue or on numbers, but I think from our perspective, the objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned, and we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
What we're trying to understand here, Ajit, is that say you got X rupees from e-commerce. Will this be in lieu of that X that was declining because of quick commerce, etc., or will it be ahead of that? If you could give us that sense. And in terms of metrics, yes, this provides better value to your D2C clients and your e-commerce clients, but does it, turn better profits for delivery as well? Because you are likely to invest in this. What is your internal ROC sort of EBITDA margin target for a business like this?
Our margin targets for a business like this in the slightly longer term would be similar to the margins that we generate on e-commerce logistics in general. In terms of what this impacts, this is actually something which will grow same city deliveries, which is a portion of the deliveries that are done on e-commerce. So roughly about 15 to 20% of all e-commerce deliveries are done same city from warehouses on the outskirts. That is the part I think that this will sort of impact. We do believe that this will add to the growth rate so far as e-commerce is concerned, and within that specifically for same city.
So if you could give us some numbers, how much does e-commerce contribute to your overall mix right now, and how much can this service add to that?
I will comment on the first part, I think, because that is public information. About 55 to 60% of our revenues come from e-commerce logistics. That's right. That's the figure.
But Ajit, has there been any quick commerce impact on the overall business? Because there has been a huge surge when it comes to quick commerce. There's rise in competition, more players entering the market. Has there been any impact that you have seen on ground when it comes to your business because of quick commerce?
It's impacted us far less because of the categories that we serve and the kind of e-commerce orders that we serve. I think we had already pointed out that there are categories like grocery which have been significantly influenced by quick commerce offerings. The impact outside of those categories has not been something which is very high. That said, I think the fact is that customers do want faster deliveries. Brands do believe that across categories, there is a value proposition in terms of providing a superior buying experience as well as a greater control on customer loyalty with faster deliveries, and this is an attempt to address that.
All right. What we thought earlier of QCom as grocery and food itself is now expanding even to electronics and a lot of other categories as well. So let's see how that plays out. But as that happens, you have the data of the third quarter. What were the express volumes like in the third quarter? If you could give us a rough sense, and what are the targets that you have for the next couple of quarters as well?
Look, I think we have our results and the analyst call coming up within a couple of weeks. So I will I will wait for that to answer that question. But suffice to say, I think we are fairly satisfied with where things have been in the third quarter.
Okay, so does that mean you will be EBITDA and profit positive in the third quarter? Obviously.
No comments.
No. Let me try this another way. In the previous quarter, the second quarter, which is public information, your express parcel volumes grew by about 2.5%. The revenues grew by about 7%. Typically, the third quarter, you see double-digit growth in the express parcel revenue and mid to high single-digit, if not low double-digit volumes in express. Would that be a correct assessment, or would you give us some directional numbers? We're not asking for specifics.
No, I don't think it's the right time to sort of talk about that, given that the results are just a few weeks away. So I think I would not comment on that right now.
All right, Ajit, thank you so much for sparing time and joining us today. Wish you good luck for the new offering and for the rest of the year as well. The management of Delivery on their new offering. The stock currently trading 1% higher at around 335, still well below its IPO price of 487. The time for a short break then, but before we do that, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips, just as Mangalam's doing right now. And you can download the app from the Apple Store or the Google Play Store right away.
Lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning. And obviously, I just gave my 200% and I got that bronze back. So,
right, just come back harder. Just come back
even
harder.
I think the belief is very, very important. Just believe in yourself.
Maybe we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, there are a lot of youngsters who are doing really well, but, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope they will be.
Welcome back. You're watching us here on Halftime Report. There has been a good performance by Aether Industries. As you can see at the bottom of your screen, the stock up 5%, revenues up 41%. Will be important to see how the profits, yes, it has flown through the net profit as well. Net profit from 17 crores has moved all the way up to 43 crores. Been a decent, cyclical up move for the chemical companies itself. Aether benefits from that itself. But let's talk about the F&O space. We have seen a bit of a fall in the market, no two ways about it, and that's been led by, the Nifty Bank, which is down almost 750 odd points. And if you look at the contributors as well, on the one side you have the key draggers, which include the likes of Infosys, Axis Bank, HDFC Bank, and on the other you have Reliance, which is standing extremely tall. So just keep an eye out on the contribution that comes up for you. Reliance up 60 points. So had it not been for Reliance, would have been a lot lower in today's trading session. Infosys, Axis Bank, ICICI Bank and HDFC Bank have been the key draggers. Some support coming in from the likes of L&T and ITC as well. If you look at where the Nifty is right now, just above the 23,200 mark, we have seen writing at the 23,200 call. So that's an important one. But if we were to fall from here, there are some jitters where the 23,000 put writers are also active, but they've reduced their open interest. So if the market falls below that 23,200 mark, once again, we can see some pressure on the Nifty building up. But the 23,200 call writers believe that this recovery that we're seeing from the lows will not last beyond 23,400. At the lower level, 22,700 put writers have bought some for just punts. A lot of long positions added on names like Macrotech Developers and L&T Tech. Some shorts on PB Fintech. Keep an eye out on Canfin Home. That stock may enter F&O ban.
Reporting results as well tomorrow is Canfin Home, so keep an eye out on that stock. By the way, Aether Industries, they have 41.4% revenue growth. The margins too have seen a very healthy expansion from almost 20% to now 30%. And the stock after that brief spike still holding on to gains of around 4.5%. But Sudeep Shah of SBI Securities is joining us now for a quick chart check. Sudeep, good afternoon. Thank you for joining in. The 3-day rally taking a bit of a pause now because of the heavyweight banks that are pulling the index down. But what are the charts indicating here? Is this 23,000 level for now a very, very firm base for the index? And couple that up with your stock recommendations as well for the afternoon.
Good afternoon, Normaz and Mangalam. Although the last few days we've seen the downside momentum in Nifty getting mellowed down, but post that steep fall from 24,200, we feel basis the derivative data now the index could be volatile between this 23,000, 22,950 mark and 23,450 zone. Now this is a 400-450 point congestion range in which the indices have been trading throughout this week. So this level of 23,450 is essential to be crossed for us to assume that some kind of a sustained recovery could be visible into the markets. And we expect the coming week to be very volatile with the result season being in full swing and uncertainty which is expected around the president, post-President Trump assuming office and what kind of decisions he would be making as soon as he is assuming office, and the volatility surrounding the budget expectations. So all this is we feel this will lead to some incremental volatility in the coming week, and it is important that this zone of 23,450 is crossed for some kind of a sustained recovery. Now on the downside, 22,900, 22,950 zone will be a very important support, and we feel that for the next week this ideally should hold out given the kind of the long short ratio and the kind of levels that they are trading in the oversold territory. So we feel overall 22,900 to 23,450 could act as a range. And while this range, what we are assuming, there's a lot of stock-specific action which is going on, and few selected space like railways, defense, chemicals, and fertilizers are doing well, and they are expected to do well in the run-up to the budget. So within this space, we have two stocks that are on our radar. The first one is from the defense space, which is BDL. Now, if you see BDL, the charts here have given some kind of a consolidation breakout post last 3-4 weeks, trading between 1100 and 1230. And this week we are seeing some the volumes being above average, and the stock sustaining above its 200-day moving average also here. So this could be bought with a stop loss at 1230, and the target on the upside could be 1350, 1370. The second stock that we have on our radar is ICICI Lombard. Now here, post the in HDFC Life's numbers coming good yesterday, we have seen some kind of a pullback in the insurance companies. The stocks of the insurance companies have seen decent run up, and post a sustained down move in ICICI Lombard from 2300 to 1750, 1800, we are seeing some signs of a recovery here from a medium-term perspective. So it might not be an extreme short-term trade, but yes, from a delivery-based perspective, this stock could be added at the current levels. And the stop loss here could be 1900, and the targets on the upside could be 2100, 2130 in the coming few weeks.
Take that point today. Thank you so much for joining in with your ideas on the index and a bunch of stocks. On the other side, we will focus on Wipro. Under pressure ahead of earnings. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Sport, because these kinds of leagues, a lot of people get a recognition in terms of, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing.
Welcome back. Still a 90 points lower on the index, but Axis Bank and Infosys still continue to remain near the lows of the day. Infosys is still down 5.5%. Axis Bank has seen a slight recovery from the lows, was down 6% at one point, is down around 4 3/4 now, but Infosys continues to remain at the lows of the day, 5.5% lower. But some of the other losers in the broader markets today, and Sterling and Wilson, we just spoke of that, and Kalyan Jewellers, the name continues to feature in that list, another 6% down in today's session, another 20% down for the week. So 2 straight weeks of a 20% fall. The stock has now lost almost 30,000 crore in market cap over the last 10 trading sessions. So, and mind you, the stock is in the F&O ban, so no new positions, of course, can be created there as well. But on to earnings that will be reported today. Wipro is one of them, and Rima is joining in with what the street is expecting out of them. Rima.
Well, expect a muted quarter. Dollar revenue growth seen down 1.4% sequentially. In constant currency terms, it should be a growth or decline of about 0.6% within the company's guided band of 0 to -2%. The company is struggling to grow, though last quarter was the first positive quarter that they'd seen in many quarters. But again, this time, growth will go back into the negative territory on account of furlough. So the question is, for Q4, that's a subsequent quarter, will the company show growth? Or is it going to be a downbeat guidance? So the Q4 guidance is going to be key. Consensus right now is -1 to +1. Margins for the company are seen slightly lower, 16.5%, and that's because of the 2-month wage hike impact. But how does the company get back to or move towards their aspirational margin range of about 17 to 17.5%? The company has in the past said that to have margins sustainably above 17%, they would need a lot more growth. So growth needs to come back. So the street is going to be watching for the Q4 guidance and general outlook on the environment going into FY26. Do they get back on the growth pedal? And what's the outlook on margins and how they get back to that 17.5% range? The stock has done well. In the last 1 year, it's up 19%, outperforming the Nifty IT index.
Rima, thanks a lot for that. Just before we take that break, also pull up PB Fintech, and that too is trading at the lows of the day now, 5.5% lower on that stock as well. Remember, it was a high flyer in 2024, returns of almost 200% in the year gone by. But as of now, over the last 1 month, the stock is down 20%. We take a short break. On the other side, Manisha Gupta joins in with Deepak Balani, who is the Director General of the Indian Sugar and Bioenergy Manufacturers Association. Stay tuned. Back on the other side.
Entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
What we saw was, the last quarter we had seen discretionary becoming good in financial services in the US. Now this quarter we have seen financial services in Europe, also the discretionary is showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now the second I think was about, if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared, our Q1, Q2 in a typical financial year are strong. Our Q3, Q4 are typically weak. So that's the sort of seasonality that we see.
Welcome back, and joining us on the show now is Deepak Balani. He is DG at ISMA. Mr. Balani, hi, thank you so much for joining us, and good news clearly coming our way as we see those reports from the ministry telling us that 18% of blending, ethanol blending is what was achieved in the month of December, the highest of course, and it does look like that we are on target for that 20% blending clearly.
Yeah, hello Manisha ji. Correctly said. I think it's very encouraging that we have been able to achieve 18% blending. And having said that, I believe overall average target of this year of 18% is definitely a done deal. And going forward in 25-26, as the target is 20%, and we are certainly sure, given the fact that the crop is going to be next year, the crop is going to be very good. So we are certain that in 25-26, we will achieve 20% blending, much ahead of its earlier target, which we were supposed to achieve by 2030. So I think it has a very good push by the government, very conducive and policy-driven initiative by the government has helped the OMCs and the producers to achieve 20% target. I think it's wonderful.
Mr. Balani, what the industry clearly doesn't like is the fact that even as you've been waiting and asking and requesting and pushing for ethanol price revision, and that hasn't come through yet.
Yeah, see, as rightly said, for last 2 years, there has been no revision of the or correction of the ethanol price vis-a-vis the FRP increase. But having said that, I think government is completely aware of the situation. They are also aware of the fact that the mills are facing various issues because of non-correction of prices, specifically in the cane payments to the farmers. But I believe it will happen sooner or later. And we are expected anytime the announcement of correction of the prices of the ethanol will be made from sugar feedstock. And we are very hopeful that this could come anytime soon.
We've been hearing it for some time, though, Mr. Balani. It's yet to come. So until you get it, you don't know it. But, you know, what the industry was asking were bigger numbers in sense of revision. What we hear via, I mean, there's been a lot of conversation clearly. Those numbers really are not so great. As you said, the mills are facing problems. You would look at a revision which is coming after 2 years. But is the quantum that is being discussed, is that enough really? All right, we're going to try and get Mr. Balani back yet again. There was a technical glitch there. But as Mr. Balani said, this is something that the industry has been was asking in the previous season as well. And this is a second straight season. And we don't have announcement when it comes to ethanol price revision. So that is something that the industry clearly has been seeking on. Industry also has been asking, remember, on the MSP, that is a minimum selling price in cents of sugar. And there is a lot of hope when it comes from this budget, when it comes to sugar as an industry. There has been GST as an issue. Now that 18% is done, the cumulative is still lower at around 16.5 or so. But the expectation that this could, the 20% blending that is, could be reached way ahead is something that clearly has been positive. But then there is life beyond 20% as well. And we do understand that there is a committee that already has been formed, that once 20% blending happens, what is it that the market will look forward to? And Mr. Balani, once 20% is done, what is it that the industry is waiting for? We understand there's a committee being formed for this.
So there is a committee, interministerial committee, which is preparing a roadmap for E20 and beyond. And they have already met various stakeholders, including ISMA. And we have proposed various measures which could be taken. Specifically, we have requested that the base blending may be kept at 20%. And we should have the launch of flexi fuel and hybrid EVs in India, where E100 fuel could be taken, specifically E100 hydrous vehicle. So I believe if that mandate is clear in the roadmap, this will increase our average blending to almost 25% by 2030, which will in a way increase the requirement of ethanol. And I believe we will require additional capacities. We also requested government to come out with various schemes, including the interest subvention scheme, so that additional capacities for ethanol could be introduced in India.
Mr. Balani, I also want to understand the quantum of ethanol price rise or price revision that we are anticipating. Will the quantum that is being discussed right now for rupee plus, will that help your margins?
See, I believe historically, if you see, the entire ethanol administrative mechanism, which was followed by the government for almost 5 years, had a relation with FRP. And there was a specific percentage of FRP in the ethanol price. So whatever I'm hearing, it may not be at that level, which we had proposed as per the formula. But having said that, that at least anything today, since we have been waiting for last 2 years, would be good for the industry, as it would help us to clear the cane payments timely. But having said that, I think government must look at going back to the formula which it once had. And because it is basically also attributing the right price of sacrificing sugar into ethanol. So I believe balance is required, and it is, I think, highly recommended that we at least go back to the formula which government has been using for last 5 years or 6 years.
All right, Mr. Balani, thank you so much for sparing time and joining us today to discuss the view ahead for the industry as a whole and the budget expectations as well. Manisha, thank you for joining in. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes you through the next half hour. Thank you so much for watching.
Heavyweights see a pullback, dragging indices lower even as mid-caps continue to notch gains. Energy, metals and utilities are big gainers even as IT drags. Reliance Industries bounces back with strong growth in retail, a resilient show in O2C business and an improving performance at Jio with ARPU topping 200 rupees and services seeing a good pickup. The stock gains. Infosys beats Q3 estimates and ups its revenue guidance, but concerns over the impact of wage hike in the coming 2 quarters and tapering pass of a pass-through business hurts the stock. Axis Bank sees all-round deterioration across parameters with slowing business momentum, dipping low-cost deposits, rising slippages and crimping margins. The stock slides. Bharat Mobility Global Expo 2025 kicks off in New Delhi, where the big car makers are expected to unveil their next-gen EVs. Prime Minister Narendra Modi says that by 2030, the number of electric vehicles on Indian roads will grow 8 times. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch with me, Vinny Motiwala. And Nifty, look at that, because yes, recovered from the day's lowest point, but it's trading in the red as of now also, the markets. So yes, recovered from the day's lowest point, down 0.3%. 23,200 is what the Nifty is managing to hold on to. At one point of time, it was 23,110. That's the lowest level around that mark where we see the low coming in. So as of now, also Nifty is still down 85 points in trade. Now, what's supporting today? Reliance Industries, like we said, good set of numbers. So Reliance Industries is among the top contributors. We have L&T, ITC as well as Power Grid, which is managing to support the market. What's not doing well? Infosys, in terms of some concerns coming in terms of commentary on that side, the wage hike concerns, that is a factor that has impacted Infosys. Axis Bank numbers not that exciting, and with Axis Bank, other private banks also falling. So ICICI Bank, HDFC Bank, all of these are among the top drags coming in for the Nifty 50. The Nifty mid-cap and small-cap, Nifty mid-cap, it was flip-flopping between the red and the green, but is still managing to outperform the benchmark indices. Small-cap also is managing to do better than the benchmark indices, though it is down 0.1% in trade. Like I was mentioning, IT stocks, they are under pressure today. Obviously, Infosys and LTIMindtree both are in focus on the back of their numbers, so keep an eye out on that one. And we have a whole host of IT companies that will be reporting their numbers today as well. So IT seems to be a bit more under pressure today. Another trend that we're spotting in the market today, and where we're seeing some bit of a green coming in, is from these shipbuilder stocks. So whether you look at a Garden Reach shipbuilder, Cochin Shipyard, those are managing to hold on to gains. Garden Reach Shipbuilder, 4% gain. Cochin Shipyard gaining almost 3 to 4% in trade as well. Another side that we're seeing gains coming in is defense stocks. So Bharat Dynamics and HAL also managing to hold on to good gains in trade. So yes, that's how the market setup is looking like as of now. Defense, Cochin Shipyard and all the shipyard stocks are doing quite well in trade. Let's move on and get started with the show then. Now, Prime Minister Narendra Modi has inaugurated the Bharat Mobility Expo 2025, and this is at the Bharat Mandap in New Delhi. The second edition of the event will see all the leading automotive and mobility players showcasing their latest innovation under one roof. Big players like Maruti Suzuki, TVS, Tata, Hero MotoCorp and Bajaj will also showcase their latest vehicles to the public. For more on the expo, we have Parikshit, who's joining in with us.
Well, yes, the Bharat Mobility Expo has kicked off, and how? More than 100 launches over the next 2 days. You're going to see Chinese car maker BYD, which is the biggest seller in terms of electric vehicles, launching the Celion 7. You also have VinFast making its India debut here. A lot of electric vehicles being formally launched here. So the Maruti stable warming up right now for the launch of the e-Vitara. It's an unveil, not a price announcement right now. You've got Hyundai, which will be announcing the price of the electric Creta. You've got Mahindra EVs on display. Tata will be showcasing the future lineup of Sierra EV and also Harrier EV. But let me not do the talking. Let the vehicles, all these beautiful vehicles behind me, do the talking. We're at the Lexus booth right now, and this is a future Lexus concept vehicle which is being showcased. And we have with us Mr. Ikiuchi, the head of Lexus India, to speak about the future concept vehicles from Lexus. Sir, give us a sense of this concept, what it represents. When do you plan to bring it to market?
So actually, thank you for coming first of all. So this is our revealing model at the 2023 at the Tokyo Mobility Auto Expo. And so this is for our
Let's keep focusing on the car. Yes, sir.
So this is our first time to reveal in India for the LFGC. So this is some kind of commitment toward the electrification toward India, because Lexus is for the multi-pathway, not just for the BEV, and also the HV and the hydrogen. So we are committed to all over electrification, and that is for our concept for the BEV model.
Right. Give us a sense of the strategy that Toyota and Lexus are together displaying. We see a lot of plug-in hybrids. There are hybrid vehicles as well. Not so many EVs. Why is that?
Actually, as both Lexus as well as Toyota, we are doing a multi-pathway. Our aim is only for the carbon. So we will offer the multiple solution for the customer who wants to buy this. So that's why we are offering for the multi-path. It's not just only for the HEV or the BEV. We are offering for customers' demand.
All right, trying to meet customer demand. Sir, thank you so much for joining us. Yeah. I'll show our viewers what else is happening at the Auto Expo. My video journalist Akhilesh, if you can accompany me, I'm going to take you now to the Toyota stall here at the Auto Expo, and it always gets gets a lot of eyeballs because they've got some of the biggest SUVs over here. So you've got this concept vehicle called the X-Van. That they're showcasing here. Maybe in future they will bring it to market. You've got the Innova Hi-Cross, of course, which is gaining popularity. Let me show you their plug-in hybrid and flex fuel lineup. They are quite big. Toyota globally is quite big on flex fuel vehicles, ethanol vehicles. So you've got the Hilux here, which is a flex fuel EV concept that they are showcasing. You've got an urban battery electric vehicle concept over there as well. So a lot of EVs, a lot of hybrids from Toyota, and a major electric vehicle launch from Maruti, which is going to happen in a few moments from now. And overall, a big EV push at the Auto Expo.
Parikshit, surely it's looking very exciting there. Thank you so much for giving us the latest update for that, and we'll expect more coming in soon as well. Thanks for that, Parikshit. But at the Expo, Prime Minister Narendra Modi has pitched electric vehicles as the vehicle of the future. Now, he said that the government is supporting the industry to adopt EVs and is open to more global investments in this sector. Let's listen in.
अनुमान है कि इस दशक के अंत तक भारत में इलेक्ट्रिक व्हीकल्स की संख्या 8 गुना तक बढ़ सकती है। ये दिखाता है कि इस सेगमेंट में आपके लिए कितनी ज्यादा संभावनाएं बढ़ रही है। अपने तीसरे टर्म में हम पीएम ई ड्राइव स्कीम लेकर आए हैं। इसके तहत 2 व्हीलर, 3 व्हीलर, ई एम्बुलेंस, ई ट्रक ऐसे करीब 28 लाख ईवीज खरीदने के लिए मदद दी जाएगी। करीब 14,000 इलेक्ट्रिक बसें भी खरीदी जाएगी। सरकार ईवी मैन्युफैक्चरिंग के लिए इंडस्ट्री को लगातार सपोर्ट कर रही है। ईवी कार मैन्युफैक्चरिंग में जो ग्लोबल इन्वेस्टर भारत आना चाहते हैं, उसके लिए भी रास्ते बनाए गए हैं। भारत में क्वालिटी ईवी मैन्युफैक्चरिंग इकोसिस्टम के विस्तार में, वैल्यू चेन के निर्माण में मदद मिलेगी।
And in a big move for telecom players, Telecom Minister Jyotiraditya Scindia has announced cabinet approval for a reframing of 687 excess spectrum from multiple government ministries for 5G and 6G. On this latest update, we have Ashmit, who is joining in with us to give us more details on this one. Good afternoon, Ashmit. What are you picking up here?
Well, a significant development this as far as the telecom sector, the telecom players are concerned. Let me just give you some context. There was a high-powered committee of secretaries that had been formed that determined what would be the total spectrum capacity requirement by 2030. That figure that was reached, that was arrived at, was 2,000 megahertz. The reason that's significant is because currently the existing availability of spectrum is at 900 megahertz, thereby leaving a deficit of 1100 megahertz. It is to meet this pressing need. It is to furnish the 5G as well as the 6G aspirations that we find that the cabinet has taken a decision. The DOT had proposed refarming of excess spectrum that is lying with other government ministries that is sitting idle. Now, this was a proposal that was made, and this is the proposal that has been approved by the cabinet. Under the approved proposal, a total of 687 megahertz of spectrum will be refarmed, will be brought back to the DOT, which will essentially take the total available spectrum to 1,567 megahertz of spectrum. That's the kind of figure that the DOT will be looking at. This will be done in a phased manner. This will be done towards 2028. What's also important is that the minister assured that even the balance spectrum that would be remaining, that would be about 300 odd megahertz, that too will be provided for by further refarming exercises. So clearly a huge step forward in terms of spectrum availability, an important decision for the telecom sector being taken by the cabinet. Back to you.
Okay, Ashmit, thank you so much for that. And I beg your pardon, it's a refarming of 687 excess spectrums from multiple government ministries. But thanks so much for that latest update coming in there, Ashmit. But let's move on and, in fact, listen into the telecom minister's statements that came in on this front.
Yesterday in Cabinet, we approved the refarming of spectrum. According to IMT, by 2030, we need 2,000 megahertz of spectrum. Now, between 2G, 3G, 4G, and 5G, we have roughly about 900 megahertz of spectrum. What does that mean? That means that we have a deficit of 1,100 megahertz of spectrum by 2030. Not today, but by 2030.
Let's move on and get you some latest updates that are coming in on Tata Group. Now, Tata Sons is still registered with the RBI as an upper layer NBFC, and this could mean that it will have to mandatory list by September this year. Ritu is joining with us with more details on this one. Ritu?
Well, no respite for Tata Sons just yet, with the Reserve Bank of India yet to decide on its application to deregister as an upper layer NBFC and remain a privately held company. Now, the RBI has retained Tata Sons, which is the principal holding company of the Tata Group, in its list of 15 upper layer NBFCs for FY25, but said it is without prejudice to the company's application to get itself deregistered. Now, RBI said Tata Sons' application is still under examination. Now, if RBI rejects this application, Tata Sons will have to go public later this year in order to comply with RBI directions. That is because RBI has made it mandatory for all upper layer NBFCs to get listed within 3 years of being identified. For Tata Sons, which was tagged as an upper layer NBFC in September of 2022, the deadline is September this year. Now, in a bid to stay a privately held company, Tata Sons has repaid more than 20,000 crores of debt and also voluntarily surrendered its certificate of registration with the Reserve Bank of India last year. Now, while RBI does look at various aspects, including the size of an entity, the interconnectedness, complexity, nature of liabilities, and group structure to decide whether or not an entity qualifies to be an upper layer NBFC and be subject to more stringent regulations, there aren't really any clear guidelines per se on how companies can get out of this classification, and that is why the Tata Sons case is going to be a test case and set a precedent for other such cases in future. Now, while the question of whether or not Tata Sons will have to get listed on exchanges is still open, keep in mind there is another Tata company that still features on this list of upper layer NBFCs, and that is Tata Capital, and therefore Tata Capital will still have to go public later this year to comply with RBI directions.
Okay, on that note, we're going to step into a very short break. Don't go anywhere. More news and updates on the other side.
The Nita Mukesh Ambani Cultural Centre has unveiled its latest offering, The Arts Cafe, a vision brought to life by Isha Ambani. This space is where art meets culinary excellence, offering a one-of-a-kind experience for both food and culture enthusiasts alike. With its soothing natural shades, browns and beiges and art decor accents, the NMACC Arts Cafe designed by Gauri Khan radiates elegance. Situated on NMACC's third floor, the suitable entry points to the cafe are Gate 11 and 12. The stunning Cherry Blossom series by Damien Hirst greets visitors as the Arts Cafe experience gets underway. A grand 16-feet organic bar with a flowing wave-like design and an amazing skylight that lets in the sunshine make it the room's center point, exuding sophistication and calm, which further adds to its attractiveness. The cafe is one of the most alluring rooftop places in BKC with its large al fresco terrace, which offers sweeping views of the Fountain of Joy. For those looking for a more intimate experience, the cafe also features a beautiful 12-seater private dining area with a live kitchen, perfect for small parties and customized menus. The Arts Cafe is more than just a meal. It's a harmonious blend of art, culture and cuisine, making it a must-visit addition to Mumbai's cultural landscape. In Mumbai, Zenia Barya.
Testing.
Welcome back to Business Lunch on CNBC-TV18. Nifty as of now is just managing to hold on to 23,200, just at that mark. Let's keep an eye out on where it's going to be headed in the second half of the trading session. But moving on to an exclusive, sources tell CNBC-TV18 that the government may be actively mulling income tax relief in the budget to boost consumption. Tim C is joining in with us to give us more details.
Well, that's right. What we are given to understand from sources is that the government currently is actively considering personal income tax breaks to spur consumption demand and to boost the economy. Government currently is studying two options on tax breaks, and any decision will look to make only the new tax regime more attractive, is what sources say. Now, some of the options that are there on the cards for a tax relief. Firstly, option 1, to increase the standard deduction limit from 75,000 rupees per annum, which is the current limit, anything up till 1 lakh rupees, and it could be in any proportion, either 75 to be made 80, 85, 90, 95, or even 1 lakh rupees per annum. That is something that is yet to be decided. Secondly, this particular option is to move the slabs in the new tax regime. Now, here government is considering two options. Firstly, to expand the 20% tax slab to cover income between 12 lakh and 18 lakh rupees, or even going beyond 18 lakh rupees till 20 lakh rupees. Remember, currently this slab is 12 lakh to 15 lakh rupees, where the tax rate is 20%. And then as a follow-up to this, since the 20% slab will move, follow-up will be the movement on the 30% slab as well, which is also an option, where it feels that then as a follow-up, 18 lakh rupees or 20 lakh rupees and above could be the income bracket for the higher tax rate, that is of 30%, which currently is at 15 lakh plus. So let's see what happens finally, because sources indicated that government believes tax breaks will mean more disposable income. It will boost the spending power. Plus, this increased spending power by the common man will help recovery in both direct taxes and GST collections. But just to remind our viewers that a final call on the tax break proposals will be taken up by both Finance Ministry and PMO only closer to the budget. It is taken only 1 or 2 days before the budget, and email queries sent to the North Block on this particular story have remained unanswered. So let's see what Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
Thank you so much for that, Timsy. Now moving on, President-elect Donald Trump's Treasury Secretary pick Scott Bessent attended his Senate confirmation and laid out his economic vision that he has for the country ahead of the new administration taking office. Listen in.
Of course, and I actually believe that the notion that President Trump believes he should have influence, there was, I believe, a highly inaccurate Wall Street Journal article saying that he believed something to the effect of he should be in the room. President Trump is going to make his views known, as many senators did. I think on monetary policy decisions, the FOMC should be independent. The Treasury Department plays a critical role in protecting American national security. We must secure supply chains that are vulnerable to strategic competitors, and we must carefully deploy sanctions as part of a whole-of-government approach to address our national security requirements. And critically, we must ensure that the U.S. dollar remains the world's reserve currency.
On that note, we're going to step into a very short break. After the break, we'll get you more updates coming in from West Asia, so stay tuned in.
Been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
You look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting. Healthcare is a good space. It's not obviously high beta, but basically I think globally there is a need to reduce healthcare costs because governments are very leveraged. There is aging population, and India is obviously got great strength in terms of generic drugs or medical tourism or whatever. I mean, bulls are very tired on insurance because last 3-4 years we've kept getting hit by some regulation or the other. I do feel that mutual funds are more efficient as a savings vehicle than insurance. But having said that, there is obviously need for long-term savings, which insurance is an avenue for. Yeah, so we have a bit both the general insurers, life insurers, and the tech platforms around it. But yes, it's been it has needed a lot of patience.
Or 16.2 that we've got, and I do see Q4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee base. Medium term, we are reiterating our aspiration.
Welcome back to Business Lunch on CNBC-TV18. Let's move on and get you the latest update from West Asia. Now, despite the ceasefire agreement between Israel and Hamas, Israel continued its assault on Gaza, killing at least 81 people within the last 24 hours. Israel's cabinet has also delayed a vote to come to a conclusion on the ceasefire deal and has scheduled another meeting today to approve the agreement. The vote was postponed due to a reported internal dispute between Hamas and the far-right members of the Israel Prime Minister's cabinet. Moving on to some news from the world of sports now. World-class champion D. Gukesh was awarded with the prestigious Major Dhyan Chand Khel Ratna by President Draupadi Murmu today. The 18-year-old became the youngest world champion ever by beating China's Ding Liren last month. He is also only the second India after Vishwanathan Anand to achieve this feat. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. But as we wrap up, Coldplay excitement reaches its peak as Mumbai and Ahmedabad gear up for the band's concert that will take place this weekend and the next. And here's some good news for those who couldn't nab and managed to get the tickets. Coldplay's concert on 26th will be live streamed.
$2 billion and 17 to 18% EBIT levels. Our pipeline is better than what it was the same time last year as well as last quarter. If you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year.
I think it's going to be, I believe, not a very high return market, to be honest, the next few quarters. The thing is, rather than forecasting anything, the biggest thing is last 3-5 years have been solid in terms of returns. Obviously, valuations are high. And two is, as you pointed out, we're entering a phase where the world's largest economy is going to see a fairly radical regime change. We don't know what exactly will happen in terms of dollar strength, yuan weakness, trade tariffs, etc. So there is a lot of uncertainty, and the valuations are probably on an aggregate not reflective of that uncertainty. But having said that, I think there is value at polar opposites of the market. I think a lot of tier 2, tier 3 financials are almost at distress valuation. And I believe that in India, secured lending will still be okay because in general, we are a reasonably high inflation economy. So the asset values keep inflating. And a lot of the tier 2 private banks, PSU banks are at book or below. So I think there is a risk reward opportunity there. I think there is a risk reward in metals at this point of time. And on the other side, when you look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting.
Final 2 hours of the trading week. The bulls would look to end the week on a high. And you're watching Midcap Radar on CNBC-TV18. I'm Hormas Fataki, and with me as always is Vivek Iyer. Vivek, good afternoon.
Good afternoon. Bulls will hope to end the week on a high note, but at this point of time, it's a steep recovery that will be required to end a Friday on a positive note. But we have quite a lot lined up on this edition of Midcap Radar. Let's start off with the top headlines. Good afternoon. First headline, heavyweights see a pullback dragging indices lower even as mid-caps continue to outperform. Energy, metals and utilities are the big gainers even as IT drags.
Aether Industries surges in trade on the back of a good quarter. Revenue surged over 40% while margins too have seen a significant expansion.
Havells reports a weak quarter, but stock surges on positive management commentary as they expect most of the business segments to return to normal growth and margin levels by the end of the current financial year.
Sterling and Wilson Renewables sees deep cuts after cautious management commentary. Order book moderates sequentially even as more details on the Nigeria order are awaited.
Brokerage firm Kotak Institutional Equities has upgraded Macrotech developers to buy from its earlier rating of add, but leaves the price target unchanged at 1,340 rupees a share. The stock surges in the trading session.
Some bit of cool off from that attempted recovery that we saw just a few minutes earlier when Mangalam and I called time on halftime report. The Nifty was down around 60 points. Now we're down 120. So that attempted recovery is getting sold into. We're still 0.5% lower on the index. We were up 300 points over the last 3 trading sessions. So we're still in the green as of now, but of course to compensate for Monday's fall as well. The broader markets though, they are the ones that have seen the biggest action all through this week. 4% down on Monday, recovering most of it over Thursday. The mid-cap index absolutely at the flat line as of now, and the small cap index, that too is also trading somewhere around about that flat line as well. So some cautious moves coming in there on the broader markets as well, but there are enough and more movers in that space, and Vamakshi is joining in to take us through the mid-cap movers this afternoon. Vamakshi, good afternoon.
Well, good afternoon, Horma. As well, the index is flat, but there's a lot going on within the index. Let me first pull up the list of the stocks that are gaining momentum in trade today. First up is FACT. That stock is surging by almost 7%. BLS International Services is another counter that is a buzz in trade. GSFC as well as RVNL. RVNL continues to gain momentum in trade this week. Top losers, on the other hand, include names like Sterling and Wilson Solar. The stock was up yesterday but has fallen down by nearly 9%. And Jewelers continues to be under pressure, featuring on our list every day this week. PB Fintech is another counter that's seeing a sharp fall of almost 5%, and NetWeb is down somewhere around 4%. But apart from that, lots of stock reacting to their numbers as well. That includes Hudson Agro. That stock is seeing a very sharp fall of almost 7%. Aether Industries saw a very sharp spike up. It has cooled off from the highs, but nevertheless is holding on with gains of nearly 1%. Swaraj Engines, on the other hand, seeing an uptick of almost 4% after its numbers, and Havells reacting modestly up nearly 2%. But apart from that, there are several defense stocks that are up and away in trade today. Bharat Dynamics is surging by almost 6%. Hindustan Aeronautics and BEL, both of these counters are also abuzz in trade today, and there are several other defense counters that are also seeing good moves today. Lastly, let's also focus on stocks that are gaining, backed with very strong volumes. IDBI Bank is up nearly 5%. Cochin Shipyard, Aadhar Housing Finance, as well as Garden Reach Shipbuilders, all of them are surging on the back of very strong volumes.
Thank you so much, Vamakshi, for joining us and taking us through all of the stocks that are making the strong moves in the broader end of the markets. Let's now welcome Hemen Kapadia from DR Choksey FinServ for a technical check on the market. Good afternoon, Hemen. First up, what is it that you're making of the markets at the current levels? Where do you see the Nifty and the Bank Nifty headed from these levels?
A very good afternoon to you, Vivek. Thank you for having me on the show. So always a pleasure. Well, we are deeply oversold. That's been for some time now. 23,100 has held up till now, Vivek. Maybe we breach it early next week. I believe 22,800 should be a very decent, if not a strong support level. If we do come there, I think that would be a chance to take a contra call, because I feel that the downward momentum is running out. Maybe the VIX is up because of the Trump swearing in, they have a budget coming up, because a VIX of 16 would not be conducive for the market to stabilize or start moving up. So some of these things are moving parts. They'll take some time to settle, but I just feel that not too much downside is left. We should be stabilizing somewhere next week. Probably by the time we speak next Friday, we might have posted a bottom. Vivek.
The bulls would take that with both hands, hey man. It's good afternoon, first of all. And what are the stocks that you are recommending in anticipation that we may have made a bottom coming next Friday?
Okay, Hormuz. Firstly, it's the big daddy of all. It's Reliance. Favorite stock has been for 3 decades, and that doesn't change. 6 months of a downside, Hormuz. Deeply oversold. Positive divergences, crossover buys, base formation in place. Everything seems to suggest that for the time being, the worst is over for Reliance, and we are setting the stage for an up move. So I think there is not much of rocket science involved. I believe after 6 months, Reliance will shine, at least for some time now. So a buy call on Reliance at 12.95, stop loss of 12.60, target of 13.65. It's a modest target. I believe we could be and should be probably heading for further upside even beyond that. The second stock is Dabur. FMCG pack was deeply oversold. Lever gave a flip-flop, but Dabur has been relatively stable, a rounding bottom in place. Technically, almost the same logic applies as Reliance. Oversold, positive divergence, crossover buy, not only on the daily, but on the weekly. Everything looks hunky-dory. So Dabur, okay, it might not move that fast because it's basically a defensive. But since pharma and IT are looking bad, I think the market and these stocks should do well. Dabur, buy at 525, stop loss 510, target of 555, risk reward ratio 1:2. That this too might get overshot, Hormuz.
All right, Hemant, thank you so much for sparing time joining us today to share with us your views on the index and on specific stocks as well. It's time for Growth Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we look at the rising trend of investing in SME IPOs and address the problem that traders face when they invest in a company without understanding the fundamentals.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
Welcome back to Midcap Radar. Well, one particular stock that's doing very well in the session is Macrotech Developers. This on the back of an upgrade from Kotak Institutional Equities. Vinny joins in with more details.
Yes, so we are seeing an upgrade that's coming for Macrotech Developers, and this one is from Kotak, where they've upgraded the stock to a buy, target price of 1,340 rupees per share. What Kotak is highlighting that they believe that the company has been doing quite well. They've consistently been delivering in terms of healthy growth across the matrices and across sectors for them. Now, overall, the company has managed to see a 34% growth from FY21 to FY24, and they expect a 21% CAGR growth over the next 3 years as well. What the Kotak note is also highlighting that business development will continue to be grow and continue to be steady. Largely, mainly what is driving it is the joint development agreement. The management also said that they gradually want to enter newer cities, and if that works out well for the company, the way it worked out in Pune as well as Bangalore, then we could see a good upside coming in for the stock.
Vinny, thanks a lot for that. Macrotech Developers among the top gainers within the real estate basket too, trading near gains of around 4.5%. The other stock in focus though is Havells, and that is reacting to its third quarter numbers and of course the management commentary as well. Upasana is here with more details on that. Upasana.
Well, certainly the company has reported a weak Q3. The numbers have missed our poll estimates, but the management commentary remains quite upbeat. Now, coming to numbers first. Now, company has reported a revenue growth of nearly about 11% on the YoY basis, which is lower to what we were estimating. This is mainly dragged by company's key segment, that is the cable and wire segment, which forms nearly 33% of the company's overall sales mix. Now, cable and wire growth was muted at just about 7% on a YoY basis on the back of wire destocking, which was mainly led by copper prices softening. Now, coming to the margins of the company, they were down about 110 basis points lower than what the street was estimating at 8.7%, and PAT was down about 3% at 278 crores. Now, coming to the con call highlights, where management has highlighted the outlook for FY25 and FY26. The management is positive on growth and margins in the forthcoming quarter. It says that it is confident that the switchgear segment will come back to its normalized contribution levels, that is 38 to 40%. It believes that the lighting segment volume growth was healthy this quarter, that is about 13 to 14%, and sees the price erosion tapering off, leading to a positive outlook for the upcoming year. The management is also confident about when it comes to the ECD margins, and it believes that the margins will come back to the normalized level in Q4 and will range somewhere between 12 to 14%, which is now at around 11%. And overall, the management has highlighted that the volume growth, as highlighted earlier, in cable and wire segment was flat. It was mainly because of the degrowth seen in wire segment, while cables saw growth of nearly about 11 to 12%. On back of this, CLSA has given an outperform rating on the stock with a target price of 2,120. It says that the management has indicated improving consumer demand, helped by festive season, while industrial and infrastructure demand remains strong for the company. While the numbers were weak and likely to drive another round of estimate downgrades is what the brokerage has indicated.
Thank you so much, Upasana, for taking us through the highlights as far as Havells is concerned. Well, the other stock in focus today, and that's seeing a bit of selling pressure, is Sterling and Wilson Solar. Remember, yesterday the stock gained significantly after delivering its results during market hours. Yesterday, post-market hours, the company went ahead and updated the exchanges with an investor presentation. Now, first, let's have a look at the numbers themselves. The revenues higher, almost 1,837 crore versus just around 583 crore. Company coming back to black. So when you're talking about margins coming in strong at 3.8%, net profit this time around of close to 15 crore versus a loss seen last time around. Some management changes too, something that the company alluded to. But what is it that the streak hasn't really liked? Number one, order inflow of close to 5,679 crore, which indicates that the order book has moderated on a sequential basis. So order book at the end of December 2024 is 10,167 crore. Net debt, something that the company has been attempting to reduce, has declined sequentially by around 150 crore. Company says that the new order inflows are lumpy, and order inflows have been impacted both by cyclicality as well as seasonality. They say that the active EPC pipeline is something that remains quite strong, as high as 27 gigawatt. Now, the most important development or trigger as far as Sterling and Wilson Renewable is concerned is the Nigeria order. And the company gave an update, Hormaz, as far as that particular order is concerned. They said that, let's first quantify the size of the order. Solar PV power plants up to 961 megawatt peak. Company says final terms have been negotiated. Procedural steps are in progress, awaiting the final signing of the contract, and this is something that the street is still awaiting. So some uncertainty, so cooling off after yesterday's sharp surge is what Sterling and Wilson is undergoing.
And I'm assuming they've not shared a timeline as for when that's possibly what is leading to that uncertainty as well, right? Almost 10% now, Sterling and Wilson giving up everything that it gained in yesterday's trading session. And time for a short break here on Midcap Radar, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store right away.
Story that you would like to tell?
No, right now my laser focus is on my next film and preparing for it. And the new story I want to tell is Irish cricket, Scottish cricket, and cricket from the Netherlands. It's exciting me. It's something new, it's like this new toy I've got my hands on. I'm really looking forward to it. I can't wait to start working on it. I've never been the kind of person who's very good at just going and waving my hand. I'm somebody who likes to get down on all fours and get dirty and really work.
Be in the trenches.
Oh, I love that.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you
Welcome back to Midcap Radar. Well, one particular stock that's gaining in session, as you can see on the bottom of your screen, is IDBI. The company has given a clarification to the exchanges. This is mainly pertaining to the fact that regarding the divestment of the bank, and the company says, or the bank says, strategic divestment is in process and entirely being handled by the firm itself. On the back of this particular clarification, stock up over 6% in the session. But moving on, you know, one particular stock that did very well in, and one set of stocks that did very well in the session yesterday was the life insurance pack. HDFC Life came out with a very strong set of numbers. All eyes now on SBI Life, and Yash joins in with a preview of what's expected as far as SBI Life is concerned.
Well, Vivek, after HDFC Life's strong numbers, I mean, those quarterly performance numbers certainly got other life insurance companies also excited. Today, SBI Life reports its third quarter numbers. We've put together some estimates in terms of CNBC-TV18 poll. So, of course, 5 important numbers to watch out for. The first one would be new business premium. That is expected to see a growth of about 8%. To come in at about 10,532 crore rupees. The total annualized premium equivalent or total APE is expected to see a growth of 12% at about 6,860 crore rupees. Retail annualized premium equivalent expected to grow at 13% at about 6,459 crore rupees. Value of new business, that is also expected to see about a 10% growth to come in at about 1,842 crore rupees. And importantly, margins estimates suggest that there could be a compression of about 50 to 55 basis points. Margins expected to come at about 26.86% versus 27.4%. Just like other life insurance companies, SBI Life has also seen some correction as far as the stock price itself is concerned. In the last 3 months, the stock is down about 15%, but in the last 1 month, it's bounced from those lower levels up about 5% in the last 1 month.
1 out of the 3 Nifty companies reporting results today. Yash, thanks a lot for that. Keep an eye out on SBI Life. Also keep an eye out on Wipro and on Tech Mahindra as well, the 3 Nifty companies reporting results. By the way, is talking about stocks that are not doing well in the broader markets. Varun Beverages is one of them. Mangalam spoke about it on a halftime report about how the market share gains seen by Campa is weighing on the stock. A slight recovery from the lows, still down around 4%. The other one that is not doing well today is Shriram Finance. That too among the top losers on the index, 4% down in today's session as well. And Bharti Hexacom seeing some bit of profit booking in today's session. Shriram Finance at the lows of the day, and Bharti Hexacom too witnessing some profit booking. That too has slumped to the day's low. With that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks for the next 30 minutes.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
You prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, and what you stand for, whether if it's on or off court. I know people might say that, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, I was feeling bad.
Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala. As of now, the screen that we're looking at in terms of the broader markets, managing to hold on to some bit of a green is what the Nifty mid-cap is doing. But like you can see, the benchmark indices are 23,199 to 23,200 is what the Nifty is holding on to. So yes, Nifty recovered from the day's lowest point, but yes, 23,200, will it manage to hold on to that in the second half of the trading session? That's going to be important to watch out for. Nifty Bank clearly under pressure today, underperforming today, down 1.65% in trade as of now. So Nifty Bank is where we're seeing the pressure coming in. Nifty IT also continues to be under pressure, down 2.5% and more than that in trade. What's the green spot today on the screen? We have realty names that are doing well. We have Nifty Metal that is managing to hold on to gains. So yes, that's why we're seeing some bit of a green coming in. An advanced decline ratio today as of now is fairly in the favor still of declines versus advances. So yes, that's going to be interesting to watch out for as of now. They're nearby, close by, we would see them merging at some point of time, but as of now, it's more in the favor of the declines versus the advances. But yes, that's how the market setup is looking like. But this is a show where we solve all your stock-related queries. And to solve all those doubts today, we have our experts joining in with us. We have Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, joining in with us this afternoon. Good afternoon, ladies. Thank you so much as always for joining in with us, and happy Friday to both of you all. Hoping it turns out to be a happy Friday by the end of this trading session as well. But let's start with the queries and make our viewers happy. They have a whole host of queries that have come in as well. So let me get started with the first query for today. We have the first query on Reliance today. Now, Swapnil Kulkarni, who's writing to us from Mumbai, he's holding 600 shares of Reliance Industries at a price of 1,480 rupees, making some bit of a loss right now. But he wants to know the future prospects in terms of his investments. Shaina, Reliance reported their numbers yesterday as well. Seems like a decent number because retail and O2C managed to do well for the company. So what are the fundamentals looking like for Reliance Industries? Today, 3% uptick is what we're seeing also.
Yeah, the valuations are pretty attractive at current levels. If you look at EV by EBITDA for the current year also, it's just slightly lower than 10. And on a PE basis also, it's about 20 times. So for a company, this size of a company, which has done so well in the third quarter, across as all parameters, in fact, you mentioned two verticals. I think, the OTC did very well based on the GRMs that were higher. You had retail volume that did well. They're gaining market share. And Jio, of course, I believe, with the addition of 11.2 million subscribers is doing pretty well. So I think Reliance is a stable stock to hold in your portfolio, and it's a hold for the long term.
Hold for the long term, no doubt about that. But, Vaishali, on the technicals, what are we watching out for in terms of Reliance Industries? From those 52-week highs or 6 months ago also, it was around that 1600 level. Today at 1300, what is your view coming in on this one? Can the viewer actually look to add more also right now?
Yes, good afternoon. Very good afternoon, all of you. In fact, I was just going to say that actually, as you rightly said, from 1600 making a low at 1200 levels. And technically also it was just satisfying the criteria because 1200 was a very crucial support. So even before the results were out, I think it was making a very good buying opportunity with 1200 as support. So now that you're saying that this gentleman has bought it around higher levels, it's worth averaging out. Keep 1200 as support level. So you may add more in tranches. If there is a dip from here on, keep 1200 levels as a crucial support and continue adding to lower down your cost and enjoy the ride when it starts.
Absolutely enjoy the ride when it starts. That's what you should watch out for. And look to average also is the word coming in from Vaishali. Let's move on to the next query. We have Rohit Chawla who's writing to us from Pune. 200 shares of GAIL is what he's holding at a price of 193 rupees per share. Also, he has one more stock that he wants to know about is Tata Power. 100 shares of Tata Power he's holding at a price of 415 rupees per share. So GAIL, he's bought it at 193 where he's making a bit of a loss there, and Tata Power also he's making a bit of a loss. So he wants to know whether he can actually continue to hold this or maybe book out the losses and look at something else. Shaina, GAIL and Tata Power, on the fundamentals, what are your thoughts?
Yeah, after the correction that both these stocks have given, I think fundamentally they have reached attractive valuation levels. If you look at GAIL, it's just about 1.4 times book, and it's 9 times 1 year forward PE. While I believe that it is consolidating at current levels and this stock is going to be a steady performer, I don't see it running away. At the same time, it has tied up, for a 5-year LNG contract with Qatar, which I believe will give it some stability in terms of the new contract it signs with its clients, which actually, the clients were directly, some of the large corporates were directly tying up for their requirements, which actually saw some softness in their numbers in the last quarter. I believe over the longer term, it should stabilize given this factor. The second one, of course, you mentioned Tata Power. Tata Power, there also last quarter, they didn't do that well. The stock has corrected because of the monsoons, the way it behaved in the first half. But I believe going forward, they have got very good plans in terms of expansion. As you've heard recently, they have also bid for the discoms in Lucknow. I think this as well as their transmission business, which is doing pretty well, power generation also should improve going forward in RE. So I think both these factors make these stocks steady performers for the longer term. I don't think you can really trade in them and make money for the shorter or medium term.
Okay. Long term, good story that comes in for both these plays. But Vaishali, on the technicals, what's your word coming in? China also started by saying, both of these have corrected significantly in the last 6 months. So, does it become an attractive bet right now? And maybe the viewer should continue to hold this?
I would definitely agree because first of all, these are all frontline stocks and market. This is very regular that we see correction on and off. After a very long time, we've got this opportunity that the major index has been corrected by more than 10%. And the stocks, of course, individually, we have seen at good support levels right now. So I guess one should start accumulating because this is not a reason to panic. These are good, healthy stocks. And I would say, even let's talk about Tata Power. Technically, I would say 340 acts as a good support. I think it's done its corrective positive round, and in that view, I would say add more at these levels. And likewise, even GAIL. So I would say GAIL also is looking very favorable at these levels. I would say 165 is a support. Even on the weekly chart, if I'm seeing, if it has to go for a further corrective move, 165 should act as a very prominent support. So add more at these levels. And along with GAIL, may I suggest, I do like ONGC also, because that's also showing very strong signs of reversal. So I would say yes, go for it.
Okay. Yes, go for it. That's a word coming in from Vaishali also. ONGC is also something that she mentioned as well. On the other hand, let's move on to the next query now. I beg your pardon. We have Hero MotoCorp. That's the next query which we'll talk about. Ankush Jain, who's writing to us from New Delhi, he's holding 30 shares of Hero MotoCorp at a price of 1,500 rupees per share. Wants to know whether he should book his profits or, continue to hold this, stay invested in this one. 1,500, so making a good amount of profit here is what we're seeing. Invested at 1,500, stock is at 4,089. Fundamentals, Shaina, what are Hero MotoCorp looking like? This two-wheeler vehicle, obviously, in terms of volumes and trends that are shaping up, that's going to be key to watch out for.
Yeah, so precisely because of that, what I believe that it is better, in my view, to say take 50% profits as of now and hold the remaining 50% for longer term. I am recommending booking part profits is because I believe in the coming year, first quarter of next year, I see too much of competition coming up in this space. And because of which, I believe over the medium, say maybe the next 1 odd year or maybe 2 years, you're likely to see both margins remain under pressure and also thereby, the stock consolidating. I would say hold 50% for the longer term because valuations after the corrections have become very attractive. Pure valuations, if you look at it, it is 11 times EV by EBITDA 1 year forward, price to book about 4 times. And the balance sheet is of course very strong. So I believe because of these factors, the remaining you can hold for the longer term.
Okay. And Vaishali, your view coming in on Hero MotoCorp, where the viewer is already making good amount of profit, what would you suggest?
I would say continue holding, keeping a trailing stop loss of 3950 because currently it's at a very good support level. And in fact, whole of auto sector is showing exhaustion in selling. So I would say that yes, these are the levels where actually if it's a long-term perspective, I would definitely say hold. But if this person is already having it, 3950 is the level to keep as stop loss and continue holding.
Okay, that's a view on Hero Moto. Let's move on to the next query. Now, Sheetal Kapoor is writing to us from Mumbai with an investment query. She wants to know if she should invest in auto ancillary stocks and ask which stock would be the most attractive right now with valuations or fundamentals. What would the bet be? Shaina, let me take this to you first.
Yeah, so in auto anks, I think it looks interesting at current, for buying for some of the stocks currently. I would say you could go in to buy something like a Una Minda. I think their valuations are very attractive and they've got a very strong balance sheet, good growth plans. So I would start accumulating Una Minda. Also the other Minda group, Minda Corp, there also I think while valuations are a little expensive, so I would prefer purchasing that at a slight dip. But there again, they have got good plans. They have, they are growing through acquisitions. I would believe the longer term looks good even for the EV segment for the Minda. And another one I would like is Sona BLW. I think there again, valuations are a bit expensive. So I would prefer, buying it on dips. But there again, the business prospects remain strong.
Okay. And Vaishali, any stocks that you are looking at in the auto ancillary side that would be attractive at the current levels to buy in that space?
So I would say Samvat and Motherson because that's also one of the frontline stocks. So that also has taken a good beating. So that would be one of the stocks. And I would also suggest Tata Elxsi right now, along with that, even tire stocks, if you may call it as an ancillary. So besides, as Shaina has recommended, Minda Corp and all. So these are the stocks, along with the automobile sector, these should participate as well. So yes, I would recommend all these stocks.
Okay, thank you so much for that, Vaishali, as well as Shaina. Those were the stocks that y'all can buy if y'all are looking to enter in the auto ancillary space. Both of them have given a couple of names there. But on that note, we're going to slip into a very short break, viewers. But don't go anywhere, because after the break, we'll be back and we'll be taking more of the stock-related queries. So don't go anywhere.
If I have to think, I lost an opportunity, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back even
yeah,
harder.
I think the belief is very, very important. Just believe in yourself.
Didi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is, I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good
Welcome back. You're watching Your Stocks on CNBC-TV18. Let's move on to the next query for today. We have Rahul Taneja, who's writing to us from Kolkata, holding 200 shares of ONGC at a price of 140 rupees per share. Wants to know and ask whether he should continue to hold this or look to sell at the current levels. Bought it at 140, so making a decent amount of profit. Vaishali, let me take it across to you, because you did mention this name before as well. Now, this viewer is making a profit here, so what should the viewer be doing now?
I would say, actually, yes, my view is positive for a longer term perspective. And we have already seen, in fact, again, as a disclaimer, we have recommended this. As I mentioned, technically 230 really acts as a support. But now that it's already sitting on profit, I would say keep 245 as a stop loss and continue holding, because we are looking at a projected target of 290 to 320 from here on. So 245 should act as a stop loss, 245, 250, and continue holding for higher targets.
Okay, 290 to 320 is the target that Vaishali is keeping. On the fundamentals ONGC, Shaina, what is that looking like?
Yeah, so fundamentals also back the positive view of technicals. Valuations are pretty attractive. At 4.5 times 1 year forward EV by EBITDA, it's extremely interesting. Also, if there is any changes in terms of the the taxation windfall tax by the government. There also it benefits. There is increased production likely coming up in in the coming year from the eastern gas fields. So you're going to have both realizations as well as volumes up over the coming period. So I think valuations will remain interesting and attractive. So it's a hold and a buy.
Okay. Hold and a buy, that's coming on ONDC from China. Let's move on, and this is an investment query again that we have. Shruti Mishra, who's writing to us from Pune, wants to know on IT stocks, and she's asking if if she could look at any one of these IT names to buy currently at the current levels, what is looking attractive. Shaina, let me take it across to you. While Infosys did report a decent number, but commentary, those wage hike issues is something that is keeping the stock under pressure. And today we're seeing IT as a whole is also under pressure. So Shaina, what are your thoughts on the IT pack? Any one stock if they had to look at, what would it be?
Well, yeah, if one stock you have to look at, it has to be a TCS, which is the largest. And then the numbers were also in line with expectations. They had a very good deal win during the quarter. And also in terms of their guidance was pretty robust. So I think, across the board, TCS remains interesting. While it is interesting to buy it at current levels, if you really want to make decent money, it is better to buy it on dips since it's your first pick between, say, 3,800 and 4,000. So it gives you a better return. Also, if you want to add another stock, a smaller stock, maybe you could look at something like a Root Mobile, which is doing pretty well in the CPaaS space, IT solution space, and there I believe the numbers are they're doing pretty well in terms of growth in profits also. Valuations there I believe have started to look attractive after the big correction that we saw. So I think Root Mobile could be another one stock you could add.
Okay. And Vaishali, any view coming in on your side on the IT stocks? Which names would you be looking at?
So I would choose LTI Mindtree also because the stock, if you see, it has seen a good corrective move, and we did see upward move coming in, and again it's consolidating. So not in a hurry, keep accumulating because 5,600 is the support. So I would say wait for good support level so that your risk reward ratio also turns out favorable. And I'm looking at the target of 6,500 to 6,700 to start with from here on.
Okay, keep an eye on those levels over there for LTI Mindtree as well. That's the suggestion coming in for IT stocks from Vaishali. Next query is on NTPC. Now we have Kamal Sharma, who's writing to us from Odisha. He's holding 80 shares of NTPC at a price of 120 rupees per share, so almost more than tripled his returns right now. 327 approximately is what the stock is trading at. Wants to know whether he should continue to stay invested in this one or book out his profits. Shaina, you?
He should, in my view, continue to hold. They have got a lot of plans, also planning to, expand in a big way in nuclear, which could be the growth driver for the medium to longer term. While we saw a bit of softness in the first half, I think going forward with capex of about 22,000 crores for the year, I think the second half will be better, both in terms of realization as well as in terms of volumes. So it is a hold at current levels.
Hold at current levels. That's the view coming in from Shaina. Vaishali, what's your view on NTPC? How do you see it moving from here on? The viewers, making profits. So is it time that maybe you could just look to exit and enter something else?
I would not say so. In fact, I would say rather add at these levels because all these stocks have witnessed a very good corrective move. And today's this weekly candle also I'm looking at, I think the exhaustion and selling pressure is done with. So I think continue holding, at least look for a target of 380.
Okay. Look for a target of 380. That's a word coming in from Vaishali for NTPC. Let's move on to the next query. This one is on Vodafone Idea. Now, this is a fairly active stock that we see coming in terms of volumes, but it's a very small in terms of amount. Viewer, we have Komal, who's writing to us from Bihar. She's holding 500 shares of Vodafone Idea at a price of 10 rupees per share. Stock is currently at around 9 rupees. Wants to know the future prospect of this one. Shaina, on the fundamentals, Vodafone Idea, what are you saying? What are your thoughts?
Well, on fundamentals, it's on a very shaky wicket. Balance sheet is very, very stretched. And while, the promoters is a strong group, they have got good fundraising program in place. Government is trying to, help them by, giving them some set-offs. But if any point in time they try to improve the balance sheet and raise funds, the dilution on equity will be so huge that I believe, it will negate any upside. So the stock will continue moving in this range. So I would prefer that, she books and she moves to some stronger stock and hold it for the longer term. Even in the same space, you have something like a Reliance, which eventually you're going to get Jio. So you could look at that. You could look at Airtel. So you could even look at some of the other tower companies. But I think Vodafone, you're going to see a consolidation at current levels.
And Vaishali, your view quickly on Vodafone Idea?
Definitely. So I actually personally would definitely suggest Bharti Airtel or Indus Towers to start with. But these days I see a lot of buying interest coming in Vodafone. So purely on technical terms, I would say 8 is the support. So if this person has bought at ₹10, I think keep 8 as your stop loss. And the way the volume has been picking up, I think this stock can go back to its cost price of ₹10 and perhaps go higher to 12. So 8 should be the stop loss and hold with patience.
Okay, that was the last query for today. So thank you so much, Shaina, as well as Vaishali, for joining in with us on the show as always, and a happy weekend to you as well. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. We're leaving the Nifty just a tad bit below 23,200 mark. Don't go anywhere. Closing bell will take the action forward.
That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market?
The Taiwan index, that's down 0.3%. Hang Seng is down 0.3% as well.
Markets are awaiting Trump 2.0. And that's the big theme.
The CASA ratio is at 38 quarter or more low.
The companies reported a revenue growth of 6.6% on a year-on-year basis. Revenues were ahead of street expectations. The company reported a constant currency revenue growth of 1.7%.
23,277, we done about 0.15%. Bank Nifty is down about 0.5%.
Well, the proposal is currently under active discussions between North Block and the PMO.
And now things are looking ugly on the screen. It's a deep shade of red.
भारत की ऑटोमोटिव इंडस्ट्री फैंटास्टिक भी है और फ्यूचर रेडी भी है.
And this is a future Lexus concept vehicle which is being showcased.
Bulls will hope to end the week on a high note, but at this point of time, it's a steep recovery that will be required.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far. Markets, of course, looking under pressure, but it's not a big cut or anything of that sort. It's just sort of, biding time till you actually have, I think, we're talking about a T-2 now, T-1 day and 1 hour to go in terms of Trump taking over. So just a holding pattern, nothing more, nothing less. But there's enough and more big stock action which we will address over the next 60 minutes or so. You're with us here on Closing Bell. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon, folks. So, Prashant, what are your bets? 60% tariffs just after the inauguration?
I don't think so. I honestly don't think so. I mean, that's the most disruptive of the scenarios. Yeah. I think it'll be more gradual.
I also think so. And remember, Trump is a businessman before being a president. So I think, the measures that he'll take will not hurt the economy. And remember, at one point of time, he was betting on Mike Tyson. In the 1990s, he put some big money out there. So he knows, what's hot, what works. And I think the last thing he wants is to see is, a meltdown in the US markets out there. And the book doesn't support it, right? The debt is high. He can't let inflation move up as well out there. So put it together, I'm betting on Trump being peak Trump we have seen, as Prashant has been saying. And now we'll see, more
let's see. But, anyway, quickly just on the market, it's still a 90-point decline, but the mid-caps have had a better day. We'll get you more on the markets in just a bit. But first up, an interesting headline that's coming in from the Auto Expo, the Bharat Mobility Expo as it's now being called. In fact, Maruti has unveiled its first electric SUV, the e-Vitara, at the Bharat Mobility Global Expo 2025. The SUV is set to launch in March and will be the only model in its segment to offer an all-wheel drive. My colleague Parikshit Luthra caught up with Hisali Teikuchi, the MD of Maruti Suzuki, to understand more about this new launch, which the market is also waiting keenly to see if it really ups the ante in the SUV space.
First of all, this e-Vitara is a ground up, everything new. So this is not just changing the IC engine to the motor and the battery. The ground up, this is all new. So this platform is all new platform to optimize the performance of this car as EV. And this is, according to the view
of... Okay, sir, let's keep moving towards the front as you talk.
Yeah. In line with the view of Prime Minister Mr. Modi, this is made in India car, and not only targeting the Indian customers, but we are exporting this car to more than 100 countries and regions, including Europe and Japan.
Okay, when does production begin for this in India and Gujarat? When can customers actually book and buy this?
Okay, so production will start in this spring season, and
within this quarter?
Yeah, end of this quarter, beginning of next quarter. Okay. That is the first production start timing, and then this car. There are a lot of customers waiting this car from Suzuki. So first we are exporting to the European market. And then right after that, we will start production for Indian market.
Okay, so first Europe and then India. Why not India first?
Well, actually, for Europe, it will take about 1.5 months for shipping to the European countries. So in order to have about same timing to start the sales.
So can we expect by June customers to get it in India? Yeah,
about that time. The thing I can tell you right now is within 1 year, we will become the biggest EV manufacturer in India.
Within 1 year?
Within 1 year. We will become the biggest EV manufacturer in India.
In terms of sales volumes?
No, in terms of production volume in India, we will be #1 manufacturer.
Okay, and will there be more EVs launched, or currently this is the only car for this calendar year?
Yeah, of course we will, in the pipeline, there are a lot more to come in EV, and we are developing more EVs soon to come.
Okay, and finally, Mr. Takeuchi, what is the amount of time that a person would take to charge this car fully with a fast charger and with a home charger?
For the fast charger, it's about 40 minutes for 80% charge. So you can quickly charge with the fast charger. At home, of course, it will take more than that.
All right. Well, that is the Maruti top boss in conversation with my colleague Parishit. Some of the flashes, of course, at the bottom of the screen. This is Maruti's EV plans here. How should you position yourself in the last hour? Mitesh is with us. Mitesh, good afternoon. I mean, neither here nor there kind of a day, but how would you trade it?
So, Prashant, I think two things. One, the Bank Nifty had still having a big decline. The Nifty has managed to, stay above the lows of 13th of January, which was 23,047 on an intraday basis and 23,085 on a closing basis, and we got a low of 23,100. So I think we are not seeing a fresh breakdown, and I think Reliance is partly responsible for that. It could still be a market which could chop around within 23,100 broadly, give and take 40-50 points, and 23,350 on the upside. The hourly indicators are turning flat, which means that the declining force is mildly reduced for the Nifty, but that is not similar. That is not true for the Bank Nifty. So it's the banking lot which could still see pressure. And my belief is that the banking index could test 48,100, 48,000 again. And if it breaks below that, then we are in for a slightly tough time as well in the financial side.
Absolutely. I mean, the Bank Nifty slide 1.5%. I guess Axis Bank has set in motion a whole chain reaction today. It's taking a lot of the other large banks down with it. Okay, Mitesh, so that's on the indices, individual stocks. What are you trading alongside, short side?
HDFC Life, had a big breakout yesterday and then a pullback. I think it is now clearly showing signs of turning around the short to medium term trend. The stock declined from 750 to about below 600 levels and then has reversed. So by here with a stop at about 633, look for a target of around 660 to begin with, and above that 675 is also very likely. And something very positive is happening on the charts of Hindalco. So Hindalco, I will take a buy with a very tight stop because the market isn't very convenient for long side trades. But this one warrants a buy. So keep a stop at 609. Look for a target of 640.
Okay, all right. Thanks a lot for that, Mitesh. Just that point on Hindalco, I remember Novelis had come out with their preliminary, announcement with regard to the Q3 numbers, and it looked very, very disappointing. But we had highlighted that because the stock has corrected big time from the recent peak, the street was prepared for a weakish show, and also the management commentary was Q4 things will still look up. So that's why, when we had covered it on top 10 as well as at 9 a.m. on that particular day, we said that if Hindalco opens up lower, we're expecting some buying interest to come in there. Because of these factors, stock had corrected, the outlook was good as well. So currently, the stock at the high point of the day, Nuvama as well as upgraded the stock. By the way, SBI Life, that's come out with a set of numbers. Net profit up close to around 70% or thereabouts. That stock has moved to the high point of the day. And I think we had a couple of other numbers as well that were flashing. For the time being, the stock is up. But remember, it had a run even post HDFC Life's numbers. And the street was doubting whether the others can perform at par. For the time being, they like what they see, at least the initial numbers that are up for you on the screen. Yash will be joining in to break that down for us. Yes, Ruby?
You know, I'm just quickly, while we flash the other key numbers, let me run through the expectations. New business premium is supposed to rise 8%. The APE growth for SBI Life is expected to be around 12%. And if you look at the value of new business, that's expected 10% as well. And remember, on HDFC Life, the thing was they did so well on VNB margins, despite a lot of the negative headwinds that the sector has been facing. For SBI Life, Yash's poll says that margins could actually contract by 54 basis points. They were supposed to contract even for HDFC Life, but then, I mean, they had a blowout performance. Right now, that stock is up and about, rising higher as we speak. Okay, we'll get you more on the numbers as they come through. We've got Prakash Diwan now joining in. Prakash, actually, let me start with the life insurers. We'll get more numbers in from SBI Life as well. But what do you think? HDFC Life has sparked absolute new excitement in the sector as a whole. Do you like anything here?
Good afternoon, Surbhi. So, yeah, I mean, HDFC Life numbers tell you that the story, irrespective of the regulatory overhang, the changes in regulation that could kind of impede their accelerated growth, is just a blip. And the secular trend is so strong. And then I keep saying, you know, you saw the HDFC numbers, you saw the reaction to SBI Life, and I'm sure the same thing will happen to ICICI as well. So it's very simple. You buy the basket. You don't buy one stock because all of them will behave differently at different phases of their expansion. But nevertheless, the segment gives you enough of this thing. In fact, I would believe a lot of the money that's rotating out of other subparts of the BFSI vertical will find their way into, especially from the broking side and all of that, that's seeming to be a bit softer now. A lot of that money will come into insurance on the institutional side. So definitely, and there's hardly any new paper that's come into this segment. So there will be a little bit of a re-rating given that liquidity that's likely to come. So yeah, very positive on the sector fundamentally, given the huge space that we still have unaddressed and the kind of product innovation that's already coming. And HDFC Life actually demonstrated what a good product mix could do to shore things up. So pretty positive on the sector, but buy a basket is my sincere recommendation.
Okay. All right, that is HDFC Life and SBI Life, the insurers there. Let's quickly move on and talk about Infosys. Of course, Infosys, the numbers weren't bad. In fact, it was a good third quarter for the company. Dollar revenue and constant currency revenue, both were above street expectations. And margins were in line as well. The company went ahead and increased their full year guidance along expected lines. So then why such disappointment on the stock? Still down 6%. Rima is here for the fine print.
So, Infosys' numbers, the headline numbers were fine, perhaps even slightly better than what the street was anticipating in terms of the Q3 top line, but the internals were disappointing. So let me tell you one. So first we said the revenue growth at 1.7% was ahead of estimates, but this was driven by a higher pass-through, which basically means that Infosys bought third-party items and sold it to the clients. There is no value add or service that Infosys provides on that, and that, according to some analysts, this third-party pass-through revenues boosted their top line by 150 basis points out of the 170 basis points growth that the company had. And the next quarter, this pass-through is not going to be there to this extent, which basically means Q4 revenues are going to see a drop. In fact, if you look at the company's guidance, we have the full year numbers, 4.5% to 5%. We have the numbers in the first 9 months. So in Q4, if you do the math, the company is anticipating a degrowth of -2% to 0%. That's the implied Q4 growth. Again, on account of fewer working days, some furloughs, and lower pass-through revenue. So Q4 is going to be subdued. Also, the next 2 quarters will see an impact of wage hikes on margins. So far, in the first 9 months, the company hasn't given any wage hikes. But in Q4 and in Q4 of this year and Q1 of next year, there will be that wage hike impact. And deal wins, while steady, they haven't accelerated. In fact, on a year-on-year basis, they're still down 22%. That said, brokerages are still very bullish, and they say this is the best play amongst large caps in the current environment. So Bernstein, Morgan Stanley, Jefferies, HSBC, all very bullish on Infosys.
Okay, thanks a lot for that, Rima. Prakash Diwan is still with us. Prakash, what do you make of this one? Infosys, for the time being, the street is selling into it. But if you want to look at a positive, the stock this morning was, I think it opened up at around 1830. It's not seen a recovery, but it's not fallen drastically. It's not fallen off the cliff like HCL Tech. Your view on the name at around this 1810, 1820 rupee mark?
So, Nigel, I might sound repetitive, but when the numbers came in yesterday afternoon, Rima and we discussed that briefly as a first reaction, and everything seemed very positive. It's just that, the semantics of this pass-through on the revenue side is disappointing a few people. But, the way I look at it, if they're anyways up the higher end of the guidance, there is absolutely no concern how the revenue gets the same. At least the profitability is not getting impacted, even if the revenue does. And typically December is the quarter, December end is the quarter where there's always a struggle. The number of working days available and all of that is much lesser. So I think if they can cover that up and the kind of recruitment that's probably on the cards, there is no reason to get concerned in the long term. I mean, the March end numbers could probably be here and there. And remember, the announcement from the Trump administration, which we were talking right at the start of the show, I mean, that is still a joker in the pack. If those things upset the apple cart, there's no reason why these stocks will not get, re-rated downwards. But if everything goes off well, especially on the, regulation around immigration and all of that, you could probably see a new virtuous cycle begin. So I don't think the reaction needs to be this severe, but out of the top three, the top four large names, Infosys definitely stands out to have better metrics to catch up. Whatever this fall today is probably an opportunity for long-term investors as well.
Okay.
All right. Prakash, I was looking, Indigo has corrected a fair bit. It's down almost from 5,000, I think 5,000 rupees, a little over 5,000 was the high. Basically lost about 1,000 rupees now. Any thoughts on this one here?
So, Prashant, Indigo has gone through a little bit of, the first sell-off that happened was on account of the shortage of aircraft. Now, that is something which is plaguing the entire industry. There was this hope that Indigo would be able to kind of transit to, the wet leases that they have actually announced from the Boeing, make rather than just depend on Airbus. But that still hasn't kind of come into play in terms of, translating into number of flights getting added and all. And what's also happened is towards the latter part of the quarter, you had crude playing a bit, naughty in that sense, because you had a very stable range-bound behavior from crude all this time, and suddenly crude started kind of firming up, and that is something which also kind of does impact their metrics. But having said that, the market share and there's this whole thing that Vistara and Air India are going through, that's still giving them enough time to build their market share and manage through that. People keep complaining about Indigo, but the number of flights that they have taking off every day is so high that the complaints will also tend to be high. But as a percentage, if you see, they're still doing much better on all of that. So I'm a big believer in the fact that this airlines, given its cost efficiencies, could continue to do very well going forward as the expansion gets underway. And I wouldn't be surprised if they end up scaling back that all-time high and going beyond that. But it will not be a smooth ride, So there will be air pockets, there will be a little bit of bumps here and there. But end of the day, this is a play that if you had to look at aviation, there's no better play than this.
Okay, all right. That's Interglobe Aviation. So, Prakash, we've discussed the air. Now let's discuss the road. And I'm probably sure you knew this question was coming, right? Because you discussed Mahindra and Mahindra way back in the day, and you were very early on that call. But now look at the excitement that's building up around Maruti. And the market's taking some positioning around it as well, because the stock's done well in January when everything seems to be struggling. What do you think of the e-Vitara, the promise of more launches, the fact that the December sales numbers were good for Maruti? Is there something building here? Or is it just flash in the pan?
No. Definitely, there's a lot of promise. Look at the evolution of Maruti's electric vehicle foray. They always stuck to the this thing. They were very close to the knitting in their core. This thing of CNG vehicles. They kept on ramping that up. In fact, they had such amazing leadership. Nobody else has a portfolio which is so impressive. fast-moving, variants in the CNG side. But then they said we'll get into the hybrid space, and that also was a very big fillip of sorts because the arrangement with Toyota was actually doing so well. The need for electric vehicles is precipitated because Europe is a massive market for them, and to make sure that they don't lose out on their presence out there, and it's more of a Suzuki play naturally. So they've started using that this thing. But in India, they've probably timed it in a way that they waited for the charging infrastructure to get in place. Well, Maruti is more massy, and if they were to sell cars in smaller tier 2, tier 3 towns as well, they need charging infrastructure to reach those places. So that's something which will now happen. So I don't think this is a flash in the pan, and I'm sure they'll keep launching various price points in that. In fact, it's time for Tata Motors to get a bit worried because they will possibly look at getting into the same market space very soon. But with their new launches, it's a bit high end and it's going to be very niche. So I don't think there's any impact on that yet. But let's see. It's still some time, and my sense is it's only after June we see the kind of rollout and all that things will start looking different. But yes, it's quite positive from a long-term perspective.
All right, Prakash, we'll leave it there. Thank you very much for joining us. Good speaking with you this Friday afternoon. We'll take a break. We are going to come back. Market's still there, about 90 points lower. As we slip into that break, here's some good news for our viewers. India's business news leaders now a click away, introducing CNBC-TV18's all-new app. Instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the app from the Apple Store or Google Play, or just scan the QR code on your screen now.
Macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
What we saw was, the last quarter we'd seen discretionary becoming good in financial services in the US. Now this quarter we have seen financial services in Europe, also the discretionary showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now the second I think was about, if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared,
Okay, welcome back. We got 80-point cut on the Nifty. 23,230 is where we are at. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Monday night or when we wake up on next Tuesday and see the headlines, it'll be either of two or three or four things. Either Donald Trump will go big on day one with massive tariffs.
Yeah.
That's the worst case. I mean, on day one. More gradual stuff like we saw in 2017, I think maybe a little more palatable. But what is your sense, Jitendra? Because it could be big in that sense, one way or the other.
Sure. I think so. His assuming office on 20th, I think I would not expect an immediate big bang, but I think the next 30 odd days will promise to be fairly interesting because, the kind of announcements, the direction of what the US does is going to be very, very interesting. So my take is one part is that, you are obviously going to see certain amount of tariffs and, market expectation maybe that may be very narrow targeted. But the point is, trade rerouting is a very real risk. You've seen what happened in something like solar panels and stuff, where when one country was banned, it got rerouted through other countries and stuff like that. It might be a little bit more broad-based is my sense to make sure that, that entire premise of MAGA, that make America great again, plays out.
No, so you're saying it'll be gradual, like perhaps...
I think it will be more gradual, but I think it will be a little bit more broad-based is what I'm saying, that it may not be very specific, it might be more directed, but what one may need to consider is the after effects of that first announcement, how people react to it, whether people use it to probably insulate themselves by engineering a currency depreciation, or they use certain other means to, downtone that risks, etc. We'll need to watch out that after effects after that.
I was saying this earlier. Markets broadly in November going into the election result underestimated Trump winning, right? But in terms of estimating what he will do, I'm not sure whether they are underestimating it very much. To that point about gradual tariffs, right? I think we have a clue in terms of how markets may behave, because there was that Washington Post article which essentially said that the team is considering small monthly increase in tariffs, overall tariff rates. The dollar sold off very quickly on those headlines. So if it is gradual, we actually may, we have that as an example fairly recently about what markets may do. So let's hope it is that and he doesn't go big on day one. But markets here specifically, Jitendra, any quick thoughts?
So broadly, from what I can see, I think there is generally nervousness near term, especially on the global macro funds with relation to, the dollar strength, with relation to the fact that monetary easing per se seems to be getting a little bit more distant. And especially if tariffs is the way to go for the US, the point is it is going to be inflationary. So to an extent, that also pushes back all the, the easing expectations somewhat. So I would say that those will be the two major things to watch out for, that what is the implications on inflation of all that they do. And the other part, I think, is that one should be fairly, one thing is reasonably certain, tighter fisc, easier monetary may play out in the longer term. So the near term will be one about tariffs, but longer term, even to ensure American, competitiveness in manufacturing, they will try and engineer a little bit of weakness in the currency. So from a structural perspective, I would think a tighter fisc, weaker monetary might be the way to go.
Hi Jitendra, good afternoon and good to see you, Ben. Jitendra, I wanted to ask you about these Axis Bank's numbers. That's been the big problem pocket today, because suddenly the street has got even more nervous on banking names. We had a couple of days of a pullback and that's got sold into. And even stocks like Kotak Mahindra that come out of that set of numbers, it was looking strong all through this week, and suddenly today it's weak because of maybe some kind of read-through, some kind of rub-off. Your view?
Sure. So I think on banking, two things are happening. One trade, which probably you referred to, which was showing the strength, I think, is that the tighter liquidity conditions led to some kind of gravitation away from the NBFC segment into the banks, because banks generally have a better deposit franchise compared to the NBFC segment. So that was one trade that was playing out a week. 10 days before all these events happened. The second, I think, which is happening is that I think the growth, people are getting a little bit concerned because of the continuing elevated LD ratios for the banking system. So, RBI has expressed this concern that they do want to see some tone down in these LD ratios. And my take is that if they don't come off, then, the other casualty as a collateral damage could be the growth aspect. You may not see too much of NII growth then coming through for the banking system. I think a lot of that reaction which is happening now is probably an aftershock of that.
Okay. All right. Just hold your view, Jitendra. We'll come back to you. Actually, want to discuss autos with you and what your stance is over there. And why not? Because we have, the largest ever, event that we have, the annual date that the auto sector has with New Delhi. That's actually become the Bharat Global Mobility Expo, or the Bharat Mobility Global Expo as it's being called now. It has kicked off. We have actually Parikshit joining in. He just got us snippets of the conversation with the Maruti Suzuki management. Parikshit, so lots of excitement. What's new and what are you looking out for over the next, I think, two days, right? It's a two-day event?
It's a two-day event, definitely. Right now, I am at the Hero MotoCorp Pavilion, where the company is actually not one, but 4 production-ready vehicles which go on sale in February. Now, these are product upgrades. Let me start with the Zoom 125. This is the new scooter from Hero MotoCorp. There you have the Zoom 160. We'll go very quickly, one by one, because I want to show you as much as possible. Auto Expo is just about great big bikes, luxury cars, and beautiful concept vehicles. Here you've got the Extreme 250, which has been launched. These are completely new vehicles. You've got the X-Pulse 210. Now, these are one of the highest selling premium motorcycles from Hero MotoCorp, and these have received major upgrades. In fact, premiumization is going to be a big push from Hero MotoCorp in 2025. Let's show you more. In fact, the Hero MotoCorp CEO Niranjan Gupta also said that we will see a lot of action on the VIDA space or the electric scooter space as well. Harley Davidson on display. This is to show that the Hero MotoCorp Harley Davidson commitment is growing. But one vehicle which is very interesting and I want to show you very quickly is a prototype that Hero MotoCorp had showcased some years ago called the Surge. Now this is literally a 2-in-1 vehicle. I'm going to sit in it right now. Okay, all right, I'm not allowed to sit in it, but it's production ready. You can actually detach the scooter from here. If you can see, this is a scooter. You can detach from it and you can use the scooter independently. Otherwise, the scooter remains fixed to the body and you can use it as a passenger vehicle, 3-wheeler. You can use it as a passenger vehicle, cargo as well. This was a prototype until a few years ago. Now it's absolutely ready. Now, see, this is a cargo variant of the EV Surge vehicle that Hero MotoCorp has showcased. We're told that it will go on sale sometime in 2025. The company not allowing us to sit right now. Okay, now I've been told I can sit on this. So here we have it. So I'm sitting in the Hero Surge right now. This is a passenger vehicle. I can literally detach the scooter front and move ahead. So it can be used for e-commerce, it can be used for deliveries, and even if a person wants to use the scooter for his home use, they can do that. How it appeals to a customer, that is something that remains to be seen. But this is definitely one of the interesting concepts that we're seeing at the Bharat Mobility Expo. More than 100 launches over the next 2 days. And let's not forget, the Chinese company BYD, which is the biggest EV seller in the world today, is also making a return to the Auto Expo. They'll make a big splash tomorrow. They've got a electric SUV which is being launched. VinFast, the Vietnam company which is into electric vehicles, they'll be making their India debut tomorrow as well. So lots of action at the Auto Expo.
Okay, all right, Parikshit, thanks very much for that. So, yes, plenty of new launches, premiumization, upgrades, and more. Thank you for getting us the latest. So, let's go back to our expert now. There's Parikshit who's got a busy day and probably a busy tomorrow as well ahead of him. Let's go back to our expert. Jitendra, what's your stance on autos? What do you like here?
So we like the entire consumer-oriented product slate, which is even the two-wheelers and the passenger cars. For example, across various portfolios, we'd have both the listed passenger car vehicles as well as some of the two-wheeler names that are there. And this is something, if you look at even today, there is some talk of the next wage commission hikes. Typically, they augur well for both these segments as well. So you will have an ammunition coming in from that as well, as the central government employees and various states follow suit on these wage commission awards.
No, absolutely. And more money, maybe, right, in the hands of government servants. We'll take a break here. Thank you very much, Jitendra, for joining us, and good speaking with you. As always, we come back after the break. Lots of earnings that we want to get to in a bit from now. So Wipro will report numbers. There'll be Kotak Bank, which will report numbers tomorrow, and more. We'll also get you a quick D Street Chatter check with Nimesh and some trading ideas as well. Stay tuned.
Our Q1, Q2 in a typical financial year are strong. Our Q3, Q4 are typically weak. So that's the sort of seasonality that we see.
Welcome back. Markets have slipped yet again just a wee bit in the last few minutes. SBI has moved to the day's low yet again. It was trying to pull back, and SBI Life is the other one as well that saw an initial pop-up, but that as well has moved a little bit lower. But it's that time of the day when Nimesh is standing by to give us an insight in what he's picking up in D Street Chatter. Nimesh, take it away.
Hi, Rajalan. It's the financials which is putting pressure on the Nifty today. So again, a down day. The FIs are better sellers, but it's the broader market again which is relatively outperforming. So a lot of individual names in the broader markets are again buzzing in trade. And seems like the actions, there's a bit of interest back as well in some of those momentum stocks. I guess from a sector point of view, quietly the PSU stocks have seen a bit of a bounce back in the last many days, and there is buying interest as well. For a change, telecom has seen a bit of buying, bid interest from large institutions. So good amount of buying in the telecom stocks is what I understand from the larger institutional investors. I guess earnings and global macros, once Trump takes over, that will be the very crucial triggers to watch out for next week, and that will set the tone for India market as well. But I guess technically, I've been saying for a while now that 23,300 is a very crucial level to watch out for. If that gets taken out, you will see a very sharp, upside in the very near term. So that's the level to watch. But I guess broadly, the pressure seems to be today within the financial names.
Okay, got that. Nimesh, what about individual stocks? What's the scoop on them?
Well, so the first name on my list today is Fusion Micro. In a weak market where the financials are under pressure, that stock is buzzing in trade. Volumes are on the higher side. Looks like some HN interest is back as well. For Fusion Micro or Fusion Finance, there are a couple of triggers to watch out for. One, the fundraising via rights issue. And two, the appointment of a new CEO. That's something around the corner, is the buzz there in Fusion Finance. So that's the first name. The second stock is Manappuram Finance. The stock is in the ban, but a lot of cash-based buying happening. A lot of FI investors seems to be active buyers as well. And again, in Manappuram Finance, there is a very strong indication that maybe some large corporate announcement could be around the corner there. So that's the second name. The third stock is K Fintech. Within the ancillaries to capital market, this stock has seen a bit of underperformance in the last 15-20 days, largely on back of selling pressure. I understand a leading FI investor has been an aggressive seller in K Fintech at this level. So that's the reason why that stock is underperforming. And the last stock is CG Power. Even that stock has sharply corrected from the highs, 50-week highs. And at these levels now, some bit of interest seems to be back. So a bit of buying is back, and I understand a domestic mutual fund is active buyer in CG Power.
Okay, all right, interesting list there. By the way, Nimesh, that Nazara board meeting is on Monday?
It's on Monday, yes, 28th. Yeah.
It's on Monday. Okay, stocks up about 1.25%. But this is an interesting list, new list that we will keep an eye out on. Thank you very much for that. Mitesh is back with us with what he'd like you to do in terms of trades. Mitesh, what do you have?
I have a STVT on HUL. I think that's something which is closing near the day's low. So STVT here with a stop at about 23.63 and a target of 23.30 can be looked at. And the other one is JSW Energy, which is also which is actually broken out in the last 15-20 minutes. But yeah, the chart structure has become weak. So STVT here with the stop just above levels of 575 and a target of 560 can be looked at.
Got it. All right, Mitesh, thanks a lot for that. Well, let's hop across to Yash, who's all set for the weekend. But before he gets into the weekend, he's joining us to tell us about SBI Life's numbers. Yash, the street, I think, reads it as a good set of numbers. Do you think it was as good?
Well, Nigel, it's 2-on-2 for the life insurance company, HDFC Life. Of course, the street wasn't anticipating much, but the numbers turned out well. And the same goes for SBI Life as well. The numbers, the read looks good at this point of time. 5 key numbers, all 5 looking good. The result in one line would be in line to positive. First one to start with, new business premium, that is come in line. The growth on a year-on-year basis is about 8%. The number that we are looking at is about 10,530 crore rupees. Total annualized premium equivalent, that has come ahead of estimates. The growth is 13%. The number that we're looking at is about 6,940 crore rupees. Retail annualized premium equivalent, it's in line with what the street was estimating. The growth here again is 13% at about 6,450 crore rupees. Finally, coming to the two most important numbers, value of new business. Again, the number is ahead of estimates on the VNB side, a growth of 11%, and the margin. Importantly, the street was looking at a compression of about 54 basis points when the margins are concerned, but the compression is much smaller than that, about 45 basis points on a year-on-year basis. So that would also go down well as far as the margins for SBI Life Insurance are concerned.
Okay, 2 out of 2. And more, of course, will report as the weeks go by. I mean, next week, I think we'll see more. But let's talk about numbers yet to come out. Kotak Bank will report numbers tomorrow. Let's get a quick preview going. Abhishek is here with that. Abhishek, over to you.
Well, Prashant, to begin with, Kotak Mahindra Bank's P&L can be on the weaker side as analysts are estimating the net interest margin to be at 11-quarter low. Watch out for the business momentum, that is deposits and advances. Nomura estimates deposit growth of 15% YOY and 2% quarter-on-quarter. They also estimate the loan growth to be at 14% YOY and about 3% quarter-on-quarter. The net interest margin can decline both YOY and quarter-on-quarter. Again, Nomura estimates net interest margin at 4.85% 5.95% when compared to 5.22% on a year-on-year basis and about 4.91% on a sequential basis. So this 4.85 is perhaps at 11-quarter low. We need to watch out for the low-cost deposit momentum. Every lender is losing on CASA ratio. CASA ratio for Kotak Mahindra Bank in the previous quarter was about 43.6%. Now slippages can remain elevated for some of the unsecured portfolio that is there, which is credit card, personal loans as well as unsecured loans. So personal loans, analysts are pegging that the slippages may taper off post Q3. Asset quality to see marginal hiccups. So Motilal Oswal estimates gross NPA ratio of 1.56% when compared to 1.49% in the previous quarter. They also estimate the net NPA ratio to be at 0.46 versus 0.43% in the previous quarter. Watch out for the management commentary and outlook that will be important on two key parameters, that is the business momentum and credit cost guidance that they intend to give. Any update with respect to RBI diktat that is there on them, that will also be seen closely from the investors' point of view. Our polls suggest NII growth of 9% YOY and about 1.8% sequentially. We are working with a profit growth of 9.5% YOY and a decline of 1.7% on a sequential basis. Back to you.
All right, thanks a lot for that, Abhishek. Well, let's hop across to Hemang Jani, who joins us to have a quick chat. Hi, Hemang. Good afternoon. Good to see you in. Your view first on Kotak Mahindra Bank. We'll wait for the numbers. But if you talk about stocks that didn't move at all, and actually have underperformed the market, this is one name that comes to mind. Your view, what's the risk reward at around the 1,750 rupees?
So good afternoon, Nigel. I think for banks, the market is already working with very low expectations, and I think 75% of the banks have already kind of either given preview or they have already announced the numbers. And what is very clear is that there is not much of growth. The only good takeaway, as I see it, that there is no major, accident or, the credit cost related issues or slippages related issues, except maybe Axis Bank. So I think Kotak would be no different. We all know there are also restrictions that have been imposed by RBI on the new, client onboarding. So I think the street would focus more on when that ban could get lifted. So I think banks overall, we think that short term looks a bit dull, but from a valuation standpoint, surely looks quite okay. Either State Bank of India or maybe ICICI Bank, which has been consistently delivering. I think this is the time to kind of look at it from a, investment perspective.
Got it. Okay. All right. Let's talk about a couple of other names then, Hemang. What about Nazara Tech? There is some speculation that maybe, in fact, they're going to be doing some fundraise and, various names doing the rounds. What's your view on it? Actually, the stock ran away and then it's gone through a long phase of consolidation. Your view on the stock?
So, Nigel, not tracking this one, but there has been a talk of fundraise and a new investor coming into the company. Also, a bit of a GST relief that we saw for, Nazara and Delta Corp, but then it did not really make too much of an impact on the stock per se. So high beta stock, very niche company. So those who have an appetite for online gaming or, a little niche kind of a play, this could be a, stock to look at, but no coverage, no view as such.
Okay. All right. Got it. By the way, today, Macrotech Developers has had a pretty good session, and that's thanks to a note that came in from Kotak. I think pretty optimistic out there. And Macrotech, the last time I checked, was up about 5%. Yeah, 4.5%, 5% even now. Hemang, hi, good afternoon. Good to have you on. Thoughts on Macrotech or maybe DLF? I mean, any of the large developers that are benefiting from this boom in luxury housing. Do you think there's more to go on the upside?
I think these stocks have corrected, in the last, let's say, couple of months. And if you look at the Lodha Macrotech, I think the management is looking quite positive in terms of, the fresh sales, whatever guidance they put out. Palava has already seen land transactions at 120 million per acre. And overall, the sense is that, in some of the pockets like Pune, Bangalore, things can be a little better in terms of, the pricing and the fresh sales. So we do like this space, particularly the deeper correction that we have seen is providing a good entry point in names like Macrotech, maybe DLF, it would be definitely, it would make sense to go for these names.
Okay, all right. Got that. Hemang, stay on. Some more stocks to track. Aurobindo Pharma has been buzzing in trade after Investec initiated coverage on the stock. They have a high conviction, sort of outlook in the short term at least. We have Vinny joining in with the details. Stocks higher. What is Investec saying, Vinny?
So yes, Investec is positive on this one. Maybe a short-term idea saying high conviction, short-term idea is what they're indicating. Target price of 1,930 rupees per share. Now, they believe that second half of the year for FY25 would be better than the first half of the year. And that would lead and aid the re-rating for Aurobindo Pharma. Apart from that, they're highlighting that, rupee depreciation is what we've seen coming in. Now, for Aurobindo Pharma, most of the sales come in as export sales, and that is 80% of the contribution is exports. And out of that, more than 50% comes in from US export sales. So yes, considerable amount in terms of rupee depreciation. That is something that benefits Aurobindo Pharma. Other key highlights and points that actually turn out to be positive triggers for margin expansion going forward is something that they highlighted as well. One is the upcoming Pen-G ramp up. That is a positive one for Aurobindo Pharma. Normalizing of UGR sales, a stable as well as an improving US pricing outlook in terms of the pricing pressure we have seen in the recent times. That has been stable or started to see a bit of an improvement. So that is positive for Aurobindo Pharma and will lead to a margin expansion going forward. This will drive profitability for the company, and Investec is highlighting that this could possibly lead to a double-digit EBITDA CAGR growth is what one could expect going forward. So that's why positive cues coming in, and Aurobindo Pharma is around seeing a gain of around 2% in trade as of now.
Okay, all right. Do you track this one, Hemang, Aurobindo? Vinny, thank you for that.
Yeah, Prashant, in fact, this quarter, while we are all, struggling to find names where there can be, decent growth, pharma and healthcare would be one pocket where we are expecting about 18-19% kind of a growth. For Aurobindo also, we are looking at about 16% kind of a operating profit growth. The stock had actually corrected very recently. But I think when you look at the product pipeline, particularly on the US side, things are looking quite stable. So positive view on Aurobindo and some of the other names in pharma, maybe Lupin, Sun Pharma. I think quarterly numbers there are going to be quite decent.
All right. No, absolutely. I think the thing with Aurobindo, especially, with we don't know about tariffs, etc., is that if you look at Indian companies with actual manufacturing capacities in the US, I think Aurobindo will have the largest capacities, onshore in US, selling to the US market as opposed to sort of, making here and then selling into the US. Stocks, of course, corrected from 1,500-1,600 rupee levels, now finding a little bit of stability, up 2%. We'll take a quick commercial break here. There's, 11 minutes to go for market closing. Hemang is with us. See you on the other side.
When you started Kabaddi, you said you'd have to work 2 years and do a couple of films to be able to fund that.
Yes.
How much more do you need to do on the film side to be able to fund this?
Well, thankfully, I've moved on from that thought process. I realized about 2-3 years into Kabaddi and football that signing innumerable films to finance my love for sport and the business of sport was not something which I was very happy doing.
Or sustainable?
It is sustainable. It might not be a lot of fun. I started up my family office, I streamlined the finances. It's taken me about 7 years. But thankfully now...
You've got a healthy balance sheet to be able to fund this?
We have a balance sheet and allocated funds through my family office that I can run a sporting business. And I will turn heaven and earth upside down to make sure it's profitable.
So what's the path to profitability?
A conservative figure is 5 years. I'd like to try for 3.
Welcome back. 6 minutes for the day and the week to wind down, and the Nifty is nursing a cut of about 113 points. The culprits are the same, and that hasn't changed from the morning. Axis Bank's numbers have taken the whole banking sector down, and Infosys is weighing on the entire IT pack, 6% down on Infosys today. And Reliance has, of course, been the big batter of fighting on the top. Hemang, on IT, what is the positioning? Not just large cap, but we've got some mid cap numbers as well, right? We've heard from L&T Tech, we've heard from Mastech, and a bunch of others. Would you look at adding anything tactically to the portfolio, if not a medium-term sort of a portfolio pick, but just a tactical addition?
I think the only issue with the IT pack is that the stocks had run up, a lot before the numbers, and people had slightly, higher expectations about, the Trump being there, the IT sector in US looking good, discretionary spend on the, improvement, so on and so forth. The actual numbers, by and large, while the deal inflow has been good, when you look at the guidance per se, the upgrades have not been that great. There are some issues, relating to margins. So I think mid-cap is where one should be pinning the hopes, maybe Persistent, or Coforge. Let's see how they are, talking about their growth going ahead. Otherwise, in terms of large cap IT names, though the numbers are good, at this level, it doesn't really make sense to really make a fresh entry unless they correct significantly from here on.
By the way, I just want to point out that even for the mid-cap index, the gains are not sustaining. Let's pull up the mid-cap index chart. It's as choppy as the Nifty's chart today. And you can see now as we're getting towards the close, it's again coming towards the flat line. The gain is just about 0.2%. Now on the mid-cap index, though it's been a good day for PSUs. That's been the clear, hallmark of today's trading action. NBCC, Hoodco, RVNL, SJVN, entire gamut of stocks there on the PSU side. They've done well. PSE index retaining a bulk of those gains. Hemang, PSUs, maybe it's some cheer ahead of the budget. Hopefully, more capex announcements. Again, even if it's a trade, short-term trade, would you buy in anything on the PSU side?
Yeah, Surbhi, I think some of the defense names, HAL, PEL, are something that I would be comfortable, buying into, not only because of the budget per se, but they are kind of fundamentally looking quite good. There has been a, decent amount of order inflow operationally, doing pretty well. Stocks have corrected, so they do provide a good entry point. Also, some of the metal PSUs, Nalco in particular, even the way some of the base metal prices have recovered, I do think that Nalco also would be a good bet because, the stocks have corrected quite a lot, and from current price point, they do provide a good risk reward.
No, absolutely. And we'll have to kind of look at some of this stuff as we go along. I think you've got the moves coming through in some MFI names. I'm not sure. Names like Satin, if you can pull that up, that is moving up. I saw a sharp move on Satin Credit Care, but apart from that, none of the others really at this point in time. What else? Suntech is up a big mover, 8% gain today coming through. We were talking about real estate earlier, big correction in Suntech from 800 levels. It had dropped to about 450. And it's recovered about 10% from the recent lows, basically. Manappuram is another interesting one. It was part of Nimesh's chatter earlier. Again, I mean, a low in October was about $140, back to just 5 rupees short of 200 now. 4 days back, stock was at 170. So it's really starting to pick up a little bit after the damage it has seen. And of course, names like Aeroflex, which reported numbers day before yesterday evening, 10% yesterday and 8% today this morning, today as well. By the way, HAL, Bharat Dynamics, some of these defense companies are also doing quite well. Any thoughts on Manappuram specifically, Hemang?
Prashant, on and off, we do hear about the news that, one of the large investors could come in, maybe Bain Capital, and the management has already denied. I think this news came in November. The management has denied it, but you keep hearing in the market. I think it would be good to sort of wait for the actual news before, preempting it and then going through a bit of volatility. in terms of pure fundamentals, I do feel that some of the gold finance companies are better placed because we all know that, microfinance, unsecured loans, personal loans, there are issues and you don't know when the growth will come back. But I think these companies, both in terms of growth and asset quality and valuation, are better placed. So yes, Manappuram from a small allocation perspective is looking quite positive.
Okay, all right. Got that, Hemang. Thank you very much. We'll let you go on that note. Thanks for being with us. The week is ending. It's been a week of consolidation for the index. So the good news for the bulls is that at least the lows of the week have been protected and they've not been tested also. The last 3 days we've been consolidating, but roughly above the 23,100 mark. In fact, today the close is probably going to be closer to around the 23,200 mark. So let's take a look at where the problem was, because for what it's worth, Nifty is still down 100 points. Blame it on IT and banks. Infosys about 5.5% lower. It took down Wipro, Tech Mahindra, and a bunch of other IT stocks with it. HCL Tech was also lower. But the bigger problem for the market was the 1.5% slide on the bank Nifty. It started with the Axis Bank results. That stock is ending down 4.5%. But even the others, Kotak is down 2.5%. It reports numbers over the weekend. There's ICICI Bank, which is lower. There's SBI, which is lower as well. It was Reliance fighting on the other end of the spectrum. Gain is about 2.5% on Reliance. There's been some buying on commodity stocks like BPCL and Hindalco. Tata Steel also doing well. And L&T also managed some gains. So good counterweights on the other side. But overall, a range-bound week, Prashant, and a week that's going to be looking at some very interesting announcements, I guess, come Monday night.
Yes, I say it was in the morning. Consequential or not, we don't know. Entertaining it will be. Right? So, starting Monday, you'll start to hear announcements, and I think it'll be consequential as well because, after all, so much has been said and by incoming President Trump that he'll have to do stuff. How he does it is the question. Will it be everything on day one, or it'll be more gradual like what we had in 2017. If it's more gradual, I think the dollar sells off. If it is all on day one, I think you're looking at maybe the dollar skyrocketing even from where we are at this point in time, which is of course negative for emerging markets, etc. So that's essentially the setup. 23,200 is where we are finally closing out. It's a wrap on this edition of Closing Bell, but don't go anywhere. Just after a quick break, our special editors roundtable coming up.
The Nita Mukesh Ambani Cultural Centre has unveiled its latest offering, The Arts Cafe, a vision brought to life by Isha Ambani. This space is where art meets culinary excellence, offering a one-of-a-kind experience for both food and culture enthusiasts alike.
With its soothing natural shades, browns and beiges and art decor accents, the NMACC Arts Cafe designed by Gauri Khan radiates elegance. Situated on NMACC's third floor, the suitable entry points to the cafe are Gate 11 and 12. The stunning Cherry Blossom series by Damien Hirst greets visitors as the Arts Cafe experience gets underway. A grand 16-feet organic bar with a flowing wave-like design and an amazing skylight that lets in the sunshine make it the room's center point, exuding sophistication and calm, which further adds to its attractiveness. The cafe is one of the most alluring rooftop places in BKC with its large al fresco terrace, which offers sweeping views of the Fountain of Joy. For those looking for a more intimate experience, the cafe also features a beautiful 12-seater private dining area with a live kitchen, perfect for small parties and customized menus.
The Arts Cafe is more than just a meal. It's a harmonious blend of art, culture and cuisine, making it a must-visit addition to Mumbai's cultural landscape. In Mumbai, Zenia Barya.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
You look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting. Healthcare.
It's red across the Lal Street as it falls for the second straight week. The Nifty and the Sensex have seen cuts of over 3% in the last 2 weeks. IT stocks were the biggest laggards after they fell nearly 6% this week, its biggest weekly fall in nearly a year. On this week's edition of Editors Roundtable, we decode the week gone by on the Lal Street. We put the spotlight on India's jewelry sector. We tell you how IT companies fared and performed and what Trump swearing in means for tariffs. I'm Reema. With me are my editors Prashant, Nimesh and Nigel. And joining us here in the newsroom is Rahul Arora of Nirmal Bang Equities. Hi, good to be back.
Yes, thank you for having me.
So, I mean, calmer week, right?
Calmer.
I think last
Ready
week,
for the action next week.
Ready for the action. Actually, last week was same time. I was just looking at data. Markets were crashing and burning. The previous week, 2% cuts on the Nifty, mid-cap and small-cap indices were around 7%. This week has been very, very small. I mean, ranged, and I guess waiting for Mr. Trump.
Well, that's right. And in cricketing parlance, you'd say that it was a 5-day test. You know, it started off with the batting team getting absolutely badgered, but came back. Towards day 5, you said at least we survived, all of the 5 days, because going by Monday, Tuesday's action, you were getting very, very worried that it's going to be a rather tough week and maybe tough times ahead. But at least for this week, we, played out the innings, so to call it.
Actually, the Nifty is not giving the right picture. There was a lot of pullback in the broader market stocks. A lot of mid-cap names, small-cap names actually did very well. And then I was just looking at, because we put out so many brokerage notes, guess what? This week, in last 5 days, I've at least come across 15 to 17 IC reports on mid-cap names. So, looks like after the correction that we saw, a bit of interest is back, the sell-side interest is back, and even there is a bit of interest back from the larger institutions as well to look at this kind of mid and small cap names, which have actually corrected very sharply.
That is interesting, Nimesh. But are these all completely fresh names to sell side or
initiating reports?
But these are stocks on which somebody's initiating. Others have already have coverage.
There are few which have not been widely covered, but yeah, there are few which are known names as well, like Hyundai. A lot of FI brokerages are covering. In fact, today was a lock-in getting end for Hyundai. So I guess some bit of supply would get absorbed in the days to come. But a lot of mid-cap names I saw wherein there was a lot of interest from especially smaller brokers to go out and initiate coverage on
and
those
some
names.
Serious damage also, right? Kalyan, for example, I was just looking at the price 10 days now from the highs of 800 to 500 today. So that's 37-40% gone. So very, very sharp.
What about Rahul? How are you feeling about the markets? And thanks a lot for joining in, Rahul, first of all. And how are you feeling about the markets? I mean, if you were to give us a level in terms of the Nifty and the outlook for the remainder of the year, what do you be tilting towards? The large cap names instead of the mid caps?
I've been waiting for you to sort of come to me because when you mentioned cricket, it was almost like dukhti rath pe haath rakh diya. That was one analogy you shouldn't have given because it brings back horrid memories of the last few months.
The boys will bounce back. Boys will bounce back.
Yeah,
the girls are doing well.
Sorry, the girls are doing well.
Phenomenally well, yeah.
The 435 was good. But yeah, no, I think it's very difficult to take a directional call right now. I think you mentioned Trump a little earlier. You've just about started an earnings season. You have a union budget in a few days, and then followed 1 week post that with the first credit policy under the new RBI governor. So I think to take a directional call at this time could be a bit suicidal, to be very honest, because we don't know how all these are going to pan out. I don't know whether the impact of Trump is going to be so immediate and sudden as people are making it out to be. I mean, of course, he is very pro-tariffs and we saw that in his first term, but I think that will probably play itself out with time. But I think the bigger, cue for us, if the last quarter's results were anything to go by, would be earnings, I think, will still eventually dominate this market because, I was just talking to our economist. She doesn't expect too much to happen in this budget. I think, you still look at about 4.5% fiscal deficit for next year. I think at best you'll get one rate cut this fiscal year. So I think there is nothing that's going to move the market in a material way. And given the way the economy is shaped up, I don't think the government has too much room to tinker on the income tax front as people are expecting. So I think it's going to be an earnings-centric quarter. And of course, I think as the quarter bears on, you'll probably see more, from Trump. But I think for the next 15, 20 days, taking a directional call will be very tough. I think it's going to be a very challenging year. I think it's going to be a very volatile year. You're probably going to be at 22,000 on the lower end and 26, 27 on the upper end. It's probably going to be the range, but it's going to be very violent, I think, in that range. So it's about a 4,000-5,000 broad, point range on the Nifty. But as Nimesh Bhai was talking, I think there's going to be enough opportunities that come out. I think you just have to wait and see what time you believe your stocks are right. Because, as somebody, as a late investor once told me, there'll always be stocks expensive at the at the lowest point of the market, and there'll be stocks cheap at the highest point of the market. You just have to know where to look for those ideas.
You guys were talking about cricket and boys are doing poorly and girls are doing well. I thought you were talking about my kids. A boy and a girl. Boys will bounce back. Girls are doing well. But I think that's a story we all know, right? Girls always do well. So.
That's how Azhar used to talk. I think post-match press con. The boys.
I can do that for you post the show. Yeah.
But talking about
Rahul, you spoke about earnings, right? That's going to be a big theme. Was Q2 a blip, or do you think there is a structural slowdown? What is your take on Q3 and Q4?
So I think, Nimesh Bhai, the one thing that is clearly a demarcated difference between Q2 and Q3 is I think a lot of the reactions that you have seen in Q3 are basis guidance and commentary. I think Q2 was on actuals. I think if you went on actuals, you would see very different reactions to stock prices even in this quarter's earnings. But I think consumption is in a massive slowdown. I think there is no question about that as far as staples are concerned. If you looked at the commentary that came out from LTIMindtree, HCL Tech, I mean, if you exclude TCS, for example, the commentary hasn't been all that great. I think even for Infi, the ask rate is a negative number for the fourth quarter, if anything, at that point. I think if there was any extra move to come on Reliance, it would have come and gone today. So I think when you look at the Nifty per se, I think 75% is BFSI, IT, consumer and Reliance, right? I think Axis Bank was not the best start for the banking sector. And I think even in our own coverage universe, if you look at public-private together, I think we're expecting about a 6 to 9% kind of growth on the NIs and the sort of profit before provisioning, the PPOP number that you talk about. NIMs are under pressure. So if 75% of the market, I mean, if you exclude Reliance, because like I said, if it had to do anything more, it would have done it today, and it's predominantly been driven by retail. But I think consumer, IT and banks have question marks. And in that backdrop, to take a very aggressive call on results. I think, Nimesh Bhai, one thing that I'm clear about after seeing Q2 and just the start of Q3's earnings, we're still in an earnings downgrade cycle. So let's not move away from that. I think at the end of this result season as well, you'll probably see more stocks getting downgraded than upgraded. So in that call, to take a very sort of, structurally bullish call on the market seems a bit difficult.
In fact, let's talk about IT and then come in a little more detail. So what we've seen so far since the beginning of the earnings season, that's including TCS's numbers, and TCS reacted positively, and then you had violent downward moves in HCL Tech and Infosys. The Nifty IT index has slipped nearly 2.5% since the earnings began. Now, Q3 numbers were largely in line with expectations. There was a little bit of a pickup in growth. So if you pull up the year-on-year growth rates for the mid-cap, for the large-cap IT companies, we're looking at a mid-single-digit kind of a revenue growth. Infi at 6, TCS at 4.5, HCL Tech at 4.1%. But this is better than Q3 of last year. So there is a recovery taking place. But the question that even Rahul was talking about is that these are companies which are seeing a mid to high single-digit revenue growth. Pull up the FY26 and FY27 forecast for Infi, HCL Tech and TCS, the numbers which are out. And on an average, analysts are expecting about an 8 to 9% revenue growth for these companies in FY26 and FY27. So therefore, So if the expectation is for a high single-digit kind of revenue growth, what is the valuation you should ascribe to them? Because right now, even after the little bit of a correction, valuations is still higher than the 5-year average valuation multiple. So TCS is, now closer to 28 times. The last 5-year average would be 27 times. Infi is at 25, 26 times. The last 5-year average would be 24 times. So should you be paying higher multiples for a sector which is, seeing a high single-digit kind of a revenue growth? That said, as we pointed out, there is a recovery. There is a slow and steady recovery taking place. Companies like TCS, LTIMindtree are calling out FY26 to be a better year. HCL Tech acknowledged discretionary spending is better than what it was 3 months ago. And BFSI vertical is bouncing back. In the case of LTIMindtree or even TCS, if you pull up the numbers across the board, for the last 4 or 5 quarters, you are seeing a steady pickup in BFSI, and that is a powerful tap. But for now, at least, Rahul, on IT, there are no EPS upgrades, nor are there downgrades on an average so far. What's the investor positioning? Because they did well over the last 2 years.
So I think, Rima, for both IT as well as consumer, I don't see sustained visibility of double-digit top-line growth. Now, the only question is what valuations do you want to play? Because consumer companies grow at 1.5 to 2 times the valuations of IT companies. So large-cap IT will broadly be between 25 to about 28, 29. Consumer will probably be anywhere between 40 to 50, 55, right? So I think the question is, and it comes back to the point of, are you paying for growth or are you just paying for something because it's relatively cheap, right? And if you're paying for growth, then these are not going to be very exciting. So you either give a very large margin expansion, right? And for that, I think the rupee will have to play a very big role because I think a couple of the IT companies, as you pointed out, have actually spoken about client ramp downs happening in some cases, some one-off, some pass-throughs that have happened from FY24 into FY25. So the barring TCS, which has about a $10.2 billion, TCB, which is about 1.4 times to bill, that kind of confidence is not coming elsewhere. And a little bit of the movement that you have seen could also be positioning, where people have actually moved into TCS after these results from some of these stocks. So it could actually be a technical move within the sector that you have seen. But I think the cream here, and it goes back to the point that Nimesh was making a little earlier on large cap versus mid caps. I still think the Coforges and the Persistence of the world will still continue to give you those growths of 20-25%, and that's probably where money will continue to sort of chase. Yes. And that's why for some years now you've seen the disparity in valuations between large cap IT and mid cap, but that comes back to the point, and if I reference it to consumer, it's consumer discretionary versus consumer staples. It's the exact same thing playing out, where you have companies that are going at 50, 55, 60 times. Let's take a look at United Spirits pre this report that came out of the US that was linking drinking to cancer, and then the change in CEO. It was at 1,700 rupees. It wasn't a cheap stock. It was a great stock. But then again, if you compare it to staples, there is a 25-30% valuation gap. So I think it's best to probably stay with TCS basis all that we have seen. And if you were to take a call on mid caps, I think probably Persistent and Coforge, LTIMindtree could sort of be places to hide. But apart from that, I wouldn't venture into being a sort of, on basis what we've heard, it wouldn't be like a 200-300 basis point overweight sector for me for sure at this point.
Usually the IT names are like 10% trading moves, right? Through the quarter. It's been that way for the last 2 years.
Yep.
Results day and maybe something slow through the rest of the quarter. But generally just a trading kind of thing. The other thing is with what's happening in the US next week and BFSI being, I think all the bank earnings have come and they've all been pretty good. And I don't know, at least they could trade up on sentiment if, there are measures announced which really juice up the US economy. And that could be one sector people latch on to, you think?
No, for sure. I think, Prashant, the TCV has to get converted to revenue. That's the only thing.
So on sentiment,
yeah, so I think on sentiment, we could even argue on rupee, right? Correct. Effectively, because I was just speaking to my economist and I was asking her, what can the rupee potentially go to next year? She said 88, 89. So, on sentiment, yes, but then it comes back to the point that you made about trading. Now, see, the other thing, Prashant, is these are all, Rima can correct me if I'm wrong, but I think these are all like around 35% kind of ROE, ROC companies. So they're not like, consumer companies that are giving you 75, 80 or even 100%. Lever was at 100% before it made the acquisition and adjusted for goodwill came down. But I think that is also the play that you have. This is such a large differential. Both are very cash-rich sectors. Yeah. Both, they will go in for, from time to time, they'll go in for buybacks or they'll, give you extra dividend and so on and so forth. But the core question is, as a shareholder, you want to go in and buy a piece of the business. Is that really growing? If you're just playing it for the ancillaries, it will continue to be just a trade. I mean, optically, lever at 22,300 or 2,400 is a great stock to buy. You know, it was at 3,000, but do I necessarily need to buy it?
Yeah.
You know, on the hope of a rain coming, or on the hope of rural, or on the hope of Manrega. So these are all, I think, that there is peripheral noise. But I think if you actually get into a situation where, say, a TCS or an Infi or a Lever or, you know, some of the other consumer staple companies come and say, okay, we're growing at 12-13%, you'd be surprised these stocks could potentially even double from here. I don't think valuations, especially in IT, are that demanding.
Actually, you know, IT and AI, etc. I don't know if you saw Goldman CEO essentially saying that 90%, and this ties in with your investment banking also, is that 90% of a company's prospectus when they come to the IPO can be done now with AI. I mean, that's the Goldman CEO. So I mean, we're talking about very large disruption coming.
We started using it in our research reports. You know, we send out an AI-generated report every morning of, you know, for people who don't want to go through those volumes of paper.
Right.
We actually send out an AI-generated report every morning.
And IT companies are also passing on the benefit. So at least in the case of LTI Mindtree, what they said is the generative AI-related productivity benefits were passed on to their top client. And that is something that hurt them. So they've done it only for their top client right now because it's an important one. You don't want to lose it. But who knows, right? What if all those productivity benefits are passed on and the companies don't get to retain them?
And some haven't hiked wages. That's the other thing. Some haven't even taken the wage increases. So
well, Rahul, since you spoke about, you know, companies that will grow in double digits or mid-teens, I'll tell you what, we'll focus on a couple of those stocks. We'll slip into a short break. You come back, we'll focus on the jewelry theme. And Prashant as well will be telling us some more with regard to what are the expectations from President Trump, who takes office next week itself. Stay tuned.
It's a good space. It's not obviously high beta, but basically, I think globally there is a need to reduce healthcare costs because governments are very leveraged. There is aging population, and India has obviously got great strength in terms of generic drugs or medical tourism or whatever. I mean, bulls are very tired on insurance because last 3-4 years, we've kept getting hit by some regulation or the other. I do feel that mutual funds are more efficient as a savings vehicle than insurance. But having said that, there is obviously need for long-term savings, which insurance is an avenue for. Yeah, so we have a bit both.
Welcome back. You're watching Editor's Roundtable, and it's now time to put the spotlight on the jewelry stocks. This is the week, at least for the last few weeks, Kalyan Jewellers has seen a very sharp drop. So in this backdrop, one wonders whether Titan is the only game in town.
Well, you know, before we get to the jewelry space, I think for many times we have seen in the markets, you're searching for the next big HDFC bank. You know, at times, IndusInd Bank's valuation went towards that, and then again, it moved away. In the past, we've seen Kitex Garments. You know, that one ran up. Valuations got very, very hefty, and then it cooled off again. And the other one, the recent example is Titan as well as Kalyan, which gives you that question whether form is temporary, but class is permanent. Let me explain it in further detail. And that's where we focus on the jewelry theme itself, because it appears, at least as of now, that in the jewelry theme, maybe Titan is all that glitters, and that could be the reason why it trades at these sort of multiples. But let's pull up that piece first with regard to valuations. You know, you have Kalyan. That, in fact, you know, the valuation moved up, and at one point of time on a valuation basis, well, it was more expensive even than Titan. And from there, you know, it's come back down post this recent correction. But that's the kind of run-up that we saw on the stock price, and that's why it made it rather expensive. And in the past, we've seen various companies. They promised they're going to be the next big theme, whether it was PC Jewelers, Gitanjali Gems, you had Tara Jewels, all of them, they glittered for a little bit, but they deceived ultimately. And that's why Titan, it seems, gets that sort of a multiple. So all that glitters, is it just Titan? Titan trades at around 65 times or thereabouts. And time and again, people say, well, it's not trading cheap. But does it deserve that sort of a multiple? A few factors at play. One, Titan, it appears it's acquainted with trust. Whether it's a shareholder, whether it's with regard to the customer, you normally associate Titan with the high pedigree, the good management out there. Next up, you want to be in a sector which has a tailwind. And the jewelry sector, it seems it has that sort of a tailwind because it's at around a 5 lakh crore in terms of a total market size. Organized players, well, they are at around 40%, but in the last 6 years, that organized share as a percentage of the market has moved up. So you have the industry tailwind because the industry has grown by around 8 to 9% in the last 6 years and is expected to grow at a faster clip from here on. And you have the additional tailwind of unorganized moving to organized. And Titan, it seems they have the ability to adapt to the customer. Started off as a watches company, went into jewelry, then they were targeting the youth. They are also into IVM. And of late, they've made a couple of inorganic acquisitions, case in point being Carrot Lane, and also trying to focus on the ethnic part of business, the sari part of business via Taneria. Short point is the ability to adapt to what the customer wants is something that makes them stand out. And if you look at all those industries that they were in, there's a large unorganized market, which makes a case for them to further penetrate just by the pure shift of unorganized to organized. Now, you're talking about growth, and everyone's wondering, what about growth? Since the industry is going to grow, well, Titan will also participate in that growth. And currently, it has around 8% of the market, and they've indicated they want to go to double digits. And in 2022, they said they want to double the base, the jewelry revenue base, by 2027. Last few years, they've done very, very well. So now they need to do maybe mid-teens to get to that number. In an economy which is growing by mid-single digits, 5 to around 7%, depending on what kind of estimates you're working with, this one's going to grow at around 15 to 20%. So the question is Titan the only stock that people want to play from the jewelry space? Going by past records, it appears all that glitters is Titan. Rahul, I wanted your view on this one. Titan, the stock has corrected, I think, close to around 15% from the recent peak. And time and again, everyone's been searching for the next Titan, whether it's the few IPOs that we saw, whether it's with regard to Tara, PC Jewelers, Kalyan Jewelers. What's your view on it? You wanted something that will grow in that mid-teens. Here's a sector that will grow hopefully in mid-teens. Your view on it?
It's been relatively insulated, you would have to say. I think while the rest of the consumer pack has struggled, we were discussing discretionary earlier. But our view has been pretty clear, Nigel, from day one. I think if you want to play this space, it's only Titan. And I think even if you look at, I just want to tie this into a stat with the banking sector credit growth. If you see the maximum credit growth that's there in the banking sector, it's actually loan against gold. That's actually been growing at 40-50%. And this is not a one month or a 1 quarter phenomenon. It's been there for a while. So I think when you have that kind of an appetite in the market, agri industry, services, consumer, retail, housing, everything has come off. It's all like in that range of between 9 to 14-15%. But you have in some months where, if you look at the sectoral deployment of credit, loan against gold is going up by almost 40-50%. And as you rightly pointed out, it's a very famous phrase from a movie. Sometimes it's easier to get to the top than actually stay at the top. And I think over a period of time, what happens, I think initially, Nigel, is when you in a sector where you have only one player, when a few others emerge, people are ready to give it the benefit of doubt to just, diversify. We saw that, when Jubilant and Westlife were the only listed players, and you had Devyani's and Sapphires and the others coming along, and so on and so forth in the EMS space. But I think eventually what's been tested and, I think the one important thing that you mentioned was the trust factor. And, close to where I stay, and I was just telling Nimesh this, I was like, if you go on a weekend to the Churchgate Tanish shop, and it really has nothing to do with festive, right? Now, but you do technically say we're in the middle of wedding season. Weddings are pretty much happening all year round. It has a couple of competitor shops around, some of the names that you brought up, and it'll just tell you where people are flocking. I mean, just if you go on the street and see. So I think right now demand is insular. I think Titan was asked on its con call a couple of quarters back, दुनिया इधर की उधर हो गई है, आपके डिमांड पे इम्पैक्ट क्यों नहीं आ रहा है? इज लाइक जो 1.5-2 लाख की ज्वेलरी खरीद रहा है उसको इतनी इम्पैक्ट नहीं मिल रही, नहीं दिख रहा अभी तक. So that goes, feeds into that entire consumer discretionary. And why venture out when you have a proven track record? At some point it'll peter off when consumer discretionary as a space peters off. But I think the fascination with gold in India is still a very real thing, and I gave you banking data to support it. So if you have to be invested in one stock in this sector, it should be Titan. On a lighter note, I hope that watch that you showed is being given. If you've had a good year, that comes to you as a bonus. But that's a very, very smart watch you showed on your graphic there.
We live in hope. But
also, thankfully, no lab-grown gold yet. No diamonds, but no gold.
Okay, but let's get to the big event, right? That's on Monday. Donald Trump is all set to be sworn in as the 47th President of the United States. What does this mean, right? We've been talking about tariffs now for the last few months.
As Elon Musk tweeted, success, we don't know, entertainment is guaranteed, right? Let me actually go across to the wall and just put out some points here, which will give you a sense of what are we looking at. So I'll start with what has he said during campaigning, during the period of campaigning. I mean, just the basics. He said, well, he'll impose tariffs on all imports ranging between 10 and 20%. He said on China, import tariffs could be between 10 to 60%. And he also then sort of lately said 25% tariffs on Canada and Mexico on day one. This is what he said. So there are two things, the scale of the tariffs and how the tariffs will be actually implemented. I've just sort of divided this into four parts. One is we see a repeat of 2017. And what was 2017? US negotiated but did not act aggressively. Actually, the effective tariff rate in 2017-18 period only went up 18%. This is during Trump 1.0. What happened during this period? The renminbi depreciated 14% versus the US dollar. The dollar index was up 11% in this particular period. I think a repeat of 2017 is unlikely because, he's obviously promised much more. He has the experience of his previous term. And his base wants it. I mean, he's swept the polls, and I think 2017, expecting a 2017 perhaps is a low probability chance. We'll see something bigger. The number two is sort of probability is gradual implementation of tariffs. Here, naturally, I mean, if you sort of, go back and forth, it gives you more leverage in negotiations versus sort of putting the full size of the tariffs on day one, optionality to increase or decrease the rate of hikes as one goes on. But how will markets react? There is a clue, because on the 13th of January, there were headlines that in news reports which were later denied. But these are like, balloons, trial balloons floated, maybe, I don't know. But how did markets react to that headline? The headline was that Trump's team was studying monthly small tariff hikes of between 2 and 5%. The dollar sold off very, very sharply, very, very quickly. So if this happens, which is a gradual monthly increase or whatever, probably we see the dollar coming off sharply. Number three is targeted industry tariffs. So, tariffs on Canadian autos, lumber, Chinese machinery, electronics, etc., etc. This perhaps is the most complicated of the lot because, markets will have to go to every isolated tariff on this product or that industry, and it's going to be harder to kind of decipher. Also, lots of speculation around who could be next, retaliation, etc., etc. Again here, if this is the case, it will be considered mild because, again, on the 6th of January, there was a news report which suggested exactly this, which is it's not going to be on all imports into the US, it's going to be targeted. What happened? The dollar sold off very, very quickly. So, we know we have markets react, at least the macro markets reacting to these headlines, and so we know what will cause the dollar to go up and what will cause the dollar to go down. And of course, we come to the last one, which will be the most severe, which is all the big guns out on day one, big tariffs on day one. And I think this would see significant adverse market impact across asset classes. And of course, I think the dollar could skyrocket on tariffs, inflation concerns, etc. So these are the four things. We know it will happen. It won't be mild, but will it be severe on day one, all out on day one? I think that's the thing we are sort of yet not clear about, and we'll know Monday evening. Back to you guys.
Well, nice caption, Prashant. Trump, the tariff king. Interesting data there. But out of time completely on this edition of Editors Roundtable. Thank you very much for watching. Enjoy your Friday evening and the weekend. But stay with CNBC-TV18 for more news and updates.
General insurers, life insurers, and the tech platforms around it. But yes, it's been it has needed a lot of patience.
Or 16.2 that we've got, and I do see Q4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee base. Medium term, we are reiterating our aspiration to get to $2 billion and 17 to 18% EBIT levels. Our pipeline is better than what it was the same time last year as well as last quarter. if you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year.
I think it's going to be, I believe, not a very high return market, to be honest, the next few quarters. The thing is, rather than forecasting anything, the biggest thing is last 3-5 years have been solid in terms of returns. Obviously, valuations are high. And two is, as you pointed out, we're entering a phase where the world's largest economy is going to see a fairly radical regime change. We don't know what exactly will happen in terms of dollar strength, yuan weakness, trade tariffs, etc. So there is a lot of uncertainty, and the valuations are probably, on an aggregate, not reflective of that uncertainty. But having said that, I think there is value at polar opposites of the market. I think a lot of tier 2, tier 3 financials are almost at distress valuation. And I believe
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market snaps a 3-day winning streak, ends in the red for the second week in a row. IT stocks along with financials drag the benchmark indices in trade today. Reliance Industries lifts the Nifty, which ends just above 23,200. Wipro posts healthy numbers in Q3. Constant currency revenue growth comes in at 0.1% higher than its guidance. Also announces a change in capital allocation policy to increase employee payout to 70% or more of 3-year profit. 2 weeks ago, for the union budget, the finance ministry is actively looking at sweeteners under the new income tax regime to boost consumption demand. Sources say options of hike in the standard deduction limit and tweaks in the tax slabs are on the cards. That's an exclusive. Cabinet grants approval for refarming idle spectrum available with multiple ministries. This will help allocate 687 megahertz of excess spectrum to telecom companies for better 5G and 6G rollouts. Prime Minister Modi opens India's biggest auto show, pitches it as an investment destination, says India's EV market will grow 8-fold by 2030. 34 manufacturers showcase over 100 new launches to the public. Israeli media reports the cabinet is set to vote on the much-anticipated Gaza ceasefire deal today, even as the country's far-right security minister threatens to quit if the deal goes through. Trump says the ceasefire deal had better be done before he takes oath on Monday. New US H-1B visa norms kick in from today. Recent changes mean employers will have to pay 70% more for beneficiaries on H-1B petitions, and will see a significant escalation in the wage bill and legal costs. Indian IT giants, however, say that their dependence on H-1B visas has reduced significantly since they focus more on local hiring and leveraging technological advances. India's highest sporting honour for Olympic medalist Manu Bhaker, chess prodigy Gukesh and hockey player Harmanpreet Singh and Paralympic gold medalist Praveen Kumar. President Murmu confers the Major Dhyan Chand Khel Ratna Awards on them. 32 athletes received the Arjuna Awards. All of that is coming up for you, but first to the market action of the day. They snapped the 3-day winning streak, ending in the red for the second week in a row. IT stocks along with financials dragged the markets lower today. Prashant is standing by now to take us through the market action, but that's the story. It is red across the board. 1,000-point cut on the Nifty IT. Nifty banged down by about 750 points, 430 points low on the Sensex, and the Nifty down by about 100 points. Closing in the red for the week, Prashant.
Well, if you remember, same time last Friday, we were talking about how brutal a week it was. Indices, frontline indices had corrected between 2 and 3%. Small cap index last week was down 7.5%. This week, much smaller, just in terms of ranges, so as to speak. The Nifty down about 1, Bank Nifty down 0.5%. Mid cap and small cap indices Friday to Friday actually almost unchanged, but slightly in the green, just under about 0.25% higher each. And I think this was, good news, but you could also make the point that there was no great recovery as such. We are in a bit of a holding period, and that's the way the market is traded going into next week, which is a big one. I'll get to that in just a bit. But let me just recap today's action. The Nifty up on your screen, the Nifty Bank. Nifty Bank, of course, has been the much more weaker of the two indices. On the downside, the lows to track really is what were made in the beginning of the week, which is Monday's lows for the Nifty and the Nifty Bank. Both are, of course, not there yet, even despite today's correction. Mid-cap and small-cap indices, a little better. Broader market breadth was more evened out, 1:1 overall market breadth. On the large caps, gains coming through in Reliance Industries in response to numbers. BPCL did well. Hindalco, Coal India, these are all resource companies. Bharat Electronics and Nestle were the other two which looked okay. Losses in Infosys, Axis Bank, both reacting to numbers. Shriram Finance, Kotak Bank, Mahindra & Mahindra and ICICI Bank were some of the others. Kotak, of course, reports numbers over the weekend. In the broader market, lots of gainers, but smaller names. But, you know, we've kind of sort of sorted this with volume. BLS was the number one volume-led gainer. HAL had a decent day. Aeroflex was up 20 yesterday, another 10 today. NBCC, Bharat Dynamics, GSFC, Bajaj Healthcare, big move. I mean, last 4-5 days now. And I think it was up over 15% today. Hindustan Copper, Manappuram was a mover, 6%. Ashapura Mindchem, MFI, company like Satin was also up sharply on very large volumes. Cuts, well, Kalyan continues to lose. It's the big damage we've seen over the course of the last 5, 6, 10 days. 6% gone today again. Policy Bazaar has continued to sell off. SW Solar, 10 higher yesterday and reversed most of it today. Yatharth Hospitals, Shakti Pumps, Aegis Logistics, PG Electroplast and K Fintech were some of the other names which saw some profit booking. It's all really going down to the wire in terms of what Trump will do when he takes office Monday evening. Late evening is when that will happen. US markets are shut then, but news flow will be abundant, which we'll be reacting to. And of course, top of mind is the scale of tariffs and how those tariffs will be implemented. The dollar could meaningfully move one way or the other, which of course consequently will be important for assets like equities, etc. as well. So that's a setup as we look forward to that big session on Monday. Back to you.
Prashant, many thanks for joining us. And of course, the Trump inauguration, all eyes will be on that, and we will bring you special coverage right here on CNBC-TV18. But let's talk about the money market. The rupee remains steady against the dollar in trade today. However, $1 still costs about 87 rupees. The RBI has liberalized key regulations under the Foreign Exchange Management Act. This will boost the use of the Indian currency in global trade. Overseas branches of authorized dealer banks will now be able to open INR accounts for non-residents. Meanwhile, Indian exports can also open foreign currency accounts overseas to receive export proceeds and use them to pay for imports. Let's shift focus to China. The country's economy expanded by 5.4% in Q4, beating market expectations. This has been the fastest pace of growth in 6 quarters. The government's fiscal stimulus has turbocharged activity in the last quarter of 2024. According to China's National Statistics Bureau, the country's full-year GDP growth expanded to 5%, in line with the government's target. Similarly, December retail sales and industrial output expanded on an annualized basis on the back of stimulus measures. On to CNBC-TV18 exclusive. With just 2 weeks to go for the union budget, the finance ministry is actively looking at sweeteners under the new income tax regime. Sources tell us that a hike in the standard deduction limit and tweaks in the tax slabs are being considered. Timsy standing by with more. Timsy, what kind of relief can we expect or hope for?
Well, that's right. What we are given to understand from sources is that the government currently is actively considering personal income tax breaks to spur consumption demand and to boost the economy. Government currently is studying 2 options on tax breaks, and any decision will look to make only the new tax regime more attractive, is what sources say. Now, some of the options that are there on the cards for a tax relief. Firstly, option 1, to increase the standard deduction limit from 75,000 rupees per annum, which is the current limit, anything up till 1 lakh rupees, and it could be in any proportion, either 75 to be made 80, 85, 90, 95, or even 1 lakh rupees per annum. That is something that is yet to be decided. Secondly, this particular option is to move the slabs in the new tax regime. Now, here government is considering 2 options. Firstly, to expand the 20% tax slab to cover income between 12 lakh and 18 lakh rupees, or even going beyond 18 lakh rupees till 20 lakh rupees. Remember, currently this slab is 12 lakh to 15 lakh rupees, where the tax rate is 20%. And then as a follow-up to this, since the 20% slab will move, follow-up will be the movement on the 30% slab as well, which is also an option where it feels that then as a follow-up, 18 lakh rupees or 20 lakh rupees and above could be the income bracket for the higher tax rate, that is of 30%, which currently is at 15 lakh plus. So let's see what happens finally, because sources indicated that government believes tax breaks will mean more disposable income. It will boost the spending power. Plus, this increased spending power by the common man will help recovery in both direct taxes and GST collections. But just to remind our viewers that a final call on the tax break proposals will be taken up by both Finance Ministry and PMO only closer to the budget. It is taken only 1 or 2 days before the budget, and email queries sent to the North Block on this particular story have remained unanswered. So let's see what Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
All right, Timsy, many thanks for joining us. Now, the Cabinet has approved the refarming of idle spectrum available with multiple ministries. This will help allocate 687 megahertz of excess spectrum to telecom companies for better rollout of 5G and 6G services. Ashmit is standing by with more. Ashmit, take us to the implications of this move for the telecom sector.
Well, a big leg up in terms of spectrum availability. Bear in mind that the current spectrum that is currently available is 900 megahertz. This is far short of the 2000 megahertz that has been prescribed by the industry. That's what the industry is saying, that the industry will require 2000 megahertz by 2030. So clearly a big deficit there, 1100 megahertz. Now, this was a consideration that was placed before the DOT, subsequently before the Cabinet. The question that was raised is that a number of ministries, the likes of Defence, INB, ISRO, have spectrum assigned to them for administrative purposes. The question asked was, is it being used efficiently or is it lying idle? The question is, a vast amount of spectrum, 687 megahertz to be specific, has been lying idle, and the decision has been made, approved now by the Cabinet, that this 687 megahertz of spectrum, which is lying with various government departments and ministries, can be farmed back to the DOT, which takes the total available spectrum from 900 all the way up to almost 1600 megahertz, but subject to two caveats. Number one, this farming back of 687 megahertz will not happen in one go. It will happen in a staggered fashion till 2028. And even then, the question then remains that there is still a deficit of north of 400 megahertz. That is something Jyotiraditya Scindia today assured that is something that the government is working on and will meet that 2000 megahertz target by 2030.
All right, Ashmit, many thanks for joining us. Let's talk about the big earnings of the day. Wipro announced a healthy set of numbers for Q3, meeting street expectations on all parameters. Constant currency revenue growth came in at 0.1%. That's higher than its guidance. It also announced a change in its capital allocation policy to increase the payout to 70% or more of 3-year profit. Well, that's Wipro for you. And here's another CNBC-TV18 exclusive. The Mahindra Group has received 104 crore rupees as incentive claims for FY24 under the Auto PLI scheme. Sources tell us that the incentive claims were for the sale of electric 3-wheeler cargo and passenger vehicles. At least 6 workers have been trapped after a coal hopper collapsed at Dalmia Bharat cement plant in Orissa. The company said that some workers are still unaccounted for. It added that the coal hopper was being operated by a third-party vendor. The large iron structure was being used to service a captive power plant at the facility. Food delivery giant Zomato has withdrawn its decision to impose an extra fee for vegetarian food deliveries. Now, this comes after a user on LinkedIn criticized the policy, calling it Zomato's latest masterstroke. CEO Dipinder Goyal apologized on LinkedIn, saying, and I quote, "This is absolutely stupid on our part. I'm super sorry for this. The charge will be removed today itself." End of quote. Logistics service provider Delivery has launched Rapid Commerce, a 2-hour delivery service for brands to fulfill order deliveries faster. The service, which was started in Bengaluru, is processing 300 deliveries a day. Speaking to CNBC-TV18, the Chief Operating Officer Ajit Pai said the firm will expand the service to other metros in the coming months. Take a look.
Objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned, and we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
Well, that's Delivery. Now, Prime Minister Modi kicked off India's biggest auto show in Delhi and pitched India as an investment destination. About 34 manufacturers showcasing over 100 new launches to the public. Maruti Suzuki unveiled its first electric vehicle, the e-Vitara. The SUV will be launched in March and will be manufactured at Suzuki's Gujarat plant. Hyundai Motor launched the new Creta Electric, which will be priced at about 18 lakh rupees. The SUV offers a range of up to 473 kilometers on a single go. Suzuki Motorcycle India unveiled its first electric scooter, the
the Access along with the Flex Fuel Sports Bike. The Access offers a top speed of 71 kilometers per hour and comes with a portable charger. Speaking at the expo, the Prime Minister said the country's EV market will grow 8-fold by 2030.
अनुमान है कि इस दशक के अंत तक भारत में इलेक्ट्रिक व्हीकल्स की संख्या 8 गुना तक बढ़ सकती है। ये दिखाता है कि इस सेगमेंट में आपके लिए कितनी ज्यादा संभावनाएं बढ़ रही है। अपने तीसरे टर्म में हम पीएम ई ड्राइव स्कीम लेकर आए हैं। इसके तहत 2 व्हीलर, 3 व्हीलर, ई एम्बुलेंस, ई ट्रक ऐसे करीब 28 लाख ईवीज खरीदने के लिए मदद दी जाएगी। करीब 14,000 इलेक्ट्रिक बसें भी खरीदी जाएगी।
Well, that's the Prime Minister at the Auto Expo. We will head into a break, but up next, Israeli cabinet is set to vote on the much-anticipated Gaza ceasefire deal today. That and more when we return.
Secured lending will still be okay because in general we are a reasonably high inflation economy, so the asset values keep inflating, and a lot of the tier 2 private banks, PSU banks are at book or below. So I think there is a risk reward opportunity there. I think there is a risk reward in metals at this point of time. And on the other side, when you look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies I think still are very interesting.
Israeli media reports that the cabinet is set to vote on the much-anticipated Gaza ceasefire deal today. This even as the country's far-right security minister threatened to quit if the deal goes through. NBC News' Danielle joins us from Tel Aviv. Danielle, will the ceasefire deal meet the cabinet's approval?
It is widely expected to go ahead. Of course, this meeting and this vote was expected yesterday morning. There's been a 24-hour delay. The Israeli government saying yesterday that Hamas was making last-minute concessions. The Israeli line was that there were a few issues, among them the identities of the Palestinian prisoners to be released in exchange for the hostages, something that Hamas denied, saying that they were still committed to the agreement. Critics of Benjamin Netanyahu's government were saying that this was the prime minister scrambling to keep his fragile coalition together after his far-right national security minister Itamar Ben-Gvir threatened to quit if this ceasefire deal goes ahead. So he will not be supporting it. But even without Ben-Gvir's support, this vote and this deal can proceed. And so, as you mentioned, they are meeting today. The exact timings is still to be clarified exactly, but after this, the government then needs to vote. Now, this is usually done in person, but in the last hour or so, the Minister of Internal Affairs is now asking the government to do this vote over the phone. So that things can proceed more quickly, because if this government vote, as it's been reported in Israeli media, only happens tomorrow, you know what will happen, that the ceasefire that was supposed to start on Sunday will then be moved by a day to Monday, because don't forget, there is now the issue of the Israeli public being given 48 hours to appeal or submit an objection to the Supreme Court in terms of which Palestinian prisoners are to be released. So they need to be given this chance. But for the family members of the hostages, there is frustration that for the sake of bureaucracy and formalities, this can take an extra day or two.
Daniel there reporting from Tel Aviv. Now, short video streaming platform TikTok may go fully dark in the US on Sunday. That is the day when the deadline for its Chinese owner to divest its ownership or cease operations comes to an end. Existing users would be legally able to continue using TikTok, but the app would become unusable over time. A White House spokesperson said outgoing President Joe Biden had no plans to intervene in the matter. This means that the ball is now in President Trump's court, and his administration has to take a call on whether they want TikTok to continue their operations in the US.
TikTok is getting ready to shut its US operations on Sunday when a federal ban is set to take effect. That's according to Reuters sources. A law signed in April mandates the ban unless Chinese owner ByteDance divests US operations for the social media platform. Policymakers in Washington say the app is a threat to national security because of its vast troves of data on 170 million American users. That's something the firm has always denied. Now, users who already have the app could theoretically still use TikTok after the ban. However, the law also bars US companies from providing services to distribute, maintain, or update it. Donald Trump could yet have a say in the matter, though.
You know, I have a warm spot in my heart for TikTok because I won youth by 34 points.
The president-elect is due to be sworn in a day after the ban takes effect. The Washington Post says he is considering issuing an executive order to suspend a shutdown for 60 to 90 days. There was no immediate comment from the Trump transition team, and the man himself has said he should have time after taking office to pursue a resolution to the issue. Speaking on Fox News, incoming National Security Advisor Mike Waltz called TikTok a fantastic platform. He said the new administration would find a way to preserve it while also protecting people's data. A White House spokesman said President Joe Biden had no plans to intervene in the matter during his final days in office. Meanwhile, the Supreme Court is weighing an appeal from ByteDance, but legal experts say justices look minded to uphold the ban. The Reuters sources say TikTok will allow US users to download all their data before the app goes offline there. But users around the world could also face a shutdown, with the app reliant on hundreds of data service providers located within the United States, who soon won't be able to work with it.
Well, the countdown is on. What will be the future for TikTok? All will be revealed perhaps by Sunday. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
am now announcing a comprehensive review of the Income Tax Act 1961. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%. I propose to abolish the so-called angel tax for all classes of investors for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees.
The budget of July 2024 will be remembered for the mega tax changes that the Modi government set in motion as it embarked on its third term. The rationalization of the capital gains tax regime did happen, but along with an increase in the tax rates. The common man did get some relief, but only in the new default income tax regime. The controversial angel tax was abolished and taxation of buybacks was streamlined. So what will Finance Minister Nirmala Sitharaman have in store for taxpayers and the country in Budget 2025? Hello and welcome to the Budget Countdown. I am your host Surabhi Upadhyay, and over the next half hour, I'll have with me a panel of experts to discuss the broad contours, the broad expectations that we have from this year's budget. Well, to start off with, an update on the review of the Income Tax Act itself is widely anticipated. This is something that the Finance Minister had announced in the July budget with a 6-month timeline. Now, while the review of the IT Act is not expected to really usher in any major changes in the tax rates per se, the exercise is expected to remove redundancies in the 1961 Act, making the language perhaps more simpler and concise. Now, let me quickly list out 5 major expectations from this budget. First, spurring consumption. While the noise around the economic slowdown is getting very loud, experts don't expect any major reduction in personal income tax rates, and the sweeteners, if at all, would probably be only in the new default tax regime. Of course, the usual asks around higher reductions for home loans, as well as the health insurance piece, the premiums there, and the popular Section 80C, all of those continue. Now coming to the second major expectation, spurring manufacturing. Tax experts say that this can be done by bringing back the concessional 15% rate of income tax for new manufacturing companies, and also perhaps offering more incentives and deductions for R&D, as well as new plant and machinery capex, which is undertaken by manufacturing firms. There is also a suggestion of reducing the tax rate for MSMEs and perhaps for smaller companies from the prevailing rates of nearly 25%. Expectation number 3, attracting investments. The financial world is hoping that tax exemptions that are enjoyed by sovereign wealth funds and pension funds that are investing in the Indian infrastructure sector, that they will be perhaps extended. The market also awaits more investment-friendly measures that can transform GIFT City into a truly thriving international financial hub. Request number 4 is on capital gains tax. Now, given the IPO frenzy in the market, some sections are urging the finance minister to make the capital gains tax regime more favorable for companies that are heading for listing by reducing the holding period definition for long-term from 2 years to 1 year. The mutual fund industry, by the way, is of course hoping that some tax benefits are restored to debt mutual funds as well. The fifth and the final expectation is reducing tax litigation. The tax world is hoping that after the capital gains tax regime, the FM now moves to streamline and simplify the withholding tax regime by reducing the number of TDS rates to just say 3 or 4 major rates. Industry is also hoping that the FM makes the safe harbor rules more attractive and widely applicable to reduce tax litigation. So there you have it, a broad framework of what the big asks are across the industry. Let me now welcome in our panel of experts to give us some more insights into all of this. Samir Gupta, National Tax Leader at EY, is joining in. Samir, so good to have you with us in the studios. Thanks for coming in. We also have with us Bijal Ajinkya, Senior Partner at Khetan and Company. Bijal, welcome to the show. Thanks for joining in. And we have with us Sunil Badala, Head of Tax at KPMG India. Thank you so much, ladies and gentlemen, for joining in.
Thank
you. That's
an
exhaustive kind of a primer that I had to put out there for our viewers. But I want to get your big picture assumption first. If you look at this budget, what will the headline be, Samir?
No, look, I think that, as you've seen even in the past, the government has been working on a sustained economic development program, right? So you have your investment-driven growth regime. You have, a lot happening on fiscal consolidation. I think the big thing will be around tax simplification. And I think they're going to continue down that journey. So 2 points from my perspective. One, our tax GDP ratio is still at 18.1, center plus state. And, we are already moving up the ranks in terms of growth in terms of economies. So if we really want to be a large economy and be in the top 3, we need to get where everyone else is, which is 30% plus. So a moderate tax policy regime with minimization of litigation. I think those would be the 2 big imperatives of the government going forward.
Okay, directionally that could be sort of...
I think so. I think that's where it will be.
The big sort of move to undertake. Bijal, what do you think the headline is going to be? Evening 1st of February. Tax headline.
So I think further rationalization and simplification of the tax laws, as well as a new regime vis-a-vis litigation, because the amount of litigation and the pending litigation itself really requires a lot more of, streamlining and a real boost to both manufacturing sector as well as to just infrastructure.
We want it all, don't we? Lesser litigation, boost manufacturing, boost the economy. Got it. Sunil, headline for you.
So agreeing with, Samir and Bijal, I think there'll be minimum changes in this budget, given that obviously there'll be mention of the overall simplification of the new tax code. And in light of that, I think there will be just bare minimum changes.
Okay. Actually, let's start right there. This announcement that was made in July of reviewing the Income Tax Act itself. What is the need, Samir, and can there be some changes in the rates as part of the simplification? What are you watching out for?
Look, I think that if you just step back, right, to maybe 2017-18 era, right, as we know, there was a new direct tax code on the anvils. There was a committee set up, the work happened, and a report was submitted. Now, what we've seen progressively, some elements of that has already been brought in, like the whole deemed dividend taxation move from company to shareholder.
Yes.
Many of those things were, encapsulated in that code. So a lot of the big things, I think, have been picked up probably from there. And therefore, the current situation is that the current act continues, but we still need to deal with a lot of, legacy matters which are there in that, which is where the FM said last time that, okay, if we're staying with the act, then let's look at simplification in terms of, reducing litigation, reducing compliance, and taking out redundant provisions and simplifying the language.
Sure.
So there's a lot of things over there that they can really do. For instance, capital gains, right?
Yeah.
They've touched it last year and they brought in a lot of reform. Maybe they come up with a new chapter on that, which is a simple chapter to read with. Now, that's a lot to ask for, but if you say from a wish list point of view, we should be getting to that kind of an outcome eventually.
Basically codified in the Act itself, so it's very clear, simple, and sort of concise.
Exactly, because those were the stated objectives even when the earlier committee was set up.
Sure.
So elements of those could come in, and then, there are redundant sections like there are some sections which talk about royalty, referencing back to the industrial policy era. So, those are just lying around in the Direct Tax Act. So I think if those can be done away with, we can definitely have a more concise and user-friendly act.
Bijal, you mentioned reducing tax litigation, and I think this is a number that I picked up, Samir, from your team, the notes that your team put together, that I think in FY24, it's stuck in my head, 31 lakh crore rupees stuck in litigation.
Almost 9.5% of India's GDP.
Unbelievable. Almost 9.5% of India's GDP stuck in litigation in courts of appeals here and there. So, Bijal, what could be the recipe? I mean, I remember in July, there was this Vivad Se Vishwas scheme announced for 2024. I don't know, if is it really, a big starting point or not? Or what else needs to be done to just reduce litigation?
So I would say one definitely is having more of a machinery, amongst just, income tax officers, Commissioner of Income Tax Appeals, etc. Increasing the number of benches hearing that. So I would say it's just really having more manpower at that level. And of course, perhaps having a system wherein at the Tribunal, High Court, Supreme Court, there is a timeline within which, from filing to hearing, there is a conclusion within a particular period of time. And perhaps that's something which should be done. We did have something in the Authority for Advanced Ruling when we did have it. At that point in time, there was a 6-month period from which the advanced ruling had to actually be provided. So perhaps some sort of a timeline does need to be set in so that there is much more clarity and certainty.
See, Bijal represents a legal firm, and even she's arguing for lesser litigation because probably there's so much work, right, with so many cases stuck at various tribunals here and there.
Sorry, but just to supplement what you said, Bijal. So I think if you look at our number of appeals that are pending, the maximum appeals which are currently pending is with the Commissioner Appeals, right? So out of 6 lakhs odd, 5 lakh plus appeals are pending with the Commissioner Appeals. So, just like you mentioned, there is a time frame within which Authority for Advanced Ruling has to hand out the decision. There has to be some time frame for the Commissioner Appeals as well.
Right. So it should be made time-bound basically to quickly dispose of the cases. Got that point. Okay, gentlemen, now let's start going step by step in terms of the bigger asks, right? And I'm going to break this down into the big ask, let's say, for consumer, for consumption, for manufacturing, and so on and so forth, and of course, financial services. For consumers, Sunil, there's this crying, sort of debate around a slowdown in the country. So therefore, I think the expectations are running high. In fact, we'll just put up some of the, the graphics that our team is picking up. Our, Delhi colleagues are saying that there could be some tweaks on the personal income tax front. But yes, it will probably be limited only to the new tax regime. What would your prescription be? If demand has to be given a boost, how can it be done through tax policy?
So I agree. I think the changes will be only in the new regime because obviously the government's intention is very clear that they do want to phase out the old regime. But in order to boost the consumption, I think the simplest thing that you can do is obviously give more money in the hands of the taxpayers, and you can do it two ways. One is, of course, increase the basic exemption limit, or
which was already done in the July budget.
Done,
the sweeteners were there in July, so you expect 6 months later
but
they'll again do it?
You can do more.
Okay.
I'm just saying that that's one way of doing it.
Sure.
I kind of, in my mind at least, thinking that government may not go down that path simply because it will reduce the tax base, because the government intention is always to widen the tax base, right? So they may probably not change the basic exemption limit, but I think they can definitely look at giving more tax rebate. So right now the tax rebate is 25,000 rupees, which ensures that if you have an income up to 7 lakh rupees, you don't pay any tax. Now that might go to, let's say, 35 or 45,000, which actually gives you an opportunity to not pay tax up to 8 lakhs or 9 lakhs rupees of your income. Plus, I think there will be some tweaking in the slab rates. So let's say, currently you have 20% applicable up to 15 lakh rupees, and
this is all in the new regime. In the new regime.
Under the new regime. I don't think there will be any changes.
Anything in the old regime. So we can just, I'll still ask for those who are in the old regime. And there's a large community out there, people who do have home loans and they want to be in the old regime because you have that 24D where you get, the reduction on the interest and part of ATC, whatever you get some reduction on the principal. Is there any hope, Samir, for the rest of us?
Look, I'll go back to the principles. I think, like I said, moderate tax policy is one of the stated objectives of the government. So now that they've pivoted towards a concessional tax regime, they genuinely want everyone to, align to that. So I think all the focus is going to be that on that, really.
So maybe hike the, like he's saying, one is that you can hike the rebate, maybe the deduction?
Maybe, so the deduction, and then you could also, like standard deduction is there, they did increase it, so, that can go up a bit more. But I think there are some more ticklish issues, if I may just mention, that, for instance, one, there is this whole thing about interest on PF, on the employee contributions. Anything above 2.5 lakhs, there is a TDS on accrual, even though you're not withdrawing the interest or your balance. So that should definitely move to whenever you withdraw. So that is one thing. And ESOPs is a big thing, right? Today, as you know, the way the law is written, that there is a TDS that arises at the time when you are exercising your options, even though you may not be selling the shares. So it's like a dry tax. And you may be selling a couple of years down the line when more value is created. So why should you be paying the tax at that point in time?
But you've not sold the shares.
You've not sold the shares. So you may accrue the TDS, but collect it at a later stage when you sell. I think some of those things can definitely be a very good outcome. To benefit everyone.
Fair. So that's on the broader sort of consumption boost. Bijal, anything you'd like to add to this? Anything else to boost consumption? That's the first ask.
Yeah, I would agree with Sunil that, increasing the base exemption, from the 7 lakhs will actually definitely be a big boost. Perhaps at that level, we can also look at having, some higher deduction for FD interest rates. Because, that's where really you're looking at the masses actually, investing. So, that's something which they could perhaps do.
Which is stuck at, I think, 10,000 rupees, right? That's the only, that's the reduction you get.
Absolutely. And perhaps some of the rebates which are otherwise available. One is, of course, PPF. The other could be like on insurance premium. That's something which is really looking out for.
Absolutely. So let's see if the common man indeed gets some sort of a further breather in Budget 2025. Now let's talk about corporate India and manufacturing, which is very, very clearly a huge push for the Modi government. Always has been through all the terms, including, of course, the third one. Now here, our colleagues are again picking up, Tim C from Delhi is picking up, that perhaps the scheme for new manufacturing companies, which was offering a concessional tax rate of 15%, perhaps that scheme could be brought back, but with a higher rate of tax. Instead of 15, maybe the tax rate goes up to 18%. That's sort of the chatter out there at this point in time. So I want to ask you, Samir, apart from this, I mean, first of all, how successful was this scheme for new manufacturing companies? And aside of bringing this back, is there anything else that could be done?
No, I would say that, look, it was partly successful. I won't say that, everyone was, getting out, capex out over there. I think it was applicable in certain situations. And of course, people did take benefit of it. The only thing I would say is that if you look again at the macro picture, perhaps given where the rupee is headed and, to boost investments into India, long-term investments, if you're trying to start tinkering around with, getting more foreign investments, this can be a very nice package along with that. Sure. So you have PLI on one side, which is anyway being given very nuanced to sectors for resilient India. But then along with that, a concessional tax rate, if I may put it that way, for manufacturing can definitely help us. But the only thing I would add is that, and this debate is out there as to, why only manufacturing, why not for services and trading also?
Yeah.
If you look at the way the GDP is panning out, right? We need to bring manufacturing up, but really it's services and trading that's really holding it up.
Yeah.
So, why not give them also a booster? I mean, this is definitely going to be as an ask.
That could be a thought, absolutely. Why only manufacturing? Why not services as well? So, real quick, 30 seconds before we take a break on this.
So, okay, I would say in addition to what, Samir mentioned, obviously this concessional rate is applicable only for the new manufacturing companies, right? Correct. Why not, broaden the impact and also allow, let's say, some kind of an investment allowance deduction that we used to have, decades ago, where let's say if you buy, a new plant and machinery for, say, 100 crores or, in excess of that, you get a deduction of 15% over and above the depreciation.
Well, this is great. So basically, really spur private capex. We keep crying saying the private capex cycle is not picking up. Incentivize people to set up newer plants and machinery, right?
Absolutely. So you don't have to set up a new manufacturing facility, but just expand.
Just capex. If you're even expanding and investing in plant and machinery, there could be some tax deductions. Let's see. It's a thought. We do have to take a very quick break, but we come back on the other side. What do the markets want? The financial markets from Budget 2025, is it all done with the capital gains tax changes in July, or is there more coming? We discuss this after the break.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? how you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right. Yeah. You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to
Welcome back. You're with us on the Budget Countdown, and we have a full house of tax experts here to decode what Budget 2025 might have in store for us, the common taxpayer, and of course the country at large, and the financial markets of the country, which is exactly what we're going to talk about now with our experts over here. So, you know, Samir, so many headlines happened in July, and I think the markets weren't even prepared for it. And the markets digested it really well, this 10% moving to 12.5%, right? Long-term capital gains. Are there any outstanding outlier issues on capital gains that need to be addressed?
So I would just pick one. Actually, there are a few, but I'll just pick one of them. You know, this is to do with the offer for securities, you know, the OFS concept. When a company is going in for listing, correct, the existing shareholders, the promoters can offer those shares as part of the IPO process.
Sure. Sure.
Now, the way,
and a lot of OFS has been happening.
Absolutely.
The market's been elevated, so people have been selling.
230 public issues and all of that, and you know the data is all out there.
Yeah.
So I would just say that these securities, right, are otherwise treated as listed securities.
Okay.
So even though they're unlisted, they're treated as listed, and the reason is that you know a full STT is collected on them.
Okay.
So as you know, when you buy and sell on the market, there's a 10 basis point either pays.
Right.
In this situation, the seller pays 20 basis point as an OFS product. So the 2-year window, which is there currently for unlisted, because this is like a listed security, they need to rationalize that and make it 1 year. I think that's a big ask from a lot of the companies which are going for IPO.
So you're saying that anyone who has been a shareholder pre-listing,
yes,
right now they need to be a shareholder for 2 years to get the benefit of long-term.
For long-term, correct.
Okay. So if that can be brought down
that's
to
we rationalized and made it similar to, you know, the existing listed 1-year term that is there.
Okay. So
that's one of the big asks that is there still.
Okay. Okay. All right. Bijal, anything from a, you know, from an sort of investments perspective, capital market perspective that you want to see?
So I would just say two more in addition to what Samir mentioned. One is, you know, we've done a great job on rationalizing the capital gains tax rate for listed long-term gains. Perhaps we can have a rationalization even for short-term.
Okay.
Because we have different rates which apply for, you know, whether it's listed, whether it's unlisted, or for that matter, whether it's any other asset.
Sure.
So perhaps that's one. The other would just be, you know, vis-a-vis what is considered long-term and short-term, the period of holding.
Yeah.
We have a 1 year, 2 year, 3 years.
Sure.
It's just too complicated. We could perhaps just look at a simplification with just one period of holding itself.
So, you know, Sunil, comment on this. I don't want to connect the dots because I track the stock market as well. So I know, I mean, FPIs are leaving for different reasons and not tax. But I don't know, considering how the mood in the market is, do you at all expect any thinking on the tax front to look at not just more FDI coming into India, but maybe even, you know, make it more attractive for the FPIs that have been rushing to New York, it seems.
Absolutely. No, so, okay, I mean, Surabhi, that could be for you know, a variety of
other
reasons. Yeah, as well.
Yeah.
If you ask me personally, I'm not expecting any major changes now. But yes, if, you know, if you ask me whether the FPIs are actually expecting, yes, they are expecting maybe a couple of things.
Okay.
One is they really find the revised rates of tax, both for long-term and short-term, little higher.
Oh, this is the feedback that you've been
getting. Yeah, I mean, because they were used to paying, you know, lower, you know, tax. Also, I think, you know, I know this is a big ask, but in my view, I mean, logical ask, because, you know, they know that historically, if you look at when the STT was introduced, the whole idea was that because long-term capital gains were exempted and short-term capital gains were taxed at a lower rate.
Okay.
Now that we have actually made long-term capital gains taxable and increase the tax rate on short-term capital gains, is there a case for removing STT?
Wow. Okay. That would be a big headline, right?
Absolutely.
But those STT collections have been growing pretty well. So
very robust.
It is, but it is still like couple of percentage of the overall tax collections. So
okay.
So I don't know whether that is something
Samir is smiling.
we should consider. No, I know.
I think if you want to contain fiscal deficit, they're going to count every rupee. So
every rupee counts. Yeah, and that too, if you have to give any sort of giveaways on the personal income tax side, then maybe you need to do your math. Okay, very quickly, we're sort of rushing through final expectations on GIFT City. Again, a stated government intent of making it a thriving international financial center. What are the outstanding issues or anything remaining that needs to be done there, Samir?
No, so 2 or 3 quick ones. I'll just say, like you rightly said, they want to make it a global financial hub, right? So they've done a bunch of things on the banking side, non-banking side. I think 2 things resonate. One is to the earlier question around, FDI. I think if they can promote how it can become, a global holding structure, right, for companies, right? There are a lot of companies which invest in India as well. India outbound companies which have holding company structures, right? Okay. So that migration to GIFT, if that can be made tax neutral. So
right now there is a tax involved if you're shifting that structure to GIFT.
So these are Indian company shares.
Okay.
The moment you move the holding company structure from a foreign jurisdiction to GIFT, there will be Indian tax because it's CGT. So can you give that one-time, exemption on that, just as they've given the fund industry?
Sure.
And the other is, today the banking units can issue ODIs, as it's called, on the Indian market, and there is no tax on the ODI holder.
Okay.
That needs to be extended to, the non-banking units as well.
Because there are a lot of non-banks that are setting up,
there are AIFs that are setting up,
GIFT,
absolutely. So I think that definitely needs to see
if
the
you
light
want to have the whole ecosystem sort of come up.
Absolutely.
Final thoughts, ladies and gentlemen, I want to talk about this whole rationalization of the TDS and TCS rates, because I remember every year I speak to you all and we talk about how there are some 30+ rates in terms of withholding tax. What are the recommendations and how feasible is it, Sunil, to bring 30 rates down to maybe 2 or 3?
It is absolutely feasible.
Okay.
Actually, today there are 30+ provisions. Okay. 9 multiple TDS rates applicable for the payments to residents and 12 different rates of TDS for payments to non-residents.
Okay.
So, of course, you can actually bring it down to just 3 or 4 different rates. Okay. So, I mean, that's point number 1. Point number 2, I think there are a lot of these threshold limits that you have in each of these TDS, provisions, starting from as low as rupees 5,000. I think that needs to significantly go up.
Okay.
And I think there are a lot of other terms and conditions.
Sure.
So this whole thing is making very confusing and complicated. So I think there is a big opportunity for government to actually rationalize the TDS provisions.
TDS, capital gains is done, maybe TDS should be the next one.
Yeah.
Final word, Samir, what will the headline be? Again, the same question I asked Bijal. What will the headline, you think, be on the 1st of February by the evening when we're done with the budget? Tax headline.
I think it would say, tax simplification 2.0. I think something like that.
Lovely. That would be, I think, very well received by the entire fraternity. Thank you very much, all 3 of you, for coming in here and helping us sort of make sense of the broad budget expectations and the roadmap that the industry is looking forward to. Thanks for joining.
Thank you for having us.
Thank you.
Well, that's it. It's a wrap on this special edition of Budget Countdown. We'll see you again with more conversations in the course of the next few days.
Till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So, just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there, and then I.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market snaps a three-day winning streak, ends in the red for the second week in a row. IT stocks along with financials drag the benchmark indices in trade today. Reliance Industries lifts the Nifty, which ends just above 23,200. Wipro posts healthy numbers in Q3. Constant currency revenue growth comes in at 0.1% higher than its guidance. Also announces a change in capital allocation policy to increase employee payout to 70% or more of 3-year profit. 2 weeks ago, for the union budget, the finance ministry is actively looking at sweeteners under the new income tax regime to boost consumption demand. Sources say options of hike in the standard deduction limit and tweaks in the tax slabs are on the cards. That's an exclusive. Cabinet grants approval for refarming idle spectrum available with multiple ministries. This will help allocate 687 megahertz of excess spectrum to telecom companies for better 5G and 6G rollouts. Prime Minister Modi opens India's biggest auto show, pitches it as an investment destination, says India's EV market will grow 8-fold by 2030. 34 manufacturers showcase over 100 new launches to the public. Israeli media reports the cabinet is set to vote on the much-anticipated Gaza ceasefire deal today, even as the country's far-right security minister threatens to quit if the deal goes through. Trump says the ceasefire deal had better be done before he takes oath on Monday. New US H-1B visa norms kick in from today. Recent changes mean employers will have to pay 70% more for beneficiaries on H-1B petitions, and will see a significant escalation in the wage bill and legal costs. Indian IT giants, however, say that their dependence on H-1B visas has reduced significantly since they focus more on local hiring and leveraging technological advances. India's highest sporting honour for Olympic medalist Manu Bhaker, chess prodigy Gukesh and hockey player Harmanpreet Singh and Paralympic gold medalist Praveen Kumar. President Murmu confers the Major Dhyan Chand Khel Ratna Awards on them. 32 athletes received the Arjuna Awards. All of that is coming up for you, but first to the market action of the day. They snapped the three-day winning streak, ending in the red for the second week in a row. IT stocks along with financials dragged the markets lower today. Prashant is standing by now to take us through the market action, but that's the story. It is red across the board. 1,000-point cut on the Nifty IT. Nifty banged down by about 750 points, 430 points low on the Sensex, and the Nifty down by about 100 points. Closing in the red for the week, Prashant.
Well, if you remember, same time last Friday, we were talking about how brutal a week it was. Indices, frontline indices had corrected between 2 and 3%. Small cap index last week was down 7.5%. This week, much smaller, just in terms of ranges, so as to speak. The Nifty down about 1, Bank Nifty down 0.5%. Mid cap and small cap indices Friday to Friday actually almost unchanged, but slightly in the green, just under about 0.25% higher each. And I think this was, good news, but you could also make the point that there was no great recovery as such. We are in a bit of a holding period, and that's the way the market is traded going into next week, which is a big one. I'll get to that in just a bit. But let me just recap today's action. The Nifty up on your screen, the Nifty Bank. Nifty Bank, of course, has been the much more weaker of the two indices. On the downside, the lows to track really is what were made in the beginning of the week, which is Monday's lows for the Nifty and the Nifty Bank. Both are, of course, not there yet, even despite today's correction. Mid-cap and small-cap indices, a little better. Broader market breadth was more evened out, 1:1 overall market breadth. On the large caps, gains coming through in Reliance Industries in response to numbers. BPCL did well. Hindalco, Coal India, these are all resource companies. Bharat Electronics and Nestle were the other two which looked okay. Losses in Infosys, Axis Bank, both reacting to numbers. Shriram Finance, Kotak Bank, Mahindra & Mahindra and ICICI Bank were some of the others. Kotak, of course, reports numbers over the weekend. In the broader market, lots of gainers, but smaller names. But, you know, we've kind of sort of sorted this with volume. BLS was the number one volume-led gainer. HAL had a decent day. Aeroflex was up 20 yesterday, another 10 today. NBCC, Bharat Dynamics, GSFC, Bajaj Healthcare, big move. I mean, last 4-5 days now, and I think it was up over 15% today. Hindustan Copper, Manappuram was a mover, 6%. Ashapura Mindchem, MFI, company like Satin was also up sharply on very large volumes. Cuts, well, Kalyan continues to lose. It's the big sort of, you know, damage we've seen over the course of the last 5, 6, 10 days. 6% gone today again. Policy Bazaar has continued to sell off. SW Solar, 10 higher yesterday and reversed most of it today. Yatharth Hospitals, Shakti Pumps, Aegis Logistics, PG Electroplast and K Fintech were some of the other names which saw some profit booking. It's all really going down to the wire in terms of what Trump will do when he takes office Monday evening. Late evening is when that will happen. US markets are shut then, but news flow will be abundant, which we'll be reacting to. And of course, top of mind is the scale of tariffs and how those tariffs will be implemented. The dollar could meaningfully move one way or the other, which of course consequently will be important for assets like equities, etc. as well. So that's the setup as we look forward to that big session on Monday. Back to you.
Prashant, many thanks for joining us. And of course, the Trump inauguration, all eyes will be on that, and we will bring you special coverage right here on CNBC-TV18. But let's talk about the money market. The rupee remains steady against the dollar in trade today. However, $1 still costs about 87 rupees. The RBI has liberalized key regulations under the Foreign Exchange Management Act. This will boost the use of the Indian currency in global trade. Overseas branches of authorized dealer banks will now be able to open INR accounts for non-residents. Meanwhile, Indian exports can also open foreign currency accounts overseas to receive export proceeds and use them to pay for imports. Let's shift focus to China. The country's economy expanded by 5.4% in Q4, beating market expectations. This has been the fastest pace of growth in 6 quarters. The government's fiscal stimulus has turbocharged activity in the last quarter of 2024. According to China's National Statistics Bureau, the country's full-year GDP growth expanded to 5%, in line with the government's target. Similarly, December retail sales and industrial output expanded on an annualized basis on the back of stimulus measures. On to CNBC-TV18 exclusive. With just 2 weeks to go for the union budget, the finance ministry is actively looking at sweeteners under the new income tax regime. Sources tell us that a hike in the standard deduction limit and tweaks in the tax slabs are being considered. Timsy standing by with more. Timsy, what kind of relief can we expect or hope for?
Well, that's right. What we are given to understand from sources is that the government currently is actively considering personal income tax breaks to spur consumption demand and to boost the economy. Government currently is studying 2 options on tax breaks, and any decision will look to make only the new tax regime more attractive, is what sources say. Now, some of the options that are there on the cards for a tax relief. Firstly, option 1, to increase the standard deduction limit from 75,000 rupees per annum, which is the current limit, anything up till 1 lakh rupees, and it could be in any proportion, either 75 to be made 80, 85, 90, 95, or even 1 lakh rupees per annum. That is something that is yet to be decided. Secondly, this particular option is to move the slabs in the new tax regime. Now, here government is considering 2 options. Firstly, to expand the 20% tax slab to cover income between 12 lakh and 18 lakh rupees, or even going beyond 18 lakh rupees till 20 lakh rupees. Remember, currently this slab is 12 lakh to 15 lakh rupees, where the tax rate is 20%. And then as a follow-up to this, since the 20% slab will move, follow-up will be the movement on the 30% slab as well, which is also an option, where it feels that then as a follow-up, 18 lakh rupees or 20 lakh rupees and above could be the income bracket for the higher tax rate, that is of 30%, which currently is at 15 lakh plus. So let's see what happens finally, because sources indicated that government believes tax breaks will mean more disposable income. It will boost the spending power. Plus, this increased spending power by the common man will help recovery in both direct taxes and GST collections. But just to remind our viewers that a final call on the tax break proposals will be taken up by both Finance Ministry and PMO only closer to the budget, it has taken only 1 or 2 days before the budget, and email queries sent to the North Block on this particular story have remained unanswered. So let's see what Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
All right, Timsy, many thanks for joining us. Now, the Cabinet has approved the refarming of idle spectrum available with multiple ministries. This will help allocate 687 megahertz of excess spectrum to telecom companies for better rollout of 5G and 6G services. Ashmit is standing by with more. Ashmit, take us to the implications of this move for the telecom sector.
Well, a big leg up in terms of spectrum availability. Bear in mind that the current spectrum that is currently available is 900 megahertz. This is far short of the 2000 megahertz that has been prescribed by the industry. That's what the industry is saying, that the industry will require 2000 megahertz by 2030. So clearly a big deficit there, 1100 megahertz. Now, this was a consideration that was placed before the DOT, subsequently before the Cabinet. The question that was raised is that a number of ministries, the likes of Defence, INB, ISRO, have spectrum assigned to them for administrative purposes. The question asked was, is it being used efficiently or is it lying idle? The question is, a vast amount of spectrum, 687 megahertz to be specific, has been lying idle, and the decision has been made, approved now by the Cabinet, that this 687 megahertz of spectrum, which is lying with various government departments and ministries, can be farmed back to the DOT, which takes the total available spectrum from 900 all the way up to almost 1600 megahertz, but subject to two caveats. Number one, this farming back of 687 megahertz will not happen in one go. It will happen in a staggered fashion till 2028. And even then, the question then remains that there is still a deficit of north of 400 megahertz. That is something Jyotiraditya Scindia today assured that is something that the government is working on and will meet that 2000 megahertz target by 2030.
All right, Ashmit, many thanks for joining us. Let's talk about the big earnings of the day. Wipro announced a healthy set of numbers for Q3, meeting street expectations on all parameters. Constant currency revenue growth came in at 0.1%. That's higher than its guidance. It also announced a change in its capital allocation policy to increase the payout to 70% or more of three-year profit. Well, that's Wipro for you. And here's another CNBC-TV18 exclusive. The Mahindra Group has received 104 crore rupees as incentive claims for FY24 under the Auto PLI scheme. Sources tell us that the incentive claims were for the sale of electric three-wheeler cargo and passenger vehicles. At least 6 workers have been trapped after a coal hopper collapsed at Dalmia Bharat cement plant in Odisha. The company said that some workers are still unaccounted for. It added that the coal hopper was being operated by a third-party vendor. The large iron structure was being used to service a captive power plant at the facility. Food delivery giant Zomato has withdrawn its decision to impose an extra fee for vegetarian food deliveries. Now, this comes after a user on LinkedIn criticized the policy, calling it Zomato's latest masterstroke. CEO Dipinder Goyal apologized on LinkedIn, saying, and I quote, "This is absolutely stupid on our part. I'm super sorry for this. The charge will be removed today itself." End of quote. Logistics service provider Delivery has launched Rapid Commerce, a 2-hour delivery service for brands to fulfill order deliveries faster. The service, which was started in Bengaluru, is processing 300 deliveries a day. Speaking to CNBC-TV18, the Chief Operating Officer Ajit Pai said the firm will expand the service to other metros in the coming months. Take a look.
Objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned, and we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
Well, that's Delivery. Now, Prime Minister Modi kicked off India's biggest auto show in Delhi and pitched India as an investment destination. About 34 manufacturers showcasing over 100 new launches to the public. Maruti Suzuki unveiled its first electric vehicle, the e-Vitara. The SUV will be launched in March and will be manufactured at Suzuki's Gujarat plant. Hyundai Motor launched the new Creta Electric, which will be priced at about 18 lakh rupees. The SUV offers a range of up to 473 kilometers on a single go. Suzuki Motorcycle India unveiled its first electric scooter, the e-Access, along with a flex fuel sports bike. The e-Access offers a top speed of 71 kilometers per hour and comes with a portable charger. Speaking at the expo, the Prime Minister said the country's EV market will grow 8-fold by 2030.
अनुमान है कि इस दशक के अंत तक भारत में इलेक्ट्रिक व्हीकल्स की संख्या 8 गुना तक बढ़ सकती है। ये दिखाता है कि इस सेगमेंट में आपके लिए कितनी ज्यादा संभावनाएं बढ़ रही है। अपने तीसरे टर्म में हम पीएम ई ड्राइव स्कीम लेकर आए हैं। इसके तहत 2 व्हीलर, 3 व्हीलर, ई एम्बुलेंस, ई ट्रक ऐसे करीब 28 लाख ईवीज खरीदने के लिए मदद दी जाएगी। करीब 14,000 इलेक्ट्रिक बसें भी खरीदी जाएगी।
Well, that's the Prime Minister at the Auto Expo. We will head into a break, but up next, Israeli cabinet is set to vote on the much-anticipated Gaza ceasefire deal today. That and more when we return.
But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently I think, not recently but Tokyo I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
even
harder.
I think the belief is very, very important. Just believe in yourself.
Bibi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, you know, how many hours ever it is, I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, you know, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do?
Israeli media reports that the cabinet is set to vote on the much-anticipated Gaza ceasefire deal today. This even as the country's far-right security minister threatened to quit if the deal goes through. NBC News' Danielle joins us from Tel Aviv. Danielle, will the ceasefire deal meet the cabinet's approval?
It is widely expected to go ahead. Of course, this meeting and this vote was expected yesterday morning. There's been a 24-hour delay. The Israeli government saying yesterday that Hamas was making last-minute concessions. The Israeli line was that there were a few issues, among them the identities of the Palestinian prisoners to be released in exchange for the hostages, something that Hamas denied, saying that they were still committed to the agreement. Critics of Benjamin Netanyahu's government were saying that this was the prime minister scrambling to keep his fragile coalition together after his far-right national security minister Itamar Ben-Gvir threatened to quit if this ceasefire deal goes ahead. So he will not be supporting it. But even without Ben-Gvir's support, this vote and this deal can proceed. And so, as you mentioned, they are meeting today. The exact timings is still to be clarified exactly, but after this, the government then needs to vote. Now, this is usually done in person, but in the last hour or so, the Minister of Internal Affairs is now asking the government to do this vote over the phone, so that things can proceed more quickly, because if this government vote, as has been reported in Israeli media, only happens tomorrow, you know what will happen, that the ceasefire that was supposed to start on Sunday will then be moved by a day to Monday, because don't forget, there is now the issue of the Israeli public being given 48 hours to appeal or submit an objection to the Supreme Court in terms of which Palestinian prisoners are to be released. So they need to be given this chance. But for the family members of the hostages, there is frustration that for the sake of bureaucracy and formalities, this can take an extra day or two.
Daniel there reporting from Tel Aviv. Now, short video streaming platform TikTok may go fully dark in the US on Sunday. That is the day when the deadline for its Chinese owner to divest its ownership or cease operations comes to an end. Existing users would be legally able to continue using TikTok, but the app would become unusable over time. A White House spokesperson said outgoing President Joe Biden had no plans to intervene in the matter. This means that the ball is now in President Trump's court, and his administration has to take a call on whether they want TikTok to continue their operations in the US.
TikTok is getting ready to shut its US operations on Sunday when a federal ban is set to take effect. That's according to Reuters sources. A law signed in April mandates the ban unless Chinese owner ByteDance divests US operations for the social media platform. Policymakers in Washington say the app is a threat to national security because of its vast troves of data on 170 million American users. That's something the firm has always denied. Now users who already have the app could theoretically still use TikTok after the ban. However, the law also bars US companies from providing services to distribute, maintain or update it. Donald Trump could yet have a say in the matter, though.
You know, I have a warm spot in my heart for TikTok because I won youth by 34 points.
The president-elect is due to be sworn in a day after the ban takes effect. The Washington Post says he is considering issuing an executive order to suspend a shutdown for 60 to 90 days. There was no immediate comment from the Trump transition team, and the man himself has said he should have time after taking office to pursue a resolution to the issue. Speaking on Fox News, incoming National Security Advisor Mike Waltz called TikTok a fantastic platform. He said the new administration would find a way to preserve it while also protecting people's data. A White House spokesman said President Joe Biden had no plans to intervene in the matter during his final days in office. Meanwhile, the Supreme Court is weighing an appeal from ByteDance, but legal experts say justices look minded to uphold the ban. The Reuters sources say TikTok will allow US users to download all their data before the app goes offline there. But users around the world could also face a shutdown, with the app reliant on hundreds of data service providers located within the United States, who soon won't be able to work with it.
Well, the countdown is on. What will be the future for TikTok? All will be revealed perhaps by Sunday. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
greater sporting culture all the way from top to the bottom or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball, a lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, you know, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it. Because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and you know, think that yes, you know, we also have something to actually look up to.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow.
2024, ladies and gentlemen, has been a coming-of-age year for India's startup ecosystem in many ways. I think there has been, of course, a course correction where India's startups have realized the value and the potential of fiscal discipline. There's also been a convergence between public market valuations and private market valuations in many ways. And the IPO story has really given legitimacy and currency to India's startup ecosystem. So without further ado, let me talk to some of those who are part of the story and are really the flag bearers of taking this forward. Upasana, I'm going to come to you first. And guys, we do have to give a big round of applause to Upasana for what the team has managed to do with MobiKwik and the IPO.
I think the listing was definitely an arduous journey. I think not many people know, but we actually filed for the IPO at the beginning of 2024, and it took us an exact 12 months to get it done. So I was very excited and happy for all my friends and, you know, getting it done before me. I was also a little jealous कि यार इनका इतना fast हो रहा है, हमें इतना time क्यों लग रहा है? But I think the main thing was, as usual, keep hustling, keep trying and not giving up. So solve through the problems. I think it has been a difficult year for the fintech sector, given a little bit of extra caution on the regulatory side. But having gotten it done, I feel a little bit of validation. Everyone having told me that payments में पैसा नहीं बनेगा, profitable नहीं हो पाओगे, कुछ नहीं बन पाएगा. So I do feel a little better about that. But other than that, life goes on. It's all the same, and it's the next growth journey.
Well, you know, I remember you expressing very vocally your frustration with the fact that it was taking so long for you to actually get the approvals in place to go IPO. But you know, I want to understand from you, what is the argument that paisa nahi banega, profitability nahi hogi, growth kahan se aayegi? What has changed? What has enabled the story to change to your mind? And what do you believe will be the growth levers from here on to build on the momentum that you're already seeing? What is the headroom for growth from here?
See, the headroom for growth is immense. I think that the payments market in India still has a long way to go because of the entire population. Still only 450 million Indians are actively transacting. So that market is going to double. And when it comes to all the other distribution products on the financial services side, which all of us payment platforms do, there the penetration levels are still less than 10%. So the growth is simply coming. Right now, payments is growing very rapidly for us, payments across all vectors. And we've become the largest wallet now in India. We're growing rapidly on UPI also. But I think for me, the most important thing is to do it sustainably and not like 1 year XX growth hai and second year, growth nahi hai. And so I think we are just trying to work with a moderate 40-50% growth every year and at the same time be very careful about the bottom line.
Prachi, let me come to you now. You know, your journey began in 2016. On the back of what you've just heard from Upasana, I want to hear from you. What's the bull case? What are you working towards? What has changed in India that you're betting?
So, you know, at Peg Local, we focus on solving for cross-border payments. So, from a, macroeconomic indicators perspective, of course, India GDP continues to grow, which means Indian consumers are going to participate more onto global payments. Indian merchants are seeing a lot of uptick in terms of international consumers transacting with them on, from a cross-border perspective. A lot of Indian brands are going global. As you rightly mentioned, a lot of investments happening in D2C brands who have started from India and they will kind of go global. With the current regulatory environment in India, there are only a few global players serving the Indian ecosystem when it comes to cross-border payments. There is no Indian fintech solving for the cross-border needs of the country. And given we are like incorporated in India and building for the Indian ecosystem to begin with, I think it puts us in a very good advantageous points where we are able to create products which are for India. It's not a copy-paste of global products by the global companies who are selling the same product to the Indian consumer or the merchant ecosystem. So I think that's what we've been investing on, and I think it's been a great run.
Varun, let me ask you now on what the outlook is for ACO over the next few years. What are you betting on? I know everyone's betting on an IPO at this point in time, and you included. So how soon? 2025 or 2026?
I shall say time will tell. But I'm very happy to be here in this gathering. I like the fact that insurance is sleepy space. Nobody here. Everybody wants to.
Is it really that sleepy?
Everybody wants to do payments and lending, so I'm happy that nobody wants to do insurance. But yeah, it's one of those.
Why
stories.
really that's the case?
I don't know. I'm happy. Everybody wants to do payments and lending. I'm quite happy. But frankly, I think insurance has always been for a while now. It's been a sunrise sector. It continues to grow. It's probably not even in India. I think globally, it's one of the last bastions that fintech has really tried to break through. So somewhere I feel privileged, blessed that I've had a 6-7 year journey on this, and hopefully ahead of the curve. I think business will continue to grow. I think there are many more ACOs to be built in India.
What will it take to build many more ACOs in India? I mean, just for the insurance sector, for instance, it continues to be grossly underpenetrated. And of course, we now have a fairly dynamic mix as far as regulation is concerned. The regulator has also been fairly active in the insurance space. But what will it take to build many more ACOs?
I think it's critical for all of us to understand it's the youngest regulator, if I may say so, and also the youngest sector. There was no IRDA till 2001.
Yeah.
Because there was only an LIC and a New India that would serve us. So it's maturing as a regulator. I do believe that IRDA won't be far behind in terms of whether it's SEBI or RBI in terms of unleashing growth for the sector. I think it's still a sector slightly behind how young the sector is, and how young the regulator also is. But I think the inflection point has happened. So I'm quite excited.
You know, you said that the inflection point has already happened. So I want to pick up from where Upasana left off. What's the kind of growth that you're working with? What's the assumption? I mean, what is your modest number?
I was like subtly questioning my own ability and my entire company's ability, because I haven't even IPO'd and I'm still struggling with 50% or 40%. I think 30 would be good. I'd be very happy. We're a balance sheet business, so I'm very happy with 30%. Year on year, if we could do that.
Let me come to you because, you know, second time proved to be lucky as far as the IPO is concerned. But IPO out of the way, what's the big India growth story that has really enabled the business to grow as it has? And what are the shifts or the trends that you're going to be focusing on, not just in 2025, but from here on?
I think in the early phase of online travel, I think companies were just trying to copy the Western model, launch with flights, go for hotels. But if you look at how many Indians actually fly, it's less than 4% of the population, right? So if you're trying to build a large online travel play, you got to go into the tier 2, 3, 4 markets, serve trains, buses, etc. Harder to build. It took like more than a decade to build out, but and harder to monetize as well. But I think our story kind of proves that you can build a large, viable, profitable business on a very large base of customers, right? Which probably will take longer, will need more patient capital to support it. But the good news is that people from Lucknow, Indore, Jaipur, they're coming and spending, and the share of wallet is growing year on year. So there's no letdown in the travel space. I keep hearing of slowdown, etc., but we're like, there's no slowdown. We are doing a modest 40% GTV growth as of the last reported quarter.
I want to understand from each one of you here, anybody who is building from India for the world.
95% of our revenue comes from outside of the country, largely millions of users across the world. We are also the category leader in our category, and I bet my life that we are the most differentiated product. We are a video creation software. And in the last 6, 7, 8 months, what we have seen is a bunch of American companies copying us. And it's just a very delightful thing to happen to an Indian company. I largely feel that we are somewhere caught with a disease of copying and like
we are caught with the disease of copy.
Yeah.
Okay.
Copying and taking inspiration from American companies and American models. And I think that needs to change. And that is what actually also makes us one of the fastest growing AI companies, because it's truly differentiated.
So what did you do different so that you're now having global companies copy what you do as opposed to the other way around?
I think it comes really down to picking a segment and then having an insight that brings in a large enough change for them to switch. So without that level of atomic insight and why something should drastically change where people start adopting, that can't happen. I think most people don't work hard enough to get to that insight, and copying becomes an easier answer.
Sambhav, let me come to you now with what has changed as far as your business is concerned, what you believe have been the critical enablers, and more importantly, the kind of appetite you have for risk and for growth from here on.
At Fampe, we believe that everybody else is building for the affluent market. Everybody wants to build for the rich people who are 35 and above, 40 and above. We believe the next growth, India is a very young nation, right? Majority of our population is below 30. We want to build for the Gen Z and the Gen Alpha. And and the kind of products that the Gen Alpha and Gen Z needs, and this year marks the start of Generation Beta as well.
Yes.
Right?
But I'm feeling very, very old, even as you rattle off all of that.
So the kind of products that the next generation wants to use, it's very different. The kind of designs they interact with, just to share a small anecdote, one of our employees has a 2-year-old daughter, and she picks up a magazine and she tries to zoom in the image.
Yeah, because they're so used to living on a mobile phone. Yeah.
So the expectations that they have from interacting with different kind of products is very different. And we believe that whenever we are talking about the next 500 million users on the internet, next billion users on the internet, the majority of them are going to come from this generation. And the pattern on how when they start to earn, it's changing a lot with internet and democratization that internet has provided. Kids are starting to create their own content, become Instagram influencers. So the next generation, how they spend money, how they interact with money, it's going to be very different. We believe that we have the opportunity to actually be the flag bearer on how they interact with their money. And we want to build everything that is possible to improve their relationship with money. And we have started with...
What about your relationship with money?
Still working on it.
How hard is that? Is it complicated?
It's a situationship. It depends.
It's situationship. By when do you hope it'll turn into a relationship?
Yeah, it keeps changing. I think for me as a first-time entrepreneur, starting very early, right out of college, the kind of exposure I've gotten with this entrepreneurial journey, I'm very grateful. And the kind of experiences you get, you keep on evolving much faster. So even today, I feel the company is 10 steps ahead of us and we are behind. We have to catch up with the company, right? So yeah, let's see where my relationship goes.
May your situationship convert into a relationship sooner than later. But Kunal, are you in a complicated situationship, relationship? How are things going for you?
Well, we're in fintech.
So it's always complicated.
Yeah, I think complicated is our middle name. But no, I think there's been massive evolution. We are running a financial services platform for Indians, helping them with lending, insurance, savings, and UPI. So we work with all the regulators. We are heavily regulated with licenses from all the regulators. So obviously life is, I would say, busy. We spend a lot of time thinking about the business very differently from how we used to think about it, let's say about 5 or 6 years ago.
Yeah.
I think the massive difference is that the intervention of regulators has also increased trust in the ecosystem.
Yeah.
That's been a big silver lining. And we see a huge amount of growth now coming outside of tier 1 cities. So we operate in about 1,200 plus cities, like 98% of India's pin codes, 19,000 plus pin codes. And the amount of growth we are seeing outside the top 50 cities is just phenomenal. So in terms of volume, it's beating the top 20 cities.
Is there room for everybody? Even if we see segmentation, verticalization, and specialization, is there room for everybody?
Well, I would say that there is room for legitimate businesses to come and solve a real problem, but also be sustainable.
With CNBC-TV18 now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
What we saw was, the last quarter we had seen discretionary becoming good in financial services in the US. Now this quarter we have seen
Pallavi, take me through what you're focusing on and what your belief is in terms of the potential to grow the business from here on. And what the ask is essentially, and I know everyone's going to, I'll get Shweta to collate together what the feedback is from startups that have been speaking through the day on what the ask is of the government and the regulator. But let me ask you, Pallavi, of how you see your business evolving from here.
So we are into funding the micro, small and medium enterprises, and these are based in tier 2, tier 3 towns of India. If you look at the numbers, we know 63 million MSMEs contributing heavily to GDP. Today, Mr. Kant spoke about, if we have to get to the vision of Viksit Bharat, the GDP has to grow 9x in the next 22 years. So that's the focus, and the entire GDP moves through this retail economy. So our focus, when we think about MSME, we think about a manufacturing unit, right? We focus on the trading ecosystem, which are the shopkeepers, retailers, distributor economy. These are the customers who are the core engine of driving the GDP forward, right? And if they don't grow, I think we cannot think about the dream of making the developed India we talk about. Yeah. So that's a very important segment, huge focus for the government. We have done close to 30,000 crores of financing so far. And for us, the focus right now is how do we really do the right thing, because it's not just about giving credit. Yeah. The segment that we are focusing on needs a lot of capacity building, lot of digitization. Yeah. If these companies can be digitized, they can be formalized, credit will be easily accessible. Yeah. So it's not a question of credit so much. It's a question of how they structure their businesses better, how they digitize. So our focus is on that direction. Right. I think as we think about the growth of this sector, very important that, this sector is being recognized as priority sector. Yeah. So when we think, when banks look at this sector, if they have 70% priority sector, contribution, they get certain kind of rebates, benefits. For NBFCs like us, we don't have that, right? In order for these retail companies to actually become and qualify as priority sector, they need to have something called as Udyam Aadhar. Right. But our point is that, even without that, they're already in the turnover range where they do qualify for priority sector. So I think the ask is that, as we think about focus into this segment, there is a lot more to be done. Government is anyway pushing. I think the budget, I'm sure we are going to have a lot more coming up on the MSME segment. I think it's just about executing it on the ground. And we as fintechs who are focused on MSME payments, MSME credit, are the engines to drive it. So I think our request would be to look at how we can scale this sector by better policies, debottlenecking some of the regulatory issues. So,
well, that has been the promise that the chief economic advisor has made as a sort of look into possibly what the economic survey will say, that deregulation, debottlenecking is the theme.
Question you're asking me in the last, but I think if you look at it, like each of our businesses is growing because of the macro factors for sure, and we have to give credit to that. Because especially in financial services, which most of us are in, if you look at the last 5 years, when the GDP grew from $1,500 to $2,600, this additional $1,000 incremental dollar has created like at least $200 billion of value, the new value which has been created. And if we believe that the Prime Minister's vision, which is the GDP should grow 10x from here by 2047, even if you do simple multiplication, while there is an exponential effect you get when every $1,000 you get, it's not $200. With every $1,000 you get at least $500 billion of value being created. So from that standpoint, the market itself will support the growth. That being said, the regulatory for sure. So I think the startups are known for innovation, and innovation means finding the areas where nobody has chartered.
Yes.
And if nobody has chartered, that means the rules were not written in the manner in which
the startups are assuming, or the rules are not written, assuming the new business models. So from that standpoint,
Regulation always keeps pace with innovation. Innovation always ahead of regulation.
yeah, I mean, if you look at it, let's say whether the Uber or Ola would have ever come, if the rules were written that the taxi should have operated in certain fashion. The rules were never written like that. So that's how the new models came in, and then the rules were made. I think the startups also, in my view, will operate that way, with they will define new rules or new ways of doing business. So from that standpoint, the regulators would need to catch up to support this growth. So I feel it's the government's focus and enabling the innovation would clearly support the growth.
Well, what rules are you willing to break, Shruti, at this point in time? Clearly not regulatory rules, but rules in being able to address markets and break the status quo, as Varun was pointing out.
So again, coming from fintech and lending in unsecured, I don't think this is a platform to talk about taking any regulation. I think every second page talks about unsecured lending.
Yes. So you're the red flag everybody's warning us about.
Absolutely, absolutely. But one of the things which I would want from the government is to think about financial inclusion, which is a big part of our building the company. We've had 30 lakh customers, and with rate caps coming in, cost of compliance going up, serving the underserved, the underbanked becomes slightly harder. But as we want to get the next billion in, it becomes very, very important to get them in the fold.
Absolutely. And I think that's the overarching mission and vision as far as the government is concerned. Upasana, I'm going to ask you to come back to us. Really, as I said, 2024 has in many ways also brought together the public markets and the private markets. There's been a legitimacy as far as the Indian startup story is concerned from a public market point of view. Through your own experience now, what do you believe this convergence is going to result in? I mean, we've got a bunch of IPOs in the pipeline. 2025 is expected to be an even bigger year. This convergence, the kind of value unlock that it opens up, your thoughts?
So, I think that it's not just about 2024. I think that last couple of years, we've seen that the markets have been correcting, both in the private side. I mean, if you think about it, we did some research to see no large deals only have happened. And not just in India. I mean, even large global players like Klarna had to take a bit slash down when they raised money a few years back, right? Post-COVID. So I think correction has been happening in the valuations. And I think that it has also brought this whole attention to reaching profitability, growing profitably in the entire mindset of the founders in India, which I think is a new thing. I think other than that, people were not so focused because there was so much supply of private capital. So I think this is going to make better companies now in India, because long term, I think this convergence is going to come in both on the private and the public side. Finally, see, M&A has not been at a scale. M&A has not really been the big way of exiting in India, like US or other markets. So going public has been a path that we have seen many new age companies follow in 21, and 24 has been again a good year. In our own sector in fintech, I can tell you that we have tried very hard to create a positive path for all the other fintechs behind us, so that they can also, get into the liquidity of capital markets. So I think it's a great thing. I think the sentiment from the founders side is improving to reach profitable growth numbers. The sentiment from the public market investors is improving towards new age companies. I do hope that in the next 5 years, you will see at least 50 to 70 new age companies get listed. And I do believe that it will become an inflection point of another order for the growth of startups in India.
Absolutely. I would imagine that is something to look forward to. And perhaps we could see that number, emerge over the next 5 years. Anybody else here who's looking at the IPO market, Sanket, is that going to be something that you look at some point, in the future? It's on, good.
I think personally, I'll want to hold off to an IPO. And I think our current revenue is IPO ready, but I'll want to hold it off for as long as we can.
What are the key pain points, the key friction areas that continue to exist that require the government's attention and the regulators' attention? The top 5 areas that need focus and attention.
Well, thanks, Shireen. I think for us at the Startup Policy Forum, we have our hands full. And if today was any indication, at Startup Baitak, we had about 8 sessions since the morning where we collated a number of policy issues that are important to the startup ecosystem. And let me start by telling you that this year is going to be transformative on the policy front. Just look at how the year has begun. We've already got the AI governance framework from MeitY out, which we are working towards the submissions. We've already got the data privacy rules out again. So that's going to be a big one, and data privacy will impact each one of the startups here that we see around us. We had Shruti talk about unregulated lending. There is a bill on unregulated lending that is again awaiting submissions. We have the budget round the corner. Today's conversations were more about, I think, understanding that our startups have now reached the size and scale that they want to play an active role in policy making.
They need to have a voice. They need to be heard.
Absolutely. And I think what's most important is that that realization is at both ends. So there is going to be tons of policy making inputs that the government requires. And, they heard it right from Dr. Shamika Ravi, who's the, member to the Prime Minister's Economic Advisory Council. They heard it from Mr. Amitabh Kant. They've heard it from every single policy maker who came to Startup Better, that the government wants to hear from startups more. And they're willing to make changes. They're willing to actually understand what startups need. So I think what we have right now is the startup ecosystem being really at an inflection point. We're looking at Startup 2.0 in some ways, 9 years of startup.
Of startup.
Are we now at the stage where we can bring those transformative policies that will take it to the next level? So tons of work ahead.
And budget specifically, anything in the budget that you've put forward to the finance minister?
Tons, including ESOP taxation, our pre-budget,
which has been on the table for a while now.
Well, we do hope that we think that the corridors of power are very, very open to what we are going to be suggesting. And I will say that our pre-budget consultation goes in this week.
Okay.
But you'll be the first to know.
Well, thank you very, very much. It took many years for the angel tax to finally be axed. So I hope it takes less time for the ESOP taxation to be resolved. But thank you very, very much, ladies and gentlemen.
In Europe, also the discretionary is showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now the second I think was about, if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared, our Q1, Q2 in a typical financial year are strong. Our Q3, Q4 are typically weak. So that's the sort of seasonality that we see.
The Bharat Mobility Expo has kicked off in the national capital with a bang. Yes, you had 34 vehicle OEMs participating, more than 100 vehicle launches taking place here at the Pragati Maidan, which is the venue for the Bharat Mobility Expo. Prime Minister Narendra Modi, flanked by his top cabinet ministers like Nitin Gadkari, Piyush Goyal, Hardeep Puri and HD Kumaraswamy, he inaugurated the Auto Expo and said that India's EV market and the number of EVs on India's roads will grow 8-fold by 2030. He also said that India will become the key investment destination for electric vehicles in the years to come.
अनुमान है कि इस दशक के अंत तक भारत में इलेक्ट्रिक व्हीकल्स की संख्या 8 गुना तक बढ़ सकती है। ये दिखाता है कि इस सेगमेंट में आपके लिए कितनी ज्यादा संभावनाएं बढ़ रही है। अपने तीसरे टर्म में हम पीएम ई ड्राइव स्कीम लेकर आए हैं। इसके तहत 2 व्हीलर, 3 व्हीलर, ई एम्बुलेंस, ई ट्रक ऐसे करीब 28 लाख ईवीज खरीदने के लिए मदद दी जाएगी। करीब 14,000 इलेक्ट्रिक बसें भी खरीदी जाएगी।
Currently, I'm at the Flex Fuel Pavilion here at the Auto Expo. What automakers are trying to showcase are all types of technologies, hybrids, plug-in hybrids, flex fuel vehicles, which can run on higher blends of ethanol as well. So different clean technologies. But EVs really stole the show. You had the electric Creta being launched at a price point of 18 lakh rupees ex-showroom. You had the e-Vitara by Maruti Suzuki, which was quite a showstopper. You had the Cyberster, the world's fastest roadster, being launched by MG Motor India as well. Take a look at the conversations we had with the top executives of these OEMs.
First of all, this e-Vitara is a ground up, everything new. So this is not just changing the IC engine to the motor and the battery. The ground up, this is all new. So this platform is all new platform to optimize the performance of this car as EV. And this is, according to the view
Okay,
of.
sir, let's keep moving towards the front as you talk. Yeah.
In line with the view of Prime Minister Mr. Modi, this is made in India car, and not only targeting the Indian customers, but we are exporting this car to more than 100 countries and regions, including Europe and Japan.
Okay, when does production begin for this in India and Gujarat? When can customers actually book and buy this?
Okay, so production will start in this spring season, and
within this quarter?
Yeah, in end of this quarter, beginning of next quarter.
Okay.
That is the first production start timing, and then this car, there are a lot of customers waiting this car from Suzuki. So first we are exporting to the European market. And then right after that, we will start production for Indian market.
Okay, so first Europe and then India. Why not India first?
But actually, for Europe, it will take about 1.5 months for shipping to the European countries. So in order to have about same timing to start the sales.
So can we expect by June customers to get it in India?
Yeah, about that time. Thing I can tell you right now is within 1 year, we will become the biggest EV manufacturer in India.
Within 1 year?
Within 1 year. We will become the biggest EV manufacturer in India.
In terms of sales volumes?
No, in terms of production volume in India, we will be #1 manufacturer.
Okay, and will there be more EVs launched, or currently this is the only car for this calendar year?
Yeah, of course we will, and in the pipeline, there are a lot more to come in EV, and we are developing and more EVs soon to come.
Okay, and finally, Mr. Takeuchi, what is the amount of time that a person would take to charge this car fully with a fast charger and with a home charger?
For the fast charger, it's about 40 minutes for 80% charge. So you can quickly charge with the fast charger. At home, of course, it will take more than that.
This is the much-awaited launch from the JSW MG Motor India stable after the two parties came together. You've got the Cyberster here, which is an electric roadster, and this is the first from MG stable, the fastest car from the MG stable. It has a battery pack of 77 kilowatt hour. It can go up to 400 kilometers per hour as well. So it's a very fast car. And let's speak to the people behind the wheels. We've got Parth Jindal, who is the director of JSW MG Motor India, and CEO Emeritus Rajiv Chaba here as well. Beautiful looking car, gentlemen. Parth, do you already have one of these?
As soon as Rajiv gives it to me, I'll have one.
Okay. So what's the plan? You've got so many luxury cars today. You've got Porsche, you've got Mercedes, you've got the BMWs of the world, Lexus. How does this really stand out? What's on offer here, Parth?
I think the way I like to look at it is that this is affordable luxury. This is one of the world's fastest cars. It's completely sustainable. It's an EV. It can compete with any of those brands you mentioned in terms of its technology. If not, it's better than that. And it's not going to burn a hole in your pocket. So it's for the customer who really wants the best what the world can give you, wants to be sustainable as well, and wants to really have a head-spinning car.
Okay, so you had showcased this when the JV came together last year as well. But why aren't you launching it formally?
We are. Today, pre-bookings begin.
Okay.
March, the real bookings begin.
And prices?
Prices will be announced over the next few weeks. And April onwards, deliveries start.
All right. So I'm just making an estimate here. And Mr. Chaba, and if I can ask my camera person, Akhilesh, to move there as well. Mr. Chaba, the price of probably an entry-level luxury model in India would be around 45 to 50 lakh rupees. How would this stack up?
That's the normal mainstream car as per you, which is typical sedan or typical SUV. This car is a sporty car and the fastest car in the world. So obviously it would have premium over that segment. So anywhere less than 1 crore.
Anywhere less than 1 crore. That's a very wide angle you're giving us. Why don't you say, is it around 50 lakhs, less than 50?
So I would say between 50 and 100, and more towards 50.
Okay. And I'd like to ask you more about the features, Mr. Chaba. I'm going to come there. So, this is a roadster, and can you get the hood on also with the press of a button?
Yes. Yeah, we can do that.
Okay.
Want us to do that?
Yeah, let's see that as well. Oh, fantastic. Our camera person is capturing that. And Parth, would be great if you can get it back again as well. So, Mr. Chaba, give us a sense that in terms of technology, what we're seeing today at the Auto Expo are vehicles packed with tremendous amount of technology features. It seems that the customer wants that. He wants vehicles at an affordable price. They're aspirational. They want the best value for their money. So what will the Cyberster offer?
As you just said, and if I can say humbly that we started this whole technology innovation and disruption in this industry and raised the bar thanks to the features and accessible technology what we had to offer, and whether it was Hector or ZS EV or Comet or Windsor, like now we saw this opportunity to launch these cars in that sweet space between the mainstream cars and the established conservative luxury brands. That's what we are offering, these two products, and this is best technology probably what world can offer. I'm repeating a little bit what Parth said. Sustainable luxury at that price point, the fastest car, the battery charge is going to be around 500 kilometers, so you don't have to bother about charging it daily. So
0 to 100 in how many minutes?
Is less than 3 seconds. It's 2.8. So it's the fastest, as we said, and frankly it has set the new world record recently.
Hyundai has just unveiled the electric version of the existing Creta. We have with us the senior management of the company to know more about its plans in the electric mobility sector. We have with us the MD of Hyundai Motor India, Mr. Ansu Kim. Thanks for speaking with CNBC-TV18. Help our viewers understand how this initiative, how this unveiling is going to impact your overall plans globally with respect to expansion in electric mobility.
Thank you. Now we are launching the Creta Electric. We are planning to position HMIL as a production hub for emerging market. We are exporting to the our product lineup to the more than 80 countries, including Middle East, Africa, Latin America, and South Asia. So our product lineup is very suitable for emerging markets. So not only our ICE model, but also all our electric vehicle will be exported to emerging market. That is our global plan for HMIL. Thank you.
How is this different from the existing models which already are present in the ICE segment? What exactly is the value addition with respect to a consumer?
Yeah, maybe I'll take this. So if you see, look, consumers in India are looking for a very strong brand and a very reliable brand. Creta was introduced in India in 2015. We have sold 1.1 million Cretas in India, and it has been a blockbuster. So I think this is the right time. If we want to increase electrification, like MD said, probably Creta is the right product. And now that we have introduced it at a very aggressive price, starting 17.99 lakhs, we believe 2025 and 2026 are going to be the trigger for great electrification in India.
Also, by when is this going to come out in the markets? By when the bookings are going to begin? What is going to be the production line positioning initially? And what's the kind of monthly run rate you're looking at?
So if you see, the cars are being displayed as we speak in the showrooms all across our country at more than 500 showrooms. We have a very strong network of 400 workshops also catering to the service requirements of the customers. We are having a great charging infrastructure. In fact, from AC charging, now we are shifting more and more to DC charging, because the feedback from the customers was that they wanted to drive on highways as well, because Creta is a great car. They want to drive Creta electric on highways. So we are doing that. Also, a very unique thing about Creta is that 11 kilowatt AC charger, home charging, will do it in 4 hours in the 390 kilometer range and 4 hours and 50 minutes in the 473 kilometer range. It's going to be very, very convenient to charge at home.
What kind of price positioning do you feel this has vis-a-vis other models which exist in the market, and also vis-a-vis the relevant ICE models which already exist in Creta?
Look, if you see the Indian market, I think the sweet spot for electric vehicles is between 15 lakhs and 25 lakhs. And what we have been able to do very smartly is all the variants of the Creta electric, all the 6 variants of the Creta electric are priced in that. I think that is going to be a game changer. You mentioned about the efficiency. You've seen the air flaps on the car. They're going to give a great efficiency. I mentioned about the charging infrastructure. The range itself, 473 kilometer range will take care of any range anxiety which the customer had. So we believe this is a complete product with Hyundai's global EV technology, with HMIL's strong network, and a very, very strong brand that we have in India.
We're getting into the XEV9e right now, and with us is Rajesh Jejurikar. So Rajesh Jejurikar, we're right inside the cockpit right now. You've got these 3 different screens. I believe there's a screen for the passengers at the back as well. Tell us, what do you really offer in terms of technology, and how does this stack up against the likes of big luxury vehicles?
So firstly you see the screens here. We call it in a way coast to coast, because you have 3 screens. This is the driver cluster, which gives you, data on your electric charging and how much is left, range left, and so on. This is the main UI UX screen, which has multiple apps, and we have this amazing thing we call the Sonic Studio, which is a Dolby Atmos Harman Kardon 16 speaker system. And on your left is really the fun and work screen. Yeah. And you can do a video call from here. Okay. You can do a Zoom call. You can watch OTT live. Yes. It's got 5G connectivity. So this is really the entertainment screen. And I can see you playing with it and having fun, which is what this is about. Right. But you can also do Zoom calls and, continue your work from here as well.
But doesn't it get too much of technology as well?
Well, you and I are both old, and we felt very comfortable with it. I could see you navigating really well. Right. So this is technology which we're used to in our homes, right? So we are basically you're streaming live, or you have apps that you want to kind of use. So it is entertainment or work, and you have both the options.
You're confident that despite the competition that we see at the Bharat Expo today from e-Vitara, from the Creta EV, you've got a strong product and you have nothing to worry about in terms of the technology you've packed in. You feel you've packed in more?
Yeah, because we are targeting a different segment. So, you named a couple of players. I don't think we see them as the immediate competing set. We believe that it's not just tech, it's combination of technology, design, which makes a lot of difference. There's a lot of freshness and cutting edge design of both the product, this one and the B.
All right, so that was the big EV push from Hyundai, from Maruti, and from MG Motor, from Mahindra Group as well. Behind me is a compressed biomethane gas vehicle from Maruti Suzuki. Now, this is a concept developed with the Baleno because they are trying to showcase, and many automobile companies here, such as Toyota, they're all trying to showcase different flex fuel concepts, clean fuel concepts. Now, this is a fuel which is not really taken off in India, but Maruti is prepared with this concept for the future in case the need may arise. So, very interesting concepts like these if you were to come to the Auto Expo. On that note, we're going to take a short break, but don't go anywhere. We've not even spoken about two-wheelers yet. We'll show you what Hero MotoCorp, TVS, Honda, Suzuki, all of them had to offer, and what likes of Mercedes-Benz and BMW are doing as well. Stay tuned. Hello and welcome to our scheduled broadcast on the Bharat Mobility Expo here in the national capital. And even here at the Bharat Mobility Expo, there's competition between those who swear by hybrids and plug-in hybrid vehicles and flex fuel vehicles and those who swear by EVs. For example, I'm at the SIAM, or Society of Indian Automobile Manufacturers pavilion over here, and there behind me you've got a Toyota flex fuel strong hybrid vehicle, which means it can run on battery and it can run on the engine and fuel as well. And this is flex fuel, which means it can run up to E80 or higher ethanol blends as well. So interesting concepts like these will be shown all across the expo. But Talking about hybrid vehicles, Lexus was one of the companies which showcased strong hybrid technology today. You also had Honda showcasing an electric scooter and lot more. Take a look at what my colleagues Shivani Bajaj and Abhimanyu Sharma got us.
Maruti Suzuki has launched the Gixxer 250 Flex Fuel two-wheeler. This is the newly launched electric vehicle. It is a flex fuel vehicle. It also uses several concentrations of ethanol and the range is 95 kilometers. It can get charged within a period of 2.5 hours. Also, efficiency has been improved compared to several other models which existed in the past as per the company. Also, the 95 kilometers of ride range is expected to serve consumers within city limits. Inside several cities of India. The flex fuel model can also handle a range of ethanol concentration, and the selling points are fuel economy, styling, design and engine performance. Now several other vehicles also exist in the EV space, in the flex fuel space, both from legacy players as well as from EV players. It remains to be seen what is going to be the big talking point once this vehicle comes out on the roads, and what is going to be the customer feedback.
Well, we have Mr. Mathur with us. Thank you so much, Mr. Mathur, for joining us here on CNBC-TV18. Big launches from the house of Honda today. Tell us more about it, sir, the new Activa.
So these two models are basically towards our carbon neutrality and sustenance. So Activa E and QC1 both have been launched, and now we have announced the prices today. So both the models are completely different in unison. So one is Activa E, which is completely based out of the swappable technology. So we have got two variants available. So standard variant is available at 1,17,000 rupees, and the connected variant is available at 1,51,600 rupees. Okay. And the fixed battery type, we have a QC1, which is at introductory price of 90,000 rupees. So apart from that, we are also looking at to make sure that customers do not have any worry regarding the experience of their product on the EV. So from that perspective, even the maintenance packages are also being announced from our side. So as we announced earlier also, 1 year we are giving a complimentary package which includes the AMC, the extended warranty, which is also for 3 years and 50,000 kilometers, the roadside assistance also, which is complimentary. And for next 5 years, if they want to buy it at a very, very attractive package also we have created, which is around 9,990 rupees also.
What are the sales expectations, and when are we expecting the Activa to hit the market?
See, we have announced the bookings. So from 1st of January, once we announced, we got a lot of inquiries. So almost more than 20,000 inquiries we have already registered for both the model. And after the introduction of today's price, we are expecting that conversion to happen from inquiry. Now, based on that, we will set up our target depending upon the booking numbers. As far as availability is concerned, for both the model, we are expecting to start the business from February. So next month, we will be introducing it in the market for the consumers to have an experience on the road.
Okay. In this quarter, sir, what is the kind of production capacity that we are looking at?
See, our current capacity is close to around 6.2 million, which is including the export. So we have around close to 5 lakh export. So remaining is available for domestic. And this period of JFM is primarily for the transition from OBD2A to OBD2B. So we were the first one to introduce the introduction of OBD2B starting from December itself. So almost now 6 models we have already upgraded to OBD2B. And going forward, the remaining lineup also will get converted into OBD2B. So keeping that in mind, we will ramp up the production gradually at the end of this fiscal year.
Right now, I am at the Hero MotoCorp Pavilion, where the company is actually not one, but 4 production-ready vehicles which go on sale in February. Now, these are product upgrades. Let me start with the Zoom 125. This is a new scooter from Hero MotoCorp. There you have the Zoom 160. We'll go very quickly, one by one, because I want to show you as much as possible. Auto Expo is just about great big bikes, luxury cars, and beautiful concept vehicles. Here you've got the Extreme 250, which has been launched. These are completely new vehicles. You've got the X-Pulse 210. Now, these are one of the highest selling premium motorcycles from Hero MotoCorp. Harley-Davidson on display. This is to show that the Hero MotoCorp Harley-Davidson commitment is growing. But one vehicle which is very interesting, and I want to show you very quickly, is a prototype that Hero MotoCorp had showcased some years ago called the Surge. Now, this is literally a 2-in-1 vehicle. I'm going to sit in it right now. Okay, all right, I'm not allowed to sit in it, but it's production ready. You can actually detach the scooter from here. If you can see, This is a scooter. You can detach from it and you can use the scooter independently. Otherwise, the scooter remains fixed to the body and you can use it as a passenger vehicle, three-wheeler. You can use it as a passenger vehicle, cargo as well.
Well, what you see behind me, this sharp-looking car is a concept car, a stunning all-new electric SUV that blends luxury, sustainability and cutting-edge technology like never before. Powered by a high-performance electric drivetrain, this LX-ZC delivers zero emission, which has the refinement and reliability that Lexus is known for. Now, the design is futuristic yet elegant, featuring a reimagined spindle grille, sleek LED light bars and an aerodynamic profile. Inside, the LX-ZC showcases a groundbreaking tech platform, Arene OS, an interactive reality experience system, combined driver preference, data and AI chat functionality, and AI-driven next-gen voice recognition as well. The LX-ZC allows seamless natural interactions between the driver and the vehicle. We don't know when it's going to be in the manufacturing stage. It's still in the concept stage, but if you do come to the Bharat Mobility Auto Expo, do check the Lexus LX-ZC here at the Toyota counter.
All right, that's all the time we could pack in on this special broadcast. Thank you for watching. Goodbye.
The Nita Mukesh Ambani Cultural Centre has unveiled its latest offering, The Arts Cafe, a vision brought to life by Isha Ambani. This space is where art meets culinary excellence, offering a one-of-a-kind experience for both food and culture enthusiasts alike. With its soothing natural shades, browns and beiges and art decor accents, the NMACC Arts Cafe designed by Gauri Khan radiates elegance. Situated on NMACC's third floor, the suitable entry points to the cafe are Gate 11 and 12. The stunning Cherry Blossom series by Damien Hirst greets visitors as the Arts Cafe experience gets underway. A grand 16-feet organic bar with a flowing wave-like design and an amazing skylight that lets in the sunshine make it the room's center point, exuding sophistication and calm, which further adds to its attractiveness. The cafe is one of the most alluring rooftop places in BKC with its large al fresco terrace, which offers sweeping views of the Fountain of Joy. For those looking for a more intimate experience, the cafe also features a beautiful 12-seater private dining area with a live kitchen, perfect for small parties and customized menus. The Arts Cafe is more than just a meal. It's a harmonious blend of art, culture and cuisine, making it a must-visit addition to Mumbai's cultural landscape. In Mumbai, Zenia Barya.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
You look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well.
Hello and welcome to Startup Street. I'm Shruti Mishra, and with me, as always, are Arundhati Ramanan and Ritu Singh. These are top headlines from the startup space. Food delivery giant Zomato withdrawn its decision to impose an extra fee for vegetarian food deliveries. This comes after a user on LinkedIn criticized the policy, calling it Zomato's latest masterstroke. CEO Dipinder Goyal apologized on LinkedIn, saying, and I quote, "This is absolutely stupid on our part. I'm super sorry for this. The charge will be removed today itself," end of quote.
Delivery launches Rapid Commerce, a 2-hour delivery service. The service was started in Bengaluru and is already processing 300 deliveries a day. The firm tells CNBC-TV18 that it will expand this service to other metro cities in the coming months.
Quick food delivery platform Swish is in talks to bag $7 to $8 million from UK-based Hara Global, says Money Control. Current investor Axel is likely to participate. Report says that the round will be smaller than the $15 to $20 million that Swish was initially aiming to raise.
SaaS firm Naturedyne has raised $90 million in a Series D round led by Point72 Private Investments. The round saw participation from Qualcomm Ventures and Pavilion Capital. The startup will use the funds to accelerate growth through investment in R&D, go-to-market strategy, and aggressive global expansion.
New US H-1B visa norms kick in from today. Recent changes mean employers will have to pay 70% more for beneficiaries on H-1B petitions and will see a significant escalation in their wage bill and legal costs. Indian IT giants, however, say that the dependence on H-1B visas has reduced significantly since they are focusing more on local hiring and leveraging technological advancements.
Those were the headlines that we're tracking for you this evening. Logistics service provider Delivery has launched Rapid Commerce, a 2-hour delivery service for brands to fulfill order deliveries faster. The service, which has been started in Bengaluru, is processing 300 deliveries a day. Speaking to CNBC-TV18, Chief Operating Officer Ajit Pai said that the firm will expand this service to other metro cities in the coming months.
Objective is to scale this service very quickly over the next few months to all of the metros to begin with. We've started with Bengaluru, as you mentioned, and we believe that the first first outlook will be to scale this quickly to all of the metros within a period of a few months.
Also on What's Brewing, alternate investment funds that invested in private markets have delivered consistent alpha generation vis-a-vis the public market equivalent, proving their investability even amid strong public market performance. This, according to a new report by CRISIL Market Intelligence and Oyster Global. To take us through the key highlights of the report, joining me now is Sandeep Sinha, co-founder and co-CEO of Oyster Global. Sandeep, welcome to Startup Street. No ifs about AIFs 2.0. That's your latest report. Across the last 5 fiscals, the benchmark of equity alternative investment funds has outpaced the BSE Sensex total return index, reaffirming the resilience and importance of private markets in India's investment landscape. So, Sandeep, private capital is not only participating in India's growth story, but also shaping it?
Thank you, first of all, for having me here today. You know, it's truly a privilege to be a part of the private markets in India today. The way the ecosystem has grown is absolutely tremendous. You know, we have almost about 150,000 plus startups in the ecosystem today. And that truly makes us about the 3rd largest entrepreneurial ecosystem in the world. And there's a massive shift in the capital commitments. You know, just about the AIFs that you were talking about, those commitments have grown almost about 86x from 2014 to 2024. We're talking about a CAGR of almost about 31.5% in the past 5 years. And when you referred about the alpha, I think this is a question that we get asked often, talking about the fact that, you know, how has that shifted in the market, especially with the listed market giving fabulous returns. But, you know, if you look at the real numbers, and, you know, we did these numbers in collaboration with CRISIL, the IRR of 21.5% for aggregate AIF benchmark actually significantly outperforms the listed market even today. If you compare it with the BSE Sensex TRI, it is almost about 5.4% on an annualized basis. So that makes a world of a difference in terms of anybody looking at investment in this asset class.
Okay. Now, with IPO hopes high, Sandeep, we're seeing AIFs inclining towards late-stage startups. What has been your experience? What are you picking up on the street?
A very significant shift. Actually, the whole focus is that, how do we look at the companies which are now sustainable? They have gone through the growth pains. They have gone past, a certain level of the risk-return appetite. And that's where we are seeing a massive interest in the late-stage funding. Overall, in terms of the numbers, about 2.5x increase. And the share of the deals in the late stage increased almost about 18% in terms of the value to 39% between fiscal and 2014 to 2024, which basically indicates a massive maturing market. In fact, we had released a fund, an ACE fund, which basically incorporated 4 of the top tier pre-IPO companies. The interest pre-IPO has been better and higher than what we have seen ever before. Just in this year itself, we've talked about 210 plus IPOs. And if you look at the index of the companies which have gone from the private investments to, the listed market, about 35 plus companies benchmark over the last 3 years, you would see that, they have outperformed any of the indices, whether it's a small cap, mid cap, large cap, or whatsoever. So the interest is actually becoming stronger and higher.
All right. With AIFs now channeling private capital to new age companies and startups, it has increased participation by domestic institutional investors. Sandeep, if you could take us through some of the growth drivers for the AIF industry in the coming years.
So I think the biggest thing that we are expecting is the participation of the domestic capital. While we take a lot of pride in the fact that we have the 3rd largest entrepreneurial ecosystem in the world, there is a big challenge that most of this capital is offshore capital. We're talking about almost about 70% plus capital or the 70% plus assets being owned by the foreign capital. So what we really need is the same push that we saw in the domestic listed market, where domestic capital kind of pushed in its way to give support where capital from the overseas part was not as relevant as it was a few years back. I think we need to see the same shift, whether we are talking about individual participation, whether we are talking about institutional participation. I think it will make a world of a difference the moment the domestic ownership of this asset class begins to increase.
All right. Now, Sandeep, the report also highlights rising investments from non-individual limited partners such as corporates, trusts, banks, and insurance companies. What kind of an upward trend are we seeing here, and what kind of an impact do you see it making on the startup ecosystem?
I think there are 2 threads to that. One is in terms of the percentage participation from the institutional side. I think that is growing fairly well, almost about 65% from the institutional side. But I think when we talk about the overall volume contribution or the actual AUM contribution, I still think there are lots of restrictions which are holding back, the banks, the insurance companies, and so on and on. Whether it's a 3% restriction on the overall AUM of the company, whether it's a 5% restriction on the total size of the fund. I think we genuinely need to see a little bit more relaxation in terms of the norms that institutional capital can invest in this asset class. And I think that will begin to change the wheel. Globally, we see that number to be almost about 15% to 20%. In India, that's like less than 5%. And I think that shift will make a monumental difference to this asset class.
All right. One final question before I let you go. The union budget is right around the corner. What is your big ask, Sandeep, for the sector?
I think we have seen some positive shifts already in terms of the long-term capital gain that we saw the year before. One particular phenomena I think that will make a world of a difference is the whole world of accreditation. I think if we can, normalize how we kind of go forward with the accreditation, we reduce the barriers, we make the process all digital, we allow more and more individuals to participate in the process. And what will happen as a result of accreditation is that, the 1 crore minimum ticket size, which restricts the number of people entering this asset class, will actually go down to about 25 lakh rupees. And that investment can also come over the next 3 to 4 years. So this asset class, which we talk about, a high return asset class, will typically be a far more accessible instrument in the hands of the broader audience. And I think that's what we need, democratization of capital in this asset class.
Well, on that note, it's time for me to wrap up our conversation. But Sandeep, many thanks for joining us today on Startup Street.
Thanks so much for having me here.
Moving on, electric motorcycle manufacturer Oben Electric has raised 50 crore rupees in a Series A funding round from Ambis Holding US, Kuberan Ventures, Karimji Group, Mission Vertical and other existing investors. Now, this funding brings the total equity capital raised by the company to 150 crore rupees till date. The fresh funds will be deployed towards expanding its existing distribution network and its current product offerings. Joining us now to discuss this further is Madhumita Agarwal, the founder and CEO of Oben Electric. Madhumita, thank you so much for taking time out and being here with us on Startup Street. You know, you've raised these funds in a bid to drive pan-India expansion, right? So what is your current presence? Can you take us through how many stores you plan to open with this fundraise? What's the target here?
Yeah, thank you so much for having me here. Yes, for this fund, we plan to, right now we are currently having 20 stores, some of the major markets like Delhi, Pune, Jaipur, your Bangalore, and then also in Kerala. Moving forward, we are planning to kind of have by end of this year, 100 stores, which would be a kind of a pan-India plus kind of a presence. And looking at different service centers, not just stores, but also expanding on the service network.
Right, so big expansion plans there for the year to come. But you also said that the funds will be used to expand your current product offerings as well, right? If you could sort of elaborate on what's on the anvil for Oben going forward.
Yeah. So actually, we are in basically the commuter segment, right? Motorcycle. If you look at the motorcycle market, 70 or two-wheeler market, 70% is kind of a motorcycle segment, right? Out of which Delhi commuter itself is like a 56+% kind of a segment. We already have two products. One is the Roar, which is like in the 150cc equivalent, which is the premium commuter segment. And then we have Roar Easy, which recently we launched. And I think these are the two offerings right now in this year, which we will be focusing. And then also expanding in that segment itself.
Right, so looking to expand in that segment itself, like you just mentioned, your flagship products include the Roar and the newly launched Oben Roar Easy. Can you sort of take us through how many units you've sold till date? What's your manufacturing capabilities? And how do you plan to expand that to reach, to be able to meet demand?
Yeah. So I think two products are already on road in 4 years. We started in 2020, and we have also kind of vertically integrated. We not just design and manufacture the motorcycles. We also manufacture our own battery, which we have designed ourselves, and we also manufacture our own motors in our manufacturing facility, which is in Bangalore located, which has a 1 lakh kind of a unit capacity, and that is what we are going to utilize and kind of reach to come different geographies, north, south, and which are motorcycle markets. And also currently there are almost 1,000 bikes on road, and moving forward we'll be kind of looking at broader expansion and moving on with Roar and Roar Easy in pan-India.
Right. So right now, 1,000 bikes of yours are on the road. So what does the order book look like at this point?
So we are looking at, in this year, kind of 10,000 plus kind of a bike, where we would be more focusing on getting the brand established and having a robust service center and gaining that, experience from the consumer. Yeah.
So from 1,000 to 10,000, that's the aim that you have for this year. But if you could sort of take us through the kind of revenues you're currently clocking and what's the target for, this year?
So basically, we are looking at, a revenue of around 15 million plus, where it would be kind of dollars, where these 10,000 bikes, which will be on road, will through which we will be achieving it.
Right, absolutely. And, with the budget right around the corner, what is your key ask from this year's union budget?
So I think EV is a priority sector, I think, what the government has. Right now, what we see that, yes, there has been subsidy, there has been, kind of a support from government. But now we, as a industry, my ask would be that we should now more focus on, the raw material side, more, giving more support on the battery, motor development, and some kind of semiconductor and all. I think these are now the critical, the value chain, which will really drive these EV shift more stronger. I think the value chain has to be, the entire supply chain support has to grow further and more in a kind of a expedited manner.
Right, absolutely. Coming back to the EV space, right, there's high competition, in India, especially right now with the boost that the government has given for electric vehicles, right? So how are you planning on taking competition right now?
Yeah. So if you see most of the traction which or competition, you would say, or the EV transition has happened in the 30% market, which is like scooters, right? And in the motorcycle, as motorcycle being a very complex product because it's a EV, and in EV, there are a lot of restrictions, right? The weight cannot be heavier, the range is needed. And in motorcycle, you need performance. Right. So with this, restriction, it's a very complex product. What we see that the motorcycle, this is the next era, that is the motorcycle, which will pick up because we are sitting in world's largest motorcycle market, and you see hardly one or two players, right, including us. So I think first to how to competition. Yes, competition will pick up as in the motorcycle segment. What will work in this segment? What will stay and be sustainable is a product. Right. First thing is basically a strong product, which can only be backed by, vertical integration, your own technology, quality, and, meeting the expectation of the customer. So I think good product backed with technology, packaged in a pricing. We do, I think that's the main point, that everything you have to pack it at a particular price, which the consumer is already used to, buy in a petrol segment. So that would be the winning, point, where you have a good product packaged at a price and which meets the, daily commuter's need.
Absolutely. So you believe that you're priced right for the area that you're in at this point. All right, Madhumita, thank you so much for joining us on the show. We're completely out of time and we wish you all the best going forward.
Thank you. Thank you so much.
Well, with that, it's time for us to head into a short break. But coming up, FinTech Greyquest has secured $9.3 million in a Series B round. We put the founder on the hot seat. On the other side, stay tuned.
Those companies, I think, still are very interesting. Healthcare is a good space. It's not obviously high beta, but basically, I think globally there is a need to reduce healthcare costs because governments are very leveraged. There is aging population, and India has obviously got great strength in terms of generic drugs or medical tourism or whatever. I mean, bulls are very tired on insurance because last 3-4 years we've kept getting hit by some regulation or the other. I do feel that mutual funds are more efficient as a savings vehicle than insurance. But having said that, there is obviously need for long-term savings, which insurance is an avenue for. So we have a bit both the general insurers, life insurers, and the tech platforms around it. But yes, it's been it has needed a lot of patience.
Or 16.2 that we've got, and I do see Q4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee base. Medium term, we are reiterating our aspiration to get to $2 billion and 17 to 18% EBIT levels. Our pipeline is better than what it was the same time last year as well as last quarter. If you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year.
I think it's going to be, I believe, not a very high return market, to be honest, the next few quarters. The thing is, rather than forecasting anything, the biggest thing is last 3-5 years have been solid in terms of returns. Obviously, valuations are high. And two is, as you pointed out, we're entering a phase where the world's largest economy is going to see a fairly
Education loans-focused fintech GreyQuest has secured 80 crore rupees in its Series B equity funding round led by IIFL Fintech Fund, Claypond Capital and existing investor Pravega Ventures. Now founded 7 years ago, the fintech enables institutions to offer students and parents multiple tailored payment options for annual education fees without any extra cost. It is going to utilize the funds that it has raised to enhance its tech platform and scale its distribution. For more on this, joining me now is Rishabh Mehta, the founder and CEO of GreyQuest. Rishabh, thanks very much for your time here on CNBC-TV18. Briefly tell us about GreyQuest and what your USP is and the size of the market opportunity in the education fintech space that you're chasing.
Thanks, Ritu. Thanks for having me on the show. What GreyQuest does is provide digital fee payment solutions to institutions and to education institutions, which is schools, colleges, and universities. Our platform effectively makes it easy and convenient for institutions to collect their fees and reduce their efforts, administrative and non-administrative efforts to collect their fees from their parents. And it also enables easy payment options for parents, including a monthly payment option where parents can convert their annual fee into easy monthly payments without any extra costs. So it's sort of a win-win for both the education institution and the parents in this ecosystem.
Okay, let's get to that funding then. How exactly are you going to deploy this 80 crores that you've raised in your Series B round? What are your plans to scale distribution across the country?
So the primary utilization of funds will definitely be to improve the technology stack and the products that we're offering to this ecosystem. We still believe that this ecosystem is very, very underserved in terms of the solutions available for both the institutions and the parents to help them digitize the fee payments that are happening in this ecosystem relative to many other ecosystems such as e-commerce or gaming and online broking, etc. So the main utilization of funds is going to be around investing in our technology team to offer better solutions and products for this ecosystem. The second biggest use of proceeds for us is going to be to expand the reach of GreyQuest across more schools, colleges, and universities.
So you currently have more than 6,500 institutions that you've onboarded. What are the strategies that you're going to employ to expand this presence? How many more institutions are you hoping to get on board in the next year or two?
Today, we're only about at 6,500 education institutions serving about 5 million parents and roughly 50,000 crores of captive fee collection at these 6,500 institutions. What we definitely have a long, headroom for growth in terms of our partner institutions. Within the next 2 years, we aim to double the current reach to maybe about roughly about 15,000 education institutions across the country.
Well, Rishabh, briefly give us a sense of your revenue model and how fast the business is growing. And since you're only about 7 years old and you've still been posting losses, how is the current financial year shaping up and by when do you hope to break even?
So we fundamentally earn revenue in two ways. One is a SaaS fee that education institutions pay to use our software solutions, and second is on payments, right? So we provide a range of payment options, which is online payments, subscription payments, and a credit product, which is a zero-cost EMI. So we earn a margin on each of these payment modes, depending on which payment mode is being used. We earn a certain margin on each of these payment modes. Currently, since we're still scaling and since we are still expanding the reach of our both the education institution base, but also the use of our platform within that particular institution, since both of those are still in a growth phase, we are still in an investment phase right now, and hence at an operational level the company is still negative. However, we expect to break even by the end of FY26, and there is significant operating leverage that we are already seeing. So just for context, our cost structure for the last couple of years has been more or less flat. However, we've been seeing a significant growth multiple for the last 2 years, and we continue to see a significant growth multiple for the next few years going ahead as well.
All right, and finally, beyond fee payments that you currently do you see Greyquest diversifying into other areas of education financing or related digital solutions in the future?
So the way we approach this question is, what are some pain points that for our customers, which is, the education institution and the parent, right? What are some pain points for both, at different points of for both of these customers that A, we can solve for, and B, we also have a right to win to solve that pain point, right? So we feel there is just so much to do around this ecosystem, both on the parent side and the institution side. Just a case in point is, we've recently launched some insurance products that are embedded for parents that, that aid value to, that are very contextual to a parent and a child. So and that's just a start. So, I still think we are very early in, our core business, and the fundamental plan for us is to focus on scaling the core and being the market leader for, the core payments platform in the education ecosystem. However, we are continuously evaluating, what other pain points that Greyquest can address for both our education institutions and our parents.
All right, Rishabh, that's all the time we had. Thank you very much for joining us here, and we wish you all the very best. Thank you.
Thanks for having me, Ritu.
It is Friday, and it's time to take stock of all of the startup deals that happened over this week. According to Venture Intelligence, this week saw 20 deals worth $92 million. First up, skincare brand Foxtail added $30 million to their cart from Z47, K Capital and others. Electric two-wheeler maker Bigos bagged $18.6 million from Tantamount Capital, while flight taxi operator Aviation got $10 million from Axel India and others.
Well, that's not all. 3D visualization enabler for car makers Eccentric raised $5 million from Xfinity Venture Partners and Arkham Ventures. Last but not the least, waste management startup VVoice bagged $4.2 million from Negan Capital and others. Till date, 33 deals have happened in the startup space worth over $4.2 billion. Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Change. We don't know what exactly will happen in terms of dollar strength, yuan weakness, trade tariffs, etc. So there is a lot of uncertainty, and the valuations are probably on an aggregate not reflective of that uncertainty. But having said that, I think there is value at polar opposites of the market. I think a lot of tier 2, tier 3 financials are almost at distress valuation. And I believe that in India, secured lending will still be okay because in general, we are a reasonably high inflation economy. So the asset values keep inflating. And a lot of the tier 2 private banks, PSU banks are at book or below. So I think there is a risk reward opportunity there. I think there is a risk reward in metals at this point of time. And on the other side, when you look at the quality companies, I think the internet platforms and anyone who has the potential to use stuff like AI well, those companies, I think, still are very interesting.
What is the story that you would like to tell?
Right now, my laser focus is on my next film and preparing for it. And the new story I want to tell is Irish cricket, Scottish cricket, and cricket from the Netherlands. It's exciting me. It's something new, you know. It's like this new toy I've got my hands on. I'm really looking forward to it. I can't wait to start working on it. I've never been the kind of person who's very good at just going and waving my hand. You know, I'm somebody who likes to get down on all fours and get dirty and really work.
Be in the trenches.
Oh, I love that.